back. July 14th. Monday.
Monday. That's the important thing. Dates, not so much.
Not a big date guy, huh?
Actually, it's a
very important date.
Why?
Why do you think it's important?
God, it's like talking to my girlfriend. I don't know. I don't know. What did I miss?
No, you were about to say something. You were like, oh, but this date.
Oh, no, not this date, but this might be a long week, you know. Oh, I haven't told you. I'm taking some time off next week, if that's okay.
What for what? Why?
I'm going to Amsterdam. So, this week, we're strapped in. We're going to work really hard. But we're here. Monday, did you have a good weekend? I'm not doing as much legendary stuff as I know you want me to.
Yeah, you're going to like baby showers.
Yeah, I went
to
a gender reveal party. It's a boy.
Wow, pretty sweet. It's a boy. How did someone like? I feel like the only gender reveals, or the gender reveals that immediately come to my head, are like someone pitches like a baseball and then they explode like
they miss it.
A pink thing all over the place. Yeah.
Yeah. So he wanted to do that with a golf ball. Okay. Not allowed.
So gender there's a correlation between gender reveals and like exploding items.
Yes.
Okay.
Because there was the little confetti things or.
Yeah. Okay.
Blue confetti, blue cake, but it was kind of green. And so everyone was like,
he's the Hulk kid.
So that was pretty funny.
Sweet.
But the mother was not too thrilled that it was I mean, of course, thrilled,
so
but
neither
would have preferred
So who
a
knows
girl.
about the stuff when they do a gender reveal?
So when you go to the ultrasound, the doctor knows you can't really tell. And so they can write it. They can write it in an envelope.
Okay.
And you just
then they give the envelope to the parent.
Yeah, and they passed it off to like one of their siblings.
And the mom was mad it was a boy.
No, not mad, but you could tell would have really wanted a girl.
Listen, I don't want to be like the anti-woke guy that like everybody's gonna be mad at, but like if a dude got a pink gender reveal or whatever, he was pissed about it. That is not going on. I feel like that is one of those traps that I have not fallen into yet, but I also do not have a pregnant partner yet. Hopefully soon.
Wow.
Got to figure out how it all works first. But
different show.
But I do get the question as it becomes more in play. Mm-hmm. I get the question of like, oh, which
would you want? Just
which
a trap.
Absolutely a trap.
Yeah.
And so of course it's like, oh yeah, like don't care, like whatever. But given the way things have been going for the last several hundred thousands of years, and the way that things are going the last couple of years, it seems like it would just be easier for a little dude running around than a little lady.
Probably.
Okay. But would be sweet either way. Well, congrats to your girlfriend's brother.
Correct.
Okay.
Yeah. What'd you get up to?
Oh man, I spent a lot of time outside. It was pretty
nice.
sweet. I went to
Hot and steamy.
A sound bath. I hit Barry's twice
way.
This weekend.
Wow. I didn't know that was even
went
possible.
Crazy. Second time was even better.
Really?
Free hydration smoothies afterwards at the Barry's.
I mean, you can't ask for more than that.
It was pretty
Saturday night.
A pretty sick way to start your day. Yeah, no, this was Sunday morning after the Saturday night where I literally got into bed before 8 p.m. And Callie was like, "It's Saturday night, and you're not even you're not even out of bed before the sun's down." And I was like, got the Barry's hydration smoothie in the morning.
You wouldn't understand.
Yeah.
This is serious.
The only thing is living in Wicker, living in like a relatively younger part of town, whatever you want to call it.
Poppin'.
The workout times only start at 6 or 7. We need to be
opposed to
we need
5?
to be breaking in. Oh yeah, I'll do a 4:30 start. Or
No,
5.
you would not. 4:30, you
Dude,
would not.
I can't do this job and work out in the morning because it's only a 6 o'clock start.
That's crazy.
And on the
but
weekends,
I understand.
7:10 is the start, and it's like,
Okay.
dude, like now I go home and I shower, and like it's already like lunchtime, dog.
Yeah.
Like this is ridiculous.
Around here, they definitely have 5:25.
Okay.
So that's the earliest I've
More
seen.
adults around the West Loop.
Exactly, but I've never seen somebody contend, man, if they would just pop a 4 slot in there, that would fill up quick.
Okay, maybe not 4 even, but especially in the summertime, if you did a
Summer's
4:30,
different.
5 o'clock.
You'd get a couple people.
All of this being said, there were 7 people for the 7:10 berries.
There you go.
And there's like 30 spots.
Still a business.
And
Maybe you could like
half
work
of
out.
them were walking probably because they were hungover.
I imagine all of
It's just
and
dude,
paid for the class.
we're
God,
doing
that's
it.
awesome.
All right, our first sprint of the day. 4 of the women are just, nope.
I hear
Walking.
you. Not today.
Dude, to this dude's credit, he was still like he put, I think to silence the workout haters in the room, he just turned his EDM music that he was doing way up. And he like, I would like look in the mirror and he's behind me and he's just like he's just dancing, having
Just
a good
there for
time.
him. Nice.
Still just rolling off that Molly from the night before.
I was gonna say, yeah, maybe you need to just talk to the trainers because I imagine they could work out before. You know, they run into the same thing you are, where I got to be at work at 6 and 7. When am I gonna get a workout in?
No,
maybe
but
they
I think the managers and the trainers are the problem. I think it's like a classic, like, oh, if you're in a college town, stuff moves slow because like it's all college kids. They don't know what the hell they're doing. I think it's because like the managers and the trainers are all like mid to late 20s.
They
and
don't
they're
want
like,
to get up.
dude, I barely got here for the 7:10, and yes, I am still drunk. It's like, whereas I'm 32 now, I'm a man. I'm 30.
All right.
And I'm trying to do the workout. I'm trying to get this going because what do I gotta do afterwards? I gotta go to the free sound bath in the park, which was very
Free
It
sound
was
bath
actually
in the
nice.
park.
It was nice.
And you just all lay on the mat.
Here's something for you. Callie's like, oh, we're gonna do a sound bath, at like some Wicker Park. I'm like, okay, sounds great. As we're approaching it, she's like, oh yeah, and it's nice because it's free. Immediately, I'm mad. I'm like, this is a free thing? And she's like, why? What does it matter? And I was like, well, it's just going to be worse. And there's going to be like, there's going to be like a lot of frumpy people who like aren't into like, you know, sound bathing and yoga.
I mean, that's
and this
one thing
different
to
stuff.
say, but I think also just like the sound bathing as a concept, you can't have a lot of people just like treating it like a picnic. Otherwise, there's no
Dude, I don't know.
the
I
sound.
I think we have fully moved into a world where sound baths and my and maybe it's happening at the same time. I'm buying into this stuff and it is becoming popularized. Where, like,
Coincidence.
dude, like if you go to like a nice, like if you went to the Four Seasons right now,
Yeah.
even in Chicago, like it doesn't even have to be in like Vietnam or something like that. It's like the Four Seasons in Chicago, they'll be like, yeah, we'll do a sound bath for $300. You know, like
Yeah, we can throw that in the mix
Like,
of
people-
wellness.
the people in like 5 years from now, Pete will be like, oh, like we went to this great resort and like, have you heard of this sound bath thing? And it's
Got
like,
him.
we've been doing it for years, and I went to a free one. It was actually okay, but yeah, there were definitely. It was public.
Sure.
I guess I
but
would
the
say.
the actual experience, it being outside and free.
Well,
was,
she did organize it very close to the blue line, and so every 5 to
jeez.
10 minutes,
That's
it's
insane.
like boom, boom, and then it's just a train just going nuts right next to you. And then there was some kid, his dog Woodson, kept running away. So there was just a kid every couple minutes yelling, "What are you doing, Woody?" So it was, but that's what you get with the free sound bath.
Sure. Yeah. Glad you liked it because that doesn't.
It was a pretty funny time. Oh my gosh. But yeah, now we're back at it. What's going on? Did you cook up any research for today?
We'll have a really hard hitting research piece tomorrow.
Tomorrow. Okay. Not
Today, let's hop into the platform. Looking like a pretty soft Sunday night open. Not a lot of action from the European or Asian market opens, but that's okay. We've acknowledged we're in a lower volatility environment here. for currency trading, U.S. dollar specifically. And so we're just going to walk you through how we would look into setting up the week. Here, first looking at our all FX pairs. We look primarily at this popular U.S. dollar grouping, gives you all the exposure across the world in terms of the liquid assets here, the most liquid in currency pairs, and then our popular non-U.S. dollar pairs as well to get you some cross references for what these different currencies are doing, not only against the U.S. dollar but against each other. Nothing really standing out here today except a slight U.S. dollar. I don't even know.
Yeah, it feels like U.S. dollar wants to continue rallying, or did want to last night.
Yeah.
And hasn't been able to really sustain that against anything except for these downtrodden commodity currencies. And I'm not even looking at Canada anymore, because actually the most interesting thing, and one thing on top of what Glenn said, is that we'll usually look at those top two sections, as you can see in the spread column there, spreads from under a pip to 2 or 3 pips for the most part, which is directly correlating to your cost of trading, given that there are no commissions on these markets. What I do see that's interesting is some trends developing between that Aussie, Kiwi, and CAD. Mm-hmm. So why don't you bring up that Kiwi CAD market? I want to take a look there first.
Our biggest percent change mover of the night.
Oh yeah, that was the point I was trying to make, is that we'll look at the net changes. And as you can see, a handful of not even 0.1% net changes, but a couple, 2, 3, 0.4%. And once we get around 0.5 percentage point of movement, that's where in FX the opportunity is. It's kind of equivalent to like SPOOs or NASDAQ being up or down more than a percentage point. It's like, okay, maybe there's something going on here today. And yeah, looking here, Canada in the news over the last couple of weeks. Obviously, the first country that got nailed with the tariff talk all the way back in February, Canadian dollar got annihilated. Fast forward to now, Canadian dollar, quite the comeback. And it's actually starting to beat up pretty good on these other commodity currencies. Let's take a look at the daily chart. You can see here, I mean, first of all, you got all of that volatility around April.
Yeah, here you can really tell that the Canadian dollar, U.S. dollar proximity, we don't really see that all that often, but here you can tell a lot of that same risk-off geopolitical back and forth playing in very similar graph.
And that was a huge blip for commodity currency for a number of pairs. But if you kind of take that out of the mix, you have a couple of things going on. One, you'll notice that not a huge range, and you might think, when you take the U.S. dollar out of a Forex pair, like stuff's going to be crazy. Like it could be, when you're measuring the euro against the South African rand, like it's going to be nuts. It's going to be super volatile. But when you look at those major U.S. dollar pairs and you think about, at least the way I think about it, tends to be, okay, euro, pound, and yen, kind of their own subsection of those dollar pairs. And then Aussie, Kiwi, and CAD, kind of their own section. And Swiss franc, I guess, is maybe more in that first section. Whatever, I forgot about it. Now, within those two subsections, when you pair those things up against each other, they can actually be even less volatile than the U.S. dollar outright markets themselves. Because here, if you take that April volatility off of the board, the last 6 months, really, you have a range of just below 81 cents to just above 83 cents. So a 200-point range. We're right now getting close to the bottom part of that range here for New Zealand dollar, and I would guess Australian dollar against CAD is the same kind of setup. Just an interesting thing. I mean, especially if you thought the news and the impending actual tariffs, what actually is going to happen at some point this year or next year or whenever was going to point in the south direction for that Canadian dollar, outpacing the rest of these commodity currencies.
Yeah, you bring up a good point, and one I wanted to hit today because when you think about currency trading and these tariff headlines, what we're getting now is the same veracity and wordiness of headlines around tariffs. Those haven't stopped at all. But what we have seen is this FX volatility as a result come in a ton. Now, the majority of these markets not taking any of these headlines as seriously at all. And so what we have here is a much greater potential opportunity for range trading because we haven't seen any.
For sure.
I mean, we had a small tick one Friday afternoon in, I know, the U.S. dollar, Canadian dollar pair a couple weeks ago off a speculated tariff. That was erased in an hour, and not the range is not as expanded as we had back in February. And so here, when you start looking through some of these cross-currency pairs, when you're looking for a potential opportunity in a low volatility environment, here you are getting just different ranges. And here, historically speaking, a pretty consistent range trade over the past, like you said, year to date, 6-7 months here, and now approaching the bottom end of the range where if you were looking at this New Zealand dollar, US dollar, you might not have the same conviction if you were looking for range trading opportunities, trying to fade the highs or buy the lows.
And this is the point again of just when you pair up some of these currencies against each other that tend to move together against the U.S. dollar. Like if you've been looking the last couple of months, whenever Australian dollar is up or down 20, 30, 40 points or whatever, New Zealand dollar is usually moving in the same direction. We can crunch the numbers on the correlation. I would guess it's pretty highly positive. And so you have a pretty wide range here for the last 6 months or so in New Zealand dollar versus US dollar. But yeah, when you pair up New Zealand dollar and Australian dollar, or New Zealand dollar and CAD, more compressed ranges, and now starting to see, even though you're not seeing Kiwi at the bottom of its range against USD for the last couple of months, it is against Canada, just because Canada's been weirdly kind of strong the last several weeks. Really, honestly, going back to that crazy move around February, Canada has weirdly held in pretty good. But yeah, so some decent range trading opportunities across those commodity currencies and those non-dollar commodity currency crosses. Any extremes? Anything to look at? And yeah, here's a pretty interesting one. This Aussie against the yen. I guess the extremes would probably be in the downside against the yen.
Yeah,
in pretty much anything
across the board, I think. But picked this one just because when we're in kind of a lower volatility environment, at least over the past couple weeks, what I haven't been surprised to wake up to is some moves here in Australian dollar, New Zealand dollar, as well as this dollar yen has really run. Got Bollinger Bands on all these charts. I was doing some recon.
And take off the order ticket off there, just so we can get the whole chart. No, just click the. Yeah, there we go.
I had to find it.
Nice.
So this one running wild. Definitely not as surprised to see, an overnight move in an Australian dollar here as well. And so, to me, that speaks. It's at least worth checking what this cross would be if we have a slightly less conviction about the future of the U.S. dollar, because that is such a large component in a ton of these pairs, especially now, is so much U.S. dollar weakness baked into all these pairs. Taking that out, what do we see? We are seeing here not as extreme, but at least a near 6-month high here, and 6-month lows for Japanese yen. I wouldn't be surprised if we found more.
Well, it's actually interesting if we. I mean, this is going to be crazy. Yeah, that's ridiculous. I mean, yeah, right. 175 is the high in that market, and we're 172 and change for this year. This euro yen is. I mean, euro's just been super strong.
Yeah,
Yen
wow.
has just been super weak. But it's interesting going back. You should do some more on those non-dollar crosses because you did some great studies last week and showed that Australian dollar is actually one of the more kind of mean reverting one of the currencies that you can range trade a little bit more than others, and
Especially in low volatility.
and so it creates one of these scenarios where if like you're measuring up all of the yen weakness and you're like, okay, yen is super weak against the pound and the euro. Yen is, decently weak against the US dollar, and then yen is decently weak against Aussie and Kiwi. Which one, if I'm a contrarian, should I sell so I can get long yen? If I'm a trend follower, it's a different thing. If you're a trend follower, obviously buying that euro yen or buying that dollar yen has treated you pretty good the last couple of weeks. Whereas this one, you might be like, oh man, there's more room for this to run to the upside. Or is the commodity currency setup the last several years? You looked at it relative to US dollar, but is it across, all of these major currencies, regardless if it's a dollar pair, the most mean reverting? Which isn't to say, what's going to happen in the future necessarily, obviously, no clue. But historical prices the last few years have shown that those commodity currencies have been the most mean reverting. I wonder if you look at something like this, where it's like, again, it's an extreme. I'm looking to contrarian play long the yen, is shorting the Aussie a better potential play this week, for example, versus shorting that euro, which has just been on a tear against the yen for. I mean, yeah, this looks like that dollar yen chart a couple of years ago, where it was just like, okay, there goes 155, and there goes 160, and there goes 165. like there's no reprieve in this market whatsoever. Whereas that Aussie yen,
Slightly slower, at least.
and some more, we get up here to 95, we get knocked down all the way to 92. Oh, now we're up to close to 97. Is there more room for reversion here?
Yeah, great call out. I'll get my best guys on it.
Sweet.
My whole team.
Anything else? What's up this week?
Yeah, let's walk through what we're looking at here in FX world in terms of the economic calendar today.
China.
Not a ton to expect, except if you have Chinese stocks in your IRA. Maybe some news here.
Well, and I mean, obviously, this is Australian dollar and New Zealand dollar will move off of that stuff.
Yeah. Coming up this week, headline of the week, I think now across asset classes, trickling into the equity space as well. Looking at this U.S. inflation reading, a ton of scrutiny on it as we continue to look at the Fed doing nothing. Mr. Too Late Powell still not doing anything.
Wait, is he too late or is he asleep?
I think he's too late.
He's too late. Okay.
Someone else is Sleepy Nancy Pelosi.
No, Sleepy Joe. Nancy's asleep too?
Yeah, no, Sleepy Joe.
Okay.
You're right. But we are expecting an uptick in core inflation.
Everybody's asleep.
Uptick in headline inflation. This will be the one to watch, and very interesting for us looking at U.S. dollar here is what an uptick would mean. We're pricing in, a pretty substantial, 0.2 on core, 0.3 on headline. We're pricing in an uptick. There's a case in theory that an uptick in inflation keeps rates higher. That bolsters the U.S. dollar. I would contend that there is an alternative storyline that could come out in terms of fear taking over, U.S. dollar not having a lot of trust worldwide. Can't see how that necessarily.
I'm in the former camp.
Okay.
Especially coming off of that hot non-farm. Was it last
Super
week
hot.
or the week before?
Yeah.
I think that inflation uptick you see the move in interest rates and you see the move in dollar. Unless, I don't know, unless inflation fear fully comes back on the table. But then again, I
Same
think
story.
probably maybe it doesn't short term translate to dollar bullishness, but I think long term, obviously, you had the dollar bullishness of all the inflation fear of 2021, 2022. So we'll see.
Yeah, big week ahead for U.S. dollar and non-U.S. dollar pairs, as we do not scrutinize over 80 currency pairs available for trading through TastyFX. That'll do it for us here on Forex Focus on this Monday morning. A lot of trading ahead, so stay tuned to Tasty Live for Tom, Tony, and Vanetta up next.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Thomas, I never wear a white shirt, and today you're wearing a white shirt. I'm wearing a white shirt. Don't you think we're syncing?
I never
I
wear.
like the color palette today. It's.
I never wear a
serving.
white shirt either. I mean, like I wear white T-shirts, but I never wear like a white button-down shirt. Yeah,
Like a man shirt, right? Mm-hmm.
A man shirt. Yeah, I
Sitting
feel.
over there looking like Dom DeLuise. Look at you.
I like a little Dom DeLuise.
That's what you look like.
Little of Dom DeLuise, they never said.
Like a little Dom DeLuise. A lot of people listening today don't know who Dom DeLuise is.
I am a pop culture savant, so I know who he is.
Of course.
Oh man.
So how was my birthday weekend for you two?
Okay. How was your birthday, Bat? Let's just get it over with, Tom.
First of all, Tom is wrong once again. Lake Colonial and Lake Forest is not only delicious, it's beautiful, it's exquisite, it's a classy joint.
I'm glad it was good. Good.
It was excellent. Sosnoff, I had a Japanese eggplant you would have loved. I had a whole fish that was outstanding. I had some shrimp and pork egg rolls that were just off the hook. You don't know what you're talking about. The scenery was beautiful. It was nice. It was beautiful. Sat outside. It was beautiful. It was amazing. You and Scott.
Been there, done that. Food's average.
You and Scott are just so.
Yeah, but Tom, you've
bougie.
not been to the one in Lake Forest, though,
That's
have
right.
you?
I haven't been to that one. That's fair.
Okay, well then.
Oh, okay.
So,
well, there you go.
So you both can be right. Oh my God.
That would be a first.
Yeah.
Yeah, I'm not a fried. I don't like fried red snapper anyway, so I would never order
Yeah.
You
that.
like eggplant, though? You like Japanese eggplant?
I do, but not the way they cook it.
Okay.
Oh my God! You know what? Not the way they cook it. You know what? Seriously, you don't have any idea how they cook it.
I've had it there. Yeah.
You know what?
I'm glad you had a lovely meal. I'm glad it worked out.
It was excellent. It was fantastic. It was really, really good. It was fun. It was a good weekend. Everything worked out just fine. It was good. I had no complaints. Weather cooperated. It was good. It was good. Don't make the face, but
I can't not make the face.
but more importantly, Sadnov, how was your pork chop? It's not a trick question.
I'm gonna say it was one of the best meals I've ever had in my life.
And wait, where was this magical pork chop?
This is at a 50-year-old Carson's restaurant.
I'm gonna say that if I'm gonna go so
in
far
the suburbs.
In the suburbs, I'm gonna go so far as to say that if this was my last meal, I would be like if I had to pick my last meal, I would probably go to that restaurant and order that same dish.
Wow.
That's how good it
awesome.
is. I think, in fact, I told Josh this morning when I came in, I guess, I think that restaurant could be the best restaurant in Chicagoland area, bar none, for the money. Like, when you put everything together, I think it is the best. I can't believe I'm saying this, but I think.
I can't believe you're saying this because you are bougie AF.
I know. And I've been there maybe, I don't know, probably, let's call it 8 or 10 times now. And it's never disappointed once. I would say, with enough experience now, I'd say it's the best restaurant in Chicagoland area.
And you're talking about Carson's.
For pork chops and salad and coleslaw. That's it. It is the best.
Wow.
This is another one, like you've said numerous times before, life-changing pork chop.
Yeah, it's not like a pork chop at EJ's or something covered with peppers and that kind of stuff. This is like char. It's black with smoked with tons of barbecue sauce caked into it. It's unbelievable. It's so good.
Is this like Old Hickory in Orlando?
No, Old Hickory Orlando is disgusting, and that place should be shut down.
Wow, catching strays. I'm so sorry, Old Hickory.
I don't think it's still open, but that was a. I know Frankie's texting you that because he remembers, but that was a restaurant that was inside of like a biodome, and so it was kind of like a fake swamp, and we used to go there in the when we were doing like money shows and stuff like that.
Oh, money shows, yeah.
We'd eat at this restaurant called Old Hickory. It was like a steakhouse, but I always get the pork chop. Was yeah. No, this is life changing. This is great because I played golf all morning and I sucked. And
did you play Thunderhawk?
Yeah, it's really hard.
That course is hard.
Really hard.
And
really,
you don't practice.
And really long and really hard. And I lost 100 golf balls.
Oh, it sounds like my weekend. You lost what?
I lost 100 golf balls.
And he's admitting it, so that means he lost 200.
Yeah, no kidding.
And I just played so bad. I was embarrassed.
Who was the foursome?
Me and this other guy played against Donnie and JJ. We beat them, but I played bad. The other guy played good.
Who was the other guy?
He's not allowed. His wife thinks he was having a work meeting. His wife thought he had to work on Sunday morning at 5:00. So he's a guy.
He's a guy that used to work for us, but I don't know if you remember him, Jim Dore.
I don't. I remember the name, but I don't.
Yeah,
I think
He was on our tech team. Used to work for us.
Gotcha. Okay.
I liked my story better.
Well, I'm only telling you my golf story. I'm not telling you all my other escapades all weekend.
Oh, escapades, girl.
Escapades.
Escapades in your espadrilles? You had escapades in your espadrilles? Get it, girl, with the White Claw? What'd you do? Escapades.
Escapades.
Wow. Wow.
I was escapading. Yeah.
Well, no, there was a festival that you were going to go to up in by Bad Coffee. Did you go?
Yes, yeah. But the streets were jammed though. It was really crowded. It was hot. So
what did you expect for a summertime City of Chicago street festival?
Yeah, I mean it was packed. So it was like a little bit. Yeah, I only lasted an hour.
Oh, and then they shut the place down because all the talent had left?
No, they shut the place down because I left.
Wait, but was it good for Bad Coffee's business? You get lots of
No, this one
traffic?
I went. No, this one I went to. It was on Southport.
Oh, gotcha. Okay. Did
Yeah.
you buy any art?
No, not this time.
Okay, way to support the economy. Trickle down my ass.
Well, I didn't see anything I liked.
Okay.
That's irrelevant.
Well, I gotta
Buy
like
something anyway.
Gotta like it.
All right, that's fine. Hey, well, congratulations. Dr. Jim got his first solo road show underneath his belt as he stormed the streets of Boston. I think we have some footage, some videos, it looks like a really good turnout. Someone brought their dog to the show. Garrett texted me immediately. He was like, Vanetta, someone brought their dog. I was like, I need more information immediately. But we got some pictures here. There's Dr. Jim. The venue looks really cool, like all the graffiti and stuff. And there he is doing his professorial thing. Oh, he's an actual chalkboard. Wow.
He looks like an actual community college professor.
Yeah, that's fine.
He's dressed like a community college professor. It's exactly what I remember.
A community college.
Looks
Why?
great.
Why couldn't you just say a professor?
I've never been to, I've never seen a real professor. I've only seen community college professor. That's what I went to. What can I tell you?
We hired
we
hired Dr. Jim, but he was teaching a grad school at a university just outside of Charlotte.
Mm-hmm.
Were you on metal?
No, I'm saying so. It's not community college level.
I'm just teasing.
But yeah, all the feedback looked really good, and that very impressive crowd size for a summer Sunday night. So good job, Boston. Thanks for coming out, and I hope Dr. Jim got the cannoli from the pastry shop.
No,
that's
no
famous.
No chance. They weren't anywhere close
To the cannoli.
Yeah,
man.
they were.
Boston's so small though. Like you could walk around that whole city.
Plus, Dr. Jim would get lost. You can't.
No. They were in Cambridge. It's not that close.
Oh, they were okay. Gotcha.
Yeah.
Is that across the river? I don't know how that works.
Yeah, you got to go over the bridge.
Gotcha. Okay.
But
well, I hope he at least got some very good Dunkin' then. I run on Dunkin'. Boston runs on Dunkin'.
No, there's a lot of good, fun restaurants in Cambridge. A lot.
Well, that's great. If you would like to see Dr. Jim or Tom or Tony or Mike, Nick, or Katie, we got something for you. Go to tastylive.com/events to see where we might turn up next. We are doing something new, but it is exciting. We have 3 individual groups that are hitting the road. And like I said, they might be in a city near you. Obviously, we can't get to all places, and we do this for free, so we don't want to hear it.
Yeah, the Bad and I we'll be in Denver in less than 2 weeks. We'll be in Denver a week from Friday, and it's on July 25th. And we'd love to see.
And you're gonna hike a 14er.
Yeah, we're gonna hike. We're gonna go out there early and hike up to some peak, and then and then do the show the next day. No problem. Piece of
Can't
cake.
Maybe two peaks.
Yeah, we might do two
I can't-
peaks.
I can't wait. I can't wait to see it. I can't wait to see it all. All right. Well, then that works. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire. Our leading story. Top story. This just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It is July the 14th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Woo, woo. Tom, did you watch the Wimbledon finals?
I did. I
Men's
watched about 2.5 sets yesterday. You mean the men's or the women's?
The men's. The men's.
I watched
Because
about.
you don't care about women's sports.
Well, this women's final was not very interesting. It was 6-love, 6-love.
I didn't ask about the women's final. I asked about the men's.
The men's final was. I watched about 2.5 sets of it. It was. I wouldn't say it was memorable, but it was good. Those guys are amazing. There's no volleys anymore in men's tennis, though. Every shot's a winner.
Well, congratulations. Sinner ended up winning it, but I guess all the last 6 majors have either been won by Sinner or Alcaraz. And I didn't know that they were only.
Those two guys are like 1-2 in the world.
Yeah, I didn't know they were only like 23, 22 years old. Like they're like babies.
Yeah, they're like I think they're both 23 or something like that. Really close.
Yeah, just under. Yeah, they're super young. But congratulations. Because Sinner finally won. Because I guess the other guy had won Wimbledon twice, and so he made like a funny joke about it. I saw.
Yeah, no,
right,
they're so good. It's unbelievable. They're really good.
All right. Anyway, this is the part of the show where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Are there any earnings, Mr. Bat?
Our earnings are coming this week. I'll let you know about them shortly. Not today because there's nothing for today, but tomorrow we got a few.
Hey, let's shift gears abroad and let's look at the euro. The euro eases a little after President Trump threatens 30% tariffs on the EU, as well as new tariffs on Mexico. Euro fell to a 3-week low, while the Mexican peso also came under pressure. Let's just talk global currencies.
It's actually a little bit of a misleading headline. They're all unchanged. The yen's up, and the euro and the Canadian, they're all unchanged.
Okay.
Yeah, they're basically neither here nor there. They look just like they did on Friday.
Yeah, they're literally unchanged. The yen's, they're all unchanged. Even the yen's unchanged.
Yep.
They're all unchanged.
So you're saying they're unchanged?
Unched. Yes.
Hey, you wrote about this a little bit in the Cherry Bomb, but this headline says the markets are telling you not to worry with a steep drop in volatility. Should you listen?
You actually wrote a little bit about it in a Cherry Bomb.
No, I actually said what's weird is that the market's at near an all-time high, but volatility's not near so the volatility and the S&Ps have an inverse relationship. So when S&Ps go down, volatility goes up, and when S&Ps go up, volatility goes down. And all I said was that the S&Ps are near record highs, but volatility is not near record lows. Even though it has sold off a lot, it's still like closer to a long-term average than it is to a low. So if I said to you, volatility is trading at, let's just say the VIX future is trading at 17.5, and I said, guess where the S&Ps are, you'd probably say
VIX futures are 19.5. You're talking about VIX right now. Go ahead. I'm sorry.
Oh no, I was just talking about the front month. You're right. VIX futures, the Qs are 19.5. If I told you that the VIX futures were 19.5, and I said, where do you think the S&Ps are? You had no idea where the S&Ps are. You would probably say they were, down.
You wouldn't say all-time highs.
Right. You would say
think they were lower than they are.
And that's my only point. It's just that there's the VIX futures and the VIX itself. The fear index is a little bit strange for where the S&Ps are.
Okay, How are you weighting your index positions as we start this week? Is this expiration week?
Yeah, it is. And we
It is.
don't.
Okay.
We're not short any premium in the S&Ps or the Qs for the first time in about 6 months because the IB rank got into single digits. And
Right.
so
mechanically, our research says, to
yeah, so I'm following the research and I have no short premium. I have some short deltas, but that's not the same as short premium.
Where are you in treasuries to start the week? Let's just talk about that.
Unfortunately, we're long. 'Cause
Okay.
They're lower again this morning. But
112.21 down about 8 ticks or so, trading just about 3 or 4 ticks off of their lows. This would be a new low.
yeah.
That it was a recent new low from July 8th.
Yeah, it's a recent new low and does not bode well for people that think there's going to be a rate cut because there's not going to be a rate cut right here.
Mm-hmm.
Here's
Not base
something.
prices. Yeah.
Here's something interesting. It just says story stocks are smoking hot in 2025, and that could end badly for investors. Kind of like a different take on meme stocks. This is where price momentum in a stock with a good story has been well rewarded in this market without actually companies being able to make money, earning cycle after earning cycle. That's basically the premise. I'm laying it out there for you. Are you following so far?
Yes, I'm following.
Okay, so does that have like 2021 vibes, or how would you categorize this like current sort of environment for these like momentum stocks where the fundamentals may not necessarily like be there?
Well, it's not something new. I've had, quote, they just don't never used the term story stocks before, but we've had stocks that have, rallied behind a good story since the beginning of time.
Sure, outsized PE ratios,
Yeah,
and you're just
I
like,
mean-
what do you even do as a company?
Yeah, I mean, if you remember and you go back a little bit, you remember when Amazon, where people were like,
I was going to say Amazon, yeah.
this company's never made a dime. Uber, this company's never made a dime. I mean, there's a gazillion examples, of companies that people are like, they all they do is, this is when Meta was Facebook. I mean, why should you buy Facebook? They never made a dime. I mean, those stories are, those story type stocks have been around since the beginning of time. They don't always end badly for investors because Amazon, Uber, and Facebook are just 3 examples of stocks that did not add bad for investors that were story stocks.
Sure.
There are other stocks, you can look at things like
Peloton or Zoom
Peloton
in
or
the pandemic.
GoPro, Peloton, things like that, where they ended horribly for investors. So, but just because it's a story stock doesn't mean it's going to end badly.
Okay. I just thought this was an interesting sort of concept, and I was like, oh, I'm kind of here for it. Some of this year's big momentum names are companies like Hood or Palantir or Carvana. I know you don't have a ton in those, but Palantir moves around a lot.
It does. Palantir is one of those stocks.
Yeah. So, all right. Are you doing anything in Palantir this morning?
No. Nope.
Okay.
Palantir IB rank of 43 is pretty good, but remember a lot of these stocks have earnings looming too, and they do on August 4th.
Sure. Let's shift gears to commodities. Gold gains as President Trump doubles down on tariffs before the deadline. Again, this is true when I pulled it last night. I don't know what gold is doing this morning.
Yeah, it's basically gold opened up about $18 last night, but this morning it's already sold off. It's only up like $3 or $4.
$4, yep, $4 a change.
What are you guys doing in gold? And we'll throw silver in there.
Silver's up more, almost up 1%. That'd be 34 cents in silver. Silver making new highs if it closes here.
Gold, we're flat. We're short some premium. And silver, we're also short some premium, but silver's working way better than gold.
Also, let's just throw Bitcoin in here. I didn't have like a Bitcoin specific story, but new highs hit 119,000 last I saw.
122,000 up to 3,600 or so. Yes.
Already
Bitcoin.
out of date. Okay. What are you guys going to do in crypto to start the week?
No, we really just keep our positions and we're like everybody.
You'll be happy to know coin is up this morning, Sadnov, with Bitcoin, the physical up.
We have been very we haven't done anything to our crypto positions. We're sitting around like everybody else. We're just sitting around long little crypto and hoping it goes higher, I guess.
Like mentally, did you ever think that crypto would get to these levels?
I didn't think it would, but I also wouldn't bet against it. Like, I never bet against it.
Sure. I was just curious because it just seems.
Yeah. No, we never.
Mm-hmm.
I mean, honestly, it's really hard to bet against it to start with.
Yeah. Yeah. I mean, every day I feel still so terrible for that man that I interviewed in England who threw away Bitcoin, and it's in a landfill somewhere. Just as it continues to get higher and higher, like I feel so bad for him.
Is he still looking for it? I mean, I never heard.
He is, and he's raised money, and he's still like trying to petition the local city council. He keeps getting denied, so now he's trying. My latest recollection, keeping up with it, now he's trying, I think, to buy the landfill outright so he doesn't have to get city approval. So
yeah, he's been trying to do this for a while now.
Yeah, I know. But just like, oh my goodness gracious.
Yeah.
I don't know what to do about that. But anyways, in other commodity news, Freeport McMoran is poised to gain from Trump's copper tariff against peers. The FCX could see a $1.6 billion boost to its annual profit if President Trump's copper tariff materializes. It's a benefit driven by the firm's role as the largest U.S. producer with more expansion options than its rivals. That is not a nothing burger. Freeport controls 60% of U.S. copper output, which I did not know.
Yeah, FCX is looks like it's basically unchanged this morning. FCX is closer to its highs than its lows for sure, trading at $46 and change. HG, which is copper, is down around 1.5% off its spiky high that it made about a week ago.
Tom?
I don't have any position on in there at all. So
okay. What's the IV?
24. Sorry, Tom.
And
July 23rd for earnings.
We covered our copper position last Thursday. It was a nice winner. That's it.
You'll never get me, copper.
Well done.
Okay, thank you very much. Hey, JP Morgan Chase is planning to impose fees on fintech companies for access to its customer bank account data. That's according to a Bloomberg report. The largest U.S. lender has sent pricing sheets to data aggregators. These are intermediaries that link banks with fintech platforms, outlining new charges that may vary by use case, with payment-focused firms facing higher costs. I'm on the consumer side of this. You guys might be on the back end of this. What are your thoughts? Because I link my bank account to lots of things, and yeah, there's some sort of interface. There's some sort of fintech firm that's working as the intermediary on that, and I guess now they're going to get charged.
Yeah, there's a lot of things. I think this refers to things like Plaid,
yes,
and things like that. And we do connect to, every firm connects to things like Plaid and I forgot the other names. They were all bought. There's been a lot of deals in that space. I can't remember who owns what now. Again, there's very few regulatory barriers right now for JP Morgan. So they're going to try to go after as much, throw as many charges out there as they can. I don't know that we would. For speaking for the firm, I don't know. It's unfortunate if they do charge for this, because if it's the case, if I'm talking about the right thing, like it's Plaid and stuff, we would have to pass that back to the consumer.
Sure.
So I don't. The last thing I want to do.
I'm upset because it's my data. Like, you're gonna charge me.
Don't I get paid?
You're gonna charge me.
Oh no, I know. No, but they're not. They're only.
No, I know.
It's an accommodation for you.
Right. No, I
It's
get
not-
it. Right. It makes it easier. Yes.
Yeah, you're not, they're not giving out your stuff. That's with your permission.
Sure. Yeah, but they're still generating extra insight about me. Like it's not.
But that's
out of
with
the
your
goodness
permission.
of-
That's with your permission. They can't they can't sell your information without your permission.
with my reluctant permission. But the big financials are going to kick off earnings starting tomorrow. What you going to do, JP Morgan, Wells Fargo, Goldman Sachs, Morgan Stanley? What you got? I think it's tomorrow. So
We currently have nothing. So what are we going to do? I don't know yet, but right now, with a day to go, we have nothing.
I mean, it's going to be a slam dunk home run. Like, isn't this just printing free money? Like, you
free money.
sell puts?
Yeah,
just
I know.
Sell puts and go
I mean,
away?
you would think so, but these stocks are already in the stratosphere.
Yeah, like
So now they
stock
go to
like,
the super stratosphere.
like Goldman Sachs is just a skosh off of its highs. Yep, you're right by 15 points or so.
Yikes. The NVIDIA CEO Jensen Huang will hold a media briefing in Beijing, China on July 16th, marking his second visit to the country after a trip in April. Since 2022, the U.S. government, though, has imposed restrictions on the export of NVIDIA's most advanced chips to China. Several U.S. senators have raised concerns about Hong speaking in China, but he was like, my company's worth $4 trillion. What you going to do, Pelosi? What are you doing in NVIDIA?
165 and change, one of the stocks that's bucking this small down move up around 50 cents. Go.
Yeah, we don't believe we have an NVIDIA position right now. Let's see. We don't.
Okay. What's the IV in there?
Oh.
Yeah,
okay.
it's 8. Yeah, it's small.
Ugh. All right, stay out of trouble. Well, in other AI news, Meta has made it official, and they have officially acquired Play AI. This is a startup that uses AI to generate human-sounding voices. Meta spokesperson has confirmed the acquisition. This just leans further into Zuckerberg's Meta super intelligence and trying to be the most dominant in the AI space. What's Meta doing this morning?
Meta, let's take a look at it. Is trading around 7.16 on the bid, down around $1 or so. Earnings are July 30th, IV rank of 29. Meta, just like every other one of the stocks that you've mentioned, is just a skosh off of the highs.
Does this not terrify anyone else that Mark Zuckerberg now has the technology to like literally clone the voice, and he has all of the data of everyone in America, and he can now also just clone anyone's voice? Just me? Okay.
Why would they want to clone my
Tom, are you
voice?
not concerned about this? Like, it scares me.
I'm concerned about a lot of things, and I'm concerned about Zuckerberg on a million different levels, but yeah, I have to focus on things I can control, and Mark Zuckerberg's a little out of my world.
Yeah, I guess so. Hey, this is a bonkers story. Google basically killed OpenAI's $3 billion deal for a company called Windsurf AI, and in what is known in Silicon Valley as a non-acquisition acquisition. So Google announced on July 11th that they just poached all of the top talent from this rapidly rising AI startup, but OpenAI was trying to buy them for $3 billion. So Google came in and they scooped. They spent $2.4 billion just to hire the top employees, basically leaving the company a former shell of itself. And I was like, that's diabolical. So now OpenAI is left with just a husk of a shell of a former company. Who's in the right and wrong here? Is all fair in AI acquisitions?
I mean, you're talking about two mega monopolies, that are like.
To be fair, OpenAI is a not-for-profit, sort of.
Oh, please, please. So you're talking about two mega tech monopolies that are going after the same company or personnel, whatever. I mean, in who cares? Like, I mean, this is their battle.
I had just never heard of this. Like, I guess this happens.
This
but I was like,
happens. This happens in
diabolical.
every single business. Every time there is a cool startup or somebody's got innovative technology, all the big guys that have, these, I mean, Google's sitting around with what, 200 billion in cash. OpenAI has, 100 billion in cash. And they're all just sitting around going, hey, we better get this before Apple does. Like, I mean.
Well, Tom, what would you do if someone tried to hire away me and the bat?
Yeah, what would you do?
I would walk you to your car. I mean, I'd help you. Can I pack?
That's not true.
Can I help? Yeah, lucky thing for us, we don't hire those kind of people that anybody ever wants.
Rude. What's Google doing this morning? The Goog.
Also known as Alphabet, 179 and change, down around 50 cents. One of the more mid-price stocks with an IV rank of 41 and earnings coming July 23rd or so.
Intel is spinning out an AI robotics company called RealSense with a $50 million raise. RealSense makes tools and technology for robotics automation, and Intel says they plan to use the funding to develop new product lines to meet growing demand. What's Intel doing?
Sadnov, this is where you come in. This is a stock you like to talk about.
I know, but
$23 and change.
I do not have an Intel position on right at the moment.
Okay.
Intel IV rank of 33, sitting at 23.30 or so. Also mid-priced, if you can consider that. Intel hasn't had the big run as these other stocks have.
That's not a bad IV. When are their earnings?
Earnings in Intel coming July 24th.
Oh, okay. Good to know.
Mm-hmm.
Hey, well, UK businesses are dialing back hiring for jobs that are likely to be affected by the rollout of AI, a new study found, suggesting that the new technology is accentuating a slowdown in the UK's labor market. Job vacancies have declined across the board in the UK as employers cut costs in the face of sluggish growth and high borrowing rates, with the overall number of online job postings down 31%. What are your thoughts that this headline is right, that AI is already, shutting down job openings?
Well, I think it's very convenient to blame it on AI, but the fact of the matter is that the US and the UK and every other country in the world is facing, I've heard the same thing about Japan, I've heard the same thing in China. The U.S., recent graduates are having the toughest time they've had in 2 decades. And in the U.K., it's no different. I'm not so sure that it's AI. I think it's just, it's a much broader, companies are cutting back because, markets at record highs, the companies are cutting back, keeps their numbers lean. And there are definitely, the craziest thing is, I think I read, Monster, the company that Monster took over, and Jobs.com, they all went out of business in the last month. They all filed for bankruptcy.
And Indeed and Glassdoor also filed for bankruptcy.
Yeah, Indeed, right. All those companies, and those are all job posting companies. So it's obvious that this is not a, this is not a UK thing or a US thing, or this is a global thing right now, and it's a really tough job market. And I think that. So I'm not sure it's just AI. I think it's just a tough job market.
Okay, that's fair. I just thought that was interesting. Hey, keeping it moving, amid the Air India probe, the U.S. FAA and Boeing have said that fuel switch locks are safe. The U.S. FAA and Boeing privately issued notifications that the fuel switch locks on Boeing planes are safe. There was just the most devastating report that came out. It depicted confusion in the cockpit shortly before the Air India jetliner crashed, killing 260 people last month. The pilot can be heard asking the other pilot why they cut off the plane engine's fuel supply. and the other pilot said that they didn't, and you have to wonder what was going on in that cockpit. And again, I don't want to try to explain this because we get lots of emails from pilots who are like, you were idiots. We never get emails from pilots who are like, hey, Vanetta, baby girl, I want to fly you out.
Well, I got to tell you something.
It's always, I'm an idiot.
On my buddy pass.
I'm glad you brought this up this morning because.
Okay, so what? Like, was there someone in the jump seat? Like, I don't want to speculate.
No.
No. Like, but I
have
videos of how the fuel switches are supposed to work, and you can't just bump into it.
Okay, I'm going to give. This is really interesting that you're timing for this because I didn't know you were going to talk about this. But we do have a lot of pilots that are tasty traders, and we actually have some pilots that are flying the exact same plane. And this morning, a pilot that I've become friendly with over the last few years sent me a video of him in the cockpit landing a this is a Dreamliner, I think.
Yeah,
landing,
787, yes.
Yeah, 787 Dreamliner in LA for the airline he works for. And as he's taxiing, he sent me a video showing, he said, Tom, I wanted to show you how impossible it is to turn off. He goes, with all my might, I cannot even turn off the fuel power switch. And we're landed, okay? So he's taxiing. He goes, and he sent me the whole video, which is really interesting. And because him and I have been going back and forth on this plane crash. And
like, what happens?
It's human error, right?
No, this is 100%. I mean, not 100%, but I believe this is pilot suicide. And I believe it was the first officer who then tried to throw the second.
You were speculating. I'm just going to put this out there.
I'm 100% speculating that the only reason.
The views of Tom Sosnoff do not reflect the views of IG or Tasty Trade.
The only reason.
It's company that it might be its parent company of, or any other company.
The only reason that pilot, the first officer, said that to the co-pilot was who turned the switches off. Because at that point, you'd be panicking, not asking who switched them. You'd be trying to push them back on. Is to throw the other guy under the bus. It's the only thing.
I think that there was someone in the third seat in that jump seat.
There was nobody in the jump seat.
Satan, maybe.
I don't know, but it's still so sad, and we're still trying to figure out.
No, it's incredibly sad because if you want to take your own life, you don't have to take 200 people with you.
Sure,
and you don't have to make it look like.
Have them come work here instead and die a slow death on the show.
I mean, it's crazy, but that's my take on this is it was the pilot, not the co-pilot. It was the first officer, and he switched him off and then tried to throw the co-pilot under the bus by asking him who's turned off the switches. At that point, knowing it's way too late to try to flip them back on. And they're very hard to switch off, so it wasn't done by accident.
Well, not sure what Boeing is doing this morning, because obviously any news that's tied to this could potentially affect what Boeing starts.
Well, this would be
Boeing's up. About
this would be bullish for Boeing. It'd be bullish for Boeing because it takes Boeing and GE who built the engines. It takes them out of it. It's not their fault.
Boeing's up to $2.50, making new highs or close enough to them.
Yeah. Okay.
They've been doing this though over the last week and a half.
Tesla is officially going to launch in India with a planned showroom opening. Tesla's going to open a showroom in Mumbai this week. It will mark the first official foray by Tesla in India. Consequentially, one of the first jury trials against Tesla is now commencing in Florida, involving the self-driving technology. 22-year-old ran into the back of a parked SUV, and then it killed some people who were standing on the street. So then the trial now goes to jury. Tesla normally settles their cases, so it'll be interesting to see what a jury says about this. What's Tesla doing this morning?
Sadnaf, you're the only one in the room right now that's been to Mumbai. Can they support a Tesla showroom?
Let me tell you something about driving in Mumbai. I don't care.
I just was asking about a showroom, but go ahead.
I don't care what kind of car you drive. I don't care how good or bad a driver you are. Anybody that can drive in the streets of Mumbai, okay,
is a legend.
Is a legend, okay? Because there's nothing like driving in India. Nothing. It can't be. It has to be unlike anywhere else in the world. If you can drive in the streets in India, You can drive anywhere in the world, no problem.
Yeah, I got that.
Well, the world will never know. Tesla up around $3 to 316 and it changed 317. But it too is one of those stocks that's not making its highs. The IV rank of 17, kind of like a Google type stock. Earnings July 23rd.
Online spending soared $24.1 billion across U.S. retailers during the stretch from July 8th to 11th, dubbed Black Friday in summer, outpacing Adobe Analytics' prior forecast as eager shoppers rushed to snap up steep discounts and back-to-school essentials. Retailers recorded online sales growth of 30% during events that included Amazon Prime Day, as well as sales from Walmart, Target, and Best Buy. What are you doing in Amazon, I guess?
We did not have a position.
I did get all of my stuff from Prime Day, and I am very happy with it. Thank you for asking.
Amazon unchanged at 225. Also one of those stocks that's kind of more midish range than on its highs. IV rank of 29 with earnings coming August 7th.
Oh, okay. Thank you, Matt. Hey, Netflix is losing its share of streaming. Last year, let's see, the share of most watched shows on streaming, so all streaming. So Netflix used to have 80% of the most watched shows. So you give a list of what people are watching on streaming. Netflix had 80% of that, and that was back in 2021 because we were all locked down. We were all watching the Tiger King. But now Netflix's share of streaming dominance is closer to 50%. Netflix has gone from being one of 3 major streaming services now to one of 7 or 8, but the stock continues to hit new highs. What are you doing in Netflix?
We do not have a position, and they have earnings this week, and my guess is that it's almost untradeable. Hopefully, they'll split the stock so it becomes more tradable. But at $1,250, it's pretty untradeable.
Up around $4.5. Yes.
Yeah.
Oh, that's a big move though this morning.
Yeah, IV rank at 39. Earnings July 17th, as Tom said. Earnings this week.
Okay, come on, Netflix.
Come on, Netflix.
Kraft Heinz is exploring grocery business spinoff worth $20 billion. The food company is studying a potential spinoff of a large chunk of its grocery business, including many Kraft products. It's a similar move done by Kellogg and its Kellanova and its snacks and other different divisions, and Mondelez and its sort of spinoff of Oreos and other snacks and stuff. So it's par for the course in this part of the market. I know you don't trade a ton of Kraft Heinz. You have to say it like that. But it's KHC.
We trade less than a ton.
Yeah, this is untradeable. Sorry, can't trade it.
Untradeable.
Well, I mean, but it does have earnings July 30th. It does have good IV rank of 71. But the options that are like one strike out of the money are trading for 25-30 cents. I mean, this is not. Can't do anything here unless you have a real directional bias, and I don't know how you can have a directional bias in. How do you say it?
Kraft Heinz.
There you go.
Apple is bidding for Formula One U.S. streaming rights as they try to become more of a player in the sports space. Apple submitted a bid worth at least $150 million a year for the U.S. rights to stream Formula One races starting in 2026. The iPhone maker is trying to capitalize on the popularity of its F1 movie that's doing well in theaters. What do you think about Apple streaming F1 as a series?
Sounds good to me.
Would you watch it? Do you watch F1?
No.
Yeah, I think
but it sounds good. Like it'd be. I mean, I have no problem them streaming it.
F1, the show is good. The F1, the movie was good, enjoyable. I think the show is actually better than the movie. But Apple trading at 209.5 or so, down around $2. One of those stocks also that is not anywhere near its highs, probably closer to its lows than its highs. Probably right in the middle. IV rank at 26.
If you know me, you know I love when a musical superstar gets a hot athletic boyfriend, and we are repeating the formula. First of all, my icon and emotional support friend, Taylor Swift, and of course her boyfriend, Travis Kelce. But now Megan Thee Stallion has made it Instagram official with Klay Thompson over the weekend. Yes, the 4-time NBA champ posted pics on his Instagram with the wonderfully curvy hip-hop Houston star Megan Thee Stallion, making it official. What are your thoughts?
I like it.
Yay! I do too. And like, look, Klay, you better not F this up. Her most recent relationship was with then Bulls forward Torrey Craig, who rode the bench, and then he was in hot water after he got exposed by an Instagram model. Oh, the whole thing was trash. We were like, Megan, you can do better. And she did. She upgraded. So I'm happy to see this. This is not news in any way. I'm just happy to report this.
I mean, did Klay Tom? Yeah, I guess he's still on the team, right? Yeah.
Yeah.
I think
Yeah,
so.
yeah.
Mm-hmm.
Yeah, and there's some very nice pictures of her in a bikini on his boat. So it is Instagram official. It is a hard launch, as the kids say. So I love this. Cannot wait to see this baddie sitting courtside serving looks. Anyway, finally today for my viral video of the day, Bat and I were surprised when Tom announced his plans to go skiing this ski season in Montana. And yeah, we are also just please anyway. But I found something for you, Tom, that is going to revolutionize your trip to Big Sky Country. Check this out: electric skis. What? Watch.
Believe that this thing is real and that we got to try it out. This is the Frigid Dynamics Vipera, and it is an electric ski. This is something that you're going to be hearing more about in the future because it's real. I can't believe it's actually real. And it works. This is like the Gen 1 version, and they're on like Gen 5 at this point, and they're hoping to launch this fall. But I think for somebody that just wants a really, really cool toy, a really cool skiing experience, this is like a must. I had a ball the whole time. It was just so much fun. So shout out to these guys. What do we think? Are we buying electric ski? I cannot.
Now we can all become mushrooms even when we're exercising. This is going to be great.
Tom, what do you say?
I mean, I'm not sure why I would need those, but
You can get around town. It's easier to get around town.
no.
It's easier for you to get from the lodge to the slope.
Yeah, there you go.
If you just turn on your skis.
Anyway,
Yeah,
that is my time.
I'm going to leave that for somebody else.
Sure.
That's my time for today. Yeah, that's fine.
My
Bat, what's
timing
coming up
sources says Klay is on Dallas now, Sosnoff, just to let you know.
Oh, he is. Oh, all
They
right.
just said. All right. Well, we're going to take a quick 90-second break. Even the S&Ps haven't moved. They're down 16. We'll be back in 90 seconds. This is Tasty Live. We got Confirm and Send next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half. I've done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah. So if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send, our viewer emails. But before we do, let's take a quick look at the market. Even the S&P is down 15, down about half as much as they were last night when they traded down to, I'll round up and say 62.60. They're 62.84 at the moment. NASDAQ down 55, Russell down just about 10, and the Dow down 133. They're all down around the same. Volatility up by 20 cents to 1945. You can see volatility here having its first real uptick, not even a real uptick, but an uptick of 1% over the last week or so. Bonds, no uptick there, down another 10 ticks to 112.19, about 3 ticks off of their lows. Bitcoin's got your upticks out enough. They're taking all the upticks. 123.6 is the high. 122, I'm rounding down. That's 122,000 right now, up 3,600 and change. Oil up 73 cents. That's a decent 1% move, breaking out of its range it's had here for the last week or so to the upside. Gold, which was higher last night, is now down $2.90. Silver, which is still higher by 23 cents, but off of its highs by about 40 cents, which was a new high, trading up to 39.57 or so. You mentioned the euro, so I'll put it up there right now. It looks to be basically unchanged, kind of a little bit of a downward move in euro the last couple of days. That's all I got.
Just looking at some of my positions here. I'm gonna sell a tiny little bit of
Litecoin.
Sold some Litecoin and
some Ripple.
And some Ripple.
It sounds like the old drink we used to have when we were sitting on a corner, a little Ripple.
Yeah, just a tiny little bit. I haven't sold any other digital assets up here at these levels, so I figure, those were just those were throw-ins, right?
Yes, I understand. Yeah, you bought them just because. I get it.
Yeah. So
the also rans. Maybe something was going to happen.
A little throw-in, yeah. Cool. All right, let's do it. Confirm and send. Emails that came into us. Over the weekend. It is Monday, July 14th. Can't believe it's the middle of July already, but I always say that. Let's do it. Based on your research, are there any stop losses for vertical put spreads for 0 DTEs? What is the best strategy for risk reward?
Entry, bad answer for you because there really, with 0 days, there's really nothing to do. I mean, I guess you could sell the other side. It won't cost you any more buying power to do that. Stock can't close on both sides, or the index can't close on both sides if you're trading an SPX at the same time. But really, it's entry with size and width of the strikes rather going less contracts, wider width, and more contracts, tighter width. But there's vertical spread. Sorry, you're on your own. In zero days.
Yeah. So the answer I would give
it's like a whole expiration in a day. Like
The answer that I would give here is the best strategy for risk reward if you want to trade a vertical spread in short or long put spread in the zeros in our world. Now, like you can do your own thing. Is to get out of the trade, before the close. So like let's say midday. I mean that's while there's still potentially some value left. Now, if it's really moved against you just want to hold to the end of the day, go ahead. But if there's some salvage value left that hasn't gone your way by the middle of the day, just take your loss and move on. There's no reason you're never gonna put a stop loss in on a defined risk spread. That's a mistake. So just pick a time. Just pick a time, and then if you get to that time and trade hasn't worked, just get out.
Yep.
Let's go to the next slide. I bought some leap calls, and the underlying has been moving higher. I'm still bullish, but I want to take some profits. Would you roll the calls up in this situation?
So rolling them up would mean buying the deeper in the money, selling the deeper in the money option that you own and buying another option closer to the money. Essentially selling a vertical spread, reducing your risk. So the key word there is reducing your risk. So if you're reducing your risk, sure, you can do that. I would prefer to challenge you on not looking at this leap call that you have and closing that and finding another strategy today that fits your assumption. Like you don't have to make it in that leap call, but you're reducing risk, then I have no problem with it.
Yeah, I'm with Tony on this one. If you bought some leap calls and they're actually working and the underlying starts to go significantly higher and you're still bullish, but you want to take some profits, sure, roll up the calls. If you want to take a little bit, if you want to take your leap calls off and then sell an out of the money put, you could do that too, but that gives you unlimited risk. The long call is limited risk. But sure, I mean, would we roll up the calls? Probably not. We would probably just take profits. But if you want to roll up the calls, sure, go ahead.
Yeah, 100%.
Let's go to the next slide.
You're reducing risks. I'm okay with that.
Yeah. I'm almost at 50% profit on one of my strangles after 9 days. It's wide, but it's still centered at 15 deltas. I haven't made any adjustments. Is there any benefit to rolling both strikes a little closer to at the money to collect more credit? Or is it better to just leave it alone?
Is it better to roll both the strikes a little closer? I mean, you can do whatever you want, but I would be looking to close this. I mean, mechanically, 50%, I mean, that's what you played for. What else you're looking for? Don't try to squeeze everything you can out of everything. It seems to not be beneficial 6, 7 times out of 10. So for me, I'd be looking to close it. But you certainly can do what you're looking to do, especially if the IV rank is still high. The IV rank is low. I'd be looking to close it, no question.
This is something that it would have to be a personal thing. Like if we were up 50% on a strangle after 9 days, but we wanted to keep the position on, we would, assuming how much premium's left, assuming there's still some premium left at 15 deltas, we would probably just keep that position on. I don't think I would roll closer to the money. But if it's a cheapie and there's not, and it's just junky premium left, then sure, you can roll it closer to the money, because assuming you have high IVR, you just want to roll close to the money, that's no problem. Or you want to roll it out another month, that's no problem either. So this is a situation where you have a winning trade. So this is an offensive roll, which really gives you a ton of optionality and a ton of different choices. So if you have an offensive roll here, yeah, go for it. Whatever you want to do. If you want to leave it. If you want to take profits, take profits. If you want to roll closer to at the money, roll closer to at the money. All of those are okay because it's a winning trade.
Absolutely, but one trade has nothing to do with the other, though, right? I mean, so if you wouldn't want the trade that you're going to be left with, then you probably shouldn't be making.
Oh, okay, of course. Let's go to the next slide. I have a question about strangles. On the Tasty Live show, you put on a lot of strangles, and you usually do it at the same time. Is there any advantage to selling a put on a down move and then potentially later in the cycle, if it recovers and has a nice up move, then selling the call?
You should do this every time, and this is how we plan to do it. The only thing I don't know is that it's going to recover and have that move and when it stopped. But other than that, it's a beautiful thing.
You know, it's a fun it's a fun thing to think about, and it's a fun exercise to run through in your head. But the reality is, if you think you can do better by just selling a put on a down move and then potentially later in the cycle, I mean, I wouldn't even sell the call later on. It's like I just would buy the put back. At that point, you're gonna have a nice profit. Like,
sure.
I think it's a lot. I think the world here is a lot more complex than you think. If you could choose to sell calls on up moves and then sell puts on down moves, there's no reason to ever sell the put on a down move or sell a call on an up move, because you would have just be up too much money on the naked option you sold. The reason we sell strangles is because you don't know which way they're going to go, and you're just trying to take advantage of the premium. I think it sounds good on paper. It's not realistic.
Agreed.
Let's go next slide. I've been very fortunate to have grown my account, so now it's pretty large. In order to hit a buying power usage guideline that you've spoken about, I would have to use as many as 100 contracts in some instances. My question is, would you use that many contracts, or do you have a contract limit?
I mean, I've traded 100 lots many times before and larger. I not in a retail setting that I'm in today. Again, if this fits your account size, man, more power to you. If you're single, Vanetta at tastylive.com is where you should be going here. I would hope that you would maybe, if you're trading SPY, maybe look at an SPX so you can have less contracts. I don't know. If that's what your account warrants, yeah, sure, go for it. And congratulations, big dog.
Yeah.
And we got $10 cap commissions for you too.
Yeah,
so
I mean,
good for you.
My answer is a little different. I mean, obviously, you've done a great job, so congrats. But I do not increase my contract size. We will increase it incrementally, but not like this. So if you're doing 10 contracts or 20 contracts or 50 contracts, and now you've increased your account size, we will increase the number of positions that we put on, but we will not increase the number of contracts that we put on, not that dramatically. So yes, I have a limit and I stick to it. I mean, listen, occasionally do I lose my discipline? Sure. But for 97% of the cases, I keep my contract size in check no matter what. And that's just the way I trade. And I there's no way I would lose my contract limit. I would just add to the number of positions we put on.
Okey-dokey.
Let's go to the next slide. And the last one. I have been selling 20 Delta Strangles in the SPY for some time while managing them at a 50% profit or 21 DTE. But during my backtesting on the Tasty platform, this strategy did not beat just being long SPY stock. I found the only strategy which beats long SPY is selling 50 Delta puts in the SPY. I suspect this is because of the bull market for the past several years, but does this mean selling 20 Delta Strangles is not the best strategy? What am I missing?
Well, I mean, if we make new highs again this next cycle, selling 20 Delta Strangles will not be the best strategy again, because if it's a 20 Delta, it's a 40% chance or more of a touch, which means we'll probably have a touch, especially if we're going to new highs here, which would make the strangle possibly profitable because time goes by, but not the most ideal strategy. 50, 60, or maybe even 70 delta puts in the money puts would have been the best strategy there. I mean, so I guess if you're going to put a scenario that's a very bullish scenario at play, then no, selling the 20 delta strangle is not going to work. Selling a strangle with a 20 delta call and a 50 delta put would probably be the best strategy, or something like that. I mean, you can't curve fit it.
Yeah, this is a tough one because to be fair here, okay, in a bull market, nothing's really going to beat long, just long the underlying. The 50 delta puts have always, no matter what, they've pretty much always beaten the SPY, just because the nature of the short premium, the high level of volatility is usually greater than the SPY return, so that makes sense. But yeah, strangles, it really depends. They're not. It's not a strategy that's. It's a strategy that's designed to beat risk-free rates by some multiple, but not a strategy that's necessarily designed to beat an S&P. What I mean by that is, like, if the S&P is up 10%, then yeah, it's a strategy designed to beat the S&P. When the S&P is up 30%, that's 6 or 7 times risk-free rates. That's a tough one. But if the S&P is up 15%, or the S&P is down 15%, then certainly it can beat that. So it really just depends. It depends on what delta you use. It depends on how you manage the positions. But it's a strategy that's designed to beat risk-free rates by some multiple. If the S&Ps are, the S&Ps have had an incredible run. I mean, do you think it continues into perpetuity? Then sure, you have plenty of other options then. For us, we're trying to cover all the bases.
Very good, my friend. Let's take a quick 90-second break and come back. We got more Tasty Live after this. But Sadnaf, I would like you to think about this because I got a lot of emails on it. You mentioned with Vanetta a moment ago that a pilot sent you a video showing you how very hard it was to shut off those switches. Then how did this person shut off those switches so easily?
Yeah, well, obviously
Let you think about that on this.
Oh,
break.
no, I'm not. I already thought about that.
Okay, go ahead.
Well, I mean, they planned for it. So they planned for it.
And how did they do it so quickly after takeoff?
Because when you're sitting there and it's not something you've planned for, it's extremely difficult to do. But when you're sitting there and that's all you've done is practice that so you can get it done, they planned for it. It's doable.
We'll take a quick 90-second break and come back. Sosnoff or I are not a pilot. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you missed the live show, here's our cherry on top weekly recap.
I did let off fireworks. I should have brought a video. I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. So it's usually me and my youngest Austin. Literally, it's like this. It's like, nah, dead serious. Like I don't mess around.
Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see big signs on the door, elevator, out of service. I was like, that's not going to be good for Tom.
I looked at it for like 5 minutes.
And he was like blink, blink, blink.
I'm like, this has to be a mistake.
So Bat what he's doing now is he's asking people around the office if they will go get his car for him because he can't walk up the 4 flights of stairs.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? You've got the beard, and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
The sassy guy. Yeah, look at him. He's proud to wear it.
I was trapped once on the air and water show.
Oh.
I was trapped on a boat, like a big giant yacht for an air and water show.
These are not actual problems.
Yeah, it was. We were 200 yards off of the North Avenue beach, and I could have technically, if I could swim, I could have made it in.
Okay, but you can't swim. We've already.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. Tomas, that's right. It's time for option jive. Enough out of you. Kai, how you doing, buddy?
I'm doing great this morning. How about you guys?
Doing good. Enough small talk. Get to business.
Sure, for sure. A lot of things happened last week, so we have tons of stuff to cover.
Let's do it.
All right. So some main summary from the last week. Definitely the first one is market is much quieter than expected. We assumed there were a lot of news with jitter the market, but actually nothing happened. The S&P only down 0.3% last week. So equity market first, very quiet. Can we go to the first slide? Yeah, the first one. Then the second one is copper futures, definitely one of the under the spotlight. It surged 13%, and because of Trump announced 50% tariff announcement. And NVIDIA is the first company that ever hits $4 trillion the first time. Pretty big news. Everyone was watching it. Everyone was talking about it, and the price kept going higher.
Yep.
That's fair. Yeah.
Yep. All right. So this upcoming week, some important economic news or events or stats. Tuesday and Wednesday, we're going to have CPI and PPI. Nothing is important to you, Tom, but for a lot of the zero DT traders, very short-term traders, it might change the SPY or the whatever the futures underlying you're trading.
Mm-hmm.
Yeah. And this week is the first, I would say, the first big earnings week, and we have a lot of banks.
Yeah, banks lead us off for sure.
Yeah. Okay, so last week we had quite a week. So SPY, other than the Dow, was down only 1%. The rest of the indices down like less than 0.5% or roughly around 0.5%. So definitely a very quiet week. Volatility didn't change either.
Yeah, all quiet.
Very quiet. So next slide. So that leads to our expect range. Expect range 1.3% is only 0.3% definitely within the range. And because the volatility didn't change that much, actually dropped 1 point. So the expect range becomes 1.2%. I didn't check VIX today. Probably slightly higher, 17-ish.
Tiny, barely a few pennies. That's it.
Oh, okay. So it didn't even change.
Yep.
So IVR last week, it's kind of mixed. Next slide, please. So the equity market down, euro, some currency markets, the implied volatility down, and the rest of the futures, commodities, bonds, the implied volatility actually increased.
Yes, sir.
Yeah. Nothing too much to talk about it. All right, let's go to the next slide. Some of the important, like big movers. Definitely Bitcoin already broke 120,000 this morning. So when I put in the slides yesterday, it was only merely to 120,000.
Yeah, 120,000. It's 123. It actually broke.
Oh, that's right. Yeah.
122.1 right now, about $1,200-1,300 off of its highs.
Yeah, I was actually typing like 10 minutes ago, trying to change the number, but anyway, we were talking about
you got to change it every hour you look at it for sure.
Yeah. So weekly gain is we're up like 7.2%. It's a big move, but it's not like a top 1% move. It's only top 10% since the beginning of the data available. So it's up there. Yeah.
Yeah, definitely up there for sure.
Yeah. Second slide, definitely the copper. Yeah, copper, we already reached like a 40-year high since 1968. The peak price of almost 5.9 per pound. And volatility increased volatility rank increased 95% IVR last Tuesday or so. So definitely the IVR is really high, but I'm not a copper trader, so I don't know. I saw the what's your assumption on the fast market? Someone setting the trades for copper. There are a lot of people.
kind of a hard trade here, right? I mean, copper and Bitcoin are both really just futures trades. You're either long or short them. The option market, unless you go to FCX, is non-existent.
I actually, Tony. I mean, to be fair, we did sell a strangle
after the fact.
After the fact, we sold a strangle the next day, and it actually worked out quite nicely. But
after volatility went up what, fivefold, right? I mean,
yeah. I mean, if we had been in prior, we'd be dead.
Right. And
do you still hold that position?
Markets got really wide. Go ahead. I'm sorry.
Do you still hold that position? I believe that trade was put in during the what's your assumption, right?
Yeah. No, we scalped it.
Oh, okay. Nice.
Mm-hmm.
And next slide, something interesting I want to talk about. I don't see a lot of the news talking about it. Is the silvers. Actually, silver reached to 39 this morning, 39 and a half. So the top last week was 39. It is the highest level since, can we go to the next slide? Yeah, it is the highest level since 2011. So the peak price 39 and weekly gains 5%. It's a very high price right now. Even though the weekly gains 5% is high, it's still, again, it's top 10% percentile. It's not top 1, but still a huge move for silver.
Yeah, silver just off of its highs that it made this morning of 39.57. It's 38.90. Even that 60-cent move is a very large move top to bottom for normal silver moves. Not the last couple of days, but normal silver moves. So it's unchanged. Place your bets.
Because silver futures is a large product, way bigger than
large
gold.
Product, another very hard product to trade.
Okay, so that leads to our next slide. We're talking about a gold-silver ratio again. This is interesting because you guys have been trading that for months, and the gold-silver ratio reached actually came back down to 85-ish this morning. It went up to 105. I believe you pulled the trigger roughly around 100 or 101. It went up to 105.
Well,
in April.
It got down to 86. We pulled the trigger at 92 at first. It went up to 105. Yeah, okay. It went up to 105. We did more at 102. That was a really tough trade, and it was painful. And we covered around 96, 95. I'm sorry, we covered around 95-ish. On average. So it wasn't a great trade. It was a tough trade.
$1,000 a point each time.
I understand.
Did you make money eventually?
Yeah, but I mean, our average between 102 and 92, your average is going to be 97. Yeah. I think we covered around 95-ish. So we made a little money, but you took a lot of heat. Don't get me. It wasn't easy money.
Yeah. I heard you guys talking
about all the other trades we do.
Well, that's more heat than usual.
Yes, I know. I was just being fun.
Okay, cool. Good to know. And the next slide, we were talking about the top and bottom performers from S&P 500. So top one, can we go to the next slide? Airlines, DL had earnings, so up 9%. Louvre, and up 9%. Moderna Coin, UAL, up a lot. Airline industry did really well last week. Decent IVR. I believe we have UAL earnings coming up this week, if I'm not wrong.
UAL has earnings coming on
Wednesday, right?
the 16th. So you are correct. After the market closes. Yep.
Yeah. So downside, again, some of the energy stock, First Solar, you didn't like at all. D-Dog had earnings last week. Did we have D-Dog in last week? I believe so. And okay, Hershey, ISRG. It was a mixed week, like up or down. It wasn't like the week before. We only see the upside like up 20% and downside only 3%. This is
D-Dog has earnings August 14th, just to clarify that. D-Dog took a little bit of hit after the big beautiful bill. That's what it is.
Oh, that's right. Okay. Beautiful. All right. So earnings, now the earnings season coming back. This is the first week that we're going to see a lot of interesting underlines. We have a lot of banks, JP Morgan, Citibank, actually, after today's closing. BlackRock, we have Bank of America, Goldman Sachs on Wednesday before market opens. TSM, definitely one of the most traded one, and also Netflix. Thursday is still the most important one, most important day for earnings.
Very good. Good job out of you. Good job out of the team. Very nice work.
I think United Airlines. Believe it or not, I think United Airlines might be the most interesting of all those plays.
Oh, is it? Okay, it's on Wednesday. Yeah.
I haven't looked. You usually don't say that about United Airlines.
I know, but it's the one that has probably the most volume. Maybe it's the most tradable of all. Taiwan Semiconductor and United Airlines, I think, are my two plays of those.
What about Netflix?
Netflix is untradeable. I don't know if you've looked at it.
It's got to be some sort of defined risk trade, right?
Yeah, it's untradeable even with defined risk. The markets are $2 wide. The iron condors in there are $4 wide. It's crazy.
Yeah, between the bid ask, you're saying. Yeah, you're right. You're 100% correct. Yeah.
Fair enough.
All right, my friend, let's take a quick 90-second break. We'll come back. We'll catch the opening bell right after this.
If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here.
Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. The opening bell is imminent, about a minute and a half here. Even the S&P is about as high as they've been last night and this morning, opening closer to their lows, down around 30 plus. They're down 850 right now. NASDAQ down 24, Russell down 5, Dow down 73, volatility up by 15 cents, 1940. Bonds 123.23. So I don't know if they've still down 6 ticks off of their lows of 112.16. Bitcoin up $3,500 to 122,000 and change. Oil up 10 cents. Gold completely unchanged after being higher most of the session and then going a little bit lower. Silver still up, but well off of its highs of 39.57, about 55 cents off of its highs. That's a big move in silver to the upside and then back down again. Nat gas, I didn't mention, up 13 cents is also a big move. The biggest move on the board on a percentage basis for the futures, up around 4 cents. Sadnov, the opening bell is imminent here. Did you buy the dip last night on Sunday?
I did not make a trade. It was a fun show with Chris, me and Chris last night, and but we talked about a lot of stuff, but I didn't trade anything. I thought they would open down around 20, and they opened down around 25, and they kind of stayed, from this is the high, like you said, they were down 35 at one point. But bonds were unchanged all night. Gold was up, and then gold sold off. It's actually down now, and then let's see, yeah, gold's down. Well, it's only down 60 cents, and silver sold off a bunch too, like you just mentioned. But everything else has been pretty much dead, dead in the water.
Yes, it's been relatively slow week. Last week, it's really been kind of any sell-off has been met with market movement to the upside, and today seems to be no difference as of right now.
Yeah, I agree. I haven't done anything yet. I just adjusted some positions, and then we sold a few digital assets out, tiny, some Litecoin and some Ripple. I forgot.
Let's see what's moving the market to the upside. You're looking at AppLovin and MSTR. MSTR, you figure, is higher with Bitcoin being higher. Boeing up around 5.75. Coin up around 5.5. Tesla going green up around 5. Also, Meta up around 3. Costco completely unchanged at 9.70. On the downside, let's take a look. Crowd CRWD down 11. Lilly down around $1.70. I don't know. Sadnov downside seems a little bit muted here. Even the S&P's down 8. It's really just a tug of war. There's really nothing.
Yeah. The biggest down move I see this morning is Micron, which I don't usually trade. I just have a small position on in there, so I've mentioned it.
Yeah, down around $4.67. Ivy rank is only 15, but it's upticking. The Nasdaq just turned green here, Southnoff, up 18 on the Nasdaq. Let's see, MU. Yeah, MU's had a nice little rally here on this. Ivy rank is 15, now selling off the last couple of days, making new lows, down $6 and change. Micron.
Yeah, I haven't.
Palantir for you just now.
That's just an adjustment. Looks like the biggest problem child we have this morning is, believe it or not, is Google. And it's not really like ugly. Like it's just.
Google up $2.90. I'm surprised you've been leaning a little long there in Google.
You're long?
You've been leaning a little bit long.
I was until Friday. I'm pretty flat. It's just the up move in there, this morning. I mean, Google's a weird stock too. It can easily, some days it opens up like this, like $3, and the next trade, it's down $2.
Sure. I mean, it's a $180 stock, though. I mean, it usually has tick for tick for tick. It's not an $1,800 stock.
Oh yeah. No, I agree. Let's take a look here and see. Gonna see if there's something that we.
How are the airlines doing? You mentioned UAL looked interesting for earnings for you. It's unchanged.
Delta's basically unchanged from where it was, and United Airlines, it sold off nicely from the crazy highs it made the other day, but the premium's starting to come in a little bit in there. It's a stock that's been kind of out of control to the up. I mean, it shouldn't have moved $15 with the Delta move. Was crazy.
For earnings, right? Yeah, you've got a real kind of tug of war here going on. I mean, we opened significantly lower 30 handles. I guess is significant in this market. We haven't had much movement. But yeah, even the S&P down 6 now.
Yeah, I mean, I'm not.
Nasdaq down 12 and change.
Yeah. Bum. I don't really see much here. Yeah, I was taking a quick look around to see if there's anything that. I mean, honestly, we're kind of just looking for positions, right? I got to put some stuff on.
Yep.
I need some trade ideas.
Well, we have a Tasty Bite segment next. Not nothing. You're gonna have to find your own.
Yeah. I think you said it on Friday, but I think Chris said it last night too. I kind of feel like if there's going to be a down move this week, it's got to be early, before the VIX expiration on Wednesday. I kind of feel like later in this week, the market will firm up as we get close to expiration. So I'm thinking if they're going to hit it at all, and I don't mean like, do we whack them and how, but just like if they're going to take it down just a little bit, it's probably going to be Monday, Tuesday.
Well, that's what I've been saying all last week. I thought we would, even though we opened lower on Friday, but we rallied back a little bit, that maybe Monday or Tuesday would be the day that we kind of have a little bit of movement to the downside. But right now, it doesn't seem like you have any movement doing anything. I'm getting lulled to sleep here.
No, yeah. I thought over the weekend when I read kind of the tariff stuff in the UK and stuff that you know what, it's going to be muted. It's not going to be nearly as the move that we've seen in the past. But I figured, 20, maybe it's 20 handles. 2 months ago it would have been 100 handles. Now it's 20 handles. And it's 10 handles is the bottom line. Yeah. So it's nothing. So it's more
this
like.
Is true.
Yeah. I mean, that's kind of it. I'd like to see the bonds make a stand here and hold. I mean, it looks like it's the same cast of characters. It's meta.
Your bond trade is not looking pretty. Not going to lie.
No, it's not. They look heavy as hell.
Netflix
up $13. Google's only up Google's only up $1.50 now. Google always does that. It's like it opens up $3, and next thing you know, oh, it's back to unchanged.
Yep.
Let's see if there's anything else. Not really. I don't think so.
All right. Well, don't worry. Don't fret. We're gonna take a quick 90-second break. We'll come back. We got a Tasty Bite segment coming up with you next. Even the S&P is down around 7. We'll be back in 90 seconds. This is Tasty Live.
Tasty Bite.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
With rate cuts back on the table, are there any trades that you're watching in particular? With rate cuts back on the table, are there any trades that you're watching in particular?
This market gives me trust issues, dude. Like, with rate cuts back on the table, and I'm not really convinced that they're really back on the table, I'm mostly going to be directionally kind of skewing all of my trades. Like, I remember trading, like, during the rate cuts in the past couple of years, and me being, like, neutral or a little bit bearish in the market just completely ruining my day. So I think I'm just going to trade a little less contrarian oriented, a little less of a contrarian these days, yeah.
I mean, the bond market becomes interesting again. That's been a tough one to step in front of, but that's definitely one I'm keeping my eye on.
So we got long TLT yesterday, but I don't know, bonds have never been my thing to trade. I find using capital elsewhere in stocks, options, futures, that's just a way better use of capital. So I tend to just avoid, I like it for the news event rather than the actual trading vehicle.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. But even the S&P is down 9, NASDAQ down 42, Dow down 11, and the Russell up $1.70, volatility up 10 cents. Sadlov, I learned on the break here some breaking news that maybe you would like to, well, You said that if anybody can drive in India, they deserve, a medal. They can drive anywhere, blah, blah, blah. Correct?
Yes.
And you have driven with Shark Jeev, correct?
Yes.
Would you be surprised to know that Shark Jeev also has an Indian driver's license? And would you like to take back everything you said about how good Indian drivers are? Or is he an outlier?
No, you're confusing a bunch. I didn't say Indian drivers are good. I just said they're crazy. And I said to drive in India, you have to be insane. I don't think Shark or any other Indian living in the U.S. after being outside of India for a while could ever go back to India and drive again. I think you would be dead within a week. It's so hard. I'm shocked. I'm shocked that I wasn't in a million accidents because these people are crazy. But let's put it this way. You could not rent a car there and survive.
Okay. I agree with you. I mean, I think London's hard enough. So yeah, sure. I got it.
London's hard for a different reason. You're not used to driving.
Are you on the same side of the road? Are you on the same side of the road as the U.S. in India?
Yeah.
Okay. Mm-hmm.
That's what makes it easier. London's hard because I drove in the UK, no problem. Piece of cake, scoop of chocolate, scoop of vanilla.
Okay, when you were 19 years old, you couldn't do it now. A matter of fact, I would pay to see you do it now because I've done it. I did it in a Sprinter van with no back window, and it wasn't easy. It takes a little bit of time to use.
I've done it.
You have a hard enough time driving here. You would not be able to do it.
Oh, you know what I was going to tell you? I forgot to tell you this. So I go out to my car, my Lucid this weekend, and I'm looking at my car and I'm like, why does this car look weird? Like, what just happened? And I'm looking at my car. Somebody stole my hubcaps.
That's the freaking best. I love that. Whoever you are, if you send those hubcaps to me, I'll pay you top dollar because I want to put them back on and then have you steal them again.
Somebody took the
That's so great.
But they're plastic.
What kind of fakakta cheap ass car has hubcaps that you drive? Unbelievable.
Plastic. They're plastic. They're nothing.
Full disclosure here. When the Bat was a younger man or child, maybe of the age of 16 or so.
Man-child at 16, he did steal Cadillac hubcaps and some spoke wheels back in his day with a hoodlum friend of his. So I want to atone for my sins by coming clean. But we used to get $25 for 4 of them back then. I mean, well, these are plastic. So I need you to go to your source and find out if they've got my Lucid. I probably know where I can go. That place on Ashland, they probably have them right there. Like,
Oh, they got him in the back for sure. That place on Ashland, 100%.
One time I went in there once and they said I needed a tire, and the guy goes, what do you need? I go, I don't have any of those now. He goes, give me a couple hours.
We'll get you one in an hour. Come back in an hour. We have one.
He said a couple hours. But they took them off one wheel. Doesn't make any sense.
So they didn't take 4, they just took 1?
No, there's 4 on each wheel.
There's 4 hubcaps on each wheel?
Yeah, they're plastic. I can't describe them, but if you Google a Lucid, you could see it.
So it's like there's one like on top of the other to make like a ridge kind of design or something. Yeah. And they just took the top one.
They took all 4 from one wheel.
Oh, they took all 4 from one wheel.
Yeah.
Yeah, that's not hitting a pothole or something like that. That's
no. It was outside. It was outside of Bad Coffee.
That's a bad neighborhood, man. That's what it is.
It's not a bad neighborhood.
It's a very bad. It's the shitty. I mean, this is what happens. Don't come out to the burbs. We don't have that kind of stuff. If we do, we shoot them.
It's a good neighborhood. I can't believe it.
Sure, it's a great neighborhood. Yeah, yeah. No parking, and they steal your hubcaps. Beautiful neighborhood. Beautiful.
I was gonna tell you over the weekend, but then I figured I'd make your day. So I mean,
You didn't want to make my birthday weekend too special.
yeah, I didn't want to make it too special. I didn't want to give you all.
So are you riding around now without one hubcap?
With one wheel, doesn't have any hubcaps. Yeah.
Yeah. Oh, that's beautiful.
But here's the
is that
funny.
Is that why you wore the Crocs today?
Here's the funniest thing. I'm looking at my car, and I'm like, why does this car look weird? I couldn't figure it out.
Seriously, it probably took you like 15 minutes. Man, I don't know.
Oh, it did.
This? I don't know.
It did. It took me like 15 minutes. I'm looking at the car. I'm like, yeah, I could have sworn that. And I never saw it. I don't remember being able to see the brakes before.
Oh my God, you're so good.
Yeah.
You're so good, Sadnov. I can't believe that there's 4 of them. That doesn't make sense the way you're. It's one hubcap, I'm sure. I'm looking online for them right now.
No.
Ooh, you're not gonna like this price. $62.
They're plastic.
$62. You like it or not? I don't know what to tell you. Oh, eBay, $250. What year is your car? Oh, 22 to 24. $250. $250.
No, my car's a 25.
Oh, let's see. Use Lucid 2025 hubcap. This is too good. This is the best birthday present I've ever gotten. $269 on eBay. It's used. $340. Oh my God. They got you by the short hairs.
Just for the hubcaps?
Yeah.
For one tire?
Oh man, you're gonna. I know how I'm gonna make $750 this weekend. I'm going over to your house and getting the other 3. You kidding me? Oh, this is awesome.
All right. Well, that's where I'm at right now in my life.
Oh my God. You should have never told me, because this is the best joke I'm going to be playing on you for the rest of my life. Every time I see your car, I'm just going to take one hubcap.
I don't think you can figure out how to do it.
I think I can. If they can figure it out, I know I can. One little screwdriver, ping! It's going to be so good. I'm going to have so much fun. This is great. And a side business.
You could just sell it back to me.
Let's go. What do we got going on? Tasty Bites.
Oh
my God, you're not going to like these prices. Oh my God.
All right, let's do this. I'm Tom Sosnoff. He's Tony Batista. It is 8:49 in Central Time. We're in Chicago. And if you're new to Tasty, welcome. Happy to have you. All week we'll be here. Our show starts at 7, it ends at 10, and happy to spend 3 hours of the day with you. The network starts at 6:30 in the morning here in Chicago and goes all the way till 6:30 at night. So it's 12 hours long. And we also do a show from London starting at 1:30 in the morning that goes till 4. So lots of content on Tasty Live.
Sadnov, I'm being told they're not just hubcaps by my Taiwanese sources on the internet world. They are aero covers to increase your range.
Oh, well, I need to increase my range.
If only your Lucid had cameras like the Tesla does, you could find out which neighbor stole it from you.
No, my Lucid, it has cameras.
On the outside?
I think so. I just don't know how to use them. It's got like 10 of them. I just don't have any idea how to use them.
Well, maybe you should go back to check that out. You might see the person who's in. You might find it's an employee.
Maybe. I'm not sure I want to know, but
maybe it's a disgruntled Toastmaster.
Could be. Could be. The hidden cost of playing it safe.
Oh no.
Oh, I didn't know there was a hidden cost of playing it safe. Let's see what we got here, John. We're going to talk iron condors, risk-defined, range-bound trades that consist of a short put spread and a short call spread. This is a Tasty Bite segment, so it's designed for smaller accounts between, let's say, under 25,000, maybe 2,500 to 25,000. So it's a smaller account. So we try to focus on more capital-efficient strategies. But so iron condors, just to talk about a specific spread. And Tony talked about, oh, maybe Netflix is an iron condor candidate this week. Well, we'll see. But iron condors profit when underlying stays between the short strikes. And they are among the most popular neutral strategies for smaller accounts because you get to sell a call spread and a put spread, and they're, they're pretty much like 60-40 or 65-35 risk reward, that kind of thing. But what exactly are the reduction in risks, and why aren't all of our trades risk defined, especially when scaling our accounts? And are defined risk strategies all they're cracked up to be? Let's take a look. Compared to a naked strangle, adding 10 delta wings reduces CVAR by 66%, reduces buying power reduction by 85%, while reducing max profit by only 48%. Okay? So that doesn't sound too bad, right? Spy Strangle versus an Iron Condor using August expiration, 20 Delta Strangle. There you can see the $10,000 in buying power, 4,400 in CVAR, and credit of 5,200, 580. I'm sorry, 582. When you do the Iron Condor, 20 Delta short with a 10 Delta long, the credit's 300, but the CVAR goes down to 1,400. That's your kind of max loss. And the BPR is only 1,400, same thing. And so the numbers actually look pretty good on this slide.
Yeah, and this is not the first time we've done research that shows this either.
Let's go to the next slide.
Showing the benefit of the Iron Condor.
So for small accounts, the benefit of reducing trade risk and capital usage is being able to put on many different positions. We've talked about the number of occurrences many times in our research, and studies in redeployment is one of the best ways of achieving that. But then two questions pop up. Why not always trade defined risk, even for larger accounts, and just size up on contracts? And could we go even more narrow and reduce the buying power and the risk, buying power requirement and the risk even further? Let's go next slide. Well, sizing up on risk-defined trades generally results in more risk than a strangle. That's weird. The Iron Condor has lower P&L and more frequent CVAR occurrences than a naked strangle, meaning that increasing size comes with large and frequent CVAR losses. And this is a really interesting slide. This is the downside, the hidden cost, as they say. The average P&L of a strangle is better than Iron Condor, okay, but the win rate's very close to the same. But the probability of reaching your max loss on an Iron Condor is 3 times what it is in a strangle. Let's go next slide. Okay. And max loss in a strangle is defined by CVAR, not by something else. So narrowing an Iron Condor simply reduces the credit, the CVAR, and the buying power across the board at nearly the same rate. So essentially, you're just spinning your wheels. So we don't do narrow Iron Condors. You've seen that for a long time with us. We get out of the narrow Iron Condor business a long time ago. Just not worth it, because you are essentially just spinning your wheels.
You are spinning
the percent reduction is exactly the same. You're better off doing the strangle if you have the capital. Let's go to the next slide. So simply adding long wings may not be the answer. Even though we still have access to defined risk trades, be aware that a fixed width spread or an Iron Condor and underlying that increased significantly in price sees its pop greatly reduced. So in order to get the same pop that you had, for example, in 2020, your wings on a 20 Delta IWM Iron Condor need to be $20 wide, making it less feasible for smaller accounts, partially due to the added skew. All we're saying is that as these markets have gone higher, the IWM Iron Condor was much more attractive with strikes $5 away in July of 2020 than it is with the index significantly higher in July of 2025. That's a super interesting statistic.
Absolutely.
Let's go to the next slide. So small accounts tend to be capital constrained from doing undefined risk trades, which is why Tasty Buy traders often opt for risk-defined trades. So how can we strategically choose undefined risk strategies like strangles and short puts and calls so they would be available to smaller accounts, maintaining the benefits of undefined risk trades? Okay, spoiler alert, it has to do with implied volatility. Let's go next slide. So when using undefined risk trades in low IV stocks, you get a sizable increase in BPR. However, in higher IV stocks, the percentage increase in BPR is much less, allowing you to use more undefined risk. So it's a better ratio. So we have here is really interesting buying power reduction, looking at Walmart and UAL, because they're both $95 stocks at the time when we wrote this. UAL has dropped a couple dollars since then, but when they were both 95, the implied volatility of UAL is significantly higher. So the iron condor, you collect the same amount of money. The one standard deviation strangle, the one standard deviation strangle, you have to put up significantly more money in Walmart. And so the percent in buying power difference is significant. So all they're saying here is that it's much more capital efficient to trade something with a much higher implied volatility.
I get it. And that's what you would think.
Let's go to the next slide. So some of the takeaways. By trading an iron condor without getting too narrow, you can reduce the tail risk and the capital components that come with strangles while maintaining a reasonable credit. However, be careful of sizing up more contracts or getting too narrow. Sizing up defined risk trades results in more risk than a strangle, and narrowing the long contracts doesn't optimize anything and can reduce your pop even further. So defined risk strategies cost 25 to 40% of the credit received. However, undefined risk in high IV stocks offers a better credit to buying power ratio and smaller BPR increases, making undefined risk a suitable option for smaller accounts if done optimally. This is a really good piece on the hidden costs of playing it safe.
Absolutely. And for Tasty Bites account, it's invaluable. I agree with you 100%. Sadnov, I've done a little research for you. Best price I can find is about $150, and it's got a couple of scratches on it. Now, I just happen to have in my possession one of these hubcaps with no scratches on it, other than the small little scratch I made, a small little scratch that was made probably when it fell off of the car. I can get it for you for $75. No tax, no title, no licenses fees. You let me know immediately following this break. We'll take a quick 90-second break. We got more Tasty Live after this. Now, if you know what comes up next, don't you? A little market measure. We'll be back in 90 seconds. Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah.
And you didn't go to my pool?
Yeah.
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with
It's been a while, Tony, since the hair flip.
Is that the Dewey whack him and how signal? Is that what that is? What is that?
No, I'm not sensing a Dewey whack 'em and how today.
Oh well, if you're not sensing it, then it's probably going to happen.
I don't know. It's a little weird.
I don't feel it either. Yeah. Volatility.
By the way,
still up 15 cents.
Google, I blew it. It's down in the day now.
It was lower. It was higher.
I stink.
Now it's unched. You had every opportunity in the entire world to do something there. You blew it. Is right.
Blew it.
Yeah.
I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live, and we're about to do a market measure. But before we do, this is the time of the day where we always have to sell our soul to the devil and tell you what we have coming up. Because the Bat and I are going on a road trip together in a week to get prepared. I think we're going to that crazy restaurant in Denver.
What do you mean crazy restaurant? That one that was like on TikTok or something like that? Where they do like cliff diving in Denver?
Yeah. The South Park one. I think.
Yes.
What's it called?
I don't know. I don't remember. I forget.
Got to think of this. This is bugging me. I gotta Google it really fast because there's. I think I heard it's just a show. What's it? Hold
I heard
on.
the food's not good, but it's a show. Is it called Casa Bonita?
Casa Bonita. Yes.
Casa Bonita. Festive atmosphere, cliff divers, and unique attractions.
Well, there's nothing more unique than us.
Strange and unique. We're strange. Everything else is unique.
Can I dive off the cliff?
I don't know. Can you?
Let's see. What kind of food is this? Casa Bonita. Tex-Mex, probably?
That's fine.
Let's take a little look here. Kitschy Tex-Mex. Kitschy Mexican theme. Oh, that's funny. Yeah. This is going to be an experience. All right. Here, I'll pick out your food for you right now. You can have a burrito.
Sounds like fun.
Well, you can't mess up a burrito that much, right?
No doubt. No doubt.
I mean,
No doubt.
How hard can it be to mess up a burrito? Ages 13 and up. A little Betty's burrito. We're in business. Oh, this does not look good.
It'll be a drinking night.
Oh, sure. What do you want? Margarita? Skinny. Oh, for you, skinny margarita. I don't know what the difference.
Perfect.
What is the difference between a margarita and a skinny margarita?
About 100 calories.
No, it's whatever. And then there's
No, it's not less alcohol. It's the calories, you monkey. Don't be silly.
Oh, anyway, it'll be fun. Have you ever dove off a cliff before?
No, I haven't jumped off one. I mean,
I
like
did.
A cliff.
I jumped off one once, but it wasn't a cliff. It was.
I was gonna say more than 10 feet. I mean, Larchmont doesn't count.
Oh, this is crazy. This is inside a restaurant. They're diving like that. So we grew up near this this kind of like
abandoned quarry.
Kind of like that. And they had these I guess they were probably like 30 feet. And when you're 30 feet up in the air, it looks like you're a mile. I think 30 feet.
Sure. Yeah.
Yeah, so we would jump off those. It's pretty scary.
Sure, I would say so. Yeah, I agree.
Now, I go to the back of a boat, and it's a foot off the water. I'm not jumping. 1 foot, okay, too high.
Things change, South markets move.
Markets move. Things change. Hold on. Here, I'm getting emails. Don't eat the food.
it looks very Chucky. It looks very Chuck E. Cheese like. That's what I'm being told.
Here. Last time we took the kids skiing there, we thought we were gonna die. It's god awful.
So you're saying there's a chance?
I love it. You know what?
Yeah, it looks like Rainforest Cafe to me. Like, it's got that kind of look and feel to it.
You know what's funny is the Rainforest Cafe. I've only went there.
It's closed. It's still sitting there.
No, it's shut down in Chicago.
It's closed. The building is still sitting there. They haven't done anything with it.
First time I went there, my kids were little. Took our kids in there. and the kids loved it. They thought it was super cool. You know, my wife is a food snob, so she literally wouldn't even eat. And
you're not?
I'm not a food snob.
Okay. Mm-hmm.
Oh, no. I ordered everything they had, and it was gross. Everything everybody said was true. But Case, she loved it. She was like, these chicken fingers are great.
Vinny liked it too. We took Vinny there. It was still open up until about maybe a dozen years ago or 10 years ago, whatever.
Yeah.
Probably took
Kids loved it.
Yeah.
Kids loved it. Yeah.
The gorilla had like dust on it and stuff. It was so old, you know what I mean? Like,
anyway, all right. All right, let's get moving here. We got some good. Oh yeah, before we do, just real quickly, the Bat and I will be in Denver, so we're talking about Casa Bonita, but we're gonna be. Actually, I don't even know if we're gonna end up going there. We're probably gonna opt out for a better culinary experience. But we're gonna be in Denver a week from this Thursday night for a show. 2 weeks from. I'm sorry, 1 week from this coming Friday on Friday, July 25th.
Oh my God, do you want me to do it?
Friday, July 25th at the Summit.
Nothing to do with Thursday. That's when we fly in, but go ahead.
Fly in Thursday. Do the show Friday morning. Doors open at 8. Show starts at 9. We did a show at the Summit, I think, years back. If it's the same theater I'm thinking of. So it's a really cool place. And hope to see everybody out in Denver. Can't wait to get out there. It's a Friday morning show. So you're at work by 11. Can't beat that. You're somewhere.
I get it now.
Wherever you got to be, you're there by 11. And you don't even have to. And if you can sneak out of the house, you don't have to go home. You're good. The whole day, go skiing.
It's a beautiful thing.
Water skiing. Go to the Rockies game. You can probably get tickets.
I'm sure you can.
The Rockies might end up with a worse record than the White Sox had last year.
And that was a record-setting worst.
And that was record-setting. Yeah.
Yep.
They're kind of on the same pace.
Yep.
Anyway.
Sad but true.
Anyway, wasn't it good? Did you watch any of the Cubs Yankees game yesterday?
They got killed, didn't they? Was it not yet? Yeah, didn't they get shut out?
No, that was Saturday. Yesterday the Cubs won.
No, I didn't see it.
Yesterday the Cubs won, and it was a really good game. But Yankee Stadium was sold out. A lot of Cubs fans, and it was good. I enjoyed it. All right, let's do it. This is a piece of research. tastylive.com. tastylive.com/events to sign up. tastylive.com/events. If the Bat and I are hauling our arses out to Denver, people better show up.
Come on and visit us.
It's a long drive in from that airport. You know, we were in Denver together last time.
Yep, you're right.
Why is the market bias already priced in? Let me ask you a question, Batista.
Sure.
Is the market biased already priced in?
Well, it depends on what you're looking at. I mean, it's a pretty dynamic marketplace. I'll tell you why. You look at ETFs like SPX and SPY, Qs, IWM, any of those kind of indexes, ETF that mirror the market, they actually put skew to them. So puts closer to the money are worth more than calls, equally as close to the market, yet we're at all-time highs and can go higher historically for risk-free rates. Okay, so you would be thinking the market's saying that we should be going lower, not higher, if puts are more expensive. But that's just a protection for your overall portfolio. If you look at individual stocks, your NVIDIAs, your Google, your Teslas, most of the stocks have call skew, if they have skew at all, not put skew. So is the market biased? I don't know. It depends on what you look at. So for me, I'm going to say the market's not biased, but it's perfectly priced. They've got this game. Perfectly priced.
Let's take a look. Whenever we as traders have a hunch about something, in the markets based on information we have gathered, it's easy to forget that the market has that information priced into the underlying. I mean, we call it efficient market theory, but in the option world, in the stock world, it's called efficient market theory. In the option world, it's more called priced in skew.
Yeah.
Because options are strategic, so we don't really call it efficient as much as we call it just kind of like the biases are priced in. So when looking at an underlying, it's impossible to tell what is priced in by just looking at the price. But the option chain gives us a full risk assessment of the underlying that incorporates probabilities, expected magnitude of moves, and variance around those moves. In an efficient marketplace, why shouldn't all this stuff be the case? If I was just talking about the Cubs game, Cubs-Yankees game, a day before the All-Star break on a Sunday in New York is sold out because it's a really popular game and tickets are super expensive. But if the same game was on a Monday afternoon at 1 o'clock versus the Rockies, tickets would be a third of the price. Okay, and it all makes sense because in today's world, everything should be priced according to all the information that's out there. It never made any sense why, as a sports fan, I should pay for, let's say, a Bears preseason game at the same price that I'd pay for a Bears-Packers game on Monday night.
Yeah, okay.
None of that stuff makes sense. What makes sense is what the markets do. They price the stuff in. Let's go to the next slide. So let's show how this works by using an intuitive concept in equities called downside velocity of risk. It's kind of something that we didn't make up the word downside or velocity of risk, but using the term to describe option trading is something that is pure tasty. We've been talking about velocity of risk on this network, Tony and I have, and we essentially incorporated the term to be where it's become kind of standard discussion, inside the industry. We know that over time, when the broad market, the S&P goes up, the up moves tend to be more frequent and less variable and smaller in size than the down moves. By looking at SPY price, we have no way of knowing that this is priced into it, but the options tell a different story, right? Because the SPY price can't price that into SPY, but you can price it in, into the options world. Let's go to the next slide. So we did a study. We recorded the 45-day returns since 2015. And we computed the average size and variability, which is standard deviation, of a positive and negative 45-day return. We observed and compared prices and the distance from at the money, the 16 delta call and put, to the above statistics in the underlying movement to see how the option prices, how options price in the downside velocity and the upside lull. I really like the way these guys wrote this up. Let's take a look. So the average positive return over a 45-day period tended to be 93% of the size of the average negative return. Additionally, there was only 68% of the volatility in the positive returns compared to the volatility of negative returns. This is super interesting because we never really quantified this before, and now I think this is kind of cool. So an average positive return over a 45-day period tend to be 93% of the size of the negative return and only 68% of the volatility. So when you look down below, you can see we priced everything out just so you can, since 2015 for the last 10 years, so you can look at everything from standard deviation to price change. Pretty cool.
Very cool. Very cool.
Let's go to the next slide. So based on the option market, 16 delta calls are priced at 79% of the 16 delta puts, implying that upside moves are expected to be less variable on average, have less movement, less standard deviation. So the calls are 73% of the distance from the at the money of the puts. implying that upside moves are expected to be smaller on average. Again, some really interesting numbers around the skew for the last 10 years. Sometimes that number is greater, sometimes the number is a little bit less, but that's the 10-year average, which is 73% of the distance. So when you're looking at puts, they're much further out of the money than calls.
Yeah. Yeah.
I mean, we just put some context around it, you know?
Sure.
So you can see the calls $2.63, puts $3.32 on average. The strike distance is 27 handles versus 37 handles. That's why we don't go equidistant. Pretty interesting.
Very. Yeah, for sure.
Let's go to the next slide. So whenever there's a non-symmetrical bias or assumption about a certain underlying like SPY, it's easy to forget that these asymmetries are already priced into the underlying. You know, that's because a lot of people tend to think, oh, you know, why is this put so expensive? I'll sell these. Or why is this call so expensive? It's the market price, you know, just pricing out the asymmetric risk. So the asymmetries are not visible when looking at the underlying price, but they are observable in the option chain. So if you look at SPY, you have no idea. But if you look at the option chain, you know exactly what it is. For SPY, we know that the upside moves tend to be smaller and less volatile than the downside moves. And we see that reflected in the options.
And that would be the put skew.
Yep, exactly.
Even the S&P's unchanged, Sadnov down 50 cents. NASDAQ up 21. The Russell up 8. The Russell and even the S&P's trying, and the NASDAQ trying to get this market a little bit higher, Sadnov. We're going to take a quick 90-second break and come back. We got more Tasty Live coming up. Immediately following these messages with, oh, Joy, your friend and mine, Mr. Scott Sheridan. The Dow is up 24 also, Sadnov. We'll be back in 90 seconds. This is Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend, and you know what that means. Enough out of you. That's right. That sigh can mean only one thing. It's time for the Tasty
It's
Trade
time for the main event.
Studios, the Scott Sheridan Studios, the aptly named studios. Mr. Scott Sheridan, how are you, kind sir?
I am excellent. How are you doing? Have you fully recovered from the birthday weekend?
I'm a little sore.
Okay. What, from like
where
she slapped you?
Hey, wait a minute, Scott. I spoke to your wife this weekend. She wished me a happy birthday. Very nice of her to do. Your wife, Sosnoff, just sent me pictures. She didn't thank me. She just thanked me with pictures for my birthday. But your wife sent me a nice birthday wish, Scott. But she knows what mound ball means.
See?
So be careful. No more code word.
So what do we have? 365 days. You're 2 in. 363 more days, and you're good to go.
That's right. I'll be ready.
So it's the little things in life.
And I went. You are so wrong on Lake Colonial in Lake Forest.
No. I have not been. People have told me it's not edible.
Who's your people?
I don't divulge. People I respect.
I want to know who these people are.
People that know food, not Tom, but people that do know food. There are people besides Tom.
I'm the one who said the one in the city is not edible.
Yeah, he says the one in the city is not edible. But I've been told by multiple sources, not Taiwanese, not edible. Do not go. And the service is horrible, as you would say.
The service was impeccable. The drinks were wonderful.
Oh my God.
The scenery is beautiful. The food was awesome. It was a wonderful restaurant.
What did they pay you to say that and give you a happy birthday free piece of cake?
Well, they do give you
a piece of cake.
Piece of cake or something.
No,
water?
I didn't get a free piece of cake, and they knew it was my birthday. Those SOBs.
It's terrible.
Did you get a candle at least?
It was excellent.
I will say, if you want me to do you a solid, gotta be in the city though. The next time I'll give you a list of the restaurants you need to go to. It's not on the menu, but I will get. It's lettuce. They will make this special cake for us. It is the greatest chocolate cake I've ever had. I have no idea what they do this. It's unbelievable how good this is.
Fair.
Don't worry about it. I'll give you a list of restaurants. You tell me when you're going. I'll pay for it. I'll take care of it for you.
So I had a Mindy's chocolate cake that was made for me. That was outstanding years ago at Tasty.
They make.
I like Mindy's chocolate cake. I mean, I like her pastries.
Yeah.
You tell me. I'll give you a list of restaurants. Easier if you do like Sushi-san, Ramen-san, piece of cake there. But I could probably make it work other places. It's the best chocolate cake you've ever had.
Well, I went to the best restaurant I've ever eaten in the city of in the Chicagoland area this weekend.
Okay. Well, I know. Okay. I'm going to be really alarmed if you tell me it was Carson's for lunch yesterday.
It was Carson's for lunch yesterday. I told Tony it's probably the best meal I think I've ever had.
I would Steve, because the only reason I said that was because Steve said greatest pork chop, whatever he's ever had.
It's probably the best meal I've ever had in the city of Chicago. For the money,
it's a
the whole
life-changing
package.
pork chop again. He's had like 12 in his life. 12 life-changing pork chops.
All here, all at Carson's. It's the best. That place.
That one. Not all.
That one.
Wait, which one do you go to? One up north. Where?
Deerfield.
Is that the one by Tony?
I don't know. It's the only one I know.
Yeah. Not far from me.
Well,
Where all good things are.
What street's on?
Waukegan something.
All right. But that one, not the one down here.
No, not the one down here.
Best restaurant in the city of Chicago.
Could be the best restaurant I've ever been to in the world.
In the world.
I mean, I was just in Milan. I was in London. This place blows them all away, every restaurant we went to.
Why? Because for $40, you got enough food to make you sick for a week?
And it's so good.
That's for sure.
They do one thing, and they do it freaking right.
The pork chop?
The pork chop, the coleslaw, the salad, everything's perfect.
That's not one thing.
They do everything they do perfect. It's like the Lowry's for prime rib place, you know.
What's going in there, by the way?
I don't know.
Well, I mean, that's only been out of business for 20 years.
I know, but they used to do one thing right. They make prime rib.
Okay, but if you do one thing,
it wasn't even that good. They did Yorkshire pudding right.
I'm not saying that was that good, but I'm saying that Carson's is that good.
I had to go to that freaking Lowry's every year for Sasha's birthday for like 10 years until she finally wisened up. Ugh.
I don't think I ate there more than a couple times.
I've only eaten there once.
The spinning salad bowl. Oh, man.
Yeah, it's funny. I mean, all I remember was really dark, wasn't it?
Really dark.
Yeah.
That way you don't see the food.
Wait, where is Sasha moved? Where is Sasha moved on to? And I don't hear you complaining about teppanyaki for the young one. That's his go-to.
Sasha's I tend.
Does she still want you around for birthdays?
No, unfortunately.
I get it.
She didn't want me around to babysit. I mean, are you kidding me? She won't even take free babysitting.
If you wanted a piece of prime rib, like where would you even go today? Who has good prime rib?
Erie Cafe.
Oh,
do they?
Yeah,
EJ's.
EJ's has.
But
good,
they sell out. They sell out in 2 seconds.
Oh, EJ's does make good prime rib.
On Saturday night they do.
It's the size of the plate too. I mean,
I might be
$100.
I might be going.
It's $100.
Yeah, the 6 and I might be going with Slappy and Ira.
With Slappy and Ira?
My wife and I can't make it.
That's your dinner?
My wife and I can't make it. And Slappy and Ira.
I'm asking the 6 because they were very graceful. Yeah,
it's you, Slappy, Ira, and your wife.
Yes. So
okay, that's not the foursome. That's not the foursome you want to do. Okay.
And he's got a bad
Not
elbow.
the odds you want.
Yeah, you have to cut his food for him.
And he's got a bad elbow.
I had to cut his ribs for him yesterday.
Yeah, so I asked the six. I said,
do
we have plans? And then she tried to pull, well, can they come down here? I'm like, no, the whole thing is they want
traffic.
the EJs. And then according to Slappy.
But you have to go at 5:30 if you want the prime rib.
I think it is. Oh no, it might be 6:30.
Well, 6:30 you'll probably still get prime rib.
Can we tell him to reserve a piece?
No.
Then the problem is, I guess EJ's closes for 3 weeks.
Hey, Scott, how about I go there early for you and I order it early for you and then leave when you guys come?
See, I appreciate that. And on top of that, I did ask my daughter. She said she'd be more than happy to stand in line for you at Katz's.
She's going to be hired.
Okay. See?
Tony and I will buy her lunch.
There you go.
But EJ's, the veal chop, I mean, their prime rib is huge. I mean,
I like prime rib, but I don't need 2 pounds of prime rib.
Well, you don't have a choice. You can't say, give me the queen cut. Okay. It is, they're happy to give you, they'll happy to cut you a small piece, but you got to take what they give you.
Okay.
Part of the show.
All right.
But their veal chop with the peppers on top,
great.
Unbelievable. Yeah. Yeah. But none of it compares to Carson's.
Oof.
Sorry.
Yeah, but what's their sausage and peppers?
They're great at EJ's.
Yeah.
Great.
Yeah, see that. I
The
love
sausage and pepper appetizers.
It's great.
It's really good.
It's really
Their
good.
sausage is good.
If you get the
you
chicken.
can't get good sausage anymore.
You get the chicken.
With sausage.
You get the chicken with the peppers and the sausage.
Yeah. Great.
Blow you away.
Great. Is that all a joke?
Yeah.
No, because they call it their own thing, but they have their own name.
Mm-hmm.
But it's chicken with the peppers, and you just tell them to add spicy sausage. It's great.
I'm getting hungry.
It's great. And they do it, and they do an amazing job, and they're pros.
The problem is I'm already concerned because with Slappy and Butchie, we might be in the back, and you said you can't go in the back.
Oh yeah, they'll put you in the back. Those guys are so public.
Tony, could you pull some strings and make sure we're sitting up
they'll
front?
put you in the back room, so nobody else will see you guys. Yeah, they like to.
If I was invited, I would have.
Well, are you coming Thursday night for our Dover Soul evening?
I mean, I could make it. I mean,
I could get it moved. You just have to sit next to Chucky. I mean, it's a good offer.
That's actually the best place to sit is next to Chucky, because Chucky will be yelling and screaming at everybody else. You'll be able to have a pleasant meal if you're sitting right next to him.
That's actually probably accurate. So let me know. I'm happy.
He's maturing in his old age.
Let me know. I'm happy to change the reservation.
Thank you. You're a sweet man. You're a sweet man. I appreciate that.
You are more than welcome.
Are you going to go out with us tonight?
Oh, I didn't get the nod. What's tonight?
Oh, it's Sun Wad night.
Oh, thanks. Who's going?
Bunch of people. Tell you later.
Appreciate it.
Bunch of people.
Don't we have a meeting
of his
this afternoon?
closest friends.
And then you're going to have. And then you go. Oh, really? And I didn't get the nod for that?
I just made it up.
Oh, that hurts. That Tony sitting in your chair, I feel the pain.
It's all day long, Scott. Get used to it.
Right there.
All day long.
Right there. Steak right through the heart.
Yeah.
I feel
it. It doesn't matter. Yeah. Yeah.
We have extra room.
I'm busy. No, I'm busy.
Man.
See, that's what Tony would say. I appreciate it, but I'm busy. Oh wow, that just deflated the air in the room.
I forgot to tell you.
Here's how that went. They said, make sure you tell Scott. Yeah, I'll tell Scott. Did you tell Scott? Yeah, I forgot. But he's busy.
He wanted to tell you, but he couldn't. He really did.
But I am going out Tuesday, Wednesday, Thursday. That's a lot for me.
That's a lot.
That's a lot. That I'm not sure. I don't know. 3 nights out in during the week. That's a lot.
Tuesday, Wednesday, Thursday. Yeah.
The good news is, I don't know about Tuesday night, but Wednesday night's 5:30, Thursday night's 5 o'clock. That's good.
Those are early.
Yeah, but I'm going to be a little late. I have a meeting
on Thursday.
Yeah,
we'll order for you. Extra Dover salt.
All I care about is the hash browns with the onions.
All right. That's all you care about.
Those hash browns, you want to talk about life changing? Those hash browns are life changing.
Yeah, they are.
Okay. There we go. All right. Should we get to some business?
Sure. Oh, somebody's not chatty today because it was my birthday and I had a nice weekend. Is that why?
I had an excellent weekend. You didn't ask. I'm sharing. I didn't want to take away from your thunder.
Where'd you go?
What I do? Saturday night. What did we do Friday night? Friday night was a disaster. We both threw away our dinner. We picked up, we threw it away.
From where?
I don't really want to call them out because I like the spot, but it was
From where?
It was not edible. Literally threw it in the garbage.
From where?
Cafe Cito.
What is that?
Cuban sandwiches we got.
Oh, the place we got from here?
Yeah, I like it a lot.
Yeah, cafes.
Threw it in the garbage. We got the vaca frita, the beef that's supposed to be crispy. I don't know if it was beef, and it definitely wasn't crispy. It was like gristle. It was like a full plate of gristle that they didn't cook. It was disappointing. That was bad.
Cafe Cito.
Cafe Cito. If you go to the one in Fullerton.
I've never been to the store.
Oh, it's weird. They're in apartment buildings. Like, it's weird. You walk in, so it's on Fullerton, just east of Clark.
Never been there.
On the south side street. This one's down behind Water Tower. Literally threw it in the garbage. So that was not a good dinner. Oof. Then Saturday, you wouldn't like it. It's the spin-off of Ricardo's, the one over by the movie theater, which went into Owen and Engine. Solid.
Gross. I went there. Absolutely gross. Corinne and I went there. She looks at me. She goes, "Who recommended this place?" I couldn't even tell her it was you. I was like, I heard somebody at work. It was so.
Tony, I'm feeling it. It's the chair. I think it's
one of the worst Italian restaurants I've ever been to.
Okay. Then you're going to hate where I went last time. La Scarola.
I don't hate it. I just don't like it. It's crowded. It's crowded. It's
crowded.
Overrated. The food's mediocre. It's just a big.
But we went to a show, which I didn't know I was getting roped into this one.
What kind of show?
A DJ. A place called Recess.
Yeah.
You know what it is?
Yeah, it's right here.
Well, not here. It's there. But
Yeah.
It's a nice spot. I mean, for the 3 months of summer that we get, I don't know what they would do in the wintertime.
That's where Caller Daddy was last weekend.
At Recess?
Yeah.
Oh, that's how you know it?
Yeah. Did you watch?
Yeah, he gets all his information from TikTok.
Did you watch the 7th inning stretch where she did it?
No, it was good.
No. Did you watch it?
She did it?
Seventh inning stretch where? For the Cubs?
Yeah. That's all they've been talking about in Chicago for 2 weeks.
She butchered it?
Intentionally.
Okay, what do you do intentionally to butcher it?
She butchered it intentionally. She was messing
Sing it
with
for us, Oz.
She was
What did she
messing-
say?
She did it.
She sung the
You got
words.
the ball game. Yeah, okay, 1, 2, 3. Yeah, okay, whatever.
Yeah, but she did it like a different kind of voice, and the crowd booed her.
Booed her.
Never seen it before.
At what game?
The Cubs game.
I got the Cubs game. Which one? Was it St. Louis? That series?
I forget who they're playing.
St. Louis.
It wasn't the game I was at.
No, it was between St. Louis and the series after St. Louis, I think.
No, they left after that. So that'd be.
They booed her.
I got to go look at this.
Oh my God, it's all they've been talking about in Chicago. Now they don't.
All they've been talking about because Tony and I are in Chicago. He's suburbs.
Well, you guys don't follow any.
I had not one conversation about her being booed at the game this weekend. Not one.
Not this weekend. It was last week.
How do you? Okay,
Last
I gotta go
weekend,
watch.
the weekend after,
I literally.
men don't
First
talk
of all,
about
I'm
this.
selling that they booed her.
The whole stadium booed her.
They did boo her.
They did.
Did she say like socks or something? Or
No. She just did it in a different
That was
voice.
just stupid. What she
Stupid.
did.
It was stupid. Like she had this whole event there. She brought like hundreds of people, and she had this monster event. And she messed with them. She messed with tradition. Cubs fans did not like it.
Is the 7th inning stretch anything similar around the league as it is for the Cubs? I mean, because it's iconic.
No, it's only there's a 7th inning stretch all over, but some places they play like they'll play like America the Beautiful.
But I mean, here we go. Jack Brickhouse to Harry Carey. I mean, and Harry Carey was blasted by the time he was singing.
Yeah.
All right, let's see this.
Yeah, they blasted her for this. I can't hear
watching
it.
something?
I can't hear.
I can't hear it. John, we can't hear it.
I can't hear it. I can't see it.
Well,
Even the S&Ps are down 7, NASDAQ up 3. You want to hear more great news, Scott, about this weekend?
Yes.
Tom had his hubcap stolen. They're $150, the cheapest I could find right now for one.
What car has hubcaps?
That's what I said. What kind of cheap ass car has hubcaps? It's Lucid.
The Lucid has hubcaps?
It has a little funky thing. They do it on purpose to make it for a certain look.
What? So they can be?
No,
they
not for a certain look. It's like
they stole all 4 of them.
Here's
Yeah, it's bad.
This is the crowd.
Oh, they're going.
The whole crowd.
Oh, that's bad. Okay.
They did not like it in a packed house at Wrigley.
No, that was bad.
I think it was the Cardinal game on Sunday.
That was bad. Yeah, because that looks like
yeah.
Like, oof. Well, she looked like she was having fun.
Oh, they were drunk.
Are you going to give his hubcap back?
So all 4?
No, just one wheel.
Are you sure you didn't hit a pothole and popped off?
No, there's a bunch of there's multiple ones on one wheel. No, it didn't.
What do you mean there's multiple ones? A hubcap's a hubcap.
No, it's not. Not on this car. They have multiple ones. It's like 3 or 4 on one wheel.
He's all screwed up. He's all screwed up. But I have one for $75 if you can't find anything cheaper, Sosnoff.
Tony, this could be a business. You go down in the morning, take them off, tell them, look.
I'm telling you, every day I see that car, I'm taking one, I'm throwing it in my own trunk.
Why would they put it? They haven't had hubcaps on cars in 30 years.
Don't ask.
It's cheap car.
No, seriously.
They just do it for looks.
Now I got to see your car. It's funny. I got to look
what
at that because
like.
it
They
just
do it
doesn't
for
make sense to me.
looks.
So it's $150?
Outside of bad coffee.
Oh, dangerous area. I mean, in fairness.
I told him the same thing.
Oof, on the weekend?
I guess.
Does somebody like bend down and pop that off and nobody sees it?
I don't know.
It's easy. I used to do it when I was like 16 to caddies. True story.
All right. Top 20 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Time for you. Number 20, Goog, no L. At a 41 for everybody else. Tesla to 17. I bet at a 38. NVIDIA at an 8. PLTR to 42. MSTR to 14. Apple at a 27. Google with an L at a 41. MU at a 14. Coin at a 42. Amazon at a 29. AMD to 27, SLV at a 35, Amara at a 28, Hood at a 36, SoFi at a 34, Netflix at a 36, TLT at a 20, SOXL at an 18, GLD at a 26, and number 20 for Tom, Goog Noel at a 41.
You know, Teslas don't have hubcaps. I'm just saying. You wouldn't have this problem if you kept your Tesla.
You're right.
I have to say,
they just have Nazis who run the company.
Correct. So, but I have never liked the X ever. Like, just do not like that car, but I've had to drive it because my car's in the shop, so I've been driving the last couple of days. I will say the pickup is amazing in an electric car.
The pickup in any electric car.
I know, in an electric car. Amazing. It's just...
The Lucid's faster than the Tesla, I think.
Is that?
Yeah, it's crazy. But you know, that's what those cars do. Their pickup's unbelievable.
Unbelievable. Yeah. There we go. Uncle T.
Well, Scott, you usually have the market moving. You've done nothing to help us today. Even the S&Ps are down 10.
Well, wait. What help do you need? Up or down? Let me see what I can do.
Doesn't matter, man. I just want it to move a little bit of volatility. So how about this? Down, then up. Can you do that?
I'll make some phone calls. We'll see what we can do, but I don't think I have that kind of yank.
I don't think you have that kind of yank
But I mean,
either.
it's really amazing. SPOO's down 10. Down 10. At almost all-time highs when we're putting the tariffs back on. The last time tariffs came on, we were at 4,800. So clearly the market doesn't care. Or they think
the market does not care.
Or the tariffs are not going to go into place.
Nobody cares.
You got jobless claims coming out on the 17th, south enough. Maybe that's keeping volatility up here a little bit. Volatility's up a couple of.
And aren't we starting the banks with earnings tomorrow?
We are starting the banks with earnings. Earnings season does start this week, more next week. But yes, you do get some earnings plays this week. UAL, TSM, a couple of the banks.
There we go.
Correct. You're always correct, Scott. You're perfect.
Appreciate
I'm
that.
thinking I might get a free meal. I think I might get a free meal on Thursday. I should say something publicly.
I am telling you, I will buy your dinner on Thursday if you. Well, wait a minute, you're down here anyway. You got to stay down a little longer.
By Thursday,
Hold on. You think he's going to come here at 6 in the morning and go home at 9 o'clock at night?
We'll be done by 5. Dinner's at 5. We're done by 7:15. You're home in bed before 8.
Scott, by Thursday, I'm probably going to do something silly that's going to piss you off, and you're going to make me pay for my own meal if I come. That's what I'm banking on.
Never. You come to dinner, Steve and I we got you.
Oh, Steve's got to pay too? I can't.
Well,
I can't go
the problem was I
He's too good
piggybacked
to me.
Steve's bet, which that's like first rule, you know. Oof. Yeah, I walked into that one.
That's a bad one.
Yeah,
That's
it's a bad one. So that's okay. I honor my bets, unlike some people.
All right, ladies and gentlemen, we're going to take a quick 90-second break on this market. Kind of complacent. We'll be back in 90 seconds. Liz and Jenny next. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. My partner in crime, Jenny Andrews, is back with a vengeance, ladies and gentlemen. Hello, Jenny. Welcome back.
I am back. Thank you for holding down the fort while I was gone. And I heard the show with TP was great on Friday. Everyone loved him.
TP is a crowd favorite. It was Flame Shirt Friday. TP and BLD at Flame Shirt Friday, so it was a lot of fun.
I heard he was looking so handsome in his flame shirt.
Yep. And I know I've got him on deck, and we were talking a little bit about this because not this week, but the next week, we've got TP on deck too. And I'm going to try my darndest to also get one Ryan Grayson because I need some crypto help.
Oh, that would be great. I know. I'm sorry. I was gone last week with Lily's camp. Lily's keeping me so busy. She was at, Notre Dame camp last week. And then next week we leave from New York for a dance convention. So I would like to say I'm gone for all these wonderful vacations, but it's camp convention.
Hey, listen, it goes by so fast. Embrace it. Because in a minute she's going to be gone.
You know what? I'm going to embrace dance convention next week. And if any New Yorkers out there have any tips of what to do, I'm going to be staying at the near Times Square because she's doing some dance event around Times Square. And so if anyone has any suggestions on where to go or what to do, I'll definitely have some free time. So email me, Jenny, Jenny at tastylive.com with any tips or tricks or things to do in New York City. I'll happily.
When I was there with Annabelle, Scott Sheridan had us running all over the place. So you might get some random tips. Yeah, I mean, they were just like, you got to go here, you got to go there, you got to go here. And Annabelle's like, okay, they told me I have to go. I was like, no, we don't have to.
Well, I'm going to be there a while. Wednesday, Thursday, Friday, Saturday, Sunday, 5 days.
That's a lot. That's a long time.
It's a long time. And she does put on performances. So I do go watch performances. So it's not like I'm sitting there doing nothing for 5 days, but I will have free time. I definitely will have free time.
Yeah.
So
they'll lock and load you. Jenny, what do you think about this market? It's about to turn green. SPOOs are only down $1.
Let's pop into the platform so everyone can see. SPOOs are down. Yeah, like Liz said, we're about to turn green. We've got NASDAQ green. SPOOs are only down 75 cents. This morning, I did taking a takeaway from one of our recent studies with Jacob, where the put spreads seem like the highest probability. Selling put spreads seem like the highest probability. So market was down. And I think I'm going to make a game time decision every day. So this morning, market was down 845. I just went in and sold a put spread. Took that piece from the research, but took the other end of it from TP. I collected a third of the width. So sold a put spread, collected a third of the width. And that was it. That was what I did in SPX this morning. Did you place your SPX trade?
I did a Jajun and I'm already out. I took 50% profit.
Yeah. Oh, yeah. I'm out too. I was out in like 6 minutes.
Yeah, it's pretty crazy because all you need is the pop. It's unlike the iron condors, but I mean, I do like the iron flies and the iron condors too. And I don't think there's a right or wrong. So we just got to pick what they want to do and stick with it. You know what I mean?
Right. Pick what they want to do and stick with it. What I run into, Liz, and you can help me because this is. I said to you this morning, and again, I'm a small fry. I'm not a Jack Tucker, right? I'm not a Jack Tucker. I'm a small fry. So I said to you this morning, I want to make $200 a day in SPX. If I make $200 a day in SPX for the 5 days for the week, that's $1,000 a week. That was my SPX goal that I said to you this morning. So made $200 on my first trade. And then I was like, ooh, maybe I'll put on something else. Maybe I'll put in something else. And that's always my downfall. I'll put trades on throughout the day if they're all winning until at one point I've got a max loss and then that's taken away all my winners for the day.
I know. I hear you. I can't stop you if I tried. And I feel exactly the same way.
So then I didn't put another one on because I'm trying to have self-control. Like I'm not going to put another one on. All I want is $200 a day in SPX. And I don't know. What are you going to put another trade on?
Probably not. I can't. I mean, I got so much stuff going on. I'm running around. So if I don't put it on right now, I'm not putting anything on. So.
And I guess at this point, if I don't, I won't. But I put the one on at 845. And when I got out of that, I thought, I'll put another one on now. And maybe I should have. But I don't know. It's the multiple trades. It's when I keep putting on more and more and more that gets me into trouble.
Yeah, I mean, and then find something else. Keep moving on. You did your SPX for the day. But I will tell you, I'm very excited. You see our backdrops? We will be back at the SIBO tomorrow, live from the SPX pit. We've seen, I'm not going to say they're taking our spot, but we've seen lots of personalities that are trying to take our spots at the SIBO.
my goodness, I should. Where was I? Oh, I was at Notre Dame, and they had like, some station on. I don't even remember which station, some financial station, and it was literally from our set. They were live.
Oh, I've seen, and it was so funny because you sent me Rick Santelli, who was sitting in our set, but I've seen 3 other people sitting in our seats, and I was like, those are our seats.
I know. We were sitting there at O'Rourke's. It's like a little Irish pub there, and my husband, my back was to the TV, and my husband looked up and he's like, look, there's the SIBO. And I turned around and I was like, that's my set.
We don't own the set. It is the SIBO set, but we are very territorial over it. We originated there.
Hey, gone for a week, and they gave our set to Rick Santelli.
They did. Well, like I said, there's 3 other people that I saw in our set. Maybe when we get back, it's permanent.
I don't know. Oh, maybe they talked about making that set permanent.
Yeah,
maybe it is. Well, we'll be back there tomorrow. I'm looking forward to it. Miss our little SIBO guys.
I do too. It's gonna be
fun. When
fun.
I say I miss our SIBO guys, I'm talking about our crew. I'm talking about our media crew. I'm not talking about the guys in the pit.
I was like, because we don't miss. I'm just kidding. No, we're kidding. We're fine. I like it. I like the shenanigans again. It's fun to be down there.
It is fun to be down there. So, all right. As far as our account goes, you said UNTP, you sold a put spread in SoFi, you took a look at bonds.
We did. TP and I did. It was pretty different. He wanted to answer. He was getting viewer questions, and he wanted to make sure that we answered a lot of those. And a lot of them were, if you've got a deep in the money covered call, what do you do with it? So we answered a lot of viewer questions. We really didn't place a lot of trades, which you and I both know it's kind of harder to trade when you're not here. When we're not together.
I know, and I don't see too much new in our account or too much to do. The only thing I would possibly do in the account, which is really almost like nothing, but this, we have 2 short puts in Archer. Maybe take off the 9 because that's at 50%, just about.
Sure.
We sold it for 63 cents and it's trading 33 cents.
Sure. Anytime we want to get back in, we can. There's still 72 cents in the synthetic covered call that we have in the 12, so it's fine.
Right. Don't see anything else to take off, but I would like to get more trades on. Put more trades on.
Yeah,
sure.
We don't have a lot. We don't have a lot of capital at use right now. So we will be putting more trades on today. And I know we're on deck for earnings season, right? So the banks are tomorrow, I believe. And if we want to pop, I don't know if you want to pop in Twitter.
I was going to say, but here on Twitter, you can see this week, JP Morgan, Citigroup, Wells Fargo, BlackRock.
Oh, they're today.
Well, yeah, so they're tomorrow morning. So we
got to do it today.
Right. If we're going to trade these, it's today. And all week, earnings are back. So we have a few week hiatus where there aren't a lot of earnings, and now they're back. And we have some big ones at the end of the week, like Netflix is this week.
Yeah.
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 That surprised you. Netflix usually I don't remember Netflix being the first week of earnings.
I don't either, but they're always shuffling these things around on me. AA used to kick it off. Now I don't even know where that thing is.
Well, the airlines are this week. Well, no, here it is. I thought it was American Airlines, but no, you're right. It's AA. There's Alcoa.
Yeah,
but
all of a sudden the banks jumped in front of Alcoa because they wanted all the credit. So we've got the bank stocks today. And you know what? We'll probably do one of them, but we're not going to do JP Morgan, Citigroup, and Wells Fargo. We'll probably do one.
Right. Yeah. Yeah. So we're busy. Friday, you had a market measure recap, and UNTP were so busy you never got to it. So I have that pulled up too if we want to go through to make sure we didn't miss any like mind-blowing studies that happened the week before.
I would like to, because I think I love what Kai puts together for us because it's quick. It's a quick hit and it gives you the takeaways. And then if you missed anything, you can go back and watch it.
Mm-hmm. Sure. So we've got that. I posted a picture. Lily sent this to me. She took it while I was driving. I said, just missing Mikey. But I'm going to tell you, Liz, this is going to be my one and only time I went on the boat this year. One and only time.
What'd you hit?
I'm never going back again this year. Never going back again this year.
What did you hit? What did you hit?
Last year, the marina last year was really tight, hard to get in and out of. Our spot, you remember, you were with me, hard to get in and out of that marina. So I moved to a different marina where they they lift your boat and drop it in, you get in. I thought this would be easier. They lift your boat and drop it in, you get in and take off. And then I thought you would just pull in and they would get your boat and they take it out, and it's stored inside. So it's not dirty and full of spider webs. And, well, you have to back in. So,
Oh no.
You have to back in. So, because they dropped the boat in and it was real easy. Pull out. I was like, okay, great. See you later. And I said, do I just pull right back in here when I come back? Which I could do. I could do that. And they're like, no, you got to back in because the machine that drops the boat in, you got to back in so it picks the boat up. So I was like, huh? I wouldn't have gotten in the boat if I knew I had to back in to get back.
And you're like, oh man, that is hysterical.
So I have to make some phone calls to switch to another location. Or I'm never taking it out again because I can't back it in. No way.
How long did it take you to finally back it in?
Oh, Logan my son was with us, so he backed it in. Like he can.
Oh, okay.
He can. Like he can do it, but I can't. So if I don't have if I don't have an experienced boater with me and I don't know anyone else, I'm never going out again. I was like, this was an expensive boat ride, kids. Enjoy it.
That is so funny.
Because there's no way I could back it in. No way.
Yeah. Okay, good. Well, I'm glad you didn't hit anything. I assumed the worst and was pleasantly surprised that you just said that Logan was with you. That you had to back it in.
So I'm sorry, Mikey. I know I promised I'd take you out unless you could back in a boat.
Hey, listen, the only reason I can laugh is I lived through it once. We just crashed into a cement. We just crashed into the cement. That's all we crashed into.
I know. Oh my gosh. And when the lift was like lifting the boat up, I was looking underneath and I saw Mark. I was like, oh, I think that's from when Liz and I hit the cement block.
It's so funny. But do you want to take a look at those? Do you want to take a look at those earnings trades, or do you want to jump into the market measures recap, or do we want to stay in here? I'm good with anything.
You know what I do, but I just want to make sure that want to get to some tweets and then we'll jump into the recap.
Yeah, let's do it.
Okay, so last margin call, ER is back, so I'm back.
Earnings? Is it earnings?
I guess so. Bank IV, yes. Bank IV is sitting at 50%, positioning myself for movement with an implied move with target, iron flies, or possibly near at the money iron flies. So JP Morgan, Citigroup, Wells Fargo, they all have earnings. So last margin call, we just talked about this. We'll probably trade one of them. We won't trade all. If one moves one way, they'll most likely all be moving with the same direction.
Yep.
So we can take a look at the banks. Do you want to?
Yeah, let's take a look at it.
All right. We have Citigroup with earnings. Today is, today's the 14th, so this is tomorrow before the open, Citigroup. $86. Jeez.
Well, I mean, I think JP Morgan, I think they're all going to be kind of expensive.
I just can't believe the run the banks have had.
Yeah.
Huh. Interesting. So $86. Citigroup used to be the cheap one. JP Morgan is
it's super expensive. Now, once again, if you're doing an iron condor, and I forget who it was who just tweeted it. Last margin call. If you're doing an iron condor, it doesn't matter how expensive it is because you're just going out of the way. But they were saying iron fly. So iron flies, in my mind, if you're doing an iron fly, you can kind of look over on that 4-day. You're going to be risking $9 to make $9. That's how I set up iron flies. You're risking what the expected move is for the cycle.
If I'm going to do an iron fly, I'd rather do this calendar because it's going to.
100%.
Oh, no, yeah. So
just
if
how we set up
move,
iron flies is like you're risking what the expected move is for the cycle.
Okay, I'll pull one up. So iron fly would be you're basically risking one to make one. So I'm selling the at the money, and I'm collecting 10, 20, so 87. Here's $10, $12, $15. Let me go $15. Here's $15 wide, where I'm collecting $8.50, and it gets your break evens about to the expected move.
That's very, very much how we would set up an iron fly, saying that if you think the move's going to be understated, this is how I would set it up.
So if it stays within this range, you'll make money on this iron fly, but today's only Monday, and you've got the whole week to wait. But similar, and so I think that, and this is risking 642. I kind of think you doing a calendar like this, you're risking much less, but you'll also get paid if it doesn't move, if it stays right in this range.
Yeah, right.
But also with the calendar, you've got the whole week to wait.
You got the whole week to wait. And the Iron Fly, you have the whole week to wait too. That's the hard
This
part
is so
about
cheap.
it.
Do you want to throw in this calendar? Should I throw in this calendar?
Sure. It's an expensive product, so we would do something like that. Or, yeah, I don't mind this calendar. Or I don't mind an iron calendar, 250 wide, just very little risk.
So that's JP Morgan, Citigroup. I just want to see how far you could get with the strangle here. If you want the 83.91.
Yeah. I mean, you're getting 90 cents for the 83.91. Yeah.
I don't know.
Yeah, I know.
It's a Monday. It's tough because it's a Monday. So you're not going to get, it's not like.
Well, you and I have never loved the banking stocks for earnings, just a little FYI. They haven't been our.
I know.
Usually I get so angry we open them up. I was like, close these things up with the banking stocks, but we'll see. We'll see.
I know. I can't wrap my brain around Citigroup $87. I just can't.
Okay, I am laughing because the chat is going, Sunflower says, if you have to go backwards, why didn't you get a row? Like start rowing backwards, turn it off.
Oh my gosh. It's, I don't know what to say, but I was like, see you, boat. It was been nice knowing you this summer. I put the word out to I told 2 different people I'd sell it if they wanted it. I said, spread the word. This boat's for sale. The blue bobber's for sale.
Don't take this the wrong way. You threatened to sell it probably 3 times this season.
I told everyone at the marina, like, hey, if you know anyone, the blue bobber's for sale.
Nonetheless, it was a good boat. It was fun. Okay, we're the close up Citigroup. There's nothing. Let's take a look at Wells Fargo, and then let's pop back into Twitter.
Okay, Wells Fargo. Yeah, they all look the same. So again, whatever the earnings are, they're probably all going to move in the same direction.
Yeah. Yeah, I believe they look correlated.
$3 expected move.
So this you could look for 50 cents and 50 cents.
Or I was kind of looking at a Jade Lizard.
Ooh, I love a Jade Lizard.
I know, but do you want to get long Wells Fargo at 79?
No, I do not. Thank you very much. Like I said, I know we don't love the financials. We never really have.
I know. It's just exciting because they kick off earnings. What else was on Bob's list today? JP Morgan, Citigroup, Wells Fargo, BlackRock, and what's ACI?
No idea, but I know this is not. And even tomorrow, we'll probably take a look at, Bank of America's on there, another financial, and then Johnson & Johnson, TNC. So then the banks follow through with it.
I'm going to see what ACI is. ACI. Albertsons. Maybe there's something there.
There's a grocery store.
That's the grocery store.
Yeah, that's the grocery store.
So Albertsons, a grocery store, 24 rank. Let me see how many stars this gets. 3 stars. I'll keep the stars out. 3 stars. Only a 71-cent expected move.
Yeah. It's a $22 stock.
Let me see. I mean, when you see 71-cent expected move on earnings, would you just buy the straddle?
No, because I feel like it's going to move 50 cents.
I'm going to buy this. I'm going to buy the Albertsons straddle.
I mean, I don't think Albertsons is going to move up or down $3.
No, I think you have to pick you pick your direction and you have a 50-50 shot.
Yeah, you have to pick your side. You have to pick your side.
You pick your side, you got a 50-50 shot. What do you think? What do you think in Albertsons? Which way do you think it's going, Liz?
Well, earnings, I don't know why, and I think it's because of Kai's studies, because they say earnings 51% are positive and 49% are negative, and that's what we've seen the last couple earnings cycles, which is pretty much 50-50. So it doesn't matter, but because of that, I'll take the extra 1%. Buy the 22 and a half.
We're gonna buy the 22 call for
or the 22 and a half for 35 cents.
22 and a half for 35 cents.
There you go. Could possibly go wrong.
I'm going to risk because then we're at least a little bit in the money. You know what I mean? Then it has to move so far, 22 and a half with the 70 cents expected move. Then at least if we go the expected move to the upside on the 22, we're at least going to make some money.
All right. This is
we got a 50
This is a thrilling trade.
hey, if Albertsons is up $3 tomorrow.
Woohoo. My gosh, that's funny.
Okay, so this is just us breaking the rules for fun.
While you're in there, why don't you push through the couple of things that you did?
Oh, sure. Okay. Today, Archer, we closed our puts for 50%. JP Morgan, we bought a calendar for 70 cents. And Albertsons grocery store, we bought one call.
God, I hope Albertsons brings us back to the promised land.
What's the potential here for Albertsons? 23, 23.50?
26.
Let's go back in time. Are we at all-time highs in Albertsons? No. Liz, look at this.
34 coming. 34 coming.
All right. I want to make sure we get to the tweets that came in, and then we'll get to the market measure recap. Eric, done for the day. And he
you've got to scroll down.
I was happy. All I wanted is $200 a day in SPX, but Eric's got $1,922.
I know. I love Eric. I love this. And I love. I was talking to TP about this, how he puts it on, done for the day. Hopefully he's out fishing or doing something for the rest of the day.
And a bit conservative. He's a bit conservative with his $1,900.
Well, because he was doing 5 lots
instead
of 10 lots. That's what I was saying. I was like, you got to scroll down. This is so fun.
Oh my gosh.
I do not want Liz to feel bad, but you can post the real photo.
Mikey, if you know how to reverse a boat, I'll take you out.
It actually looks like he's there.
It does. We're coming right through the window.
It is so funny.
Oh my gosh. Oh, the money tree. I somehow had Liz and Jenny.
Yes, this is Vanessa. Yes.
Vanessa. I finally found a money tree and watched Better Off Dead. I want my $2. I love it.
I was talking to TP about that. I was like, $2. I want my $2. He's like, he didn't know. TP had really no idea what I was talking about, but I love it, Vanessa. Your money tree looks beautiful. You're doing a great job with it.
Yeah, you're doing a great job. Here's the thing with money tree: take good care of it, and you'll just start. Your account will just start really making money. I don't know what happened. Sometimes when the money tree is flourishing, so is our account. My money tree died and went in the garbage can. It wasn't a good week.
It wasn't a good week. Yeah, but yours looks beautiful. I love it.
Yeah. All right, then Jack Tucker, 2 tranches today. Iron Condors collected $10,375, and I'm going to watch. We're just putting on any GTCs.
Oh, very good, Jack Tucker. I like it.
And I actually love everyone's tweets. I'm not just hearting certain. Oh, Mikey, I love this. Love that. And Eric, everyone out there. I mean, it's so funny that Eric's like made $2,000 today. Jack Tucker took in $10,000 today, and I was like, I made $200. I'll take it.
You know what though? But I mean, my account is pretty large, but I'm locked and loaded in so many other positions that I have yet to take off. Once I take those off, then I can start sizing up in my other ones.
I have so many other positions too that my account, like SPX is such a small part of my account that it's, I don't know. I have so many other things.
I know. I want to lean more towards SPX. I do. I want to be Jack Tucker. I want to be Eric. When I grow up, I want to be them. But right now, I've got so much risk on and so many other things that I'm smaller in SPX. But
I know.
Smaller than these guys. But I'm not as small as I used to be. I got bigger, but not as small as I used to be. But not as big as these guys.
Yeah. Last margin call. Oh yes, and we got that. We got to that one. And then here, Hatim. Hi, ladies. Iron Fly for today, $8 credit, and he's SPX too. So there we go. Look at that.
And his shorts are at 62.50 call and put, so he's $6 away right now. Not bad at all.
And he's got the July 14th, so that's how we would put it on the dailies, because I think he had written in before with one that was like further out in time.
Yeah, perfect. I like it. So Jenny, only because it is 10:25, do you want to pop into that study?
Sure. Yeah. Let's do it. Let's do it.
Quick trade from the beach. I love it.
Nice. Quick trade from the beach, DK Permable. What beach are you on?
I don't know. I can't tell from that picture. Oh, they're watching. That's the computer up. I was like, is that like a little house? I thought it was a little house on the beach.
Yeah. DK,
Awesome. I love it. Love it, love it, love it.
And Jackie, SPX put credit spread, 0DT, $20 wide, Victorious, $326 in gain. So yeah, this is like almost exactly what I did this morning. I did a $15 wide for about $5. This was a $20 wide for, again, if he made 50%, it was about for $7, quick gain. So yeah, love it. And I know those Jajun was collecting 50%. It is almost just like the Jajun where you're collecting such a big credit, and that put spread is very, very close to where it's trading.
Correct. That's just it is. You got to get it real close if you're going to collect close to 50%. So I love it. Thank you very much, everybody. And then Mikey, our Polish warrior, comes in, $50 in his pocket, and then let's close at $62.60 today. Ooh, somebody else won $62.50. So hopefully we'll split the difference.
And Ajit, names with high IVR. So we've got quite a few. Anything that we're in, I think we might still have Kimball Soup. Etsy, I do have. I don't know if we have Etsy right now.
I mean, I wonder if this is a lot of these are going to be earnings, right?
Well, I don't know. Do we have Etsy?
No.
We don't. And I think it's been going down.
Yeah, 50 IVR, there's got to be earnings somewhere, right? So hit the trade page. I bet it's like on deck.
Yeah, earnings on deck.
Yeah. When you see an IVR that high, Ajit, I love it. But those, a lot of times, we're going to run across problems with the high IVR is due to earnings that are imminent.
And we got out of our Campbell's Soup. And that's also been down.
Look at that, 97 IVR. When are earnings on that? Is that like today? And not for a while.
What is going on in Campbell's Soup? There's 97 IVR. Are they like going bank? I don't know. I have no idea what's going on in Campbell's Soup. I'm going to see if there's any news that there's a 97 IVR. Campbell's Soup named Civic 50 Greater Philadelphia. U.S. tax on the move. Campbell's company falls after J.P. Morgan cuts price target.
Oh. That was June 25th.
I don't know, Liz, but it's really near lows. And there's not a ton of premium there, but
I mean the 30 is not bad.
$75 using 533. Let's get back in.
Yeah, that's not bad at all.
You're right. I see we've got $12,000 in buying power, so that's good.
Yeah, we've got a decent chunk of change to use.
Okay, have I pushed everything out?
You did everything except Campbell's. So pop Campbell's out right now, and then that'll go out too.
Okay, so I am going to get into the market measure. And this is the summary of last week's market measure. In case anyone missed anything, want to know what the market measures were all about, here's a summary.
And we usually do them on Fridays, but I had TP. We never got to it. We were a little chatty. So, we never got to it.
Okay. All right. Let's see. The first one was controlling delta exposure in options.
Okay. So all we ask for here is the start and the takeaways. So if there's any... if you want to see the bulk of this, you got to go back and see it. That's what the name of it is, controlling delta exposure and options.
And I get it. And like we're at all-time highs. And if you're at all-time highs and you've got a lot of long delta and someone's thinking, geez, we're, back to all-time highs and I have so much long delta. How do I don't know if that's what this is going to be about, but how do you scale it back? Or I don't know. Did you see this one? Did you see this?
No, I did not. No, I did not. But it says one of the most compelling advantages of utilizing risk-defined strategies over naked positions lies in their ability to reduce tail risk by limiting maximum loss at order entry.
Okay. So risk define, and that's how you can control delta, define your risk. Risk defined strategies such as put spreads demonstrate significantly smaller deltas compared to naked alternatives like short puts. This reduced sensitivity to underlying price movements proves especially beneficial during volatile market conditions. And I agree with that. Like right now with lower IVR and we're at all-time highs, instead of selling a put, I might sell a put spread. In case the wheels fall off, you've got defined risk to the downside.
Well, and it's kind of, we talk about the common sense slide sometimes. When you have low implied volatility, which we are, it's cheaper to define your risk. In high implied volatility situations, it's very expensive to define your risk.
Yes, correct. All right, let's take a look at this. Put spreads with tighter $10 wings further demonstrate that narrower spreads produce more controlled delta exposure. During one of history's most volatile market periods, these spread delta stayed in a tight range. So
So they're just talking about the spread delta. I mean, and honestly, that makes sense. And I know they did a market measures today talking about the cost of defining a risk. And I think it's just kind of jumping on top of, they're kind of layering on top. So we'll have to go over that next week. But this is saying that it does. If it's very, very volatile, like it was on Liberation Day, it stays in a tight range because it's helpful.
Right. You could see the naked put is the red line, or the blue is the $20 wide spread, and you've got the green $10 wide spread. That moves the least because you've got one short, one long, and it's very defined risk. But even the $20 wide spread gives you some peace of mind with your delta.
It does. It does. So but that's good. I'm glad they visually, good job, Kai, on visually letting us see the why people want to. It's to control your deltas.
And Liz and I say all the time, we prefer naked options, but not when the IVR is low, when vol is low, we don't. Then we'll move to spreads.
Yeah, because it's cheaper too. It's almost like we don't look at the volatility. You look at, hey, look at this. For 20 cents, I can define my risk. Why not do it? I'm not going to do it for $3, but for 20 cents, I will.
Exactly. Okay, so the takeaways here are risk-defined strategies provide substantially lower delta exposure, with put spreads showing 69 to 89% less sensitivity than naked positions.
And then during market stress, naked puts can experience dramatic delta expansion up to 100, while spreads maintain consistently low levels. And we know that, right? So if you've got one naked option, it can explode. But if you've got something kind of keeping it in check, they both explode at the same time. So the deltas are still in check.
Hey, if you sell a naked put and it has a 16 delta, but the market falls and that puts deep in the money, you've got yourself 100 shares of stock. So there's that 100. Like, I don't want that 100 to scare people. And we say that all the time. Would I sell this naked put? Only if I'm willing to take 100 shares of stock at that price. So that out of the money naked put can turn into 100 shares of stock, and that's your 100 delta.
And that's true. It can't go higher than 100. You're just long the stock then. You're long the stock at whatever price it was, because that's what the naked put was. So what? Because now you're long the stock. Yes. So that 100 is delta. So.
All right. Winning trades exhibit similar delta patterns between strategies, but losing positions clearly favor spreads. Yeah. If a trade's going to lose, if I'm going to sell a put and the market goes down, I'm going to say, gee, I wish I sold a put spread. I would be losing less.
Correct. And then strategic exit at 21 DTE reduces over half of potential delta risk. Okay, so that's good too. Meaning if you get a naked option, I don't necessarily know that tight spreads, the 21 DTE, that's another way to help with your delta expansion risk is naked options at 21 DTE.
Okay, and again, when you're rolling at 21 DTE, I always look at what am I getting? Like if I'm rolling to the same strike, what am I getting? Because you're only reducing your risk by the amount of credit you're collecting. So if I've got a deep in the money put and I'm rolling out for far out in time, and I'm going to get 10 cents, 20 cents because it's so deep in the money, I'll turn that into something else. I'll turn that into a zebra.
Did you watch our show with TP? Did you watch our show with TP on Friday? That's what we were doing. Somebody had rolled all the way out to February options. And I was like, whoa, at this juncture, you're not getting anything. All you can get is the extrinsic value in that line. So it doesn't make any sense. You're on hopium of it coming back down. You're not getting anything by rolling that far out. They wanted to know if they should go out to March. But so to your point, there is like a common sense slide. If you aren't getting much, change it.
And if something's so deep in the money, well, that's when we'll change it to a zebra, because then you're changing that. You've got to find risk, and you have the upside profit potential, and more so than just rolling that naked put out.
Yeah.
Okay. All right. Back to all-time highs. This is the next one, Liz.
Yeah, we got break news from Frank. There's huge volume in SPX.
I see that. We'll go to the SIBO most active after this.
Okay.
Okay.
Yeah, because he's got some pretty interesting information there. But we are back to all-time highs. Everything's fine.
Back to all-time highs. I was at a family party, and at a family party, everyone's asking me, like, what should I do? Is the market going to keep going up? What should I do with the money I made in crypto? Should I sell out my Bitcoin? I have no answers for these questions.
You should not. No one should answer these questions. No one should be asking you these questions, especially at family parties.
Oh, my Uncle Scott, all I ever taught him was the Wheel of Fortune.
Yeah, and he's doing well with it, because that's all you ever really need to know is buying stock, selling calls against it, and then getting in and selling a put.
Yeah.
Yeah.
But what, as far as the kids with crypto, did he buy any crypto?
He did.
He did. Okay.
Yeah.
And does he look at it and think like, oh, should I sell it and take these gains?
No. He's pepper in the infield. He's holding it. He's a holder. What's it? HODL.
Hold on for dear life.
He's an HODL. And my brother keeps buying him crypto to put in his thing too. So he's like, those are just going in. I'm not buying. You know what I mean?
Yeah, that's nice. That's nice. Yeah. I do kind of feel bad so our boys are both over 18, so they both have trading accounts. Our girls are not over 18, not 18 yet, so they don't. So I do kind of feel bad for the girls when they talk about like all the things they have and they're accumulating, as their girls are like, gee, I wish I had an account.
No, they'll be fine. I know Annabelle's going to trade when she gets there. It's not her time yet. It's not her time yet.
All right, back to all-time highs. Liz?
Sure, the S&P 500's remarkable 86-day rally to new highs represents the third fastest recovery since 2000, featuring unprecedented normalization of the VIX and minimal pullbacks during a 23% climb from bottom to top.
All right. Yeah. 23% rally in 86 days. That's crazy.
Yeah. All right, what's the next slide?
Okay, we found a total of 11 similar occurrences in the past 2 decades. The yellow triangle and green star represent the start and end of the rallies. The red triangle represents the bottom of the interruptions, which are greater than 6%, ending the rally in our definition. Okay, so look, here we have, I'm just going back in time, 25% rally, 38, 30, 27, 46, 47. Now, those were crazy rallies, 46, 47%, 21, 30, 46, and we're at 32.
So buy the dip works 100% of the time in history.
Now, yeah, but you don't know when the bottom of the dip is.
No, I know, but it works. Buy the dip works 100% of the time if you got the dip.
So this, honestly, looking at those rallies, 38, we've got 38, 30, 27, 46, 47. At 23, I almost feel like we're not done yet.
Oh, I know. I don't disagree.
Yeah, it doesn't look like it's done yet. That's in my opinion from looking at these other big rallies. They were most of them. Like if you add these all up and you take it the average, 23 is at the low end.
Yeah, but nobody knows. I mean, they could be over. Nobody knows anything. Nobody knows anything.
Too bad I didn't have this one. Uncle Scott was asking me on Saturday.
Well, buy the dip works 100% of the time, Uncle Scott.
We're only 23. We've only rallied 23% in the last 83 days. It might keep going until we get closer to 30.
All right, what's the next slide? The current market rally has seen the highest and quickest 36-point VIX decline in a 90-day rally window, much faster than 2020 and much faster than 2008.
All right. Yeah.
So the VIX is normalizing faster.
All right. Well, now we're recovery VIX.
Yeah.
Yeah. Where's the VIX? Okay, let's look at the takeaways and then I don't know if there's one more to get to. There might be. Yeah, there is one more to get to. 10:39. We have some time. Takeaways. The ongoing rally has been strong and smooth with only minor pullbacks during the upward move.
The rally represents the third quickest rebound from the market bottom in all similar occurrences, only after 2009 and 2020.
All right, the VIX decline during the market rally was one of the largest and quickest under both shorter term and longer term duration.
Yeah, I mean, the VIX did normalize very rapidly, and we watched it. We watched it just completely come down.
And where is it now?
Here, I'll tell you. I can look at the VIX. The VIX,
16, 17?
VIX is 1710 right now.
1710.
Which, I mean, is high in my mind.
Yeah, compared to so many years of it being really low. So I'm okay with that.
I mean, so here, the VIX is up, it's up 71 cents. It's up 5%, and the SPOOs are up 5.
It's weird, right?
Weird. That's what I'm saying. That's weird.
I think there's just a lot of uncertainty of what's happening.
Well, yeah, with the tariff stuff that happened today. But all right, let's go to the next slide because I want to get to the SPX volume.
All right, this is the last one. Jade Lizard or Iron Condor. We've got something that we've been working on, Jade Lizard or Iron Condor, and I know we've been talking about this Jade Lizard or Iron Condor, and in my mind it depends on the vol. right? Depends on the vol.
Well, and I think it depends on their definition of jade lizard and their definition of iron condor. Like some kids now, they're doing this there. The jade lizard isn't the appropriate strikes, and the iron condor isn't the appropriate strikes that you and I think of.
That we would use.
Correct. So that is a big differentiator as well. So we both know these are premium selling strategies. Iron condor uses both call spread and put spread to define the risk on both sides. On the other hand, the jade lizard is slightly more directional. It combines a short call spread with a short put.
The setup gives the jade lizard a unique profile, especially in bullish or neutral markets with elevated volatility. And that's what I think. Jade lizard, higher vol. But when is it actually better than the iron condor?
We're going to compare performance between the two strategies across different implied volatility environments. Like, there you go, Jenny. Low and high IVR across different price trends in the underlying, trending up, trending down, or sideways.
So essentially, this is about finding the sweet spot for jade lizards where they shine compared to the iron condor.
All right, let's hit it. Jenny says it's high volatility. I say it's always.
All right, well, here are the takeaways. We don't see the middle of the study, but here are the takeaways. After the study, we found that jade lizards consistently outperform iron condors in terms of win rate and returns, especially in low IVR environments.
You said the opposite. However, jade lizards come with a higher risk of large losses, particularly in high IVR. Okay, because it kind of combines with the other one, meaning like your defined risk to the downside is going to stop you in the massive down moves.
See, in my mind, massive down move, a boost in vol, products are, near the bottom of the range. That's when we put on the jade lizard. So if the market goes back up, it's not blowing through that call spread. You're not losing going through that call spread of the iron condor.
Well, and high IV is better for a jade lizard too, because you're not buying that most expensive option on the board. The vol skew is highest when you're buying that put.
I know, although the takeaways surprised me. Iron condors, while less profitable, often more stable and controlled risk, making them better suited for capital preservation.
Well, that's true. For capital preservation, 100%. If you're looking for capital preservation, the iron condor is always going to win because there's not a naked option, right?
Correct.
If it's capital preservation, that was the gold standard, then it's 100% better.
All right, what's the bottom line, Liz?
The bottom line, jade lizards can be used for better profits when IVR is low and the market is calm. Iron condors can be used when you want lower risk and steady exposure. But I can't see that one.
But it all depends on your risk tolerance and your trading objectives. So
I have like a line crossed through that bottom line.
So I'm not sure because I've seen studies. I have seen studies that that talk of and we're working on something. We're working on something, and I'm going to pull up some old studies that we were looking at, talking about when is it best to use the jade lizard, when is it best to use an iron condor, when is it best to use these various strategies.
Yeah, I mean, don't get me wrong, I love this and I love our research. I love our research, but I've done so many over the years that I know I like jade lizards over iron condors.
And again, it depends on the time frame, depends on the vol, depends on your like if I'm looking at a 0 DTE, I'm not doing a jade lizard.
The 0 DTEs don't count though. They do not, because I've never done a jade lizard in SPX. I mean, that's just common sense. You're not doing a jade lizard in SPX. No one can afford it.
Well, that was the market measure recap for the week. We went over three of them. Yeah, 3 of them. So SPOO's up 550.
I know, we're close all watertight doors.
Let's look at what Frank is talking about. So I'm going to go to the SIBO most active, and I'm going to refresh and see if I see this up there. So Frank is saying...
And Frank gave us an instance. He said the 6270 calls have traded 53,400, which you can see right there, and there's a little bit more. And the open interest of it is only 1,300. So that first call, that 6270...
Yeah.
And he even puts the open interest in there.
But it's today's.
Yes.
It's today's. Huge volume in the 6270.
It almost looks like it's a 6570 call spread.
Right.
Oh, maybe a butterfly. Take a look at that, though, Jenny. You've got the 70s, 65, 60 in the calls.
But a butterfly, you'd see double at the one strike.
Yeah.
6260, 6570. I don't know.
I mean, but then take a look too. You got the 6055, 65, like there. Then skip the VIX and then go down another one. You got 30, 30, 30, 30. There's lots of volume in these July 14th.
Lots of volume. 6270, 6560. Where are we now? SPX. 6260. I mean, our people. And again, we don't know if people are buying them or selling them, but I'd bet more on a rally than anything.
I'm telling you, this is Jajun.
No, this is the Jajun.
This is Jajun. He's been
the trade I did this morning was like this, just $15 wide for four something, just like that.
Yeah, that's not bad. But the Jajun, so the difference between it is wrapping around the at the money, you have more profit potential, right? You have 50% profit potential versus a third.
But 65, here's 15. Yeah, so you've got $15 wide, you're paying $750. You're risking one to make one. You're paying $750, you can make $750, basically.
Yeah. And I mean, with these, you can do the calls, you can buy the call spread, or you can sell the in the money put spread. You could sell the 62.70, 62.55 put spread if you wanted to do it that way. Then it all goes out of the money.
Right. Yeah, it's the same trade.
That is fascinating. And what I love is that he gives us the open interest. See, he said even,
Yeah, right. So much. I mean, that's a crazy amount of business today for these SPX calls for the 0 days.
That's a lot.
That is a lot. Frank, you've got me thinking. I don't want to blow the money. I don't want to blow the $200 I made this morning, but you've got me thinking, Frank.
Well, what can you do with those 3 legs? Like you can see it's 3 legs of like 50,000 each.
I mean, it could be people buying, think we're going to have a big rally today, or it could be people selling, thinking we're going to sell off today. It could be either. We have no idea.
Buy one, sell two. You never know.
If we were on the floor, we would see the customer order what way it came in.
Kind of.
Well, if we were there and heard the order come in, we'd see what the broker was doing and what the floor was doing the opposite.
Yeah.
Unless this was exchange, but then this wouldn't have crossed. This would have to come to the floor because it's such a large order.
You think
this
so?
This isn't electronic. I thought every order over 250 goes to the floor.
I don't think every order over 250. I think the orders, they have to be over 250, but I don't think it's every. Do you know what I mean? Right. There are lots of orders that just get crossed.
Oh, Frank saying the calls are being bought.
They're buying the calls.
People are buying the calls, looking for an afternoon rally.
More calls being bought. Well, they're already getting it. To be honest with you, I don't know what time they did that. That was a little while ago, and we're up 3. So let's just say, I mean, I'm just making this up, but say they bought it 30 minutes ago when we were down 4. You're out.
Should we get in for old time's sake? A quick Jajun?
Yes.
Ooh, now it's 265. A quick Jajun. And so then I'll try to sell it for $50 more. Here we go. This upside broken wing butterfly is in a world of hurt.
Oh, and it also was marking bonkers. Like I opened up our platform and it said we were down $5,000. I was like, what? Just because one of them wasn't marking. I was like, impossible. What did TP do?
65. So 315. Sell for 315.
Yeah.
Okay. And then all we're doing is taking all those tens of thousands or over 100,000 calls that are being bought. If we're getting a big rally, we're going to at least make $50. Or do we just leave it and hope for the whole 250?
Listen, we're with the crowd. We are with. If Frank says it's more calls are being bought than sold, then we are with the calls that are being bought than sold.
Yeah.
It is pretty crazy. Let's go back and take a look at it though.
Back to the back here. So a lot of the 0 days are hot. They're hot.
So the puts, when you take a look at that, the puts, so I mean 37,000 is kind of a lot too, but it's that same thing. You've got the 62.40, 62.50, 62.30. So it's like 10 points, 10 points, 10 points.
Mm-hmm. Mm-hmm. Yeah, who knows? But the interesting thing with these, usually, we'll see closing orders. These are all opening orders.
Yeah.
Yeah.
Yeah. These 0 DTs are taking over the world.
I know. Just looking to see if there's anything other than SPX and VIX on here. And this could be, okay, so look at this. August 40 VIX call. Doesn't that seem crazy? August 40th.
It does, but that's so far away. August 20th, 2025.
Let's take a look at if that's opening or closing. VIX. AUG. Is it regular AUG?
Yeah, it was August 20th, 2025. 40 calls.
I mean, there's 130,000 open interest, so it could be closing.
It could be closing. I mean,
it could be. I mean,
who's going to buy that? I mean,
nobody in the right mind would buy this.
Do you know what's crazy? If that date is correct, so what is the new date? August 1st is the line in the sand for the tariffs?
I don't know.
That's what they were talking about this morning. And that's why I say line in the sand, because, the line keeps moving. It keeps.
But when I say no one in the right mind would buy this, the reason I say that is because it's like, okay, this is, 40 cents, 40 cents, 40 cents, 40 cents. If I'm gonna buy one of these, I'd go, at least down to the 37. They're not that much different in price.
Correct, except if you're buying 130,000 of them.
Yeah, right. Right.
Do you see what I'm saying? So each little penny helps when you're buying 130,000 of them.
That's true. That's true. Interesting.
Yeah. This is very fascinating.
Yeah, as far as I've been gone. I just got back to my house late last night. I've been gone for 11 days. So I don't know what is going on in the world.
Yeah, you have been gone for a long time.
11 days.
What are you drinking? Zip Fizz. But you weren't in a bubble. I will tell you that.
No, I was explaining to Liz. So once JD goes to college, and then he comes home and he's with you for a little vacation, you cater to them. So it was even though I wasn't in a bubble, I was kind of in his world, not mine.
Yeah, you said that.
Anything he wanted to do, we did.
Yeah. I'm sure your daughter loved that. She's gonna be like, God, when is this guy going back to school? He doesn't go for a while though. He's gonna go after these VIX options expire.
Yeah, but he's leaving this weekend. He's not home. He's leaving this weekend and he's gone. He's on the move. He's on 4 different trips visiting people.
Oh, is he? So he's pretty much gone from your house. This was your last vacation together?
Yes, because the next so many weekends he's gone.
Yeah, I mean, that makes sense. And you're going to be gone too. All right, want to pop back into Twitter, make sure we got to everybody?
Yes, definitely. Hang on one second. Fabio, hello, ladies. Could you please update on your Boeing trade? Sure.
Oh, I think that's gone, isn't it? I think it expired.
Let's take a look at our Boeing. It was an earnings setup calendar, I thought, wasn't it?
And I think one of the legs would have expired.
So and then look at Mikey's gift on Friday. Look at that.
Woohoo!
Nice, Mikey.
Okay, nice. A few more of these and he can buy Jenny's boat. Did you read his caption?
It's almost going to be free pretty soon, Mikey.
And it was Fabio. It was Fabio that TP was answering all the questions about yesterday. Or Friday. Not yesterday, Friday.
All right, so as far as the Boeing trade, we don't have one.
No, we had an earnings setup calendar. I'm going to guess that one was about to expire.
Boeing. So,
yeah. So the
wait, was a roll.
The 217 was about to expire. You can see that.
Is this okay? Here was the opening trade. We had $1.64 for the calendar. Then we had
we had to close it because no, it wasn't a roll. It was a close because it was about to expire. They're the same strikes.
Buy to close, sell to close.
Yeah, it's a closing trade because the one was about to expire, and there's no roll in between because it was the 0-day, 4-day. You see what I'm saying?
Yeah.
Mm-hmm. So we had to close that for a loss because the time had run out, and now Boeing is at 230.
Crazy.
Yeah, we put in the 217 calendar. Let's take a look at Boeing. Open it up.
So 12 rank in earnings coming up, and I don't know. This is kind of, their earnings coming up, so I'm going to bypass this.
Well, and we were clearly wrong on the earnings setup because we had the one that expired? Yeah, we had the 217, but we had one that was in the 11-day instead of a farther out one.
Right.
So we were wrong on earnings as well.
I don't even know if that was an earnings setup or that was someone that I think I remember that. I think this came from Twitter. I think it came from Twitter, and I think it was someone who was bullish in Boeing. We just threw on a baby upside calendar, and it blew through it. So,
yeah, it's a possibility.
And it was short term. So I don't. Again, if you're really directional in something, do a spread instead.
Yeah.
Or a zebra.
And that was a very baby small. If we were 1 week apart in a calendar, that was a very small trade.
I wanted to look at this Rocket Lab too, because this was a viewer was bearish in Rocket Lab. Oh yeah, and we rolled out the losing call spread and left these puts, which that's fine. These puts will roll off.
Yeah,
but this Rocket Lab just keeps going up and up and up.
It's a rocket.
Anything else you want to get into? Are there any, if you go to this watch list and 52-week low, I don't know if there's anything. What's nearest 52-week low?
There are things that are low.
Pepsi, and that's on the list for earnings this week.
Is it really?
I think so. PEP, Pepsi, earnings, yes, this week.
Yeah, July 17th. And then can we see the chart? And we're almost out of time. We can take a look at this tomorrow.
So that's near its 52-week low.
It is. I mean, you can clearly see that. The other thing that we can say is 52-week low is Campbell's soup, but that was not on that list.
No. So, $5 expected move in the 4-day or $6.90 in the 32-day. Maybe should we sell some puts in Pepsi?
I mean, we can. I don't want to be taken out by earnings. So that's the only thing, too. I know we're talking about iron condors versus puts and how I think jade lizards are the better trade. I do, because I don't want to be taken out by anything in earnings. This is holding up $2,100. Now, granted, we'll make $100 if it works, but
52-week low. So if Pepsi's near its 52-week low, where's Coke?
Yeah, people have spoken. No, I know they have more things than that in both of their more than just Pepsi and Coke.
Yeah. So interesting. With Coke near its high and Pepsi near its low, would you buy Pepsi and sell Coke and put on pairs trade?
Good. Like I said, they have more in their arsenal with this, and I always thought that they're getting taken down by all the snack stuff. I thought all the snack stuff was going down. I don't know what Coke owns or doesn't own, but I know Pepsi owns a lot of snack things because of the weight loss drugs.
Oh, really?
People are that's the headline I heard. People are snacking less because of the weight loss drugs, and it's really affecting these like the snack companies.
Oh, well, I did speak to someone. I saw someone who's on one of these weight loss drugs, and she said she's never hungry.
Yeah.
So
I could do it. I could do it. All right, Jenny, we are actually out of time for today.
All right, we're out of time, and I'll double check that we got to everybody. That Fabi was the last tweeter. Yes, we did. Got to everybody. Liz, have a good day. I know you're busy. I know you've got a lot going on at home today. But I know with this whole week, you've got a busy week.
This whole week, we're super busy. But Jenny, everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow live from the SIBO.
Live from the SIBO, ladies and gentlemen.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mike Butler, and of course, Ryan Grace in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on from strategies, concepts, trade ideas, trade management, crypto week, whatever.
Oh, that's right. I forgot. It is crypto week.
It's crypto week. Come on, man.
I'm sorry.
I was going to ask you, like, what's your biggest, there's a lot going on. So the Tasty Crypto team has a tweet out. If you haven't seen it, I retweeted it, but we'll put it in the chat too, of all the happenings. You got the Genius Act, the Clarity Act, the Anti-CBDC, Surveillance Act. Things are moving, dude.
They are moving. We got
This
prices
is
at
Super Bowl.
all-time highs. Everything's feeling pretty good. Yeah, crypto week. Hopefully we get some clarity around that. What did you say? The Clarity Act? That's a crypto market structure bill.
That's one of them. So that's
Okay.
the CFTC versus SEC.
Who's in control of what?
Yes,
Yeah.
exactly. So that's one of them. The Anti-CBDC Surveillance Act. That one's like a spy coin type thing. Like you don't want
You don't want any central bank digital currencies. We don't want the government messing with our money.
It's about, yes. So it's around that. Then
Want
the
them watching me.
Yeah, of course not. And then the Genius Act is like issuing of stable coins, like just some regulation around that.
Absolutely. Yeah, I'm excited, guys. I mean, there's a lot of tailwinds here in this market, whether it's on the regulatory front, it's on the macroeconomic front. You've got equities pretty much at all-time highs as well. I think, you look at inflation proxies, Bitcoin being one of those, in my opinion, all trading pretty well in this environment. It remains exciting. I think you have some time ahead of you too, right? Everybody wants to try to time the cycle, wins altcoin season, et cetera. We'll talk about all of that today. But you have some time. I don't think that you're seeing signs of, the top necessarily. Could you get a pullback here? Absolutely. I think that would be healthy. You see some consolidation. I'm kind of hoping for it as well. I wrote about that this weekend. But I think there's still a bit of time left to this cycle.
I tend to agree. I was actually asking Shelly while I was getting my third round of coffee. I was like,
fueling up.
Yeah, fueling up for the day. And Shelly on the crypto team, if you've seen her on Bean's show, as well as some of the other crypto stuff, we've had her on a couple times. I was like, is this a buy the rumor, sell the news type event that's happening this week? You have this massive move in Bitcoin. We're breaking out to new all-time highs. Ethereum has its move. You got sentiment just like, up only. The God candle is here, all that sort of stuff. You have crypto week, all sorts of things happening on the legislation front and regulatory front. Does that kind of pique your interest as kind of like a time to say, you know what, maybe it's a little bit of a trim to what you said, like it's still kind of early here? Is that kind of how you're feeling about this week and this move? Or is it up only?
I think over the intermediate to long term, it's up only. Yeah, I mean 6 to 12 months here. I think you're still in that bull
trader
market.
Perspective,
right? And we'll look at the signals. We will monitor the situation here, but I'm not seeing anything that makes me feel differently about that today. That said, if you bought this at 97 when it pulled back a couple of weeks ago, and you're at all-time highs as a trade, that's a great trade. You take a little bit off the table.
Yeah.
If you were long at 75 in April, or you've been long since 2021 or whenever. Maybe it's an opportunity to take some profits, right?
Yeah.
There's nothing wrong with that. If you want my outlook on the next 6 to 12 months, though, I don't think that the all-time forever high is in for Bitcoin, nor do I think that we've seen really anything yet as it relates to what alts could do and the catch-up move that could be coming. We'll see. But again, nothing wrong with taking some profits. If you've been following any of the trades that I've been placing, and I try to base these off of at least those momentum signals that we highlight here on the show. So exponential moving average crossovers, when they trigger a signal, whether it's to buy or to sell, I just try to follow that. It's a tough market, right? You can't short this thing in the spot cryptocurrency market.
No derivatives, really.
Exactly. So you want to stay on the right side of the trend, or at least be aware of when that's kind of slowing down or maybe even, reversing. And so based on that, I've been in and out of some positions, bought some Solana, bought some Aave, just put on some new trades here, bought some XRP. Maybe I'm chasing, I'm just trading around in this. So the point being, there's nothing wrong with taking some profits at all-time highs, even if it's going to be higher possibly in the next 6 months.
Yes.
You're going to have, I would think, an opportunity to reload, right? We look at those implied volatility, 1 standard deviation weekly moves. I think you get quickly back to 115 if you were to see some selling pressure, maybe 110. Those are spots where I would pick, but I'm still very bullish.
Love it. I'll give a quick little market update. I'll show some of the trades you got going, but E-minis are up 4 right now. It looked like it's another weekend of tariff headlines, 30%, 25, 20, it's just kind of handing them out. Saw one today, we're going to slap Russia with some tariffs, 100% on those guys.
Oh, weren't they just straight up sanctioned?
Yeah, I think this is on top of that.
Okay.
This is like, beating the dead horse kind of thing. You had some news events over the weekend while the markets are closed, interesting timing to that sort of thing. But E-minis did look like they were going to be down a little bit, as has been kind of the case for most of the last 4 or 5 months. It's been a pretty swift buy the dip here. We're down about 20 or 30 handles in the overnight session. We're now up 4. Everything seems to be digested now, whether it's the taco trade or just the fact that, nothing ever seems to happen. That's kind of how markets have been reacting, at least from my view here. NASDAQ up 60, got a little bit of two-sided action here. NVIDIA was down on the day. It's now up. You had Meta up a handful here. On the other side, you had Apple down 2 and change. Amazon's been kind of chopping around 225 today. Netflix bounced off the lows. It has earnings in the middle of this week, I believe, right? Middle of this week?
Yeah. Netflix is Thursday.
Yeah, and some of the banks earlier, on Tuesday and Wednesday. So it's definitely been a little bit of a choppy market. You got monthly expiration this week as well as VIX expiration. Dow up 46 and the Russell up 6. Everything has bounced back from those dreaded red numbers. Oil selling off a bit, /CL down $1.15, potentially on some of the sanction news with Russia. Volatility futures 1942, 1945 now up 20 ticks. You have the VIX itself at 17 and change. Bonds down 12 ticks. They have gotten smacked over the last week after having a nice rally. We're, point or two off the lows here. Gold selling off a little bit. It was pretty strong last week. Down $11 today. Silver reaching highs last week is now down below that a little bit, down 29 cents. Bitcoin futures just below 120,000 spots at 120 on the dot here. It did get to 122.7 was the high of the session here, but it's been a really nice little breakout here over the last week or so.
Yeah, I think when I was updating the performance dashboards from last week when we did the show on Monday, I believe we had a 108 spot price. So
that's
quick move.
We finally have some volatility. You can kind of see it in IBIT. If you look at IBIT, the Ivy rank there at 33%. Monthly implied volatility 50, 60% at some points, but definitely seeing a little bit of volatility there. To reference Ryan's trading, you can see it on the follow page here. So he puts in all the buys and sells for some of the crypto that he's trading. I think I saw some IBIT in there as well. Obviously, you can see our trading as well, but it's all there. A little bit of an idea of when Ryan is trimming, when he's adding.
Yeah, adding a couple positions here. We'll see how it goes. XRP, SUI. I've got a couple others. HBAR, Hedera. We're working in order in XLM, Stellar Lumens, and a little Pepe action, a little meme action there. I knew you'd like that, Mike.
There you go.
Just based off the signals, my friend, I think you've got some room to run. You can probably buy these at slightly better prices than wherever I got filled. But if you work a limit order in there at Tasty Trade, you're not going to get filled immediately, obviously, with a limit order. But it is commission-free trading. So
it's awesome.
Work those limits.
Work those limits.
Love it.
Get some new things on in your portfolio. Nice, interesting way to get a high vol, variable beta. I feel like a lot of these probably have a high beta to the market right now, but
some of the stuff goes up 50% in a week.
Yeah.
Then you do want to take some profits.
Yeah,
right? Outside of Bitcoin, I think you got trades there.
Yes, no doubt. It's cool. It's fun to, diversify a little bit into some of this stuff, especially when market volatility is kind of in the dumps and seems like everything's just kind of chopping around. Maybe you find some hidden gems with some of the crypto there. Do we have some more coming?
We're still working on it. I haven't had an update from my team. I got to get them on the phone here, find out what's going on. But
Crack the whip, Ryan.
The goal is to add another 10 or so tokens this month. So we have some time. If we're going to hit that date, we'll see. But I will let you know as soon as I know more. But we're working on that. Yeah. You guys trading anything else outside of crypto? I mean, obviously. But what are you trading?
What aren't we trading?
We've been trading IBIT. That's been a fun
IBIT's
one.
been good.
I mean,
Coinbase. I closed the short put spread there this morning into this rally. SMR closed a $135 winner there this morning.
Is that the small scale nuclear reactor stock?
Yeah,
some of
it's
those
all
are
related.
going
Everything's
nuts.
just
like
crypto.
Aqua is in there.
AI data centers.
It gives me queasy feelings. Some of like everything that's kind of going. There's a lot of big. You look at Palantir up $5 every day. It just like goes up and.
You can see Mountain Pass. So that's the rare earth minerals company here. That's I believe they're in Wyoming. It's really the only U.S. based rare earth elements company. 50% move last week.
Yeah, I think that was a Chamath.
It might have been a SPAC. Yeah,
I think he was part of it. I think it's like the one of like 30 that he did that actually went up. The other ones are just like
Remember when we thought we were going to be flying a bunch of people to outer space on Virgin Galactic?
Space, SPCE, yeah. I mean, some of those stocks are going nuts too. ASTS, Rocket Labs, like that's another story that's here. It's rockets, it's crypto, it's everything's blast off.
Yeah.
All,
I mean, if you can weather the downside volatility, this is going to sound like dumb. I'll probably eat my words here, but it's not that hard if you have a longer term time horizon, right? AI, robotics, genetic engineering.
Things are coming.
Clean energy. it ebbs and flows, and you could go back a few years and make a pretty strong argument of why clean energy, the time wasn't right, electric vehicles, time wasn't right, and there's a lot of, fandom and excitement around Tesla at that time. Go back kind of pre-split. And now you might have, a strong argument that it's still not the time, but ultimately that's where you're going to get to. It gets cheaper over time. I just think that some of these trends more than anything are, maybe I should say, easy to identify. Whether you make money or not, well, we'll see. But it's pretty easy to see the direction of travel.
Yeah.
If you want to participate.
No doubt. It does go with, it has its realized volatility.
Absolutely.
I mean, like those things move, and I agree with you. It always comes down to the number one thing of just position sizing and being comfortable with your positions. You can't be over leveraged in a lot of this stuff, but I agree. The asymmetry of the risk in those sort of stocks is certainly to the upside, and especially when you have a market that is very news driven, very headline driven. Like these things, your ACLO or SMR, your upside could be 2 or 3x versus the 1x downside. Right. And those are asymmetric bets that over periods of time you want to take, but you have to be able to withstand that downside.
Absolutely.
You can't be like loading the boat on all these.
No, you can't be too concentrated in any one name, but I think it's like, do you think there's going to be more internet or less?
Yes.
Right.
That's a good way to
rolls
put
his
it.
eyes at us.
Yeah. Like, hello.
I am looking to buy oil though at 65 if we get it a little bit lower here.
There you go.
Yeah, I've got a.
What's your thinking there?
I just think like the same thing. I mean, you look at what I like to look at is sector performance. You kind of get a handle on what's working, what isn't, and what stage are you at in the market. Right. In a kind of opposite of maybe where we are here today, in a market that is positioning very defensively, you're going to see things outperform that are going to be lower beta. You're going to see utilities, for example, customer or consumer staples, for example, versus kind of what you're seeing here today is a bid for inflation proxies. Kind of a bid for like that stagflationary type of market environment. I don't have them in front of me, but I've got to imagine that XLE has had a pretty good month versus REITs, maybe. I don't know.
Yes. I don't look at what's XHB is kind of a home builders.
Yeah, so I got them up here in front of me now. So you just have to take my word for it that I'm not lying to you. On a 1 month basis, tech is up 7%. It's XLK. Industrials 5 3/4. Financials 5. Consumer discretionary, materials. On the other side of that, what's underperformed? Healthcare down 0.5% on a 1 month basis. Consumer staples, real estate, energy isn't in the top there, but you just kind of see this bid into inflation proxies. Look at the price of copper recently.
Yeah, copper.
Look at Bitcoin. Gold's near an all-time
Copper had
high.
the headlines, so like there was the whole tariff stuff there.
Well, even look at.
I agree with the story.
Kind of there's this bid into if you have a little bit of a slowdown in growth. There's this bid to try to keep up with that inflation reaccelerating, that rate of change. And so I think, from an investment perspective, you want to own those assets that are going to give you that exposure, or just generally speaking, you want to own assets.
Yeah.
And in some cases, higher beta stuff is going to work, like tech and Bitcoin in that environment.
Yeah. You didn't mention platinum.
The old platinum.
Yeah, we've got some platinum traders in the house here
Yeah.
at Tasty. I think it's it's been trading really well. Maybe pulling back here today. Is that right?
I mean, this thing moves.
Yes, it does.
This thing moves. There's a lot of money to be had and lost.
Are you guys in platinum?
And I've been dabbling with the pseudo platinum arbors here. So whatever. I don't even know what to call them.
Okay.
I call them the platinum poppies.
There you go.
They're like, yeah.
They come over, they talk, they sit down next to your desk
whisper
and
in
they
my
say,
ear.
hey, why don't you look at platinum futures?
Yeah. I mean, I'm looking at this back on June 2nd, platinum futures, let's say $1,000 a contract, trade up to 1,400. It's a nice 40% move, pulling back here today. But this is
$50 a point.
6 weeks up in a row. Now you're getting a little bit of a pullback to start the week.
Yeah. It moves though.
Yeah.
One of these is today is
bigly
$2,500 move. It's a big
It's tempting. What I've been doing has been working, so it's like, as soon as I do something differently,
You don't
it's
want to
not going
mess
to work.
with it. I hear you. It's the hardest thing because you get the FOMO. The FOMO kicks in. You're like, I need a taste of that. Like I need a little bit of that.
Hey, what do they have over there, huh?
Yeah, what do they got over there? Oh, they're scalping 50 points out of platinum. Let me get some of that.
You're making money, but what are they doing?
Yeah, what are they doing over there? Yeah. Oh, I know. I sit there next to Gus, and we always talk about, the winners are never big enough, and the losers are always too big. You always,
Yep.
It's always.
Yeah, and the losing trades. I mean, this is like human psychology, behavioral finance stuff, right? Yes. The winners don't feel as good as or like the losers hurt worse sort of thing, the winners feel
because you're wrong,
right?
Like it's
when you're right, you're just like, obviously that.
Yeah,
worked.
this would work, obviously.
Speaking of working, MicroStrategy and IBIT, we got some questions in the YouTube chat. And it's playing out as we've been saying it would play out. You have a 10K move in Bitcoin futures over 3 days. Now you see a 6% pop in MicroStrategy IV. You see a 6% pop in IBIT. So some people asking, is MicroStrategy overvalued? I mean, it's a volatility instrument for Bitcoin's moves. IBIT is much more one-for-one, stable, super liquid. We're trading IBIT. But yeah, Rick's asking about long leaps that he bought. And now that is certainly profitable.
Yeah.
Taking any profits you could.
That was a Ryan Grace trade.
Yeah.
We have been pounding the table.
It's just, it's not running like I'd like to see it though. We're still in a low vol environment. It's nice to have some green.
I know. You didn't get that pop and vol. Are you kind of surprised at that?
Little bit, but
seems like an acceptance move. Like a big move with no pop and volatility is like, oh, well, we were just cheap. Yeah. You get the big move and a pop and volatility. It's like FOMO.
You're kind of still looking for that confirmation. Yeah. And you might still get it. I guess on the other side, like, do you really want this to be all over in 2 weeks? It runs to 150 back down to 100 and like that was it. I think you kind of want that slow grind higher, that controlled move in some ways. So I'll take what I can get. But yeah, if you were putting that trade on, you're buying deep out of the money stuff because of the low vol. You did get the move in volatility, but you haven't had a huge pop there. Though you get the delta move too. Those options are more expensive than they were when we were talking about it. So take some profits and you reload. This stuff can move very quickly.
Yeah. And you can move from derivatives, like if you're trading IBIT and you double up on these leap options, you can trim those and buy spot. That's a way to kind of lower your P&L volatility, so to speak. Yeah. Like, you have this high volatility, gamma play, it's long vol, it's worked, perfectly. You take that and you roll into a spot position, whether it's, via IBIT or spot Bitcoin or, at the money puts in IBIT as opposed, short puts as opposed to the out of the money calls on a shorter duration. You roll into that sort of position and it allows you to not miss out on the continued upside, but it'll reduce your P&L volatility, especially if there is, a little bit of a pullback or a vol contraction, those sort of things that would really go against you with when you're playing for gamma and vol. So.
Indeed. But yeah, markets are marketing. If you want to join us on the YouTube channel, we're streaming live there. Just go to Tasty Live. You can see this video front and center. Throw in your trade ideas along the right-hand side chat. But we do have some slides. We'll do a full breakdown of the crypto markets, and then we'll pop back over and see if we've got any questions from that.
Yes.
So, yeah.
You got questions on anything crypto land.
Crypto week, baby.
We'll try to answer.
Yeah. We'll try. If you can't answer, the rest of us are.
I don't have all the answers. That's we'll have to kick it off with that.
Don't undersell yourself.
Full disclosure. Don't have all the answers, but let's take a look at what we are seeing here in the market for this beautiful July 14th, Monday. Bitcoin lower now, but 128 when we put this together. Decent move here on the week, up 30% year to date. There are a few tokens that are now outperforming it. Volatility has popped a little bit as we talked about, but it's not jumping off the page here. That said, price momentum as measured by exponential moving averages that we look at across multiple timeframes, daily, weekly, and monthly, are much more bullish than they were. So you're starting to get some buy signals here. If you trade on a momentum basis and you want to jump into that, possibly ride it higher if that's where it's going. A couple things to call out here. Outside of Bitcoin, ETH back above 3,000, underperforming Bitcoin year to date by 21%. Its volatility is moving a little bit higher. Its price momentum has gone from bearish on the weekly to neutral to bullish, bullish on the daily. These are the signals that you want to see that quite often are the kind of precursor to a much larger move. Whether you get it or not, who knows, but this is what you want to see and kind of gives me some hope, I suppose. Same thing with Solana, that flipped back to bullish on the daily and to neutral on the weekly where it was bearish. XRP, full-blown bullish, up at $3 here, close to it, 14% outperformance year-to-date versus Bitcoin. So that's one of the ones that is outperforming. Doge trading a little bit better. Yeah, all this stuff is pretty positive here. But again, it has been, for the most part, Bitcoin over everything, and that does somewhat continue here, up 30% year-to-date. But on a weekly basis, you've had some big movers, right? If you could pick your spots and get a trade on in here, XRP up 30%. You'll see there's a few others that are up a little bit more. So if we jump to the next slide, get into more of the smaller market cap alts that we track, big moves in Cardano, that's ADA, up at almost 75 cents, up almost 30% this week. You'll see Stellar Lumens here, XLM towards the bottom, up 11% year to date versus Bitcoin. So that's one that very quickly just launched.
Yeah. That's one of the more anonymous ones, right?
This is, I honestly don't know. It's been around for a long time. I don't know what the edge is or the angle with the tech or anything like that. It's a fast payments chain, as I understand it. Again, I don't know what launches these things higher, aside from the fact that they're very small. A little bit of money goes a long way at times. And XLM went up 87% in the last week. It's all positively correlated. Pick your flavor of volatility, as we always say. 30-day realized vol over 100% there, over 100% for SUI. That's up back to $4. Looked bearish for a moment and then blasted off. I think if you can recognize that the broader crypto market is in a bullish trend, you can pick spots at times in things that are underperforming, and at some point you're right on that trade. Take some profits would be my view. Maybe you ride it higher. Maybe it goes to $10 from $4. I don't know.
Yeah.
But big moves here over the last week. If you were in it, you're feeling good. You got some money that you could probably take off the table, let a little bit more ride.
Yeah. You mentioned it last time too, of like some of these altcoins, and if you're just like getting into the space, sprinkling a little bit on a lot of them is kind of a way to participate here. You know, like because you get these ones that blast off for 80%. Some of them are 10%, 15%. You know, it's hard to pick the winner. Diversifying, so to speak, in the alts is something that you kind of should think about. No,
absolutely.
I mean, like
you want that vol exposure, in my opinion.
You need that vol, and when you have a basket of them, it's diversification, but they're all super high volatility. And
yes.
So it allows you to like trade those. You know, like you if you have a basket of these equal, amount in cash on all of them, you're closing out of your XLM and you're closing out of your ADA and letting the other ones kind of just play out and cycling through those. Like that's kind of how you can trade it, sort of as a managing winners type comparison. Like it's hard to just dump it all in, Shiba.
Yeah, it's tough to pick a spot.
Yeah, it's hard to pick a spot. You kind of have to water all the flowers, so to speak.
And one of those flowers could moon.
Yeah, then you
grow to the sky.
Yeah, you take your, your win.
One day you walk in the living room and your flower is just a huge green candle.
Yeah,
and then you can close that flower.
Yeah, I think that's a great point. They all trade in the same way. Again, some are more volatile than others. There's also points in time where you absolutely don't want to own any of this stuff, and it's the trashiest position that you could possibly have. But in a bull market, you want some of that exposure. In a bear market, you don't want that volatility exposure. You want to reduce the size of those positions. You might not even want any Bitcoin. Now, I would never go there myself.
Yeah.
And I don't want to be a no coiner.
Yeah.
But
losers.
There are market environments in which this stuff just gets smashed, right?
Yeah.
Even at today's vols, you could see Bitcoin go, to 200, trade back to 150 or 100. It could be down 50% off of higher levels, right? You're going to continue to get some of that realized volatility, and we do have low realized volatility here today. There's also market environments, as I mentioned, where you don't want to own any of this stuff. But in this environment, if you want to own some of the stuff, I don't think, to your point, it's like, oh, let me pick Pepe or Shiba Inu because I like that one.
Yeah.
It's have some exposure across all of them. There's asymmetric kind of risk profiles here.
Yeah.
And when you do make that money, I also think you've got to be somewhat prudent in how you manage it.
Yeah.
Sometimes greed is good, but you get 80% in a week. It could be the precursor to 400% in a month. I don't know. Sometimes that happens, but like no one went broke taking off, 80% upside moves.
Yes.
So the other thing I'll add to that really quickly is price these in BTC, price these in Bitcoin. And then you can look at the price momentum from that perspective and understand, okay, not only is this doing well here year to date, or we can see that on a relative basis, but from the momentum perspective, how are things starting to trade? That might help you find short-term opportunities. SUI or SUI, S-U-I at the bottom is one of them.
Yeah.
That chart is starting to trade a lot better, look a lot better, priced in Bitcoin.
Yeah.
Looks pretty good priced in dollars too.
100% implied volatility. It's one of the highest vols on the board.
And that's the other thing I like to see as well, right? Where, and of course, you need the larger upside move, the asymmetry, to get that north of 100% volatility. But that's encouraging when you have a big move up 35% and your volatility is starting to go higher. Your implied volatilities are starting to price that in as well for those options, or excuse me, those tokens that do have options, things like ETH and Bitcoin. So a lot of trading opportunities still around here. Bitcoin over everything has kind of been the clean, kind of clear play for now. But yeah, you're starting to see a little bit of positive price action short term in some alts. We can jump to one more slide and you'll see the same thing here. Yeah, Algorand up 60%, big one. Hedera, HBAR up 51%. Polygon up 30% here. Now, you have to consider where these are coming off of, right? Because when I look at year to date versus Bitcoin, again, it's been Bitcoin over everything. You've lost money trying to bet on, when you're going to get that 50% pop. But if you're in some of this stuff off of those lows, or you think that, alts have probably bottomed like I do, then you could catch a bid every now and then.
Yeah. And by lost money, you lost money versus just owning Bitcoin.
Yeah, on a relative basis, you underperformed is what I'm trying to say. You might not have lost money.
You were well, yes, versus owning Bitcoin.
Yeah, opportunity cost is Bitcoin.
Yes, is Bitcoin. So when you're talking about, weighting it towards the ratio to Bitcoin, this is kind of what you're looking at here, of like looking for the stuff that, would you be looking for the stuff that is down most to Bitcoin, or are you looking for momentum type?
Oh, that's a good question.
So here's another example of super high implied volatility. You think if everything's going to catch up, or at least kind of get in line with Bitcoin in terms of the movement, you'd think the highest vol, worst performer, the pile of duty, is the one you want to be in.
That is a strategy. Load up on Doge, right? It's down 66% versus Bitcoin, large market cap, just flip bullish on the daily. It's 20 cents, maybe on its way to 50. I don't know.
That's what I'm saying, dude.
I don't own it. I was in and out of that. I bought some at 17, sold some real quick. I don't know, whatever the price is on the follow page. But yeah, that's a trade where some people want to swing for the fence and hit a grand slam. But I'm happy kind of just picking spots with Bitcoin, ETH, Solana, some of the others that I've named that I own. But yeah, I hear you there. That is one way to look at this. Does it all just catch up eventually, full-blown alt season?
Yeah.
And that stuff, very quickly goes from down 70% year to date versus Bitcoin to up 50%.
Yeah.
Yeah, I think it's just another one of those, like we've been saying, if you own a handful of them or even all of them, there's going to be a point at some point where it's up 20, 30, 40%. You just can't know when it's going to happen. But it's like same thing with GameStop and AMC. Like that was the trade of 5 years ago. It's like, oh, GameStop and AMC, no one's talking about them anymore. Let's load up because eventually someone's going to talk about them because they're up 10, 20%. It's just you have to be able to withstand that time horizon. But luckily, these are not expensive products. You can just get into them and hold them and see if you get that pop.
Yeah, the stock market the crypto market gets a bad rap with like meme coins because the stock market has memes as well.
Memes are bad.
No, there are a bunch of crap out there that flies around. So this is no different.
Yeah. I mean, if you're trying to make some money here and
liquidity,
there's a variety of different approaches you can take. People will call you a degen, but there have been a lot of people that have made a lot of money with that strategy.
Yeah.
Let's jump to the next one really quickly because I think there's a couple interesting points here, guys. Bitcoin market cap dominance. We track this to get a sense of, is it possibly altcoin season? Is it beginning? When is it going to happen? Because we want to see all these things that we just talk about occur. Bitcoin market cap dominance has come down from about a high of, let's call it 66% to 64%. 64% is still a multi-year high. That said, if you want to track price momentum around this, daily has flipped. To see this start to break down, I really would want to see Bitcoin market cap dominance slide below 63%. Not there, but very quickly you did get a reversal, and you'll see that resulting or subsequent pop in ETH. Second largest market cap to Bitcoin. So look at ETH BTC ratio. Talking about similar sets, right? I think at times talked about if my goal is to drive and not crash the car, I need to be aware of a lot of different things, right? Is it snowing outside? Is the road frozen? Am I drunk? Are the other drivers drunk? Is it at night? How fast am I going, right? And we have our dashboard. The same thing exists here. If I'm trying to understand, where the trade opportunities are, what's going on in the market, I need to look at all of these different signals. And if I get 6 or 7 of those boxes that I can check, I can assign a higher probability that this is likely to be the outcome. It doesn't mean that that's going to be anything that's 100% certain, obviously, but it's something to go off of, right? Yeah. It's kind of a framework to use. So if I'm looking at this, Bitcoin market cap dominance, check the beginning of that possibly rolling over. That box we can check. ETH BTC. Up 7% in the last week, up 31% in the last month. Price momentum starting to look a lot more bullish. Okay, that's got my attention. Now maybe I'm looking to buy some ETH. Maybe ETH runs. Maybe it goes to 500ths or 5/10ths of a
coin
of a Bitcoin. That would be really high.
Yeah.
That said, that's kind of what I'm looking at just in terms of price action here.
10K an ETH.
Right. Can we get to, if we got to just at 1/10 right now, we'd be at 10K ETH. So that's kind of what I want to track there. But I'm starting to see that with Bitcoin market cap dominance. I'm starting to see it with ETH BTC. Then I look at some other things, right? Solana priced in Bitcoin. Doesn't look very good. Okay, maybe I'm not interested in Solana. Solana priced in ETH doesn't look very good. So now I'm ETH over Solana, ETH over Bitcoin possibly. Look at Doge as a proxy for memes, proxy for high volatility, low market cap alts, whatever. It's trading a little bit better. But that's how I use this information, this dashboard. It just gets us back to just price it in BTC. You'll know by looking at the charts when it's time. It's not going to happen all at once across all symbols, but you're starting to see some signals. XRP priced in Bitcoin looks pretty good. SUI looks pretty good. ETH looks better. You want to be in it before it happens, though, because it is a tough market to chase. You get the move from 3 to 4 to 5 in ETH, and then you're wondering, did I miss it on its way to 10? I'm just telling a story. But these are the signals you would see that kind of preclude that.
And I think it's, especially with ETH, that has a very strong base of capital. Like if you're seeing flows out of Bitcoin and it's going into Ethereum, I'm much more confident in picking that or putting my money there for continuation versus if it was flowing out of Bitcoin and going into Doge.
Yes.
Like it's just from a mentality standpoint, I would rather be getting into ETH than something else that has less sustainability, I guess we'll call it.
And I think you can start to sprinkle some of the fundamental metrics on top of that, right? And so we're looking at all these market-derived signals, and we feel pretty confident that this position might work and it could have some room to run. Is stablecoin market cap growth occurring on this chain? Is it increasing? Is DeFi TVL increasing on that chain? What's the narrative in the market? What are the ETF flows into ETH? You're starting to see those flows pick up. Excuse me. You're starting to kind of see that narrative evolve, right? The narrative now around ETH is going to be around finance, and we've talked about this for seems like months on the show now.
Yes.
But financial institutions building on ETH, stablecoins are massive for that. Real world assets all on ETH. ETH is a chain that just securitizes this all. That's where institutions are building. That's where you're going to see more flows. You get the ETFs that can stake. More and more financial services providers offer staking services, et cetera. Like this all plays out in, I would argue, some similar form. And then price has probably gone to a level that is nowhere near where we are today.
Yeah.
Again, it's another story, but those are kind of the things that I'm seeing in the market. Whether that happens or not, well, we've got to watch the price action. But that's why I have a position in some of this stuff. And I'm starting to see some of it kind of, it's been bubbling under the surface for a while. It's starting to really kind of come to the surface.
Now you've mentioned like CoinDesk and CoinGecko as like places where you can kind of see some of this information in terms of the like net liquidity on chain.
Yeah, DeFi Llama is a good source, or anywhere that's going to give you some of those on-chain metrics. We talked about DeFi Llama, Token Terminal, Dune Analytics, all dashboards that I use personally, and that'll give you a sense of total DeFi TVL across all chains right now is 129 billion. It's been increasing. It's not at the all-time high. All-time high was back in 22 pre-FTX at 180 billion. Stablecoin market cap's like 250 billion, on its way to much higher levels. So there's a lot of exciting things that are happening here that you can keep an eye on. It doesn't mean the price is going to respond immediately, but it gives you some framework.
Love it.
Last one on expected moves here on the slide. So we got a little bit of a pop involved.
A little bit.
Not the explosion we wanted, but a little bit of wider ranges this time around, which is nice.
Yeah, if you look at the IV ranks as well, so ETH has picked up a bit here. I think on our next slide, we've got an ETH 1-year IV rank at 31. Bitcoin's still low there at 7, but recently has moved a little bit higher. There is a premium in these markets, which is what you obviously want to see in the bull market, where those options are a little bit more expensive in vol terms versus what's realized. So Bitcoin vol, even though we're at all-time highs, it's kind of just been like floating up there. It hasn't been one big $10,000 candle or anything. But Bitcoin realized right around 30%, implied at 40. ETH, we'll call it 60, 70 or so. 60 unrealized, about 70 on IV implied. Same thing though. It's encouraging again to see those 1 week, 1 standard deviation moves, those ranges move higher. That's bullish. You want to see the low end of the range keep moving higher, right? A series of higher lows is a bullish trend. But if we were to go to, you got a $120,000 asset now, and you've got a 40% implied volatility, this thing can easily trade at 50, 60% vol. So you get much, much bigger swings.
See 200.
Yeah, this is like, people are going to kind of like laugh at this for a second, but that expected move can double. Like this could move $15,000 to $20,000 within a week. That wouldn't be uncharacteristic. It's very low volatility right now. It can get much larger. At least it has been in the past. ETH vol has done really nothing. It's been a $250 to $300 range, 3,300 on the upside. We're nowhere near all-time highs in any of this stuff except for Bitcoin. So that's also what kind of gives me pause to think that it's altcoin season. It might be coming, but I think they've bottomed. We'll put it that way. But I don't think that we're in full-blown alt season. I hope we get there. But same thing with Solana. Not much has changed here. Encouraging to see the more constructive price action if you're bullish. But Sui vol has picked up a little bit, so you much bigger expected move in there, which again is what you really want to see with that upside move.
Lovely. Last slide, just give them the tastycrypto.com for the newsletter. obviously. Got to get that.
Yeah. Thanks for the plug.
Got to get that. Sign up free twice a week.
Twice a week. We do
Saturdays, Wednesdays.
Yeah, Wednesday market update. Saturday is the newsletter. It's got a little bit more meat on the bone on Saturdays.
Yeah.
If I have time.
I hear you, busy guy. You got all sorts of things going on. I feel you.
Yeah, if you're in the YouTube chat, I just pinned the newsletter link to the top of the YouTube chat. You can get that for free. Beautiful. So yeah, IBIT heading to 70. You really just love to see it. I made an adjustment to the year-long strangle today. So into the rally, into this small bump in implied volatility, I rolled the 60-70 strangle in August up to the 65-75 strangle in September, and I picked up $2.40. So the net credit received from the whole year so far is $2,161. Started with $5 and change at the end of December.
You can withstand a $200,000 Bitcoin.
Oh yeah, this is done. This trade is done for it's July 14th, and I can tell you with almost certainty that there's no way that this will be a losing trade at the end of the year.
Oh God, no! The crypto market cap doesn't even know that it just got nuked.
Oh no!
No.
But yeah, I mean, if I don't do anything, I can absorb and move up to 95 and down to 45. So
Which is, 50.
and that's if I do nothing.
Yeah.
Which is not going to happen. Like, there's so much implied volatility here that you can just manipulate this thing
You'll be able
however
to
you want.
roll and manage it.
Yeah. But it's really just been an amazing first half of the year where even though implied volatility has dropped for sure, it's still at 50%. And every single roll I've made, I've picked up $2 or more.
And that's an example of why we look for high volatility underlyings, because Bitcoin. I know this isn't like a stock specific thing. You don't have the same sort of binary news events, or you've been getting some of the binary news events here with all the crypto week and all the sort of stuff that's going on in crypto. But this is why we look for high volatility underlyings, because even though volatility in Bitcoin has been low, it's still much higher than what you get from a Apple or a Microsoft or something like that, where you get paid to have risk on here.
Yeah. And it's had big ranges, but from
a huge move
from the start of the year to now, it's still only up 9 points, 10 points. So that's where the beauty of this trade has been, is just implied volatility has way overstated realized volatility throughout the year so far. Yeah. But yeah, it's a great product, super liquid. It's almost always on the top 25 symbols now.
Mm-hmm.
I think it was like 4th or 5th of all the market.
I think its average trading volume has passed SPY's average, which is not, I mean, like you're comparing different prices, obviously, but the actual share stands at, like, today it's
50 million. Almost.
Yeah, almost 50 million. The SPY here is at 25 million. So it is certainly liquid.
Mm-hmm.
More well-known, no doubt.
You've been trading ETH, right?
I have been trading it a little bit. It's not the most liquid on the option side, but they do have options.
I've got some ETH options.
I got some of those too.
It hasn't really worked for me though. His vol hasn't really done much there. Price hasn't done much.
Yeah, yeah. But I mean, you can look at it in the same way you look at the IBIT options.
Yeah.
That's kind of just it's the leverage factor. I mean, that's ultimately the thing that keeps some of my capital away from the crypto space, is just the fact that you can't, it's very hard to trade it. It's very hard to trade it other than just buying and selling, wait for somebody.
Yeah, much more like an equity investment in that sense. You trade the futures, I suppose, if you want to lever up a little bit.
Yeah. They're going to tokenize all these things, and you'll have options on it,
Yeah, it's early, as we like to say.
Beautiful.
The iShares Bitcoin Trust has 80 billion. This is just the one Bitcoin ETF.
Yeah.
There are many.
It is the biggest of the group. Yeah.
80 billion under management here. I'm trying to find anything else.
So that's what
GLD looks like it has almost 101 billion.
Yeah.
But
that's a way bigger market. So like what's the Bitcoin?
Aside from that, I mean, it's all equities.
So Bitcoin's at what, 1.2 trillion now?
It's a good question. Let me give
1.3, something like that. I mean, which tells you that 10%
2.3 right now
is just Bitcoin or the whole?
Just Bitcoin. Whole market cap of crypto for most of what is trackable is 3.75 trillion.
Okay.
It's growing.
So IBIT essentially has 5%-ish of the market.
Yeah.
Of the Bitcoin market.
At about 2 trillion.
Yeah, 2 trillion. Yeah.
We've talked about
it seems like a lot, but it's there's still room for that to grow.
Yeah, well, I always go back to the the gold kind of estimated market cap of closer to 11, 12 trillion, whatever. Yeah. I think there's room for Bitcoin to go up, right? You could probably see this asset at 5 trillion.
Yeah.
That'd be fun. Be great fun. Smack11 asking if we were to execute a similar strategy like we've been talking about leaps and IBIT and how that might perform into rallies in ETH A, can you do a similar thing? ETH A doesn't have as many expirations as IBIT, but yeah, I mean, if you're doing a leap, like the furthest out you would go, it would be December of 2025.
I'm sure.
And that's not even a leap. That's a 160-day option. So
I'm sure there's going to be more liquidity in these soon.
Mm-hmm.
Just to look at the list, and the reason we use IBIT and the reason I've been talking about ETH A is just because those are the two most liquid. They're the winners of the ETF basket. I'd want of all these, they're all going to have, there's going to be ARBs between them of a couple pennies, whatever. You let the ARB people do that, dirty work. But for a trading or if investing, if you're just buying shares, you want the most liquid one of the group. It doesn't matter what the share price is. They're all, it depends on the float. It depends on those are all, the share price doesn't dictate which one to be in here.
Yeah.
You want
liquidity. Exactly. And if you're looking at liquidity in like the December cycle for upside calls, it's pretty self-explanatory. It's the 25, it's the 30, it's the 20. Those are always going to be the most open interest, which gives you a good idea of being able to get in and out of that pretty easily. You can see that the 30 strike has a 8-cent wide bid-ask spread, so it's totally fine.
Yeah. And if you're buying 150-day options, you're not really worried about a penny or two in slippage.
Yeah, working in order in there.
Mm-hmm. ADA, have you traded that recently, Cardano?
I haven't, but I like where Eddie's at here. Take us to the promised land. Breakout. Love to see it. Yeah, I've got nothing on in here, but there's nothing holding me back either, guys.
Yeah.
So we'll see. I like I said, just added to some new positions here.
Only thing that
taking
can
some
hold you
shots
back is the depth of your wallet.
That's right. Yeah. But no, I don't have any. I'm not in Cardano personally yet, but I wasn't in XRP until like an hour ago. So now we're in.
Let's see. Got to be flexible.
Yeah, which means you can probably buy it like 25% cheaper in a week.
Yeah, exactly. It's the 3-day rule, Ryan. That's what's been imparted on us. Like Pablo, one of our favorites, who I've met many times, he likes to say that he sees us do it and he's like, "That's a really interesting idea. I'm gonna wait 3 days."
Just feel it out a little bit.
Yeah, that's
due diligence.
That's usually when it starts to be the best entry.
Indeed. Jacob wants to thank Ryan for the trades from the follow page.
Sweet.
Got him into crypto, added some small positions, even started watching the crypto show, smiley face.
Awesome. Well, thank you, Jacob.
Yeah.
Awesome.
Yeah. Yeah, I mean, it'll be wild to see what happens this week with some of the legislation stuff. But yeah, I mean, IBIT, MicroStrategy, even like Mara is a very interesting move today in Mara.
Yeah, the miners. You don't have one of the the crypto week things that you're like most excited about?
Oh, I think
What's the biggest one?
the Clarity Act. I think when we can get some clarity around
Aptly named.
right, what role the SEC and the CFTC play as it pertains to certain assets and regulating those markets, I think is huge. Crypto market structure frameworks from a regulatory perspective are largely missing. It's not that this is an unregulated environment. It's not. It's a regulated operating environment, but we haven't ironed out the details. Stablecoin is step one. I think that's huge. It's absolutely huge for tokenization, for the future of this technology and its role in the financial system. But crypto market structure is just as, if not more important. I don't care as much about the central bank digital currency.
Spy coin.
I think we're a ways away from that. But it's crypto week, so it's getting thrown into the mix. But the Genius Act legislation there that's making its way through, and the stablecoin, the crypto market structure is extremely important. And these are tailwinds that, look, you shouldn't, in my opinion, expect some big price movement as a result of this stuff, right? That it's a known. It's making its way through. These are just shifts in a way that are much more supportive of this market, this industry going forward, that will be, should be conducive to positive price action over time and more inflows, more participation. A lot of the big financial services companies, the institutions that can ultimately make it easier for more and more people to adopt this technology, these assets, or participate in this market if they choose to, they've been on the sidelines because they lack a regulatory framework that they can adhere to. So when that changes, it's going to become commonplace and you reach kind of that mass adoption. What's always been interesting to me about this space, like a few others, but about this space in particular, is that this has been an opportunity for you as a smaller retail investor to get in ahead of all of that.
Yeah.
Presumably that is going to happen, that wave of capital, those flows. But this is one market in which, you can participate today if you choose to. It's been called the Wild West, but that's changing, and it has presented a very real opportunity for people to make a lot of money being able to participate ahead of this.
Yeah, and I think it's especially not only for the funds that have been staying on the sidelines, but if you think of like older money or people that are the naysayers of like, this is not a real thing, blah, blah, blah. Now you have these acts that kind of build this framework and realness around like, okay, if the regulatory bodies are creating something for this, it must be a real thing that is... That I can't think of it anymore. I can't be like, this is nothing, Right.
It's a legitimate technology that is going to have significant impacts, positive impacts on the financial system here in the United States and globally, right? It's not just about the price going up. It's much bigger than that, right? I mean, yes, we do like that in terms of if what we own goes up. But when you think about tokenization, you think about transparency, the settlement process that exists today, the efficiencies that are gained, I can go on and on. This is a paradigm shift and it's ultimately an evolution, right? There were a lot of people that were naysayers about the early days of the internet, and there was a lot that we had to overcome. And there was the same thing with, regulatory frameworks that needed to evolve in terms of how certain things happen. It's no different here today. And I think this is the beginning, really, more than it is the end, right? The beginning of all of this is the regulatory clarity that you're going to get.
Love it. I think with that, we can end it.
Beautiful.
Lovely. Well, thanks for tuning in. If you got any further questions, you can reach us all on the Twitters. I'm at Trader Mikey B, Nick's at Trader Nikki Bat, Ryan is at Ryan Fred Grace, and certainly give Tasty Crypto a follow as well. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. You can just go to tastycrypto.com. You'll see it on the homepage as well. But yeah, beautiful crypto week. You couldn't have wrote a better story. Crypto at all-time highs.
If you
crypto
take profits.
Yes.
But yeah, it's going to be very interesting to see what happens the rest of the week. Let's see, keep our eye on it, and we'll keep you updated throughout the week as well. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We're back. It's still Monday, July 14th, 2025. Happy Bastille Day. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, we have a nice rebound here at the start of the week. Gapped open lower in stocks with the latest tariff headlines. We see here that markets are rebounding slightly. Bonds are a bit weaker on the day. Metals have reversed. Oils is a bit softer as Trump's big announcement about Russia kind of petered out. but the dollar's firmer here. And we have a bit of CFTC comp data to look at the start of the show, which tells us that the dollar remains disliked despite what we've seen over the past week.
Splendid. That is the kind of fertile ground that one needs for a little bit of a dollar recovery. I don't think either you or I believe that the dollar is going to be in good shape this year, but markets don't move in straight lines. And the dollar has quietly recovered for the past 2 weeks. And I've been on the boat, and long may it continue. I think we have maybe a couple months here of a recovery, so let's keep going. Stocks, certainly less exciting than that. They've done nothing since basically July 3rd.
Yeah, it's been a week plus of stocks meandering around. Before we get there, though, where has positioning shifted? New COT report out on Friday. Figure we'd bifurcate this, look at the changes in the relative positioning from the week prior to the current week. Of course, we're still using a Z-score, rolling 20-year basis. A few of these have seen, for example, S&P 500 positioning has become a little bit more net short among speculators, whereas for the NASDAQ, it's become a little bit more net long. For notes, a little bit deeper in the red there, people continuing to short notes, whereas with bonds, it's a little bit less net long. What sticks out to me, though, we say dollars disliked here. People have been building into a longer euro position, and they've taken a little bit off of their net long yen position here. But when I say the dollar's still disliked, even with this rally that we've seen, and granted, this is the week ended July 8th, and the dollar did rally on the 9th, 10th, 11th. We see that this is a market that's still short the greenback and taking opportunities to short the greenback. So the pain trade, right, good for you and me who are looking to fade it. So the pain trade for a lot of folks is actually more dollar strength at this juncture, which contextually, more dollar strength, we do see that we have net long positions persisting in the precious metals market, and perhaps that's a bit of a headwind.
Yeah, I mean, it's interesting to look at what, I mean, obviously silver is surging, so it's not a headwind there yet. And if anything, the net long exposure there has actually come in a little bit here and there. But clearly going from 1.4 to 1.6 hasn't really done anything to sort of influence this rally one way or another. But when you look at gold, it's pretty steady as far as exposure, and it's starting to creep up a little. So positioning wise, I'm not ready to get concerned about being long gold. I am still on that side of it, but it is up to the nearer part of the range. So call it like 3390, 3400. There is that congestion range there. I have an eye on that. We kind of have a little bit of a stall ahead of that level today. Let's see what happens. I'm still generally constructive on gold and on precious metals in general. I'm just not doing it in silver. I'm doing it in gold. And we'll see, but it doesn't look like there's been really anything that has influenced this. I mean, from going to 63 to 65, gold was up last week. So this didn't really seem to factor into the equation.
Right. And if a market's rallying, we should operate with the understanding that it means people are probably getting long.
I mean, people should get a little bit more long, right? It's like we'd look at the yen and go, okay, 2.5 times. That's kind of a lot.
Well, that's exactly a lot of the same. Like once you get an excess of plus or minus one, it starts to raise an eyebrow. And so like when I see the dollar position, we think about DXY, 57.6% of the dollar index is the euro. So the predominant majority of the dollar index just saw a big uptick in net long positioning. The second largest component, slight downturn. And when you do the whole mix together, you can see that on a weighted basis based on the dollar index components, the market is still in this territory where it's aggressive. For the metals, we know that a function that they're a little bit net long, silver perhaps excessive. I would note that this is, again, July 8th, last Tuesday. Silver's big rally, Friday. So there's probably a positioning build when we get the next report here. And if I want to get a sense of what we're dealing with this week as we think about getting through VIX-piration, where are some You get a good piece of news, say, about a trade deal. Could notes go bonkers? A big unwind of some of the fears that are built in about dollar hegemony being lost, what have you. Yeah, there's the market's primed for it. There's a lot of people who are sitting short at this moment in time, and if they're wrong, it could lead to a nasty short covering rally. Of course, markets
frankly, they don't even have to be wrong. They just have to be wrong right now.
Right.
I think we're generally on board with these shorts. I think thematically, I mean, I certainly have been short dollar since the beginning of the year. I've only flipped long recently, looking for a correction. And I don't think the trend is over. I think the dollar getting beat up here is episode 1, essentially, of what is going to be something that runs, because Fed hasn't even started cutting rates yet this year. We haven't even gotten into that part of the cycle. They're resisting, and the dollar was getting battered in the first half. So there's more innings left to this game, but markets don't just go to where they go all in one shot. This is the dollar. This isn't, the Kenyan shilling or something similarly.
It's not
illiquid.
A penny stock. Yeah.
Yeah. It's not just going to go from A to B in one shot. I mean, 1.5 times tilt in euro positioning, considering it's the euro and how liquid it is, that's already smelling a little extreme.
Well, we got some bridges to cross before we get to the currency section, although, currencies definitely deserve our attention today, given what's happening with the dollar. It's up across the board. Higher yields at the long end, stronger dollar, no problem here for stocks, which are basically pressing their highs of the session. We did have a bit of weakness coming into the Friday close with the Brazil tariffs, then the 35% tariffs against Canada. We head into the weekend, we get 30% tariffs against Mexico and the EU starting August 1st. The market, of course, sees this all as a negotiating tactic still.
Yes.
Because if not, then volatility would be higher than where we are, and stocks would be lower than where we are. So for now, the range persists, roughly 62, 65, 62.50 if you want to be generous, up to about 63.30 or so. You mentioned that stocks really haven't gone anywhere since July 3rd, which is very much true. But then I think we need to take a step back and go, what are the bigger conditions if we ignore the news? Is there positive technical drift here? 1 week moving average is 63.01. We could be back above that today in an exceedingly low volume environment. Not even 600,000 contracts traded. We benchmark a million as a healthy point, and volatility is low. So low vol, low volume, positive technical drift. It's a summer market, all things considered. So, Ilya, the way that I'm playing this, however cheeky it may be, is we do have a seasonal peak in the market for July coming up at the end of this week on the other side of expiration. So I'm hoping to ride the rails higher here from now until Friday. And consistent with that, it's long NASDAQ and then looking for a little bit longer dated short exposure in the S&P 500 because it's, again, pretty cheap vol. And if we do have a 3 to 5% pullback between now and August, rather buy the insurance while it's still sunny out before the wind starts blowing.
Right. So I look at this and I go, okay, obviously we've lost momentum over the past 2 weeks. Whatever sort of back-to-back up days we saw, what was that, like 9 up days in a row, culminating in that NFP report on the Thursday NFP report before Independence Day. And obviously, whatever momentum that was is now gone because here we are for 2 weeks listless. And markets can correct in price. They can correct in time. And I think sort of the thrust of where you and I are positioned differently here is you think this is correcting in terms of time. And I think it might correct in terms of price. And I don't know that it will, but I'm willing to take the bet because vol is incredibly cheap. Buying puts is incredibly cheap. You can do it in a risk-defined way, as I always do when I'm betting against stocks, because I'm a glutton for punishment, but not to that extent. And so I'm not just going to be raining money here for no reason. But the risk-reward, I think, if you're going to take a directional bet, and I'm not suggesting that it's a good idea to take a directional bet, but that's what I'm doing. I think if you're going to take a directional bet, the thing to do is to sell this thing because the risk reward is better. Now, and vol is cheap, and you can just straight up buy puts. Now, is it going to work? Who knows? I just think it's a better risk reward idea. If it cracks the range, you're wrong fast, and you get out immediately. And if it cracks the range on the downside, well, then you've got some legs.
If it cracks the range to the downside, I'm going to put this to yellow here. Right, that's the brilliant thing about an equidistant trading range right now. I'm going to just mark this off as, roughly speaking, 23,100 and 22,775 for the sake of this conversation. There's a little bit of wiggle on either side, but we don't need to be.
But there's always a little wiggle.
Right, exactly. And technical analysis.
Support and resistance is never aligned, folks. It's always a kind of fuzzy Sharpie with a shaky hand sort of thing.
More art than science.
Somewhere there.
If this is the range, right, that would mean if we're considering it an equidistant measured range, you're looking for one of two outcomes here. Once the range breaks through 23,100 or so, you get a measured move that brings you through 23,400. If this is a top, 1, 2, maybe this is going to be a triple top, another rejection up here, where we then swing back to the downside of the range and you break 22,775, you get a near-term target of 22,450, we'll call it.
Sure.
In between there, if you're a directional person, you're kind of just biding your time. If you're directionally neutral, the range, hopefully it continues for you. Blessings, of course. But that's really the roadmap here. You have bull case up here, you have bear case down here, and you have a lot of chop in between. Pick your poison.
Exactly. And frankly, the risk reward here would be favoring the long side if we were a few bars back at the bottom of the range, because it would no longer make sense at that point to enter short because you'd be right at immediate support. So it's kind of like a choose your own adventure kind of a range. To your point, if you're near the top, as I was when I got in, right in the wake of that jobs report, okay, risk reward is better short. If you got in at the bottom of that range or lower, risk reward is better long. And then we'll see.
Yeah, I mean, for bulls, even you could see that there are multiple stepping stones to the downside. I see that 1 month coming into play here. A day where we pull back and break the range, we find support at the 1 month, we wash out to the 100% and rebound back above the 1 month. You could say that a correction was finished in the short term, right? If all of a sudden you plunge through this 100% extension and it's a big red bar taking over the 1 month, you feel to yourself, okay, maybe this is a top. There's a lot more to do now on the bears side, but it's an 11.7 IVR. So I'm still leaning long the NASDAQ in the short term. I'm looking short the S&P on a little bit of a longer basis. The S&P for me is out at 46 days to expiration. The long 60.25, short 59.75, sizing up that put spread. It's effectively like a calendar spread, if you will. You could do it through, a long call calendar spread, short call calendar spread. In this case, I'm basically long the shorter dated option call, short the longer dated option call is how I'm thinking about this, because I want the bull exposure through the end of this week and then a little bit of bear exposure thereafter. Ilya, the seasonals here, right? So we peak on Friday historically. August and September have seen significant expansions in volatility in recent years. And that's why even if the market doesn't have a significant correction, just knowing that we're in a Federal Reserve plus congressional recess window, it would seem that if we get some of these tariff headlines that, Trump doesn't chicken out and the market's really caught flat-footed, they're real, volatility is going to be in the time and place where it likes to tend to get jumpy. So let's give it its time if that's the case.
Yeah. I mean, I think adding duration into all of the things I've been doing really since the beginning of the year has really helped, because it has been so jumpy. And you really, really see the extent to which there is the shorter term volatility, and then there is the outcomes. When you actually look at where markets ultimately land at the end of the first 6 months of the year, stocks are up, but only a little, 5.4% on the S&P. Crude oil is down for all the fire and fury of Israel and Iran and nuclear reactors getting bombed and blah, 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 blah. Crude oil down 9.2% in the first 6 months of the year. The dollar tarnished to a point where if you were long the S&P in anything but dollar terms, you lost money because the euro is up 9%. Yen is, the yen is up 9%. The euro is up 14% since the beginning of the year. So dollar depreciation really flattering what you see in U.S. stock markets. Just if you consider that buying a stock is basically the same thing as any kind of a pair transaction that you might be used to, let's say, in the FX space. You think of the FX space as saying, okay, I'm trading dollars for euro or euro for dollars. Well, when you're buying a stock, you're trading cash for stocks. So you're essentially going short the dollar, long something else. Mm-hmm. And so because the dollar has been absolutely bashed in all year long up until maybe 2 weeks ago, stocks in dollar terms look a lot better than they've performed. Basically because the dollar has been absolutely sold across the board. And so
worst start to a year ever for the US dollar.
That's right.
There's no way around that.
So, right. And so before we look at stocks and go, well, let's paint for ourselves every which bullish narrative, divide it in half. Because whatever bullish narrative you've got here, about 50% of that rally is just the dollar getting cheaper.
Look at sector performance today. We have bank earnings coming up this week. It's an interesting macro week. Inflation data due out tomorrow. We're going to cover that at the end of the program when we typically do the calendar for the following day. But earnings are also very much in focus right now. And so with that understanding, we do see a Russell that's up by 0.36% here. And the regional banks, once again, are outpacing the broader index. Ilya, the swing high that we have here on March 3rd, 62.75. The past two sessions holding that 1 week and that swing level up here right now. So the banks on the regional basis, on the bigger bank basis, which is really in focus the next few days with your JP Morgans and your Bank of Americas of the world. I don't know, Ilya, is this a flag or a bullish falling wedge forming up here after a small correction? The banks look like they want to be stronger. And I think Tom had a really insightful point of view, which was given all the changes in regulation and lack of regulation and movement in federal agencies in recent months and settlements and lack of settlements, right?
Yeah.
He thinks that 2Q earnings for banks are probably going to be pretty good, given everything that we've heard out of DC, and companies have had a chance to play catch up here over the past few weeks. So just thinking about the earnings for tomorrow, it's really JP Morgan, Wells Fargo, BlackRock, Citigroup, Bank of New York Mellon, State Street. There's America Mobile, which I don't think anyone cares about. But the point is that tomorrow morning, right, S&P 500, more banks than your NASDAQ, and obviously implications to the Russell. So we'll be watching that. But the ranges here, they haven't changed since July 3rd. And I think that's the broader takeaway. Volatility is staying low. We're gapping open higher. We're fading during the session. But that's basically been the story for the past few weeks. Volatility is up. The market's near the bottom of the range. It picks up. We have a new reason to sell off near the top. Volatility expands a bit. Let's see if something changes here.
This is an interesting thing. If you're a fund manager, let's just take a step back from the quantitative and consider the qualitative. If you're a fund manager, you're beginning the second half of the year, right? Every quarter there's some layer of benchmarking, of setting a high water mark for the quarter, because there's reporting requirements that you have if you're a sizable fund manager. You have to send a notice to your clients. You have to report to regulators depending on what kind of a fund manager you are. So you have a mid-year point. You roll into July. Name a narrative. It doesn't matter. If your general disposition is risk on, that is to say you want to be long stocks, everything is fine. You're saying, the tariffs, blah, 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 it's all noise. Middle East, blah, 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 it's all noise. Whatever. We're building AI, everything's fine. We're gonna get these massive tax cuts. They're gonna be a deficit disaster in 10 years. Not gonna be a deficit disaster now. So, okay, fine. Where's the allocation? Who is out here allocating capital to equity? Because for 2 weeks, we've gone nowhere. So you've had this calendar turn saying, okay, here's the reset of the reporting window, lay out new capital. It's not here. So one way to think about this could be, well, you know what? It's the summer. It's July. A bunch of people took vacation around the holiday. Europe is basically scattering the beaches with most of, you would think, the trading population of those desks. There's nothing really going on there. It's quiet. Okay, maybe this is just a summer lull. Seems unusual to be absolutely listless for 2 weeks, though, given all that's going on.
You're right. We should probably be about 5% higher.
Right. So if we were optimistic, we would be about 5% higher, because capital would just get laid out for the second half of the year.
Okay, so
but it isn't.
I guess that's the plan for this week. Just give us until July 18th, maybe 4 or 5, 24K on the NASDAQ. Is that too much to ask?
If they decide to lay out the capital, they'll decide to lay it out. But for the past 2 weeks, they've been sitting here hoarding their money. So I don't know what it means, but it certainly doesn't suggest that anybody is so gung-ho about risk that they're making it rain out there.
Before we head off stock sector splits here, I have 13 in the nope. I have 12 in the red, 13 in the green now. It's not really an explosive kind of day, as we can tell from the headline indexes. The top performing sector, XLF, 0.68% higher, followed by KRE, 0.65% higher. So the banks do lead the way. On the downside, it's all energy or metals related. Not sure if there's much of a read through there. When you get away from the commodity ETFs or commodity company ETFs, then you find home builders down a touch. You find semiconductors down a touch, but also consumer staples. So light volume, just kind of shuffling papers, it seems, when you get to the sector performance area, Ilya. Bonds, however, twisting a bit here in the curve. We're seeing that 2s, they're still up on the session, and 5s are even up on the session, or there are 10s that are up on the session, right near, I suppose, a range low. But we still see that it's our long bond that is suffering here. Friday's price action was really bad, right? Against that 1 month moving average, evening star cluster. But that 4 hour time frame down here tells a little bit of a different story right now. Insofar as if we were to just think about topping and bottoming patterns, daily charts matter more than anything else. But on a 4 hour time frame, this little guy here, if I could not fat finger my screen, there we go. That's starting to look like we're trying to establish something of a turn. Granted, the last time we saw something like this here on July 8th, that did mark a temporary low. What do you make of this heading into the inflation report tomorrow? It seems like the 30-year matters more than the 10-year right now, given how the bond market's been behaving the past few weeks.
I'm still okay on the long side here, but it's very price action dependent. So if you look at what this little morning star attempt looks like on, let's say, a daily chart, and you see where those lows are, and I think you've just pinned it exactly. look at where we are. So there's that swing bottom just 4 days ago. It's holding that low. It tried under it today, and it didn't hold it down there.
Right.
So is that a rejection? Maybe. But it's certainly not invalidation of the long side if you're basically long against that low, which is what I'm doing. So once we got there and stalled there and started to, on the shorter term charts, as you just showed, started to turn a little, I got back long. Has it invalidated that at this point? No. So let's see. I mean, you can't abandon a position on every single down tick. You do have to give it a little bit of room to find its way. So I think at this point, the thing to do is to look on the long side. In fact, if anything, this is a little bit of a mulligan to take a bite at the apple if somebody wanted to be a buyer and then got taken a little bit by surprise when this attempted to surge last week. But essentially what we have is a range, because where this thing stopped on the upside is the underside of the prior support become resistance pivot, much as this is. So we have our bounds here. We have our bearings. If you
you can really actually see that very clearly.
This is a place to do it.
There's this level right around, we'll call it 114 and 10 ticks or so, where when you look on this 4-hour range, you get a swing high, you get highs, you kind of grind through and it becomes support
a little messy
again.
On the 4-hour, on the 8-hour, you can really see it.
So if we do break down, right, then, okay, if you're below 112 and a half effectively, then you start to look into about 111 and 24 ticks, swing lows that you had in early June. But today's price action, it's encouraging for bulls, to say the least. And with an uptick in IVR, it's a 20.3. It's a little bit more relative volatility than you're seeing in equity indexes. I still think there is something to work with down here. The exposure that I've had has not been working, to be clear, but thinking about potentially getting a little bit of a swing back to get some juice into this position. Recent swing lows in the market, the panic lows that we've seen, they're getting blasted down below 109. And right now in this market, if I'm approaching this with fresh eyes, I can think about selling some sort of put spread in that neighborhood where I'm going to get a pretty decent risk to reward. The probability of profit may not be fantastic. I mean, the probability of profit is going to be pretty good, right? 72%. But the risk to reward may be off a little bit. And if we were to pull this up to think about recent swing lows on a technical level, like the 111 and 24 ticks, you could see how the contours of a trade come together where, I can risk basically a little bit around 2 to make 1 with a 66% probability of profit. Now we're kind of talking here. And if I really wanted to be aggressive, we could ratchet this up to sell a put spread. And if these levels break, then you're out. And that's that. The position pain is realized fairly quickly. The longer duration will help preserve value. If you go into it, 39 days may not be enough given everything we've seen. Perhaps 74 is the better bet here. But either way, there is something to do in this market right now with the relative uptick in vol. It's just a function of structuring the trade in a diligent manner so that you preserve enough value. Because this is a pretty tight, we're talking about a market being a point away, a point and 3 ticks away from this 111 and 24 swing lows that we had in early June.
It's both similar and different from what we're seeing in stocks. There's a tight range in both, but at least here there is some vol. And so at least there is a directionally neutral way to approach this if that's what you wanted. I'm of the mind, as ever, that if I don't have directional exposure, I don't want exposure. It's just the way my strategy works and the way I think. Do what you know. And so that's where I am. But tactically, you have a tight range, but there's vol to be sold. Now, you mentioned CPI. You think about whether you want to have a bet on that vol is going to come in from 20, which is not that high, before CPI, maybe you're picking up pennies in front of a steamroller.
Okay.
maybe hold on. But if you're going to do it, just don't forget that there's this event risk and it might be a vol expansion catalyst. So that's an important consideration here. You've got not that much time. I mean, CPI is on Tuesday this week. So that's tomorrow. You've got less than 24 hours.
Modest proposal here. This has been such a efficacious trade in recent months. Hindsight being 2020, it's worked out well.
Efficacious. That's a good.
But the trading in notes directionally neutral, short iron condors. It's worked, right? And sometimes when things work, you don't question it. Thinking about bringing that same perspective over here to ZB and around recent swing levels, we see that 109 and 20 ticks is the low, and the recent swing high we have post Liberation Day after the panic. Okay, that's coming up closer to 117 and 10 ticks. You could get a pretty decent risk to reward right now, where the probability of profits constrained. It's not above 50%, which we would typically like to see, but the risk to reward, basically risking one to make one. And so the gambit here is that the lows that we saw back in May hold, and that we don't ultimately breach the highs that we had in May or June in the very short term. And really the highs that we have in April are up near 121. So if you really wanted to be generous and go out there, you could to get slightly better risk to reward. But this is actually really, really appealing as far as I'm concerned. I'm going to take this myself, looking at bond exposure to diversify. It's out at 74 days, so there's enough time here where if the short-term range breaks, I can get out, and it will be a minor loss. But we're talking about the panic lows, and that's a new regime, by the way, for the entire market. If we're talking breaking the April and May lows here in ZB, you're talking about a 30-year yield that's well clear of 5%. And if you're well clear of 5%, you know what's going to work really well, Ilya? Those S&P 500 puts that are dated in August. So, there is a way for this to not work out, but also work out for me really well. And quite frankly, if this works out where we stay range bound, there's also perhaps a world where stocks fall and people just say, you know what, I'm not worried about the bonds anymore. I got to lock in rates at 4.75, 5% in the 30s.
That's kind of been the takeaway that I've had from the auctions last week. That people basically said, you know what? Everybody's out here screaming, sell America, blah, 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 blah. But that's obviously not what's going on. Because if you look at what happened, again, it was really eye-opening to look at sort of where the first 6 months of performance landed for the major assets. Yields fell in the first 6 months of the year. And they fell across the curve. They didn't fall a lot, but they fell. And if you look at the 10-year, down 7.5% in the first 6 months of the year, whereas the average 6 months stretch over 25 years for the 10-year, never mind that it's a gain and this was a drop. Forget that. The magnitude of the move is about 3.5% on average. So we have about double that in a decline for yields in the first 6 months of the year. It's not like there isn't appetite to buy U.S. debt and to take a positive view of the faith and credit of the U.S. government. This whole idea that people have lost confidence in the U.S. As a borrower, it's nonsense. The markets are not telling you anything like that. There was like a week there in the vicinity of Liberation Day where things got, in the president's parlance, a little yippy. But other than that, this has not been the story when you look at what people are actually doing. So as you consider then what comes next, you look at this and you go, okay, well, let's say CPI comes out and it's this way or that, and that alters your calculus for the Fed. maybe alters your calculus for risk sentiment, maybe shifts the entire curve around. But the market is betting on a more dovish outcome ultimately for Fed policy than the Fed has acknowledged. Look how well these auctions have worked out then. If you're not concerned about the faith and credit of the U.S. government in any kind of catastrophic way, and you don't think you're going to get much higher rates, why wouldn't you lock them in here?
Notes are basically pinned at their 50-day for what it's worth. It's only a 10.2 IVR. Tom and I were talking about this last night on First Call. Notes are a better introduction for retail traders than bonds, ZN versus ZB, just because of the position sizing. It's literally half the tick value in notes than it is for bonds. But this too, directionally neutral, yearly high, yearly low. We've been outside of small jiggles because of tariff-induced nonsense. You have more days inside the 38 to 618 portion of the range than you do anything else the rest of the year. So where are we? Bounding off that 618. I'm continuing to play this as directionally neutral. I think bonds may be near a swing low as well. And then again, thinking about the COT report earlier, Ilya, speculators are very, very short this. And so the market's also underpricing the prospects of trade deal agreements before the end of August. I was looking at Polymarket. The highest odds that you see for a trade deal for any country or group would be the European Union at 50%. China's down at 6%. Okay. I know Germany and France are technically lower, but that's because they'd have to go through the EU if they can't have their own trade deals with the US. But if some of these were to jump, like Japan, 18%, Canada, 34%, Mexico, 42%, the market's saying that it's less likely than not that we get a trade deal in the next few weeks for most places on earth with the US. So it's easy to see how if you start getting trade deals, a lot of the negativity around the treasury market begins to dissipate. I'm not saying those trade deals are going to happen, but you see a market that's underpricing the odds of deals and a market that's very short treasuries. I can convince myself into wanting to have some cheap, long-dated bullish exposure here in notes. And that could even be something, being a little creative, going out 74 days, 112, 113, maybe go a little bit out, 113, 114. Something cheap, a flyer, if you will, if we think the market's stretched.
Yeah.
Different ways to skin a cat. Did we just see the top tick in the metals market today, Ilya? I don't know if you saw, but SIZ5, the silver contract for the month of December, it top ticked $40 today. $40.005. Silver hit $40 for a contract with a 2025 expiry, and you know what happened? The market sold off. Is this the high for the foreseeable future?
Tough to call that here. I mean, you have one downtick after Friday's massive surge. Why don't we contain our enthusiasm here? I don't think there's anything on this chart that tells you that you've necessarily topped. Let's go to a 4-hour and get a view of the kind of actionable yet near-term dynamics. This now doesn't look that great because you've established a congestion range and now you've punched through it. But also, this is silver. This is a volatile thing. This is not out of sorts, this kind of a move for silver. This is not anything where we go, oh, silver is doing something terribly untoward. It doesn't look that way. I think you basically are in an environment where your former resistance turn support is somewhere around, let's call it 37.30. And if you pull back into it, you hold there, maybe. And if you hold there, congratulations. You've gotten a discount and a bite at the apple at a better level. If it cracks there, that's concerning. I don't have exposure here. I have exposure in gold, but if I were long, I would not be freaking out. I don't think this is going to have directional conviction between now and C3I anyway. And so even if you thought, you know what, I had a nice tactical run in silver. Good for me. I got long, let's say somewhere between now and going back to the beginning of June. So I sat through some range, and now I've had a pop. Woo-ha, I want to get out now. You probably get a better level over the coming hours, because this thing maybe gives you an opportunity for some digestion before CPI data. So I wouldn't be rushing to do anything here if I had exposure. I don't.
You know what's interesting? The timing of the silver drop today. This is not one of those silver conspiracy theories that you'd see on Reddit or Twitter or X about how someone's slamming it down. But I will say,
I was hoping for a conspiracy theory, but all right, go ahead.
When oil prices fell off today because of what Donald Trump outlined in detail as his major announcement towards Russia, the metals markets fell off too. It's almost like the metals were being bid higher over the overnight session in part of a response to or anticipation of what Trump might announce. So what did Trump announce here? That's something where at 9 a.m. this becomes public, and crude oil here, it takes that slide lower. We get him actually speaking shortly after 11 a.m. confirming the details, and oil takes another leg to the downside. So I can't just separate those two things, Ilya. The fact that we have this Trump announcement that's made public, and then once it's made public, that's when everything really starts falling apart. The safe havens, the commodities that would be impacted by, a reach for geopolitical, insurance, if you will. So silver today, it's off. We're going to hold on for a little bit more of a ride. Jamal had a really good point last week, and we've been beating on this drum. He's saying how he wants to change his exposure because this is getting a little bit stretched. When he sees silver up at $40 an ounce, the plan was to move exposure from SI into SLV, smaller position, a little bit more liquid, a little bit more manageable. I'm sure he's not the only person who saw that silver hit SIZ5 today, and so perhaps that plus the deflation of, because people were hoping for something worse from Trump, bit of a pullback right now. But in any event, Ilya, I would posit, look at the volatility today. This just to underscore what was happening here around these news about Russia. When did volatility really pull off the board? Stock markets open 30 minutes after we get the headlines, and IVRs and silver, which are up in the 52s, they drop back down sub 30.
Yeah.
Just the timing of all this, it seems like it's a bit of a wash.
Yeah. I'm not seeing anything here where if I was long, I would notice, of course. I would be more so on watch to get out. But would I be spooked out of a position here? No.
I didn't hear no bell. We go over to oil, which is the perhaps catalyst for some of this market movement today. Some of the stability maybe we've seen at the long end of the curve, because there is a feed through from inflation expectations into bonds.
Look at where we turned. We were talking about that range structure on the daily chart for crude. Just look at where we turned. What did we say last week? We said, oh, look, there's this underside of a range there. Right there, where that long hammer candle is. And where did we turn? Right there. On the dot. Exactly as we had it on this very show on Friday.
Well, it's good news for me, who's still leaning directionally neutral, and we were getting a little bit away from the midpoint of the range. That comes in closer to 66, thinking about the highs, lows, and, it's not drawn to the exact highs and lows here. We eyeballed it, but eyeballing it even, we're talking about $66 or so, and a move back towards the midpoint is wonderful. Oil tends to do that, though, Ilya. Absent geopolitical risk, it likes to just slinky around in a range. The market's fairly predictable in that kind of regard. So what to do from here? Keep doing directionally neutral things, because that makes sense. It's 27.1 IVR. It's not super exciting, but I mean, not that we compare them like this, but the IVR of CL is double that of ES, if that were a thing. You can still get some juice here. And then thinking about the trading range, if we were looking into something that's more typical tasty, we would go futures. Let's get rid of you. Iron Condor presets to about 45 days, 45 in, 21 out. You could find yourself something in the neighborhood of 67 probability of profit, right around recent range high, range lows. You could pull them in a little bit more if you wanted to be more aggressive and get decent pricing. But the range highs are up near 78. The range lows are down near 54. This here is basically right around that. You could play the post-Liberation Day trading range, which is $24 wide, and risk 4 to make 1. Not the best in the world, but something to do if that's your forte.
Yeah, I mean, I'm looking at this and basically saying, okay, well, if we were looking for this to fail right here, and this is where it failed, then there's maybe something to be done on the short side eventually. I don't think it's there right now, but I'm looking at it closely, and I'm thinking if we can get, let's say, sub 65, something like that, 65.30, then you've taken out the bounds of the series of higher highs and higher lows. It's that little congestion area immediately in front of us where you see the price kind of attempting to figure something out July 10th, July 11th. So if you can get under that, then the series of higher highs and higher lows off the swing bottom here is invalidated, and then, okay, maybe it makes sense to try to take a stab. But I think you have the key area there to look at outlined. It's that sort of wedgy area between, let's call it, the mid 62s and the mid 63s. And that's been an inflection area, a kind of midpoint oscillation for crude oil going back to the early September 2024. That's those gray lines that you have right there.
Yeah.
You don't want to get short too close to that bottom. So if you get a crack through and you land too close, well, then the risk reward is shot. So in broad strokes, what I'm looking at is taking that out. You take that out, okay, I'm back short. I'm looking back into the 50s. But we need to see that. And short of that, either a bounce back towards 68 that holds again on a retest, or a poke through this immediate support that doesn't run away. That could be something.
So my question I always ask myself is, as I approach, really, actually every day, as I approach expiration, is it time to roll? Would I put this position back on? As I'm thinking about a trade right now, would I put this position back on? This to me is the kill box here for being directionally neutral. There's that area right north of 63 where we couldn't crack through in April and May. Yeah. It became support in June. The 50% mark of the range in the CLU5 contract where I'm operating is basically 64.75 or so, 65. So when I see a market that's between 62.5 and 65, this is the sweet spot for doing something directionally neutral if we want to start building around either the post-Liberation Day lows or Israel-Iran highs, or maybe something even within there to get a better risk to reward. But that's the ideal place. I'm hoping, in part because I still have about 32 days to expiration, the end of next week will be somewhere in this zone so I can feel comfortable laying on this, again, putting the same position back on. Short Iron Condor, basically playing around these highs and lows because it's working, and I'm not going to get off a train that continues to make direction and, well, make movement in the direction that I hope it does, Ilya, even if it's not a high convexity position.
Yeah, I mean, at this point, this becomes a question of kind of what is your preferred narrative. And there's certainly nothing wrong with a directionally neutral position at that level. Again, the risk-reward logic is, well, if this thing breaks out, then you're wrong, but you're wrong quickly. And so you get out fast and you pivot. Maybe you even unlock your condor and essentially say, okay, well, maybe I want to have something directional now. And I know this is not sort of standard tasty methodology, but just think of it as saying I'm hedged on both sides of a market. I'm happy to let it bleed out vol, and if it breaks, I'll unhedge.
We looked at currency here with a few minutes left in the show. It's a big day for the dollar. The euro currently sitting right at its 1 month moving average, which if you squint down to a 4-hour time horizon, you can see that the uptrend here, and actually let's go to 8. You can see that the uptrend here from the early March pivot low, that's very much being tested right now. Granted, you're more of a horizontal than diagonal guy yourself, but that still puts us in the neighborhood of support right near the 117 level that we bumped into.
Critical area here. Make or break.
For the U.S. dollar itself, right? Because it's not just the euro. There are other things into the mix, like a British pound, which is hitting a multi-week low, a yen that remains soft on the session. It put a close above its 1 month moving average for the first time that we had seen since May 19th. Wow, what a world. We are
in a very critical juncture.
We are trying to get to the pivot low from April, post-Liberation Day, right? And
we're near the top of the range on the dollar against the yen. We're at this critical inflection point against the euro. We're at a critical inflection point against the pound. We are everywhere you look in the dollar against majors at some kind of a range inflection. The Canadian dollar is there. The Aussie is not quite, but the Aussie has been choppy basically for forever and a half here. We haven't really done anything in the Aussie this way or that with any kind of
basically all their 50 days. They're all right at their 50 days.
Every single one. Yeah.
6C is there. British pound is creeping below it for the first time since February 12th.
Yeah, and
right?
euro. Yeah.
The euro's at its 1 month, but still we haven't seen a close below there since May 16th. You mentioned the yen, which how those 0068 puts looking, folks. That's continuing to crack on through. That came to listen when we were up there near 0070. This came together a lot faster than I hoped, but it's working.
It's working. It's working. I'm glad I didn't hesitate on getting short this, because the yen can be unforgiving. The yen doesn't give a lot of mulligans. When it starts going, it's going to go.
Well, the thing is, we talk about the positioning here. So technicals are suggesting a bottom in the dollar is coming together, a top in the euro, the pound, the yen, which among the three of those, 57.6, 13.1, 11.9% of the dollar. That's the dollar index. And so it looks like the dollar index is turning. Then you sprinkle in the positioning, Ilya, that we looked at the start of the show. Traders are more net long the euro, and they still have a yen net long position that's in excess of 2 standard deviations above the 20-year historical average. Okay, we got some things.
Now let's just get a warm CPI number and watch everybody scramble.
Warm CPI number, so 2-year yields up, but 30-year rates down because the Fed is less likely to reinflate. I can work with that. That would help.
Let's get everybody a warm CPI number, just to see the spotlight hit the ant farm and watch everybody scatter.
You should probably talk to a therapist about that. The inflation reports throughout the morning. Canadian dollar, of course, in focus 6C. We also have, if you're a stock trader, EWC for Canadian stocks. Also, U.S. inflation, 8:30 a.m. Eastern, 7:30 a.m. Central Time. A whole slew of Fed speeches as well. Tomorrow's a pretty busy day. But Ilya, you and I will have more time to talk about it later, because we'll be back for overtime, 4 p.m. Eastern, 3 Central, right after last call. Until then, we have a great Tasty Live programming coming up next. You and I are going to take a quick break. After the break, more Tasty Live with Dr. Jim Schultz from Theory to Practice. I hope folks were able to catch his both two things last night, live in Boston and the options crash course right after first call. He's going to have a great show for you today, folks. Stay tuned.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Jim Schulten, this is From Theory to Practice. Welcome to the show today. Welcome to the Monday edition of what it is that we are trying to do, man. Welcome to the post-Boston show edition of what it is that we are trying to do. I had a super early flight this morning, so it feels like I've been up for about 27 hours straight from the show last night, walking around. Like, I guess I was on, like, Harvard's campus. Like, where I stayed in my hotel last night was, like, on Harvard's campus. I was like, well, I guess I'm walking around with all the students after the show. Had myself a little ice cream, had myself a little pizza, and the next thing I knew, I was back at the airport to come back to be with you all for this show. But, man, that event on Sunday night was amazing. So you guys are incredible. I got to meet so many of you guys and chat with you guys before the show, chat with you guys after the show. It was absolutely awesome. And I thought the show went pretty well. I thought all the team did an amazing job. The tech people did an amazing job. Brittany and Anna did an amazing job. Garrett did an amazing job. It was really, really awesome. It was just so fun and so just so great to be with you guys face to face. I mean, it's really special for me to get a chance to, put a face to an email, put a name to an email, and get to shoot the breeze for a couple of minutes. And so, love the live events. Boston was incredible. I can't believe it's already come and gone, to be honest with you guys. But we've got Detroit in October, and then, of course, we have Tampa Bay in December. And so, tastylive.com, and, of course, all the other amazing events. I mean, you probably have already gotten enough of Tom and Tony, but if you need a little bit more, you could sign up for those events. You've got Mike, Nick, and Katie and Ryan. And so there's so many amazing events on tastylive.com/events. But for my events, October in Detroit and December in Tampa Bay are going to be the next two opportunities, which are basically, those are polar opposite ends of the climate spectrum, of the kind of, happiness and life spectrum. I mean, I love my Detroit people. I am those people. Like, you are my people, but come on, man. Come on. It's 20 degrees, just like Chicago, 11 months out of the year. It's a tough go. It is tough sledding, especially in October. I mean, the chance of flurries in October in Detroit, same as Chicago. It's 85%. 95%, but I still hope to see you there because I am going to be there. But man, Boston was amazing. I just can't thank you guys enough. You guys are the reason that we can do what we do. So the live show, the live show now, the live show like Boston, like you're the reason we can do what we do. So thank you guys so much. It was really, 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 really super amazing. But all right. So Josh, bring us into the market, man. Did you guys keep the market above zero while I was gone? I mean, I don't know. Ooh, look at that. EMA S&P's up 11. All right. We got a little something cooking. You got the risk-free instrument, also known as the NASDAQ futures, up 88 on the day. You got the boomers up 67. And you've got the Russell 2000 futures index up 11 on the day. So you've got, it doesn't appear to be Liberation Day 2.0 just yet. This is maybe like a Liberation Day 1.5. Like maybe we've still got a little ways to go here to get to be fully liberated from all of our portfolio P&Ls. You've got bonds down a few ticks. You've got notes up a couple of ticks. You've got oil down $1.40. You've got, even the shifties are getting smacked around a little bit today. You got gold down $5.50. Where's silver at? So if you look up here, silver down 30 cents today. So you got a little bit of something going on there to the downside in the precious metals. And so we'll have to wait and see what happens next. I wish I knew, because if I knew, I mean, I certainly wouldn't tell you all. But if I knew, then at least we could have, a few extra victory laps on the show as kind of an after action report. You got volatility actually up 15 cents today. So the market is so strong that volatility is even up. So you got volatility futures up 15 cents. You've got spot volatility up 60 cents. And so it's not too often that you see market prices up, volatility up. Hey, we even talked about this last night in the Options Crash Course Live, which, by the way, 90 minutes. So a couple of things about the Crash Course. So I'm going to make some changes for October. I thought it went really, really well, but I'm like, all right, it was a bit of a test pancake. I'm like, there's a couple of things that I think we could do differently that could make it an even better experience for everyone involved. So I'm going to try some new things for Detroit in October. But we did 90 minutes, the whole Crash Course, and you guys are not going to believe this. You're not going to believe this at all. And the people that were there, y'all can back me up. In the chat, I need you guys to back me up. I finished on time. On time. Do you know how many tangents I went on in the whole thing? One tangent. So some might say I wasn't feeling well. Some might say this is not the authentic Dr. Jim experience. And I would not necessarily disagree with that. But when I was going up on stage, I'm like, man, I got to be buttoned up. This isn't like a Tuesday live show from Theater Practice where we're just off in the forest. We do whatever we want. I'm like, man, these people paid good money to be here. Approximately $0, but they're here. And so I'm like, man, I got to really keep this thing buttoned up. I have so many things to get to. And so I finished on time. And the reason why I wanted to make sure I did that, actually, it wasn't completely altruistic. It was because I wanted to try something very, very new at the end of the show. So what we did, and this went extremely well, we're going to do this again in October and probably also in December. So I wanted there to be a Q&A session where it's a collective Q&A from the standpoint of, people are able to ask questions from the audience while I'm still on stage. So everybody hears the question and everybody hears my answer, for better or worse. I've just learned from all of my years in the classroom and even all of my years answering so many of y'all's questions, here and now. When one of you has a question, there's a very, very good chance that, in a room of, there was 100, 130 people there Sunday night. It was amazing. There's 2 or 3 or 5 other people that have the same question, right? And so it's like, man, we can all learn. We can all come together and benefit from having some time spent for this collective Q&A. So just know that in Detroit, if you're going to be there, in Tampa, if you're going to be there, we are going to do that at the end of the show. Now, I had no idea how that was going to go. And neither did Brittany, neither did, Anna or Garrett. We all didn't know how that was going to go. And so we had the little mic, like up front, like you had to get up. you had to get up and walk to the mic. It was on the mic stand, and then you had to kind of, get in line and those kinds of things. I was like, man, am I going to be up on the stage? Am I going to have to start telling B- jokes to pass the time? This could be super, super brutal. But as soon as I kind of opened it up for Q&A, man, people got right in line. And we actually had to cut them off. Like Brittany had to shut them down because the venue was going to close, and I wanted to spend some more time kind of one-on-one with people. But that was a huge success. Huge success. Great questions. Questions about, man, let me think, delta neutrality, questions about calendar spreads, questions about, people trying to fill orders, seeing weird bid-ask spread differentials, like questions about how to like spread tasty to like, family and friends, like so many great questions. And so, man, I'm like, maybe we just do the whole thing Q&A in October in Detroit. Like maybe we don't push it that far. But I was super excited about how that went, and obviously I'm still pretty excited about the event as a whole. But anyway. 8 minutes into the show, we're already at 2 tangents in. That's about right. All right, so Josh, let's go back into the market. All right, so there's your market commentary. I'm going to leave it at that. It's right there, right at about the B- level where I like to get it to. So, all right, let's look at the portfolio. And let's take a look at what we've got going on, which isn't much. I mean, there is not much going on here at all. I mean, if I look at you guys, man, I see you guys. Look at you guys in the chat. Hold on a second. Let me go ahead and give me 1 second. There we go. So where are you at? Oh, I forgot to pop in the comment. I'm a little off today because I had to get up at like 3:45 to go to the airport because my flight was so early, and I didn't get to bed till well after midnight. So it's been a long day. But let's see. Oh, Emmett Morris is in the house. What's going on there, Emmett? I appreciate you. Theta Traders in the house. Grumpy Mike, Daniel Perkins, or Danu. Man, Scramble, everything, Daniel, Brad Glazier, Rancher, Gregor V. Dub. Man, I see you guys. Chance is in the house. Joel's in the house. Brian's in the house. Man, you guys are amazing. I'm going to get to as many of you guys as I can here in a couple of minutes. Let's go in here, though. There's not too much I want to do with the current positions. And so you've got Best Buy. That's our long share position. We've just inventoried that position. It has just become one with us. Like we are now one flesh with this position. Like we're taking it all the way back to Genesis at this point. IWM, we've got our strangle 199, 235. You've got the stack of 222, 223. And so it's working out quite well. And so we're not going to do anything. Oh, by the way, here's a good little teachable moment. So I was talking to, I think it was Gavin. So I was talking to Gavin before the show. Great guy. Got a chance to chat with him for a few minutes. Been trading for a little while, trying to figure it out, trying to make the transition from kind of, normally doing like stocks and directional stuff to kind of selling premium, right? And so one of the things that Gavin struggled with, and this is something I think every trader struggles with, that I'm really hopeful that this will help you if you're a new trader. You have a position on, like the strangle. This is not the best example because it's actually making money. But I'm going to use it simply because I'm on this example, and it is what kind of triggered this thought. You have a position on. The strikes are still out of the money, but it's actually red. So this happens oftentimes early in a position, and very often with something like a strangle. You sell a strangle, the strikes are still comfortably out of the money, but the position is showing a loss. The position is showing some red. And that can make you feel a little bit anxious. Like that can make you feel a little bit like, man, I really feel like I should do something. I really feel like I should be a bit more active and be managing this thing. And how do I weasel my way? How do I weasel my way out of this? Well, the reality is this. There might come a time to make an adjustment while still out of the money. You might want to neutralize delta. You might want to do things like that. Be a bit more aggressive with how you adjust the strikes, whatever. That's all totally fine. But the thing that I share with Gavin and the thing I want to share with you all right now that I think is incredibly important, if you've seen the show for a long time, you've heard me say this, but it's been a minute. If you sell out of the money premium, any strategy, a strangle, a vertical spread, an iron condor, whatever, if you sell out of the money premium and the strikes are out of the money, that strategy is working regardless of what the P&L shows. Now, I know that may sound like a crazy thing for me to say. You might be saying, Jim, P&L is all that matters, and I don't disagree with that. You might be saying, Jim, how is that even possible if this is showing a loss? Well, right now, it is showing a loss. And right now, mark to market, net lick, you are in some kind of quote-unquote drawdown. But here's what you have to keep in mind. The stock still has to beat you, and that's incredibly powerful. the stock still has to beat you. So, for example, with IWM here, I've got the stock at 223. Now, again, it's showing a profit, right? But if we looked at this, I think when we looked at this last week, it was not showing a profit, and it was in a similar situation. So this is a fairly new development on this position. With the strikes at 199 and 235, though, it's very helpful for all of your short premium positions. Fast forward to the end. Of course, you're going to manage it early, 21 days. You're going to do all these different things. I got it. But just fast forward all the way to the end game. Fast forward all the way to expiration. If IWM stays right here, now I know that it won't. It'll bounce around. It'll breathe. It'll move. It'll whatever. But if IWM stays right here, what is going to happen to your position? And specifically, what is going to happen to your position's P&L? It is going to do whatever you want it to do. It is going to hit whatever target you might have. That is an incredibly powerful thing to remember, right? Just remember that, man, I am still in a good spot here. I am holding all the cards. I am holding all the leverage, pun intended. And so when the position is still out of the money, never forget that it is working. You still might want to make an adjustment. You still might want to do whatever, to kind of, control directional risk or what have you, but just don't lose sight of the fact that it's still in a good spot. And so with IWM here, I'm not going to do anything because of everything I just shared with you all. It's like, that would be kind of crazy if I was like, well, we just got off the soapbox, but let's make a bunch of adjustments. No, I think I'm going to sit tight and not do anything here with IWM. And we'll let that guy cook a bit longer. And then SBUX, our Starbucks position, this is our investment style covered call. I don't want to do anything with that. And then TLT, this is our short put. We're carrying a little bit of water on this guy, but it's not too bad. And so I'm going to sit tight on that guy too. All right, what I want to do, though, I've got a couple of minutes, and then I want to get to you all, man. I want to get to you guys. And I want to get to you guys. Where was I? In the YouTube chat and your questions. That's what I want to do. All right, so let's see. If I go to what was I looking at? Let's go to the Tasty default list. And I know that it's earnings season. And I know Netflix is this week, but I was looking at this guy earlier. Netflix is this week. 7/17. So that's gonna be Thursday. So we'll definitely do a little something for Netflix on Thursday. But I was thinking, let's do a little Citigroup here today. Let's do a little something in good old C that has earnings tomorrow morning. Just to kind of, just to wet the whistle, man. Like, let's just kind of grease the wheels and get ready for earnings. And so 7/15, Citigroup. Let's go in there. I was looking at this guy a little bit before the show. And I was like, man, I haven't traded Citigroup. It's been a while. And so let's go in. Let's see. If I go to the front week with 4 days to go, I kind of think here you just got to dance with who brung you, I kind of think here, let's not reinvent the wheel. Let's not try to get super innovative. Let's just kind of go with the tried and true. Let's just kind of go with the trusty expected move butterfly. Now, normally, I do expect to move butterflies later in the week, right? Like Netflix is going to be a prime candidate for an expect to move butterfly because they're really great strategies when there isn't much time left. Because if you do get the move right, then you can hit a more like a triple home run, something like that. But you are on a Monday or a Tuesday. It's very hard to get that triple, get that home run, even if it is Jaron Duran in the box, right? Even if it is Cedar Rafael in the box, you're probably not going to be able to get the big hit. You're probably looking at more like a single, a double, something like that. Because if we get the move that we want from Citigroup tomorrow morning, there's going to be too much time left between, tomorrow morning at the bell and then Friday at the close. That's an eternity in the world of butterflies. Like 4 full, trading days in the market is a very, very long time for a butterfly. So the trade-off, the gimme gotcha exchange, if you will, is you can't hit a home run like you could Thursday going into Friday, but you have more chances to hit the single because if Citigroup doesn't work tomorrow, we've still got Wednesday, we've still got Thursday, we've still got Friday. So as I say on the show all the time, you just have to know what you're signing up for, right? If you're going to do an expect to move butterfly early in the week, I used to not do them at all because I was so focused and hyper-focused on kind of bigger hits and taking advantage of, there not being very much time left in a butterfly. But now that I've kind of expanded my horizon, and I'm like, well, wait a minute, let's be more open-minded about this, and let's think about other ways to make money. If you do one early in the week, what you're signing up for is a small to modest win possibility. You're not signing up for a home run. If you do one later in the week, you're signing up for the potential home run, but if you miss the mark, you're not really going to have a second chance. This isn't a shine down song. You're just not going to get that second opportunity. So with Citigroup here, I'm thinking, I think we go expecting a butterfly. And of course, again, guys, I don't think we need to overthink this, right? In terms of bullish, bearish, in terms of up versus down. I mean, look at this market, man. Look at this market. If you can't beat them, join them. Citigroup to the upside. Of course, Citigroup at 87. I'm kind of thinking, what if we just do 87, 92, 97? A little $5 wide butterfly. There you go. Right on the outer edges of the expected move to the upside. So we're going up to about 91. And the strike on the call is 92. And so we need this thing to overshoot to the upside just a wee little bit. And so we're only paying $1.18. So again, this is quite literally the definition of wetting the whistle. This is not a huge position. This is a very small position. So this would be a good little warm-up set kind of heading into, the earnings bonanza that, in my opinion, begins with Netflix and then continues with, Meta, Microsoft, Apple, Tesla, all the other guys. So I think this is going to be our earnings trade for tomorrow morning. So now what should you do? Should you follow this trade? You should not. What should you do? You should figure out a way to do the opposite of this trade, which I think the natural opposite of this trade will be to buy the put butterfly to the downside right around the expected move. That's going to have a higher chance of success than the trade I'm giving you right now. If you have followed the show for any length of time and you know my track record, you know that there is no truer statement than what I just said. So let's see, $1.19. We'll go in at $1.19. No takers at $1.19. Let's try $1.20, I guess. $1.20. Yeah, I'm thinking it'll work. All right, boom. There you go. $1.20. There she is. Okay, $1.20. Boom. Love it. Okay. So, all right, we're right about the halfway mark of the show. So I'm kind of thinking, let's see here. I'm thinking let's go to the questions. Yeah, let's do it. All right, so, man, look at you guys in the chat. Got a bunch of overachievers in the chat. Man, so let's see if I can surprise and delight somebody here in the middle. Let's find somebody in the middle. Well, Matt Johnson says, ice cream plus pizza, the strength building diet you won't find anywhere else. I'm pretty sure that's everyone's strength building diet. I'm pretty sure that's everyone's just BMI building diet. It's not really a strength building diet. It's more of a BMI building diet. Like the BMI, oh, it's going high. It's going higher. Like the dad bod, like it's getting more impressive, right? Like there's no doubt about that. And so, but yeah, we hit it pretty hard last night, which kind of feels like this morning. And so, Emmett Morrison says, Dr. Jim looks a little tired, needs to slam a couple of ghosts. So you know what's funny about that? So I have a fridge full of ghosts, obviously, because we're working on that angle on the sponsorship, and so I got to play my part, man. Like I got to do it. I'm sending it in the pics. I'm drinking it on the show. We're doing all the things we can do. I almost grabbed one and brought it out here for the show, but I've got to draw the line somewhere. I mean, I've already had several lattes today, and my early bird that I have in the morning, which is an amazing product, by the way. If you're looking, here's another. I should probably go early bird. Forget Ghost. Early bird's been with me for a longer time than Ghost. If you're looking for a coffee substitute, I have no affiliation with the company. I don't care if you use it or not. But if you're looking for a coffee substitute in the morning, because you don't want to do coffee or you don't like coffee or whatever, try a product called Early Bird. It is phenomenal. Phenomenal. So give that guy a go. But I couldn't do the Ghost today, man. I had to draw the line somewhere. I don't really want my heart to explode, especially not, live on the show. And so, all right, let's go. Emmett Morrison, do we really get a Dr. Jim today? You do, my friend. I appreciate you so much. And we'll get the Ghost back in the rotation tomorrow. And then Theta Trader says, do you ever really get him? You can't stop him. You can only hope to contain him. Yeah, I don't know about all that. But yeah, we're doing it, man. We're doing it. And I really, like I told you guys last week, if I could be on the show today, I wanted to be on the show today, and I knew I would be able to when I had the early flight. So it was a no-brainer, slam dunk for me to be back with you guys, because this really is. I mean, when I have a live show like in Boston or Options Crash Course Live in Detroit and Tampa, whatever, that will be the highlight of my day or the highlight of my weekend. But on any given day, like on any given Sunday with my invisible juice, man, this is the highlight of my day. Like, this is it. Like, there's no doubt about that. And so I had to be with you guys, man, 100%. And so, Grumpy Mike, I just want to know if Dr. Jim fell off the stage. So I didn't fall. I was pushed. I was pushed back in Houston last year. But it's funny. So they now tape off the front of the stage. I don't know if they do this for everyone. I just know they always do it for me. And I also know that like, before everybody gets there and we're doing sound checks and we're doing all the other things, Brittany always makes a point to show me the front of the stage. She's like, okay, Jim. She's like, this is where you can be. This is the back of the stage, and this is the front of the stage. Please do not step off the front of the stage. And I was pushed. As long as nobody pushes me, I think we should be okay. And so, Eamon Morrison says he's like a caged animal. Yeah, I've lost the mane, though. I've lost so much of the mane. Hopefully it grows back. So I need about maybe 2 to 3 months. But Daniel Perkins says, Dr. Jim, we love from theory to practice. Man, I appreciate you so much. Sorry I missed Boston. Oh, man, it's all good. Had my son's graduation party, far more important than what we did. I was going to bring him if I could. That's okay. Hey, man, come next time. Come next time. And, I just appreciate you so much. All the support of the live show. I mean, it's just really, guys, it's only because of you guys that we can do what we do. So thank you guys so much. It really, truly means the world to me. Scramble Everything says, hey, Dr. Jim, congrats on your live show and the victory lap. That will last no less than 8 to 12 minutes. Yeah, I don't know. I'd say we did about a 6 to 7 minute victory lap to kick off the show, talking about Boston, talking about the crash courses, and it just felt good. I mean, that's my first love, man. My first love is always going to be kind of the live speaking, the live presenting, and that's what I really, really, really enjoy doing. I love being on air with you guys. I really, really do. But being live face to face is something really special, and so I really, really look forward to that whenever we have a chance to do that. And so Emmett Morrison's in the house. Says Dr. Jim was body surfing like he was at an Alice in Chains concert. We didn't have time for that. Now, again, if Tom gives me 2 hours next time, maybe we can do some things like that. But with 90 minutes, again, we had to be super buttoned up. I had to keep the tangents to a minimum. I still can't believe I did one tangent, and the tangent didn't even come until like halfway through the thing. And people, if anyone was there last night and you're in the chat, back me up. Because I called it out when it happened. I was on the chalkboard and I said, this is actually our first tangent. And if I'm not mistaken, that was our only tangent. And so it felt very odd. I felt very, I don't know. It made me feel a certain type of way. And so, but no body surfing, unfortunately. Or Daniel says, greetings from Italy, Dr. Jim. How did you like Boston? Amazing. Obviously love the city. Went to a Red Sox game on Saturday. I did make the game on Saturday. I wasn't sure if I was going to be able to because of my flight. So I walked in. There was like one out in the top of the first. And obviously, for those of you that follow the Red Sox, which should be every single one of you, Crochet threw a complete game shutout, 1-0 win. I mean, it was really, really, really awesome. Had a great seat, and it was so much fun. And that was really, really cool. And I got my kids like some hats from the ballpark, and they think it's like the greatest thing ever that I got the hats like in Boston at the actual ballpark, and paid like $600 for these hats. And but it's like, that's just the way it's got to be. And so Brad Glazier says, greetings, Professor. Did you make it to Fenway? I did, as I just said. It was super awesome. Really, really awesome. And let's see. Rancher's in the house. What's going on there, Rancher? Kiash in the house says, I finally made it for this segment after weeks. Man, thank you, my friend. Thank you for being here. And I really hope that you get some value from it. I really, really do. And, again, you've got the Citigroup trade for tomorrow morning. And hold on. There's one other trade I wanted to do. Let me see if I can weave one more in. I had another one. It was it was GDXJ. Yeah. So let's go back to I want to get one more trade because we don't have very much going on in the portfolio there. For GDXJ, I mean, gold is obviously in play. I mean, it's down a little bit today, but I mean, it's been on such an unbelievable tear, right, as of late. I mean, if you look at the chart of gold, you can see, I mean, that's just is that a daily chart? Yeah, look at that. I mean, that's just a crazy, well, let me zoom back out a little bit. I mean, you can see that, there's a little bit of chop now, obviously, but man, I mean, look at that. You've just got quite a, just quite a move in gold. And obviously silver is even more impressive than that, especially the last couple of days. But I'm kind of thinking, man, let's hop into this miner here. Let's hop into GDXJ And we haven't, so you can't even do the September options, which is a little bit frustrating because if you look at the chain here, you can see they have August, but there's no September and there's no October. And so it's a bit of feast or famine here. It's like we can go 32 days in August or we can go all the way out to November with 130 days. It's like I don't really want to do either of those. I would much prefer to do something closer to 45 or 50 or something like that. But if I have to choose between 30 and 130, I'm going to choose 30 because you're just going to be able to turn over the capital so much more quickly and kind of find another opportunity. What we do is not typically suited for anything beyond I'm going to say maybe 60 days would probably be the upper end of the range. I know a lot of traders who actually, they feel more comfortable in like the 50 to 60 range as opposed to like the 40 to 50 range. I think that's totally fine, of course. And a lot of it fits with what you're trying to do and the speed with which you want to move. We all don't want to move like hyper fast. Like we all don't want to be in the fast lane in a 2011 Honda Civic. Like I got it, man. Like I totally understand. And so if that's not you, then you've got to kind of understand where you're at. And so, 50 to 60 days might make a lot more sense for you. Still, with undefined risk, which is what I kind of want to do here in GDXJ, 32 days is probably a little bit light, a little bit lighter than I would like. But now that we've already invested this amount of time into GDXJ, I don't really want to not do anything. So you've got the stock at almost 69. We haven't done one of these in a long time. Let's do a straddle. So, we could sell a put, we could do a strangle, we could do something defined risk, of course. We could do a lot of different things that we do all the time on the show. But just to mix it up a little bit, just to kind of shock the muscle here on this Monday that for me it feels like a Thursday. Like it feels like something totally just off the beaten path. Let's do a straddle where we sell the same strike, of course, with the stock at 68.76. We can sell the 69 strike. So we could sell the 69 put and the 69 call. And we can do that for $591. $591. Your pop is 55. The P50 is 44. Now, we're going to manage this far more aggressively than most of our other strategies. 25% of max profit is probably the most I'm going for. And I may stay until I get there. But if I get to 17 to 20 like quickly, I may peel it off. I'm not sure. But I'm not going to try to overstay my welcome here and squeeze out 30, 40, 50%. Because remember, with a straddle, there's not much room for error. That's the first point you want to make sure that you remember, which is kind of obvious by the shared strike right at the money level. But then also number two, you also want to keep in mind that the at the money strikes, they hold the most extrinsic value and they cling on to that extrinsic value, right? That extrinsic value does not decay as rapidly as out of the money or even in the money strikes because of things like charm, which we've talked about before on the show. Charm is going to have a much stronger effect for the out of the money options and even the in the money options. It's not going to, it's at its weakest point actually for the at the money options. And so that's one of the things that's going to cause the extrinsic value to stay high, to stay elevated in these options. And so this is one of the reasons why we manage these types of strategies. Straddles, iron flies would be another one. I'm not a huge fan of the iron fly, but I know a lot of you guys out there are trading iron flies. If you're going to trade an iron fly, you have to treat it very much like a straddle, since it basically is the defined risk version of a straddle, and you have to manage it more aggressively. And so here with this straddle, I think we're going to peel this guy off at about 25%. So let me go in at 591. We'll see if we can get filled. All right, I got nothing at 591, but I can probably get, let's see, can I get 590 maybe? And then I want to get back to you all, man. 5.9. Okay, so no 590s. Let's do, man, this market, it's just creeping up, It is just got S&P's up 14 now. You got NASDAQ up 86. And so, man, it just keeps marching higher. And so, but Kios, thank you, my friend. Let's see. Scramble everything. Yes, with the ghost comment. There you go. I made it back to a surprise and delight. There you go. That's usually my own personal goal. And so, Scramble everything says that ice cream and pizza great for that bulking phase. Yes, it is. Again, we're just pushing the BMI higher at this point. It could be muscle, but it's probably not, right? Could be some other stuff that might be a bit more soft and jiggly, which is just the way that it's going to be. And so Scott S., what's going on? Welcome back, Dr. Jim. Wish I could have made the show in Boston. Hey, it's all good, man. I know you were there in Chicago, and so I appreciate you. It was very similar to the one in Chicago, although I did have an extra 30 minutes, so we went into a lot more detail than I was able to get to in Chicago. And so that was an uptick over Chicago, I suppose. But I appreciate you, man, for being there in Chicago. And I just thank you for trying to get out there. I know that it's a lot to ask, on a Sunday night. And I'll tell you what, man, in October and December, I'm going to have to be battling Sunday Night Football. There's going to be 5 people there. There's going to be 10 people there. It's going to be amazing if more than 17 people show up. And so I'm like, man, it's one thing to do a Sunday night battle in July. It's another thing to do a Sunday night battle in October. And so I need you guys to back me up, man. I need you guys to spread the word. Again, bodies in the seats, heartbeats in the room is what we're going after. Gregor V. Dub in the house. What's going on there, Gregor V. Dub? It was a really nice event. The vibes were outstanding. Yes, Gregor, thank you so much for being there. I thought it went pretty well. I thought it went pretty well. The venue was really cool. Brittany gets all the credit for that because she's the one that scouts out these venues and locks these guys down. And I thought, the fact that, free beer, like free wine. I was like, I've never been in a learning environment with alcohol. I'm like, this is a whole different deal. This is a whole different type of thing. And so we were all laughing about that kind of backstage before we got started. I thought it was super cool. I think it's just to keep it super chill, kind of keep the vibes going. And so I thought it was awesome. I didn't have any alcohol because I'm like, that's not a good idea at all. And so, but I know a lot of you guys had a chance to enjoy, just a little beer, a little wine, some appetizers. It was great. It was super awesome. And so let's see. Oh, Matt Johnson, yes, the ice cream and pizza, the strength building diet, correct. Jackie W in the house. Hello, Dr. Jim. What's going on there, Jackie W? I appreciate you, my friend. Thank you for being here. Yes, you're here on a very regular basis, possibly even every day. And so thank you there, Jackie. Gregor says beautiful venue. Again, Brittany gets all the credit. Paul says no black eye from Brittany. No, I follow orders, man. Like I have learned my lesson. Like there's no talking back. There's no suggestions. There's no questions. When she says, does anybody have any questions? Nope, I'm all set. I've got my marching orders. I know what I need to do, and we make it happen. And so, yes. So Aaron's in the house. Hey, Dr. Jim. Butterfly for ASML, JPM, Netflix, and Citigroup earnings. Yes, so we did one for Citigroup. Is JP Morgan tomorrow morning, or is it later this week? Wow, JP Morgan is tomorrow morning too. Huh. Okay. Let's think about this. So we played Citigroup to the upside. Do we play JP Morgan to the downside? That doesn't seem like something we would do. It's a bit too strategic for our liking. I honestly think we play JP Morgan to the upside too. Because again, if you can't beat them, join them, man. Look at this. EMI S&P is up 1475. NASDAQ up 90 now. And so it is just, there is no end in sight. And by that, I mean, the end is near. But with JP Morgan here, I think, I don't know. Let's see here. What if I did a 290? You know what? I'm not even going to do a butterfly. Let's mix it up. If we're going to play them both, let's do it. Let's at least have a bit of strategic differentiation. So let's kind of dip into the strategic toolbox even just a wee little bit. We're not grabbing anything crazy. I'm not grabbing an Allen wrench. I'm not even grabbing a crescent wrench. Let's just grab the trusty old hammer. JP Morgan at 288. What if I buy a 285 call, sell a 290 call? This is it. This is about as standard as it gets. You're doing an at-the-money vertical spread to the upside. You could, of course, do it to the downside too, which you should do since I'm to the upside. But if you want to take a directional shot on a stock and you don't want to buy a naked call because the theta will just eat you alive, the volatility crush will eat you alive after the earnings are released, you can just buy an at-the-money vertical. And again, if you're playing it to the upside, you would be buying a call vertical. So I'm buying the 285 strike. I'm selling a 290 strike. It's basically going to be a 50-50 shot. You can see the pop right here is 51%. The P50 is 46%. And, the debit that I would pay is usually going to be about half the width of the strikes. And so this is essentially what you are signing up for with an at-the-money vertical spread. And so I like the trade. Thank you for the idea there, Aaron. So now we have a couple of things cooking for the morning. which I think it's good because, another thing too, I mean, volatility, it's up today, but it's generally been pretty suppressed the last few weeks now. And so finding things to do can be problematic. Finding things to do can be troublesome. And so earnings season can be a nice little it can be a jump start. It can be a little kick in the pants with all right, there's some things to do. We've got a bit more volatility, potentially some movement. Although, wow, look at the IV rank though. The IV rank for an earnings is 16. Wow, that's pretty bad. Normally, I would expect to see much higher. What's Citigroup? I didn't even look at it. 21. Wow, that's still pretty bad. I mean, we can't go back in time now and change our strategy. We're just going to leave it. But I feel even better now about this JP Morgan strategy because with an IV rank of only 16, even with earnings, not necessarily the ripest environment to sell premium. Buying premium is going to make maybe a little bit more sense because volatility is so low. That buying something like a vertical can make some sense. And so, let's see here. I can't get filled at 259. Let's try 261. All right, so I got filled. I actually got improved to 260. Okay, so that's JP Morgan. Thank you, Aaron. I appreciate that very much. So now we got a couple of trades on. We got 3 on actually, so that's a pretty good day. Citigroup, GDXJ, and now JP Morgan. Let's see. Ordenu says Brittany is the greatest. She is the greatest. That is 100% correct. And so let's see. Brian Dowdy says, oh, nice. We got Dr. J today. Yes. I told you guys I would be here if I could be here, and I had to be here. And so I knew when the flight was early that I'd be able to make it. So it's been great. And wow, the show's almost over. It's so fast, guys. You have no idea. No idea. No idea at all. Let's see. Oscar and everything says I'm going to change it to just buying long shares and holding them. I'm not sure what you're referring to, but again, if you can't beat them, join them, right? If you can't beat them, join them. I mean, this is the strongest bull market of all time, other than the previous bull market, which was the strongest bull market of all time. But this one is right up there. I mean, it is absolutely the resiliency of the market. Basically, since 2022. Now, 2022 wasn't that long ago. Like, it may feel like it was pretty long ago, but I mean, it was only 3 years ago. Like 3 years ago in the summer of 2022. I mean, here, let me bring up E-mini S&Ps. If we go back, to the summer of 2022, you're going to see that. Oh, wait a second. I've got to do dollar sign. I think it's just dollar sign ES. Right? Yeah, I did it. Look at you guys. You guys hooked me up with that. I had forgotten about the continuous contract with the dollar sign deal. I'm more of a dollar sign like Excel kind of lock that variable type of guy. And so I wasn't quite sure about how to do it here, but there you go. So if we go back to 2022, let's see, where is this? Oh, here we go. Right here. Yeah. So yeah, there it is right there. I mean, it's plain as day, right? So this is April of 2022. So look at that. That's April of 2022. This is what happened through the summer. It's like straight down to July 1st. Then you got a little bit of a reprieve going into the fall, and then they just squashed on you again, right? And so 2022, that's when the VIX was basically over 20 the entire year. And so this year looked like it might be similar with January and then even, February, March, and then of course with April, with the VIX being, the VIX was over 30 for a while there in April. But yeah, 2022, it may feel like it was a long time ago, but it was only 3 years ago. Since then, though, man, the market has really been just incredibly resilient. Now, I know Liberation Day, all those kinds of things, but even the resiliency from that, because all the tariff stuff is still going on. Like, there hasn't been a ton of resolution on that front. There's been some, I suppose, but there's still a lot of uncertainty in that regard. And yet the market is just shrugging it off. Now, is the market shrugging it off because they don't believe the administration? They think they're just going to walk it back? Possibly. Is the market shrugging it off because tariffs just aren't that bad? Possibly. I mean, it could be a number of reasons. But all I know is tomorrow's Taco Tuesday. And so it's Taco Tuesday because it's always Taco Tuesday. And so that's probably going to be good. And so let's see. Emmett Morrison, Gregor V. Dub says, Dr. Jim was on point. Man, I appreciate you. Man, look at you. I'm going to send you that cash we talked about, right, for you planting this in the stream at this very time. And so I thought it went well. I thought it went pretty well. It's a lot, though, man. It's a lot for you guys. And I didn't quite realize that until after the event or even during the event, like while it was going on. I'm like, man, 90 straight minutes of just like straight like learning, like, no tangents. Again, there was only one. even kept the B- humor pretty much under wraps. I mean, I threw a few out there, but they were more like C-. And so, yeah, it's a lot though. It's 90 minutes, man. And so I'm like, all right, are there some things we can do to maybe make it a bit more interactive? I think there might be, and I'm going to maybe test some of those things out in October, but it's always a learning experience. It's just like anything else. You know, like when you're trying something out for the first time, which this wasn't the first time. Chicago was kind of the first time. But this was, you know, with the longer time, I had to kind of figure out what the additional content was going to look like. And so I thought it went really well. I was very happy with everything. But thank you there, Gregor, man. That means the world to me that you feel like you got so much value from last night. That's awesome. Theta Trader says, Dr. Jim finished on time according to loose definitions of on time. No, man, like for real. I actually pointed to the clock. I was shocked myself. I couldn't believe it because I looked at the clock. I had like 7 minutes left to get to the 90-minute mark. I had 5 slides left. It was 7 minutes. And I'm like, there's no way I'm going to do this. Like, this is the Doug Flutie Hail Mary of all Hail Marys. There's just no way I can do this. But then I kind of drummed up the willpower and I challenged myself. In the moment, I'm like, you can do this. If you really try, you can absolutely do this. And so I basically just skipped over all the information in the last 5 slides and I finished on time. And when I did, I pointed to the clock and I want everyone in there to know that I finished on time because 10 years on the network, that's the first time it's ever happened. And so, yeah. And so Andrew Cortado says, was it a clone? Yes. One might think so. One might think so indeed. And then Brian Dowdy says, to be fair, he always finishes from theater practice on time every day. Man, I appreciate you. And on that note, we're actually done today. I actually do that. I didn't do a good job of that in the beginning. So back in 2016 when I started, I was kind of notorious for going over a little bit. And I was kind of like, man, there's people behind me. Like, and they've got things they want to do. They've got their content that they want to get to. So I'm actually very, very cognizant of the clock on my show. And I just stop myself kind of mid-sentence if I need to, which is essentially what I'm going to do right here. But I appreciate you guys. I appreciate you guys so much, especially coming out to Boston. It was amazing. I hope to see you guys in Detroit if you weren't able to make it out to Boston. But guys, if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call 2 real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks. Thank you, man. Thank you. I really appreciate it. Very kind word.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex. now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
What's going on, everybody? VIX is up. So are stocks. What does that mean? Not really sure. Long bound is down once again. Got to buy it at some point in time. I mean, you know, what the hell not? Why the hell not?
Mine there yet? No.
And Bitcoin once again making new highs. Those three things and more. Lots of earnings coming up this week. Of course, earnings are about to get started. So that's going to be fascinating. Then we got a little bit of inflation reports. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering to Trade. I'm your host, Jamal Chandler, and it's Monday, so you know who's in the house. Josh Fabian, everybody.
What's up?
What's going on? How was the weekend?
Weekend was good.
Yeah?
Yeah. How about you?
I watched Superman.
Oh, that's right. You did. We talked about I just saw you on Friday. This is a lot of time together.
I know.
A lot of time. How was it? Oh, man, that says a lot right there. That says a lot.
Okay. So the problem is like, I'm really brainwashed by like the Christopher Reeve Superman movies. So
he's near and dear to my heart for lots of reasons.
There's no doubt about that.
He never did walk it.
But it's not even so much that. It's not like I can't. Actually, the guy who played him, I mean, he did a great job. He looks like him. I mean, you know, all of that.
Yeah.
The part that for me is the storyline. The storyline was a little weird to me. I wasn't really feeling it. And the attempts at humor half the time, like, I'm just like, that's not really that funny. Like, it was kind of nerdy. But then you know what kind of helped me reconcile a little bit with today? I just realized the dude, I didn't look his name up before, but the guy, James Gunn, who did this, is the guy who did Guardians of the Galaxy. So it does have a lot of the Guardians of the Galaxy type feel, if you've ever seen it. I've never watched a full one of those movies, but, you know, I get it.
Is James Gunn the guy that played It Rubs Lotion on Its Skin? Isn't that the guy from Silence of the Lambs? Wasn't that guy's name James Gunn?
I don't think so. I know who you're talking about. I forget the name of that actor.
Or was that the name? Or was that one of his aliases that he used in the movie?
Yeah,
I think that was actually an alias that he.
Yeah, it was fascinating. You know, I mean, it's a Superman movie. First of all,
was it entertaining?
It was entertaining.
Okay,
it was entertaining. There was a lot of interesting. You could infer a lot of different things from some of the scenes and setups in the movies and dictators and just things like that. You could go there if you want. I'm sure there's plenty of websites that will go there with that. But look, I'll be honest with you too. Superman he got hurt too much. Okay, this is always
just in the previews. He looks like he gets
problem
beaten
with
up.
Superman sometimes. Like Superman gets hurt a little bit too much. You know, like it's one thing if there's like a whole bunch of kryptonite around and you know you punch him in the face, but I don't know how. It's just weird. It's just weird, you know. Like and there's a reason why it happens in some part of the movie. I'm not gonna go into it if you haven't seen it, but I'll tell you what. It made 122 million.
Yeah, I saw that.
That's a big number at the box office.
A big opening.
Well on your way to $1 billion for sure.
Enough to make a sequel.
It's more than F1 made its first weekend. I was just looking earlier. Look, market is really not doing a whole lot. This is actually what I did a lot of research on. I did a lot of research on these last couple of movies, F1 and Jurassic, but Jurassic World did not do as much. Superman did more than most of those movies in its first week. It did more than Jurassic Park. It did more than F1. It did more than
Mission.
Mission, and it did more than How to Train Your Dragon. How to Train Your Dragon, dude, that shit is on its way to $1 billion as well. It's already at 560
So not on my radar at all.
Yeah, I know. I'm just letting you know some of the movies that are on the way. The Mission is at 500 and something million. So yeah, that's what I did. That's what I did.
Yeah, I don't even. What? Did what? What?
Your kid in the chat. Oh God!
Oh,
you're in trouble when he gets home.
Oh, you know, why would you use your full name? Why would you use your full name? Yeah.
Oh,
Yeah.
That's funny. Anyway, he just stole. He just stole it. He just stole the show. Yeah. So that was like my weekend, or at least more recently. That's what I did yesterday. Watched a couple of. First time in a while I watched some boxing. With Shakur Stevenson was the headliner, but that fight was a joke. I think the dude he was supposed to fight against backed out, and this dude stepped in, and you could just tell he was playing with that guy the whole time.
Yeah.
So.
Yeah, Shakur Stevenson reminds me of Floyd with his defense.
Yeah.
Got the same shoulder roll type of stuff going on.
Yeah.
I watched the women's fight on Friday, which was a trilogy. The first two fights.
Yeah, I didn't see that.
The first two fights were great. Just great. The last fight was awful.
Yeah.
I mean, and I don't blame them. I mean, they knocked the crap out of each other in the first two fights.
What kind of viewing numbers did they get for that? I wonder.
The third one?
Yeah, this past one.
I don't know. It was on Netflix.
Yeah.
So I don't know what it did, but it was like I don't blame them for not going at it in the third fight. It's like there's some they did some damage to each other in the first two, and like when you get to the third one, like nobody. And the first two were won by the same woman.
Right.
So it's like
somebody different won this time?
No, she won all three.
She won all three.
Yeah, yeah.
That's it. There's no more matches going there.
No. They both said they didn't want to fight each other anymore. They're
Well,
like,
obviously for one person. You kicked my ass 3 times. I'm not going to want to fight again. I don't care. It doesn't matter. At some point, the money doesn't matter. It's pride. We just talked about at the top of the show what's going on with markets. Of course, this week, I mean, we got starting tomorrow CPI, right? I think
CPI,
PPI,
retail sales.
You were saying that's probably why VIX is up and stocks are up.
Yeah,
Or,
I think that
not so much stocks are up, but why VIX is up a little bit.
Yeah, I think VIX is up because of the. Because here's my take.
It's interesting when VIX is up and stocks are up.
Because I think that the CPI and the PPI are no-win situations, and here's why. If CPI and PPI are down, they're going to get discounted because you have this August 1st deadline for tariffs. So everybody's going to say, oh, okay, well, we still have the tariffs kicking in August 1st. If CPI and PPI are up, then people are going to say, oh, shit, it's already up, and tariffs are kicking in August. It's to me, they're no-win situations, and I think that's why you're seeing the VIX up. So the best case scenario is CPI and PPI being soft and people saying, well, let's see what happens in August. And that's not exactly a great outcome.
I'm a little bit shocked by this move. It's really 36 points. Did I do something wrong?
For what?
For a one-day move. It is 36 points. That's what I'm seeing. 36 points for a one-day move.
For SPX?
Yeah, for SPX for tomorrow. For CPI. 36 points. We have a range today of like 40-something points.
Yes, we do.
All right. Oh, no, I guess we don't. I thought it was more. 34 points on SPX today that we've had.
And I scalped it for 6.
31 points on Friday.
Yeah.
38 points on Thursday. 37 points the day before. I mean, this.
Hey, chat, we're done with Superman.
This has been. You talk about low volatility. It's been less than 40 points since July 8th. It's been less than 40 point intraday moves. I'm not complaining. I mean,
think about it. It was
after a while things are going to calm down.
Yeah, and there was nothing to look forward to. But now you're going to get into, tomorrow. You not only do you have the CPI, but you also have J.P. Morgan, Wells, and is it
after the close, right?
No, before the open.
Really?
Tomorrow, yeah.
Oh, yeah.
J.P. Wells and Citigroup.
Is it really?
Yeah, they're before the open tomorrow.
Okay. Yeah, I mean it's.
So you're going to get hit with a lot of, not just And with the banks, it's not just earnings numbers; it's macro data that they offer up as well.
So I don't know. I haven't wanted to do anything, and I'm not going to do anything with these. I mean, I was looking at the setup. I often, as most know watching this show, I like to trade earnings for like a move. And I just,
Gregor, you just dug yourself off.
These could go to the upside. I just don't feel like.
I'm not all that interested in.
I'm not.
Yeah, it doesn't excite me.
I'm not crazy.
Doesn't excite me.
Yeah, it doesn't excite me at all. So
I don't like the risk reward.
I don't mind just sitting on the sidelines and just watching to see what happens with these.
Yeah, I'm with you on that. It's I kind of want to see. We were talking about this morning. Like, let's wait for a good trade, and I think that as we get into earnings season, you might see some setups come out of that, some opportunities come out of that may not even be necessarily an earnings related trade, but just as we start to get some earnings, maybe things will start to take shape.
Yeah, I'm not interested in these at all. I'm not interested in selling them, and I'm not interested in buying them. Same thing. And all the banks, like we said, all of the charts look exactly the same, which, actually gives me comfort, honestly. I mean, they do a lot of the similar things. These charts should look the same.
Yeah.
I think it's weird when charts don't look the same, like a UNH and, hell, I don't even remember their comparatives anymore. Who's the other one? Humana. Like, obviously, these charts look a little bit different, but actually they don't.
We need some nerds while you're talking.
Huh? Yeah, you have your nerds, and you enjoy it. It's good. Hope it's refreshing.
It's my weakness.
Nerds. Yeah.
I love these things.
I can believe that on multiple levels.
It seems apropos.
You can't even spell apropos. What are you talking about?
Probably not.
Bonds are down again.
Mm-hmm.
I'm along a call spread still again. Somebody actually, a good friend of mine hit me up today, and
are you about to make a joke about my bond buy?
No, I'm not. Oh. No, I was surprised he hit me up and asked me about, like, how can I look up the 10-year bonds? I don't know what prompted him for that question. I don't know.
A trader friend? A trader friend or just a friend?
He's not even a trader. No, he's like.
Oh, that scares me.
Yeah, I don't even know where that came from.
I don't like when those people call and ask, hey.
Yeah.
I remember a really, really, really good friend of mine. She asked me, should I buy Bitcoin? And I was like, uh-oh. My immediate answer was no.
It's always weird when you hear somebody ask you that, right? Like somebody who doesn't, not in our space, and like, what is this?
You're like, okay, we've jumped the shark.
Yeah, this has been one of their. It's an interesting thing, but it's just a lot that's going to have to happen. I mean, between the Fed and the government and spending and et cetera, and then of course Bitcoin hitting new highs. You know what's funny? I thought about over like on Friday. I was like, is it worth getting short Bitcoin? I'm glad I didn't. Let's just say the least.
I'm not getting short that thing. No way.
We were looking at IBIT, and I will say somebody in the chat last week was asking me about getting long IBIT. I told them very simple. I was like, look, most people are going to tell you to sell a put or whatever. I was like, if you really think it's going, just buy in the money call spread, Tasty style, buy the 55.
Yeah.
There was something like that. I think it wasn't these strikes, but it was on the order of like something like this, buy the 55, 65, 75. Like, what the hell? And that's proven to work. Hopefully it did work for you. I don't have anything in it. I haven't done anything. But it's always, I always am interested when a name is like all-time highs, moving heavy. I don't know. I'm drawn to those, like the Palantirs of the world. Like Palantir's been on a move today, bro. I don't even know if there's snooze. I don't know what it is.
I closed on a strangle earlier today.
Yeah, you were short of strangle in there.
Yeah, I put another one right back out.
I should get short of strangle in here. What do you think, guys? I don't know. I don't always like. This is an interesting time.
Like in general, or just
no? I mean, like this is always interesting to me when.
I
shouldn't actually. It's not as interesting as what I mean to say. When something like Palantir, the earnings are coming up August 4th.
Mm-hmm.
The area where you could profit the most, obviously, from being short is August because it's 32 days. But
I did September.
Yeah,
I wasn't. I closed out August, and I put on September.
This is actually not bad.
Which one? What are you looking at?
The
August
120, 180, and
yeah. So I actually was in. I closed out the 120, 200 is what I closed out.
Yeah, but it's not going to come in as much though. like that. Like the one in September. Like that's 67 days.
Oh yeah, it's not going to come in as much from the earnings, no. But
I don't mean even for earnings, just right now. Like so.
No. I'm going to be
like,
sitting in it. Yeah.
Even though it has earnings, the way that this has been moving recently,
yeah,
we've talked about this a lot. This is the vol on top of the vol earnings.
Right.
So I feel like it's getting to a point where because it's making this big move, you could actually sell vol in here right now.
I agree with you on that. I'm just
pretty decent strangle. I'm gonna talk myself into it.
All right.
Would Jay Lizard make sense?
Eaton, don't overstay your welcome, buddy.
Jay Lizard would definitely make sense. I mean, if you think it's going to keep going.
Yeah, sure. I've got no issue with that.
Certainly. I got no issues with that either. I mean, again, more than one thing can be right at once.
Yeah.
And in this case, I think I'm going to sell this strangle, Josh.
Go for it.
Myself into it.
I actually, what did I sell for? I sold the 12200 again, but this time it's up.
Sell that strangle. We're in, baby. That's the one trade of the day. There we go.
I did that meta trade.
I feel like it's been on the move. Why not? It's one of the few things, though. Even though I did say I'm going to let most trades come to me, but I mean, that's pretty decent. It's 41. It's moving heavy right now, and I'm going to get in it. I was looking at IBIT, but I'm going to wait. I would like to see if Bitcoin makes another big move and this makes another big move. Then I'll sell a strangle in here, too. Pretty decent markets. Ball is up there. I could do that as well. Outside of that, man, this is like seeming like a calm before the storm, you know?
I think so. I mean, I think that I got in bonds Friday when we were on air. I think a lot of the downward pressure has been this pressure to get Powell to resign.
Yeah.
I think it's just been the bond market.
You're talking about in bonds?
Yeah.
Yeah.
I think it's been the bond market's way of saying, you do politics over there, we'll do monetary policy over here, and let the two worlds not collide as much as possible. But not forcing it. I think that's, you got a lot of stuff. I mean, you got, the CPI PPI this week. I didn't look at the economic calendar for next week, but when the PCE's got to be coming up pretty soon too.
I think it's probably 2 weeks after. Next week is more of like those earnings, like the earnings hit the Microsofts of the world, I think.
Is it? Is
that next week? Well, maybe not. Not the 30th.
Let's see.
Apple
is
on the 31st.
So last
I thought
week
there was more. Maybe not. Yeah. Well, yeah. Google and is one of them.
Oh, they're spread out.
Google
Amazon's
and Tesla.
August. Google and Tesla, because Amazon's August 7th.
Yeah, Amazon's. Wait, that's kind of far, isn't it?
That's very far.
Wait, what's up with
Apple,
that?
July 31st.
The first time I didn't really.
These are spread out a bit.
That is interesting. Why is Amazon's August so far out? Does that have? Do you think that they want to include Prime Day in their earnings or something? Because that's kind of far out.
I think it would still be included. I don't know. It's just weird.
Yeah,
I don't know. Maybe they're.
Because I feel like they usually have earnings around the same time as Google.
All those guys usually have earnings around the same week or the same week and a half.
Something like that. Yeah.
I don't know. Maybe they just don't want to get whipsawed with them. I don't know.
They just said, "Hey, man, you do your thing. We're gonna,
mine." Probably some sort of collusion.
Don't touch my earnings.
Some sort of collusion.
Some sort of collusion.
I don't know. That's odd that they're spread out that much. It's usually all within a week.
Used to be, but they don't want to do that anymore. They said no.
Times are changing.
Well, we got to change with them.
Do we? I'm getting old, man.
What?
I'm getting old.
Yeah, I could have told you that. I look at you every day. Oh, I'm sorry. You weren't talking. Sorry, I didn't mean oil.
Oil.
It's been a boring trade. We're not interested in that at all.
No, I mean, I said it this morning. I saw it falling, and then I'm like, "Whoa!" It's down. And then I looked at the price, and I'm like, "What do you do here?"
No, nothing.
Nothing
at all. It's
metals
hanging out in the range.
Yeah, it's like there's.
So I was talking about my silver trade on Friday just to update. I did close it out on Friday. I had the 40.42 in September. I had the 40.42 call spread. and I closed that out. Again, it was more because of the notional value of the trade. I mean, it had more to go, but it was just like the buying power is, I mean, well, not the buying power, the notional value of it was like not the notional value, I shouldn't say, but the size of the trade was like $3,000 on a $25,000 portfolio. It's kind of big. And again, I mean, it broke through 40, which it did today. But my whole thing was I want to scale down some of that trade. So I moved into SLV, rolled into calls. You can see my net lick is $600 now. The net lick on the SI trade was like $3,000. So I'm still in the game. If it does keep going higher, cool. If not, I'll still, I'm winning, right? And so you don't always get a chance to do a trade like that. But look, when I do a risky trade, which is basically an upside call spread, yeah, it's further out. I'm calling it risky trade because it's not a vol play. It's just a directional play. I shouldn't even really call it risky. We take directional trades all the time, but
Directional shot.
it's not a tasty type of trade.
Yeah.
And as a result, I'm managing it in a very different way. It's really what I'm getting.
Fine.
So yeah, staying bullish.
Yeah, I've got some positions along little Google.
Okay.
Along little hymns.
Google and hymns. So you're on a search engine while you're, never mind.
It's the weight loss one.
Got it. Okay.
The weight
Do you
loss.
feel the need to clarify that each time?
I do. Very much so. Especially given the fact that I just said I'm old. Let's see. What did I do in Meta? Oh, I sold that put
Hymns
spread.
is making a big move today.
Yeah, it is. Yeah, I sold a put spread in Meta today.
Did you?
Yeah.
For earnings or just because you like the chart?
I just like the looks of it.
Okay. If you like this, how come you don't like JP Morgan? I mean, they look very similar.
I don't know.
How come you don't like Goldman Sachs?
I don't know.
I mean,
I couldn't give you an answer. I just felt like
you just don't feel like playing the event. I get it.
I just felt like doing something. Yeah. I mean, I got what else did I do? I'm long Oklo.
Oklo.
Yeah, I got a covered call and it's having a big move today.
Okay. Well, it's having a big move today. I haven't been in this in a while.
Yeah.
Forgot about this name.
It's in the Palantir strangle we talked about. Yeah. And then I've just been straight up long RGTI for a while.
I got some of that in a long-term account.
Yeah.
Here, but I got some of that. Yeah.
Yeah. I mean, I'm definitely just straight up long right now. And then I talk about a lot. I scalp quite a bit. So I scalp around the positions.
Those positions, or are you just saying in like?
I scalp in ES, MES.
Yes.
But, I don't have a reason to be bearish, I guess, is, overall. I'm bullish overall, and I'll scalp from either side depending on how I slept the night before. I mean, honestly, it really it's like it's a flip of the coin.
I mean, yeah, as you can see, I'm kind of light on some trades, honestly. And before I put that Palantir trade on, I basically was at less than 50% buying power, basically. I was using less than 50%. I was using like 47%. That obviously ticked it up some. I'm probably up to 53 now, but I'm staying kind of light, man. I just keep feeling like there's going to be other opportunities in this market,
Totally
really
with
good
you.
opportunities, whether it's a buy a dip or whether something just gets, a crazy move and you can bid it up. Like I actually messed up on Friday because this MP obviously had the big move last week with the Pentagon, which is still like, I don't think we talked about that enough. The Department of Defense / Pentagon takes a 15% stake in a publicly traded company. That's interesting. The rare earth minerals, of course, trying to get ahead of China and all that.
I got some issues with that.
And it was, the IV was up there. It was like 40 something. I actually sold a strangle, but I'm not going to lie. I was sleeping the night after and I'm like, you know what? The way that because it moved 50%, right? It's like, what if we get up on Monday and it's up another 50%? I got a little nervous. So I closed it out on Friday. And the ball collapsed on Friday.
I don't blame you.
Like I had sold the strangle for like $400.
Well, Palantir's the same thing. I mean, Palantir is essentially.
Yeah, but at least it's bigger. Like it's huge. It's a big name.
Huge. Yeah.
This thing, I don't even know what the market cap on this name is. And so I don't necessarily like selling vol in names that are smaller market cap. I mean, this is a $7 billion stock. Like that's not much to move in this day and age. At least Palantir, it may have a big move, but it ain't gonna have a 50% move.
Probably not. Probably.
That's why that thing moved. Palantir's $350 billion name. I'm fine being short a strangle on a $350 billion name. You got to put a lot of capital to work to really move that thing big.
Yeah. Yeah, I'm with you though. You said you're what 40% buying power?
I'm probably up to 53 now.
Okay, yeah, I'm like mid 40s right now, and I don't feel a need to press. You know, sometimes you get like April, May, and it's like, okay, I should be pressing right here because there's definitely a lot of opportunity. Right now, I'm even mid 40s. It's like, okay, I probably don't need to be this high, but
that's a really good point. Actually, I think we should.
Thank you.
We should have an indicator that sort of illustrates the level of trading opportunity we believe. So right now, if let's say 0 to 100, I would say
I actually have been talking to TP about this exact
I would say
thing.
that it's like 29% right now.
I've been talking to TP about this exact thing, like because we do have, based on VIX, how much buying power, like roughly.
Right.
But I've been talking about more along the lines of like in that a better indicator. Like this is the number.
The
like
indicator is kind of like it's almost correlation, honestly.
Yeah,
it could almost be like correlation.
Like a 1 to 10, like this is the percentage of opportunity that there is. Like 10 being 100%.
This thing sucks. Should be better. I don't know why it's so low, but because
right now the opportunities, like it's there.
Yeah,
there's a handful.
Correlation is almost a better indicator because it shows you like what I mean by like opportunities. Like in April, you had anything you could sell vol in, basically.
Right.
Whether it was oil, gold, equities, different names, etc. And so like it's not like that right now. So I think that's an interesting thing to do.
Yeah, I agree with you.
Yeah. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them off.
Keaton, you're grounded.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market hasn't stopped. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody. Happy Monday, and welcome to the earnings season. Things are finally getting kicked off this week. It's sort of funny because different industries tend to concentrate their earnings in certain weeks. Like banks are always the first. I think consumer staples tend to be the last, and tech is like kind of near the end there too. So it'll be a lot of banks this week, and I think those will start cooking tomorrow morning. The bigger news tomorrow morning, evidently, is going to be the CPI. It's a monthly number. They provide the core CPI for the month, the overall CPI for the month, and then the yearly year-over-year CPI. I would note that for the past 4 months in a row, I think core CPI has come in well under predictions. And it seems the impact of that seems to be kind of diminishing because people want a low number, but it's kind of being met with a shrug of the shoulders these days. I believe tomorrow's anticipated number is 0.3%, and the yearly is 2.6%. Got a pretty decent head for simple numbers, so I think this is right. So we'll see. That's an hour before the open, and that should maybe shake things up a little bit. What didn't seem to shake things up anymore is the whole tariff wars. On Saturday morning, news came out that, well, Trump is going to have a 30% tariff on all the European Union and Mexico. And it's like, whoa, that's kind of big news. And fittingly, when futures opened on Sunday, everything was red. And now everything is green. So nobody cares anymore. I don't know if it's the taco effect. I don't know if it's just machines don't care anymore. Irrational exuberance, it doesn't matter. Lifetime highs every day. We can announce 300% tariffs for every country in the world, and I don't think anybody would care at this point. It's just cruising right along. So it's become tempered to that, whereas in early April, every little percentage point was freaking people out. Let's thumb through the charts and see what's going on out there, although you kind of get the gist of it. Here is the spider, and we have spent the past 7 days or so kind of banging around into nowhere. There's certain sectors that are at lifetime highs, and there's some that are just kind of on a daily, hourly, and minute bar basis, just grinding away. And spider's definitely in grind mode. And there we have it. It's up just a little bit. The ES is up 0.18%, just kind of hanging out. There's definitely some sectors more interesting than others. Tech is a little stronger. And the cubes have also spent 1, 2, 3, 4, 5, 6, 7 trading days just kind of hanging out. They had their last big pop on July 3rd, and that's pretty much to the penny where things are right now. SMH, the semiconductors, are incredibly in the red. They've been somewhat on the weak side today. Maybe the tariff news affected them a little bitty bit. Of course, they're extremely lofty. What's interesting about this chart, and I see this in ES also, is that the prior lifetime high is acting as support now. So this dashed blue line is anchored to the lifetime high back on almost exactly a year ago, July 11, 2024. And we pushed above that a few days ago, and we were weak this morning. Look where we wound up. I mean, I wonder how close that is. The level is 281.82. Today's low, 281.76. Not officially, but that's what I have. Let's call it perfect. I mean, that's crazy. An exact touch. And although I'm not showing it here, I'm seeing the same thing with the ES. Because way back last year, first half of December, I think, the ES reached a lifetime high. And it stayed below it ever since. And a couple of weeks ago, it was close and close and close. And finally, I think on Wednesday, it jumped above it. So what had been resistance for the longest time is now support. And what happened this morning was that, futures open Sunday, they gapped down. They kind of ambled along for a while. And then around midnight, that's kind of where they bottomed. And they got very, very close to that line at, I think, 62.58. Close to that. But that was support. It used to be resistance, now support. So with all the weakness and all the selling in futures between Sunday and Monday's open, they didn't go below it. So that support level is crucial. And so if there's any bears left out there, you've got to break that. Otherwise, the bulls have gone from an exceptionally strong position to an incredibly exceptionally strong position, because now they have this super high level of support, 62.58 on the ES. Now, Bitcoin is still raging, although it's a little off the crazy highs we saw earlier today. Last week, I mentioned around here, somewhere around here, that it looked potentially poised for a big pop higher, because there's all this pent-up energy that had been developing, because it had a big pop higher in mid-December. And on Inauguration Day, it had very slightly a lifetime high. Then it started falling, which was bizarre because there's so much political tailwind behind crypto. And that bottomed, not surprisingly, around the time everything else did back, around April 7. And starting on April 9, when the white flag went up over the White House, things exploded higher. And so we have gone from around 75,000 to about 125,000. So almost a 70% rise in about 3 months. And that's just on Bitcoin. I mean, on the altcoins, it's probably hundreds and hundreds of percent in 3 months. But lifetime high today. But I will note that we've got a shooting star pattern on this. We are presently about $3,500 below today's lifetime high. If it starts selling off, you have very firm support at around the 110, 111, 112,000, around there. It would take a failure of this line. You would have to break below like 109,000 to really say, okay, failed bullish breakout, they're in trouble. As it is now, they're giddy and some are taking profits. And if it sells off even $10,000 more from here, it's still okay for the bulls. It's got to break below that level for there to be any trouble. So IBIT, which is the big Bitcoin ETF, obviously also a lifetime high, and also obviously a big red bar right now because it opened quite strong and it's been selling off through the day. Even so, it's still up about 1.25%. MSTR strategy, they might have considered a new ticker symbol because it's not micro strategy anymore, but they've kept that. Anyway, it too has cut above this line, which is kind of similar to the one I was showing around 109,000. And it's up more than that, up more than IBIT. It's up about twice as much percentage-wise, 3.42%. Ethereum also up, but this trend line still counts. This trend line means something. This is anchored way back here to the big bear bottom in June 2022. And we broke it with quite a lot of gusto here around in March. And now we're back to it. And so someone wrote me today saying, well, we're above that trend line. Well, yeah, a little, I guess, but it didn't matter. I mean, trend lines aren't made of titanium. They can sneak a little past here and there and still count, especially one this big. This is how long? 37 months, am I right on that? I think 37-month long trend line. It is not to be trifled with. And so, yeah, it was above it briefly. It doesn't really matter. I mean, it's got to just jump across it with its Nike shoes on and stay above it for it to change from resistance to support. It is very much still resistance right now. And there we sit just below it. So crypto a little vulnerable now, to say the least. Relatedly, kind of, since it's sort of a dollar is doomed trade also, GLD gold is on the red side. The front month on gold itself is off a little bit, like $6. And more importantly, from a charting perspective, is this gap, 310.31. And that is the peak from Friday. And so long as it stays below that, gold's a little vulnerable too to selling. And of course, gold hasn't had the crazy rise that Bitcoin's enjoyed over the past few days. It's been just kind of hanging out. Gold's really passionate exuberance ended like 3 months ago, April 22. New lifetime high, bearish engulfing patterns has been just kind of ambling around ever since. I better pick up the pace. It's getting late. CRK, Comstock Resources, good day here. This is one of the few long ideas offered up. But this is a beautiful cup with handle, and it's having a good day. This is just kind of a fun one. I couldn't believe it when I saw this chart. And if you're curious about this, because I was when I stumbled upon it Friday, what on earth? I've written about it. Just go to slopeofhope.com and type Mullen, M-U-L-L-E-N, in the search, and you'll see the article. I just did a little post about this because it's quite an extraordinary tale. This is a 12-cent stock now, but it's been reverse split so many times. I think if you look back in 2012 when it was much higher, the reverse split adjusted price is like $31 quadrillion. It's quite the change, but not often you see a chart like this, but it's real. It's not a leveraged instrument. This is a real common stock. So kind of a crazy story if you're curious. Here's something more normal, Apple. And this one, just noting that it's seems sort of stuck below its own very long-term midline. of this channel. So Apple's not looking very well poised. Some stocks definitely stronger than others. Apple, the bloom's kind of off the apple rose at this point, just to mix metaphors. A couple of other bear setups, both cosmetics, Estee Lauder, EL. There's the line on that one. And ELF, Beauty. And here's the line on that one. So a couple of related ideas. I would also take note that CoreWeave is having a good day, but it's formed a cute little top right here. This is a very young issue. Hasn't been around for very long at all, but it's lost I don't know, about a quarter of its value or so from its peak here. But I just kind of keep an eye on that, if nothing else, for curiosity's sake, because it's pretty heavily traded, and I do like the look of that top, miniature though it may be. Energy's on the weak side today. Here's XOP down about 1% on this one. Also XLE, touch more than 1% down on this. Oil's on the weak side today. Crude oil's down about 2% on the front month, and that's being reflected in these others. And individual issues too are on the weak side. So this is kind of a bearishly poised sector in general. Energy, BP down about 1.75%. Here's BTU, Peabody Energy, down about 2.3%. I'm going faster because I don't have much time left. Halliburton, down about 4.33%. Hess Corporation, down a bit more than 2%. And one last one, just to round it out, Schlumberger, SLB, down about 3%. So energy across the board, selling off. Nothing to do with energy, but one other short I've got going right now is Restoration Hardware. I don't think they call it that anymore. They just call it RH. But this is a bit more than 2% off today, and below this massive overhead supply. It's already lost 3/4 of its market cap, but we're kind of in a new era on it now, and I do think that this resistance at 217.60 is very formidable for RH. And the last one, we're going to get out of here just in the nick of time, TLT. My biggest short, down a little bit, about 1/4%, but very important to watch this tomorrow on the heels of the CPI report. Stop on this one very tight at 86.5, but we'll definitely catch up with that in tomorrow's show to see what happened. Okay, good. All right, well, good luck to you, and I'll see you tomorrow. Hope you have a good week ahead.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
With rate cuts back on the table, are there any trades that you're watching in particular?
Well, rate cuts have never been off the table, but every time bonds drop, I think they're a buy.
Not really watching any specific trades in the interest rate space. I do keep an eye on, the futures options like the ZBs, the ZMs, the ZTs to see if there's any volatility types of plays that I can integrate into them. Unfortunately, I don't really feel like there is a really great like micro future to trade the changes in interest rates just yet. I feel like they need a little bit more volume, but when those get a little more active, that will be definitely one way I will be participating.
Yeah, I am. I would say honestly the dollar trade, and I know that is one trade that has been very crowded as far as a lot of people are short the dollar. And if you look over the last couple of years, typically when interest rates are higher, the dollar is higher, and we've seen the opposite. So it would definitely be the dollar and how I'm going to trade that based on what happens with rate cut.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. Even the S&P's up $8.75. NASDAQ up 74. Russell up 10. Dow up 58. And Sazov, as foretold, volatility up 25 cents. Market up. This is your day, Sazov. You can put the line in the sand. I said it would be Monday or Tuesday. I said
Johnny.
you're going to look for volatility being higher, the market being higher.
No.
It might not be Tuesday. I might have to revise it to Wednesday. But we are there, my brother. We are there. I'll let you talk when you have a moment. I said this was going to happen. It has finally happened. And now is your time to do something about it.
You got to stop.
No. We'll go to something you know very little about. Bonds, 112.26. They're down 3 ticks, but they're off of their lows by 11 ticks, flirting with their highs by about 7 or 8 ticks or so. Bitcoin up $1,800 off of its highs of 123.6 to 123.300. Oil down $1.34. Gold down $7 after being higher earlier this morning. Silver down 49 cents after it too being higher this morning. Net gas was higher this morning, remains high, up 12.5, almost 13 cents. Let's take a look at some of these movers, Sadna. The downside, MU, you mentioned it early, it's down almost $6. UNH, it's got earnings July 29th, down $4 or so. Crowd has been weak all day, down 3. Apple down 2. Uber down 1 and change. And to the upside, trying to help us, APP up $23. That's a big move in APP. Netflix up 20. MSTR up 15. Circle up 11. Beloved Costco, I put on Thursday, Sadno. I've had to take a little day of heat, but we're in the chips now. Costco up $8 and change. Okay, go ahead. Now you can say what you want to say.
I don't have anything to say. All I was going to say is that the only
volatility up, market up, Sosnoff, as foretold.
And the only reason volatility is up today is because you got a number tomorrow morning. But I still think.
Hey, listen. When volatility's higher, there's a reason. There's always a story behind it. Somebody on this show said, can market down probably Monday. We'll get a little volatility higher, market higher. That'll be a little bell that you'll ring. Maybe
but you must be getting very short here then. You must be selling futures till your hands bleed.
Selling futures to whom, Sosnoff? You know how many futures have traded today? 744,000. Not a lot.
Yeah, it's like a holiday Monday. It's a summer Monday. I actually did get a little shorter today. Sold a bunch of call spreads in the Qs. Been working call spreads in the SPYs. Did not get filled. Missed it by about a tick or two. A penny or two, but I will sell them on the close. I'm going to work my way down, hoping that they mark them maybe up a few ticks on the close. But nothing really much has happened. It's been a pretty tough day. If you're trading commodities, you probably got a little turned upside down because crude oil had a huge sell-off. Silver had a huge sell-off. Gold had a little sell-off. Bitcoin had a sell-off. Everything's kind of sold off a little bit, except for bonds that kind of sat here all day. I thought it was a tough day to trade. You know,
what is this? The third month in a row, and I forget about weeks or days where you can buy the opening. I mean, it's unbelievable.
Yeah, I didn't like. We said it last night. It was funny. I was like, I really need them to go lower here because I'm short some deltas, but I don't need them to open lower. Like, when
that doesn't seem to work.
Doesn't seem to work. Yeah, when it doesn't seem to work at all. So let's see what happens tomorrow. I mean, it's the beginning, officially kind of the beginning of the earnings season. I know Delta was last week. So we'll see what happens there. I looked really only at JP Morgan tonight, but I looked at JP Morgan, which I think is actually before the opening tomorrow, not after the close today.
Let me take a look. I thought it was Fast was the only one really today. Let me take a look.
Yeah, I think it's before the opening.
It's the 15th. You are correct, before the opening. Thank you, my friend. 100% correct.
I looked at JP Morgan, but I got to tell you, really low IV
rank is 16.
I know, really low IV rank. I don't like much in there. The expected move, for a stock that's basically trading $300 now, the expected move's only $8.
$9. Well, yeah,
$9.
$9 with 4 days to go.
Yeah. So you're talking about, we like to trade, I don't know, 5, 7, 10% expected moves. You're talking little less than 3% here ish. I don't like it priced in with 3% implied move. I know it probably means nothing's going to happen, but when you look at Citigroup, which also has earnings tomorrow morning, and
Wells Fargo and BLK.
Yeah, I don't trade BLK or Wells Fargo, but when you look at Citigroup and you look at JP Morgan, the implied moves are really small.
Yeah, and the IV rank is low, and all of them. Citigroup has one of the better ones at 20.
I know, and when you look at the implied moves in all of these, it's like little less than 3. And I looked at them, and this is the whole discussion we were having last week. When you get earnings plays with an implied move of 3 to 5%, even if it's a bank stock, you start to get into the very dangerous territories. You're risking a lot to make a little.
Mm-hmm.
And I don't like these plays. So I basically did not trade JP Morgan. I have a tiny position on there, really nothing. So I didn't trade JP Morgan. I didn't trade Citigroup. And, this is kind of the consequence of low implied volatility. It just makes things a little less interesting.
I think you got to trade any of these. You got to trade them with direction. You have to have a directional bias.
Yes, right.
You can't sell premium in here.
I agree with you. I think if you're going to trade JP Morgan and you're bullish in there, you sell some puts that have a little bit of meat on the bone. And if you're bearish, you sell some calls. I just don't like the risk reward. I agree with you. You go 2 times the expect. I forgot what it is. I'm not looking right now. Let me just take a quick look.
Which one?
JP Morgan. If you go to July, with 4 days to go, and you go 2 times the expected move, and we're currently trading at 88, so you basically take it up to 305-ish, okay?
Yeah, you got a 60-cent call and a 40-cent put or something like that.
Yeah, that's right. You got a 60-cent. It's a $1 strangle. I don't know. I kind of like 2 times the expected move to get a little bit more than that. And if you take it up to the 307s, it's only 41s. I don't love it.
Yeah, there's nothing there. You can't force it. I don't think you can force it.
I don't think
you
so
should
either.
be looking to force it.
Yeah, I don't think so either. I don't think it's a good play for me. So I backed off of that today. One of the things I did think that's interesting today is that although they rallied and they just kind of rallied all day. I mean, I don't think for 1 second after the opening that there's a single trader out there that said, "Oh my God, they're going to kill them today."
No,
I just don't think that was the case at all. I mean, I was watching this market going, okay, are they going to be up at 10 o'clock, 11 o'clock, 10:30, whatever. But there were a bunch of stocks that kind of rallied early and that didn't hold it. Like the NASDAQ didn't look great to me today. Apple was down all day. Microsoft couldn't rally.
Down, yeah. Mm-hmm.
Yeah, NVIDIA was down all day, small. Amazon was down all day, small. I mean, none of these things were big. MU we talked about, and Taiwan Semiconductor, which has earnings coming out this week. So there was a bunch of stocks that were like, all right, boys, I kind of felt like this was a day when early on Tesla was strong, but it didn't really close strong. Google was strong early on. It didn't really close strong. All day, it was kind of like Netflix was the lead, the lead banana. And maybe, a few other ones. I don't know. But anyway, so I didn't love the tape action today, especially if you're a bull.
Palantir was up like $7.
Oh yeah, Palantir, right.
Coin up
Palantir.
$6.
Yeah, Palantir was up big.
Hims up almost 10%. That's a $4 move in Hims.
Well, you had their birthday weekend. They did a lot of extra business for you.
That's right, Sadno. Unlike Levi Strauss, who said thank you for not wearing the ripped jeans anymore, Hims was actually like, hey, Bet, thanks for the little shout out. You're welcome.
Thanks. You should be thanking them for the free samples. I don't love the tape action in a lot of stuff today, but I don't know if it means anything on super nothing, summertime. Seems like every day we do the opposite of whatever we did the day before.
Yeah. Yes.
So I'm not going to read anything into this. I didn't think they were going to get up like 13, 14 handles today in the S&Ps, and they certainly did. And then on the other side of it, they're not exactly closing on their highs. So I don't know, Mr. Batista. I think this is just a day where you kind of just got to rack it up for like, okay, you know what? It's just one of those days, a slow day in the markets.
It's okay. It's okay to take a breather. It's okay.
I agree. Yeah, it's okay to take a breather.
Yeah, it's okay to take a breather. I know we've had a few in a row here, and I know it gets boring sometimes, but this is the life we chose, Sosnoff. I mean, you got to take it.
As long as we don't have another 2017, the one thing that surprised, I think, all of us the most, and for those of you that have just started trading in the last, in less than the last 8 years, you won't remember 2017, but it's very similar to 2025 because it's it was the first year of the Trump presidency in his first term. And we did not have a S&P move in 2017 of over 1% the entire year. It was
nobody would have called that. Not one
and
person.
Nobody would have called
never.
it because on election night everything was crazy. 2017, I want to say the VIX got down under 10. I don't remember exactly, but I think the VIX got under 10.
You're right.
And I don't think we had a move all year of over 1%. Did we? I mean, maybe one move all year. It was the craziest year. And you had to listen to me and Tony talk all year long about that one fact. And we were like, you know what? In 2018, they're going to make up for this. And you're going to have some crazy stuff going on. And then 2018, you had crazy moves. 2019, there was a few crazy moves. 2020 was insane. 21 was insane. It took them, the next 5 years, there was insane moves. I just hope that 2025 is not the second half of 2025 is not a repeat of the second, of 2017, because we don't want that again. We don't have enough content left. We don't have enough stuff to talk about. Nothing for for that. So
it's true.
Let's see what else do we got going on here. So S&P's up 7. They're definitely, I shouldn't say definitely, but it looks like they're going to close somewhere mid-range for the day. And it looks like it's going to be one of those days where you just put it in the record books and say, you know what? We weren't expecting that much. And, I forgot, what was the expected move this week? What did Kai say this morning? Did he say?
This is the crappiest 45-point overnight move that I've ever seen. And
but net on balance, you got a 6-point move.
Yeah, 6-point move. Yes, it was 70 some odd. Kai this morning was like 75 or something like that.
And that's on a full week expiration week in July. Yeah. That is not huge expectations.
No, not at all.
Yeah, I mean, again, if your positions are a little bit tight here, meaning they're a little bit small, and you're thinking to yourself, oh man, I got to don't force it. We're not forcing it.
Yeah, I agree.
We're absolutely not forcing it. Mm-hmm. Yeah. There's not a lot of risk reward. I mean, this is just very normal all throughout the years. Every business, I don't care what kind of business you're in, every single business, if you sell hot dogs or if you sell options, whatever it is, everybody goes through different periods. You sell ice cream, okay, it gets a little slow in the winter, you know. You sell hot coffee, it gets a little slow in the summer. You know, it just depends. And sometimes you sell premium and it gets a little bit soft. And even if you're not even selling premium, even if you're directional here, it's not. This is very mixed market. You know, it's not like just close your eyes.
It is. Do you start to do you start to lean a little bit with short delta here? I mean, I know we haven't gone anywhere. I know don't sell at creeper. You know, we've been pretty delta neutral-ish. Well, let me ask you this question first. What's your delta theta ratio right now?
1 to 4.
1 to 4. So
yeah.
that's pretty.
Because I sold some deltas. It was 1 to 8 this morning, and now it's 1 to 4 because I sold a bunch of deltas.
Got it. So you were a lot more delta neutral before.
I got a little short today, right here, maybe a little, maybe one handle higher in the S&Ps, but got a little short today. I'm working some more short deltas above the market right now, but nothing done yet. Again, I don't feel like this is one of these markets where you have to force something. I mean, I don't think there's a lot other than the ZB and ZN. I do not know if there's anything that I would consider cheap. You know, I mean, yeah, if you trade some of the grains, maybe, but I wouldn't recommend for your first commodity trade, you'd buy corn, wheat, or soybeans. I mean, if you're not used to those products, don't even touch them.
They don't need to be there.
Yeah, those things are a trap. They will hook you, and you'll be hooked for the next 25 years, and you'll never get out. You know, I think I've been long soybeans since 1984, and where are they right now? Soybeans are ZS. They're 1007. I think I started buying them in the 3 or 4 handle 45 years ago, and I don't even know if I've made any money in 45 years.
Yeah,
I don't know.
Ivy rank can fool you. Ivy rank is 50. When you look at what the implied volatility is, you see 15s and 20s, which is pretty good. I mean, actually, it's really good. But really, what you're looking at here is 8s and 7s for monthly applied volatility.
Yeah, no, it's
not a fun way to make a living.
For sure, a challenge, and that's cool. Listen, you know what? That's cool. Like Tony said before, very, very light S&P volume today. Literally, like a holiday day. When we had a half day going into the 4th of July, so it must have been July 3rd. It was Thursday, July 3rd, the half day. We did almost 700,000 contracts.
Okay, it's going to be less.
We're doing the same today, basically on a full day. So
full day,
it's a very light. We would give you option volume, but we don't really total the option volume.
I don't have it at my ready right now. Sorry.
Yeah. Yeah. So we were playing around with some new software today that we're about to roll out, kind of a brand new active trader page. So we were playing around with it today. It's in beta, and you can play around with it tomorrow when you come in and see what you think. So we'll be rolling that out in the next couple of days. I think probably within 3 or 4 days to our customer base, which is exciting. A little bit of some new stuff.
Yeah, I'm excited. You kidding me? I can't wait.
Yeah. We've got a lot of new technology coming in 2025. So I think you guys are all going to like it. Anyway, we've been doing that. Let's see what else do we got going on here. Bad as I take a quick look through my watch list just to see if there was anything, jumping off screens. By the way, JP Morgan up 170 if you were thinking about, what's the stock doing going into earnings. And by the way, nobody has any idea. JP Morgan is one of the biggest companies in the world. If they leaked their earnings, they'd be in big trouble. How companies do it is what they do.
$800 billion company, sounds enough.
$800 billion company. What companies like JP Morgan do is they will send their results sealed to place like PR Newswire, Dow Jones, all those kind of places, and mostly Dow Jones, I guess. And then they have it so it's automated, and then they give it a specific time. So nobody can see it. It's like held on an electronic book. And then at a specific time, it gets released. So the only way it would ever be released earlier, somebody could see it, is if the company wrote down the wrong time. Remember, like Google did once?
Yeah.
They wrote the wrong time. They put like I forgot what they did, but they launched like 12 hours earlier than they were supposed to. So they put AM instead of PM, whatever, because it's all automated. So so nobody can make a mistake. Nobody can look at it. So JP Morgan probably set theirs for, let's say, 7 a.m. tomorrow morning. So they turn it in, set 7 a.m., and set it and forget it, and everything's done. And nobody knows. Nobody knows what's going to happen either. You know, like, trust me, even if you asked Jamie Dimon, he would like, I mean, I know what the earnings are, but I don't know if they're good or not. They don't know. Let's see, what else do we got going on here? This is truly a limp into the close, by the way. I'm not going to. Yeah, this is oof. This is a little painful here. And I was looking for something that I thought would be fun to talk about, and I just I don't have any crazy stuff here today.
Not too much crazy stuff going on, sad enough. I mean, I think the crypto world's caught a little bit of fire. That's about it.
Yeah, I also think that's
not too much for us to do.
So far ahead of itself. I did sell a little this morning. I sold some Ripple and some Litecoin. I didn't sell any Bitcoin or ETH, just because we've been holding it for a while, and it's probably, I don't know what it's done. Maybe it's doubled. I don't really know.
That's a good problem to have.
Well, it definitely is not lower. I don't know how much higher it is. It's not lower. So, yeah, that's a good problem. That's a high class problem. All right, Pat, I'm ready to. We got the boys in the waiting room. I'm sure they'll bring something to the table. We got Dylan, Chris, and Ilya. Let's see what the boys got.
Bring them in.
Bring in the gimps. Well, there they are. Hello, boys.
Gimps?
I said geniuses. Bring in the geniuses. We said, yeah, you got the wrong G.
Thought. Keep them straight. Keep them straight, my friend.
Yeah.
Oh, I know for sure.
Well,
I'm sure you
Dylan,
do.
you specifically asked if you needed to wear leather today, and we were told no.
I mean, obviously, no. The only person who didn't get the memo is my Russian friend in Cal. This is how you know that the weather in San Francisco in the summer is cold. Everybody else is in.
Oh, it is freezing.
Is Mark Twain or whatever? You're the coldest winter I spent in San Francisco or California was the summer in San Francisco.
Oh, it is. We are in a fog cloud as dense as you can imagine.
I'm surprised you're not wearing a sweater.
I was earlier.
I'm sure you were. All right, listen, we need to buy the dollar. I need to get together a group right now. I need to manipulate the currency. I'm going to need Sosnoff. You got the big bank account. I'm going to need you to call your boy at Goldman. I need you to extend a line of credit, get a little leverage. Tony, you did all right. I've made a couple of bucks. Vecchio's showing off all the time with his bull run, and my boy in San Francisco, he's the only person who makes money incrementally short. I don't know how he does it, but
I've been long dollar for 2 weeks now.
See, he's there. So we're all buying dollars.
I'm there.
Because Tom refuses to give me a currency-adjusted increase in compensation, and so I've had to abandon steak night. I've been relegated to macaroni and cheese. And I can't live like this.
I understand. I'm sorry.
I'm not made for macaroni and cheese. You know what I'm saying? I can't do it.
Not now. You're not. Macaroni and cheese in Italy.
Not now. You're not. You're a full-blooded Italian now.
Now I need steak money. So we're going to need to be buying dollars. We're going to need to get this thing flipped over.
I mean, whoever thought you'd be more Italian than Batista?
I mean, or Vecchio. Although I still think of it as the procession of the Rosemary, which doesn't go over well with the Pope.
Even the New American one, no good.
No, that's why I stay in Milan. I don't go down there. I got to keep my distance. They could put a curse on me.
Tom, you see that the Pope gave Paul Konerko some signed memorabilia this weekend?
Unbelievable. That's
fantastic.
He is literally the most popular person in Chicago by like 100 times over.
Who's more popular? Who's more popular, the Pope or Mike Ditka?
Oh, I would say right now, Ditka's kind of hanging on by a thread. So I got to give the
Michael Jordan.
No, Jordan
number one. So Jordan 1, Ditka 2, Pope 3. That's the current stack.
Well,
in Chicago.
right now I'd go Jordan, Pope, Ditka. You know, but I mean, there's nobody that will ever knock Michael off. Even the Pope can't knock Michael off. Okay. But I have to tell you, the Pope being a White Sox fan is like. You know, I mean, the White Sox are one of the worst teams in baseball, but the Pope being a White Sox fan, and you know, this week they've had a bunch of festivities there. They put a statue of Mark Burley up, and you know, in the 2005 White Sox, they had the whole thing. It's been pretty cool. So, but anyway, it goes. Pope's number 2. Ditka's moved down to number 3 right now.
By a mustache.
Yeah.
By a mustache.
Yeah. I mean. Yeah.
The Lord himself would have to come down and be a Chicagoan to displace Jordan, it seems like.
You can't displace Jordan. You can't. You can't.
It's impossible. It's a fixed position.
6 championships in this city, and you own it, okay?
Sorry, JC. MJ's got number 1.
Yes.
Okay.
Yeah. Sorry about that. We're giving the Pope number 2, and they love the Pope. Love. You know? So. Anyway, all right, boys. Well, this was a dead day. Bat and I were talking about
as dead as they come, Sadnop. But we're gonna finish near our highs with about a minute and a half left to go. We're about 3 handles off of our highs, flirting with new all-time highs. I don't think we're gonna make it quite yet, but volatility is up. Market's up, Sadnop. Somebody talked about that last week. A little bit of a bell.
I just got filled on my call spreads that I was working. So getting a little bit short here on the close, as foretold.
Well, now that Sosnoff got a little bit short, we got to wait about 24 to 48 hours because the 24 to 48 Sosnoff rule beats anything else that I could come up with. So we just
Batista told me to get short.
It's better than the reverse Kramer or the Pelosi. Is the Sosnoff 48-hour cooling off period?
100%. 100%.
Well, I waited till the end of the day. I mean, he told me he was bragging about it when he first got on. You know,
I did. Market. I said we need market up. We need market up. Volatility up. You finally got that today.
Yep. Right. So I did what I had to do. Got filled. Ready to go, boys.
All right. Very good. All right, my friends. I'm going to take a quick 90-second break. We're going to come back. We got more overtime with these guys immediately following these messages. We'll be back in 90 seconds. Let's take you live.
The genius gimps at your service.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday, when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing, they would call it wire to wire. And in trading, they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do. The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Well, the market was open today, and it did go a little higher, and that's about all we can say about it. It's Monday, July 14th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, here to take you through the rest of this hour. Futures market does close at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade, on the website, tastylive.com. Thanks for joining us. Come over to YouTube. Tell us what you're trading, what you think of this action, this slow, meandering Monday where stocks on exceedingly light volume scratch and claw their way higher, erasing the gap we saw from Trump's Canadian, Mexican, Brazilian, EU tariff announcements at the end of last week and through the weekend. Bond market moves around. Not sure if we can say much things positive about the long end, although Ilya, that bounce we saw in Futures Power Hour is worth discussing. And if we reached an intermediate low ahead of tomorrow's inflation report. Gold and silver reverse, which silver, you break my heart here today. We did see 40 ounces or $40 an ounce, slip of the tongue there, $40 per ounce in the SIZ5 contract, the December expiry. So silver rings the bell. Crude oil prices are in, natural gas prices are up thanks to a hurricane that may be forming, and that really grinds my gears, having gotten out of a long position a few days ago at the very low. Ilya, the dollar is moving up, which is much to the delight of our friend Dylan Radigan here, who is going to attempt to corner a $7 trillion market on a daily basis.
Problem.
What's $7 trillion?
Listen, if we can tackle the illiquidity of silver, surely we could tackle the liquidity of the U.S. dollar.
All I need to do is, pick up, a couple nickels worth and start a rumor. Next thing you know, boom, currency reversal. You'll see.
We need to start a Madman's Delight TikTok account because apparently that's where you got to go to have the kind of influence you need. And if you call it Madman's Delight, the viewership will be there. It's right up their alley.
You think the SEC would take issue with that? Do you think the SEC would actually have the audacity to accuse me of manipulating the U.S. dollar currency market with $100?
I mean, it's a spot. It's a spot underlying. It's a spot underlying. It's outside of their jurisdiction.
All right. Well, let's set aside.
How much money would you need?
I mean, I don't know. Not less
if the president of the United States can't seem to manage it, I don't know who can. But
the best was back in the Bloomberg days. There was an unidentified individual referred to as the Sheik, who was a mythological character, apparently on the floor of the Chicago Board of Trade. And the phones would get hot in the newsroom at Bloomberg and at the Wall Street Journal. Anytime there was a reversal in a commodities market that no one could explain, which is pretty much all the time, the phones would get hot and they'd be like, "Oh, it's the Sheik. The Sheik is in there." And it doesn't. You just need to sort of cultivate an identity, and next thing you know, boom.
Growing up in spot FX, as Chris and I did, whenever the flow dealers couldn't make sense of what was going on, the answer was heavy flows from the Middle East.
Yeah.
Yeah. It's,
well,
Radigan, damn oil money.
Radigan's Blue Horseshoe, otherwise known as Radigan, loves the U.S. dollar. Woo, loves it. Looking good.
So some quick back of the envelope math here, which I think in the AI era basically means I punched it into Chat GPT.
Sure.
It takes typically $100 million to $1 billion to move the market 1 to 2 pips these days. I've always worked out the math where it was to get 10 pips, Ilya, it had to be at least a yard. Yeah. So that kind of checks out. So it says like typically 100 million to $1 billion. Where are we starting the show today?
So we'll call it 1 pips. Let's call it $500 million a pip. Just we'll meet in the middle. How about that?
Right.
Yeah,
so
we're going to need a couple yards of euro dollar between friends here. Maybe cable.
Call the Fed. The Fed can do this one bing, ding, ding, one button. No problem. They can do this.
So the estimate here is if the euro's $1.7 trillion a day market to influence price over the hours or a day, you need $50 billion plus. So I wish you luck, sir. I don't have that capital.
It's why that LIBOR scandal was such a joke, because it really demonstrated that the world's largest banks couldn't even keep LIBOR in a 60-second window once a day. That's how liquid this market is, that they had to collude. They're the biggest liquidity providers in the whole market. They had to collude just to keep Eurodollar in a window for 60 seconds out of a 24-hour day.
Well, listen, I'm just a couple dollars short here. I'm ready. I'm on my way to the 500. I'm just got a couple more. I got to collect a few more clams, and then we'll be fine.
Okay. Well, as you think about those clams, I mean, this is perhaps the most important development. For the folks that didn't watch Futures Power Hour today, Ellie and I started the show with a discussion about positioning per the CFTC's COT report. And the takeaway as it pertained to the dollar, at least, was that traders through last Tuesday, July 8th, the end of the CFTC COT reporting week, they were adding to their net long euro positions, and they were ever so slightly trimming their net long yen positions. But the dollar itself here on this Monday, on the other side of this tariff talk, these threats of burning down the global trading system, who cares? Because this is now, number 8 in a row that we are trading to the upside. We find ourselves outside of the downtrend from the June swing high, February, March, June swing highs here. We're back above our 1-month moving average. First time we've seen 2 consecutive closes above it here since May 14th, May 15th, as it were. So there are some signs of trend change behavior. We even poke our heads back above the low that we had post-Liberation Day at the end of April. Maybe this is a sign that a turn is coming. Obviously, if a dollar turn is coming, it means that there's an unwind of a very crowded trade afoot, and that trade would be long euro, long Japanese yen, long British pound. So Dylan, you're really jazzed up about this dollar trade, joking aside, because we know that you have this, tendency to think of yourself as a hunt brother now and again, as it pertains to silver.
For good reason.
Naturally.
Accurately, I would say.
Thank you.
Mistake.
Yeah. Please.
What is it about the news flow, the data, the sentiment, the vibe?
No. It's just price extreme. Okay. It's just the absurdity. Yeah. I mean, I don't know that. I mean, basically, here's what I would say. The tariff thing is sort of baked into the cake. Whatever it's going to be, people basically have a handle on it. The tax legislation is baked into the cake. People got to have a handle on it. The rate expectations in terms of whatever cuts are going to happen in the fall are baked in. So the rates are baked. Tax policies baked, tariff policies baked, and the dollar's on its ass, plastered. And so I think that number one, price extreme, and number two, anything that could further weaken the dollar is fully disclosed, digested, and integrated, which to me means the only possible option for the dollar at this point is at least a minor. I'm not saying it's going to come all the way back, obviously, but at least directionally, with tariffs baked, taxes baked, and rates baked, and a price extreme. I mean, if not now, when? That's my
I'm
logic.
on board with all of that
Master vacuum.
logic. I'm on board with all of that logic. I mean, that's essentially where I'm at with it, is what don't we know yet out of the immediate catalysts that sank the dollar in the first half of the year? We pretty much know it all. The only interesting disparity left is the markets are obviously a lot more dovish than the Fed in terms of where rates are going, but they're not really noodling around in this year's forecast. It's next year. And the markets are more dovish because they think the Fed is behind the curve. And the Fed is going, listen, the tariffs keep getting delayed. We're not going to get clarity on inflation, blah, blah, blah. Okay, fine. But the markets clearly are tilted in a different way. They clearly think the concern isn't inflation, it's growth. And so they want more rate cuts. Give me a warm CPI number here in less than 24 hours, and you just get more confirmation that the Fed's going to look right, but that's not what the markets are baking in. They're baking in something a little bit more dovish by about a rate cut's worth over the end of sort of now through the end of next year. So where's the adjustment? Strong. If the Fed looks like they have the ammo they need to keep sitting on their hands, then you have higher front end rates, maybe a flattening of the curve, because the long end is still going to hold those cuts that the markets want, but later. Stronger dollar, and then we'll see how stocks manage it. Certainly, the weaker dollar has been a huge, lavish flattering of U.S. stock performance in the first 6 months of the year. So you get a stronger dollar, you get higher front-end yields. I don't think stocks like it, but we'll see.
Well, the dollar reversal today, long end yields did poke up a touch there in ZB, not the 10s, but the 30s. In any event, it seems that the dollar is more concerned with and cares more about what's happening at the long end of the curve right now than the short end, which is atypical, I would say. Nevertheless, we look at the weekend's headlines and where does the market leave itself? We have a gap open higher in gold and silver. In the dollar as well, it's trading to the upside here. We have some news in oil that we need to touch on with respect to Russia. But I still think that this is the most under-discussed, and it's finally breaking out and getting the love it deserves now. But Bitcoin here in the futures market hit 123,615 today.
Ooh, hot dog. I didn't know that.
We hit the halfway point of our target from 110 up to 135. So this is a market where metals have been pumping. You're having Bitcoin pop up. Stocks are holding on. Dylan, you and I have talked about this previously on air, but I think it's worth revisiting. For someone who's a little bit younger than you, I don't have the requisite experiential memory of this. I've read about it, but it's different having been in the trenches versus reading about it. Is this environment shaping up to be like the late 1990s to you in any way in terms of the excesses and the scale of which we're seeing risk-taking occur?
I mean, not to be sort of cliched, but history rhymes, it doesn't repeat. And so, no, because what happened in the late 90s was really driven by the internet. The internet was born, right? I mean, it was the birth of Microsoft. It was the birth of America Online. It was the birth of the internet, literally between, let's say, 96 and 99. But it rhymes because the AI would be sort of the version of the internet. And it may be just as, I think AI is probably just as consequential as the birth of the internet in terms of what and how we're going to deal with, life and reality and all these things. What I was thinking as you were talking about it, not to dodge your question without any depth, is if you love the dollar as I do, do you have to be is the Bitcoin rally or the metals rally. All basically, is there a pairs trade to be short metals and crypto and long dollar here? Is what I'm thinking. I'm not saying I'm doing that at this point, but I do wonder if you like the dollar, do you have to not like this? And is it a pair? And does the same thing go for metals?
I think you are not necessarily looking at these things as inherently opposing, but what ultimately is the catalyst for a higher dollar matters. Because if the catalyst, and I think 2022 is a wonderful example. You have this massive rise in rates because the Fed is hiking, and it's hiking aggressively. It's hiking in 75 basis point clips. The dollar is surging. Stocks are selling off. Gold is selling off. Yields are going up. So you have this kind of situation where the return on dollars and dollar-based assets is just crushing everything in its way because the Fed is so quickly increasing the incentive to own dollars that everything else is just getting shellacked. So if the incentive to own dollars here, if the reversal comes, let's say, from a warmer CPI number that says, look, you're not going to get the Fed off its couch until later, so front-end yields are going to stay up, you probably get, with a dollar rally, a pullback in those things that don't yield anything. And Bitcoin is that. Gold is that. So we'll see. Gold has been interestingly resilient. Bitcoin is kind of playing catch up here to what we saw on the risk sentiment front, because obviously we saw stocks making record highs at the start of this month, which Bitcoin was pointedly not doing. In fact, it was kind of stuck in a range from mid-May until this most recent breakout, just 4 days of a breakout. Today's the 4th. So it seems more like catch up to sentiment than it is anything dollar or yield related. They could lock back in. I think the larger influence for Bitcoin here may actually come from stock markets. And if sentiment craters, which we don't know that it will, but it certainly hasn't improved any since the peak at the beginning of this month. Markets have gone nowhere for basically 2 weeks. So if this is a correction in time rather than in price, and we get another surge higher, Bitcoin probably likes that. It's been trying to catch up. If not, if this is a pause that then precedes a turn, then I'm not sure that anything this way or that on the dollar is going to help Bitcoin very much.
Yeah, well, it's a great day for these, for at least Bitcoin. It's not great all around because of the reversal. There is a bit of weakness here off the highs. And so a company like Riot, for example, which did trade higher net, it gives up some of its gains. It did top tick 1303 today and settles back in at 1251. Coinbase likewise up at up 1.8%, but that's off the highs. So you're seeing it fall through, but it is crypto week in DC right now. Great time.
Bless you.
It's crypto week in DC right now. And so this could be a buy the rumor, sell the news type of a week.
What exactly is crypto week, if I might be so bold as to inquire?
Oh, that's a very good question. Crypto week is this week where legislators on Capitol Hill are going to focus on fine-tuning the legislation to really secure the U.S.'s place as the dominant location and geography for the crypto industry, from stable coins to, well, anything related to crypto, quite frankly. So it's getting a lot of hype, a lot of coverage, a lot of buy the rumor, sell the news, at least, perhaps in that kind of view. I still don't see the people celebrating out in the world about Bitcoin, Ethereum doing what they've been doing. It feels quiet still as far as I'm concerned. Dylan, this goes back to one of your trading strategies, though, that you unveiled in the past 2 weeks, which is would you rather be smart and not make money, or learn to love the bomb and let the morals go? Bitcoin was part of that thesis for you. How do you feel about that thesis 2 weeks in? Do you feel like this is going to go more?
I didn't buy Bitcoin, so I don't feel that good. But it's a Pyrrhic victory. But I'm long stocks, so take that for whatever hell it's worth. But I think that this is evidence of that. I think it's a validation of my thesis. I think it is also a slap in the face for my lack of fortitude to actually buy the crypto at the time that I was blathering my little mouth off. So I have mixed feelings about it, Chris.
I understand. Ilya, but isn't this contemporaneous indication that we're in the let's just pump things kind of phase, where the anti-fiat is gathering steam? I'm not going to listen to someone who's long.
It's really tough
I'm not going to call
that
it crap
case with stocks idling and the dollar rising, though.
Okay, go on.
If we're in a world, and we're talking short term here, right? Because we're talking the last 4 days of the crypto surge. Because again, before then, it was pointedly decoupled from stocks. If you look at the up and down in Bitcoin, since the beginning of the year, it's basically the S&P. You hit a top in late December, you crack lower in mid-February, you find a bottom in April, you rally back. It's the S&P. It's to some extent NASDAQ-ish. Like it's the US stock market. It's risk sentiment. Then you get a kind of decoupling. So mid-May, crypto hits the skids relative to stocks. Stocks keep going. Crypto doesn't. It's broken out over the past 4 days. What have we seen over the past 4 days in kind of, do you believe in the faith and credit of the U.S. government part of the story? To sort of make the anti-fiat, anti-dollar case. Well, the dollar has been rallying, so that doesn't make any sense. And if you look at what's going on in the bonds, yeah, you've had some sogginess at the long end, but you haven't run away anywhere. You do see a little bit of a pickup in yields since the beginning of this month, pretty much across the curve. You see it in the 2-year, you see it in the 10s, you see it in the 30s. Nothing's run away, but you don't exactly have an impetus there in slightly higher yields to own crypto. So there's a little bit of a wiggle, but it's not anything crazy. You're well off the highs on yields where sort of the holy moly faith and credit imminent default fears were in April. You're not even remotely close to those areas. So
well, you know what's interesting about all this today, and you talk about those swing levels. It feels like today was such a day that lacked anything. I mean, 800,000 contracts traded on ES is unacceptable for a futures power hour, let alone overtime. Come to the principal's office.
Which might be, by the way, why crypto is so jumpy. Nothing else is going anywhere. Capital's got to go somewhere.
I couldn't help but notice, Ilya, and you and I covered this ground already.
Yeah.
So rehatching it for this audience. And Dylan, we get this conference that Trump has today. We're warned of major news coming down the pipeline with respect to Russia. Last week, of course,
major news.
We heard about. He's the president. I would say anything the president does is major.
Right. It's like every time he's at a microphone, he's always in some kind of a major news is just around the corner mode.
Well, in this case, we did hear last week that Trump and Putin were on the phone, and then Trump apparently told Putin that if he kept attacking Ukraine, then he'd bomb Moscow. And Putin said, "No way," to which the president of the United States responded, "Way." And so we go into this weekend with the conversation between Trump and other world leaders, and we hear that there's going to be an announcement today, really major implications. The implications are that the U.S. is going to be sending more defensive weapons to Ukraine, and that we may tariff Russian goods at double the rate we currently are. Oil obviously says, that's it? Oh, okay. Never mind. You're not bombing Russia. So the oil market gives up whatever it had in it today. We were up near 69.65 was the high. We're now down at 66.92. So a bit of a deflation there overall. Dylan, I see a lot of people complaining that this is Trump chickening out of something. I don't know that there were legitimately people who were hoping that he would make an announcement that he was going to bomb Moscow. What? What do we do with oil here? We're still stuck at the midpoint of the most recent 3-month trading range. Do you keep just trading it sideways and selling pops?
I mean, listen, oil. I only get involved with oil when it's obvious, and obvious means the super spikes on global conflict. I consider myself to be lucky and maybe a little bit smart in terms of that. But outside of those moments, like there's the obvious one here from the recent Iran events, or there were a bunch of them last year. We had actually more of them last year. But when oil just sort of goes middling like this, I don't feel like I have any more of an edge than anybody else. I mean, yeah, what does a stronger dollar mean for oil would be my question, because I think the thing that I have the more confidence is a stronger dollar. And then I also think the economy's in decent shape. Like I think the earnings are going to be okay. I think the bank earnings are going to be okay. I think you're going to get a decent set of earnings numbers. Maybe there's a bias to a little upward drift, maybe some put spreads, but I mean that is a total, that is a comment made with a very low degree of confidence. But I would look at oil more now as an instrument of economic sentiment, economic growth, economic activity than as an instrument of geopolitics. When oil is an instrument of geopolitics, we all know what it does, and it doesn't do this. It does what it did, a few weeks ago. You can see the chart for yourself. So
yeah, I mean, this sort of goes back to the conversation that we've been having for a while. That is, if oil goes bonkers on geopolitical grounds, you fade that. Okay, that washes out. What next? If you have a constructive view of the business cycle, you think it's going higher. If you don't have a constructive view of the business cycle, you think it's going lower because weaker demand. And I would point out that in the first 6 months of the year, oil was down 9.7%, if memory serves, 9% with all of the fire and fury. So if you can't get a net rise in oil prices, or even just a hold, with the kind of geopolitics that we had in the first 6 months of the year, then the market could care less. It cares about growth concerns. And those concerns are clearly enough to tell you, but for the episodic missile going in an unexpected direction, the demand outlook for oil is a bearish catalyst.
I still think directionally neutral is the way to go here. It's boring. It's not a high convexity trade. We're at the 1 month moving average. We're outside of geopolitical risk. And if that's where we are in the cycle, where we're seeing these headlines and quickly deflating them because we're really not getting anything going with a 26 IVR, just lots of chop becomes the modus operandi. So I think right now, Ilya, we talked about this around 1 p.m., actually, basically 3 hours ago. If I were to constant checklist, if I had this trade on today and I were to ask myself, would I put it back on today? If today was roll day, would I put it on for the first time? If I looked at it with fresh eyes? The answer to me is still yes. Right? Still stay directionally
Which, by
neutral.
the way, is more conviction than I have in my bearish views, because I don't think the price action is giving you an actionable directional signal to be a seller. So, I mean, I'm not looking for anything directionally neutral here. I don't think it's juicy enough for what I look at, and I don't like directionally neutral in general. But just as a way that my mind works and the way my strategy is set up. But the level you've just put there, that's the line in the sand. I mean, you can very easily just eyeball that line and say, well, if you put, even with a crayon, this thing through the middle of the chart, you can see it's been oscillating around that line, basically 64 on the August contract, give or take. So if you get the view through that, then here we go, back into the mid 50s. But at this point, there isn't a catalyst on the price action side of things to say that the risk reward to sell is now. So far, we've only erased Friday's rally. We're basically at the bottom of the immediate kind of 4 or 5 day range. The move off the lows near 64 is still there, the series of higher highs and higher lows. Give me a break of that, and I'm short, but it's not there yet.
And there's just this one piece of risk that's creeping in. Westwater flagged this for me, that he saw a storm has popped up right now as potentially being flagged for the Gulf Coast region. This would be through next Monday. And we think about wells that are shut in. And we've seen this in the past year or so, where when you get into hurricane season, sometimes wells are shut in for a prolonged period of time. It impacted natural gas prices in the fall, late summer, fall last year. It's a 40% chance, less than 40% chance that there's a hurricane that comes through, but it's been popping up today. And so you have natural gas here up a little bit more, 4.38%, which of course is a real, this is why people hate natural gas, because when you sell out at the exact low near 3.15, when the low is 3.149, the thing rallies back 30 cents for the following 3 sessions and makes you feel like an absolute idiot. We're now back below the swing low that we have from April here. So if this was a Fibonacci extension, Ilya, we just got to take that out. That's not how it behaves. So this may not necessarily be anything more than an exhaustion, but I think the point I am actually trying to make between projected hurricane maps, natural gas behaving the way that it is, and what oil is doing here today, oil comes off the board because of this Trump announcement. Prior to it, it is like natural gas, trading higher, trading at its highest level since Iran-Israel. And it's because we may have this supply disruption event being marginally priced in now over the next few days. And if it increases, I would suggest that it probably puts a floor under the energy market for the foreseeable future as we wait to see if any wells are shut down around these hurricanes coming together. The market tends to even out, right? Is this going to be really disruptive? We pause. So maybe this is enough for a pause where natural gas is rallying, and but for this disappointing "we're not bombing Moscow" announcement, oil would probably be sitting closer to $70 a barrel still. And I think that's informative in and of itself. So I'm going to play directionally neutral here. I think that still fits this week. I think given what we've seen, by the way, Ilya, with the City Economic Surprise Index, it's perked back into positive territory.
Yep.
Maybe things aren't so bad. Just in
time, too.
Maybe things aren't so bad.
I mean, let's not confuse the index going up as a positive any more than the index going down is a negative, because of course this is a relative index. It speaks to performance relative to expectations, and that's really the key thing here, which sets up a really fascinating dynamic, I think, ahead of this CPI data this week, because a higher number would be, in the sort of parlance of the City Surprise Index, higher relative to forecasts. And so that index would go up. Would that be good news for stock markets? I'm not so sure.
So we have energy meandering today. We have silver breaking out and then pulling back in. Gold prices themselves were a little bit higher, have softened a touch into the close. Alongside of that, when we look at our sector ETFs, it's not a good bit of performance for the energy ones, for the gold miners. We could go over to GDX, but that's off. Oh, actually, it recovered nicely today. I digress. GDXJ is a bit softer here. OIH, on the other hand, is still off by 3.15%. Not completely out of touch. And XLE is off by 1.12. Dylan, Tom had a really good point last night when we were talking on First Call about the banks and their earnings this week. And Ilya, this outperformance midday today only got stronger. KRE is your top sector ETF up 1.13%. KBE, the bank ETF, up 1.05%. XLF up 0.5%. Dylan, this week are the bank earnings. JP Morgan, Wells Fargo, BlackRock, Citigroup, Bank of New York Mellon, State Street tomorrow. You're going to have Bank of America, Morgan Stanley, Goldman Sachs on Wednesday. How do you think the banks behave here with these earnings for the second quarter, given how they've performed? The market seems to think that we have sunny days behind us and maybe more ahead.
I agree with them. I mean, again, where Ilya and I have a little bit of a difference of opinion, and it's not a huge thing, but I think more optimistic about the relative economic strength of everything. And I think Ilya is a little bit more cautious about the relative economic strength. And because I hold on to my sort of more bullish or optimistic view of the underlying condition of the economy, I think that the bank earnings are going to reflect that. And then I would layer onto that all the volatility in that second quarter. I think that there are probably some huge trading revenues that will layer into this. So I think between the sort of underlying sort of lending activity, the relatively low default rate, especially on the bigger pieces of paper, and the relatively high trading revenues, I think that it's more likely to see decent numbers. Now the stocks obviously are already got to look at the XLF kind of tells the story. So I'm not going to say that the financials are going to have some big rally. Have some big rally based on these bigger numbers. But I am going to say that there's a reason these stocks are up, and it's because they're anticipating low default rates and high trading revenues and lots of fee income, as always.
Lots of fee income. Did you know that overdraft fees are now legal again, thanks to recent legislation that was passed by the Congress and signed into law?
We take them in tips. We return them in overdraft fees. Fascinating. One might say it's almost like a redirect of capital flows from consumer to government to consumer to banks.
As a shareholder and someone who doesn't overdraft, I suppose I'm okay with that for now, but it seems like bad policy.
Especially since it seems to be targeted to those people that are both most likely to overdraft, but also most likely to consume.
Well, be that as it may, Ilya, Tom's point last night was that you're in an era where there's been regulatory cutback. We've seen a lot of settlements. We've seen lawsuits dropped. We've seen a big recovery off the low, so trading desk activity was running very high. So he's optimistic. The volatility is the story, though, at the end of the day, because when you take a walk around town, you look at JP Morgan and it's sub 20 IVR, and you see Morgan Stanley with an IVR that's just above 20 as we're perched just below all-time highs. The same thing for Goldman Sachs, a sub 20 IVR. Are you getting the story here, folks? There's not a ton of juice to squeeze out of these right now. So if you want to be long the market at highs, I suppose that's one way to keep doing it for these individual names. There's idiosyncratic risk, of course, charge-offs, write-offs that could be in play. But the banks themselves, Ilya, right? Like if I'm thinking about the trade, if there's any weakness up here, this little bit of pullback right now, if I go to my 4-hour chart, that's still looking like we got some constructive, maybe flag, wedge, something doing here up near the highs. It's difficult to say like this is too bearish yet.
No,
exactly broken down.
No, I think it's difficult to say that it's broken down, and you kind of get the sense of where the line in the sand is. If you look at where the swing highs are in let's call it mid-May-ish, so somewhere between 51 and 52 on your chart here, you can see where former resistance becomes support is. There's that high, I think it's around May 19th, right there. And so you're sitting right above it, right there. All you need is confirmation on a close through that, and then you have yourself your breakdown. And if you don't have that, then you don't really know at this point.
That's it. Yeah, I mean, if you don't break down, then the banks are still in pretty good shape.
Yeah.
Dylan, banks are in good shape. Tech's in good shape. I keep going back to my little handy wheel where I look at the sector leaders and who's been outperforming over the past month, the past several weeks. I see banks, I see tech, semiconductors, discretionary.
Tech is kind of doing what the broader stock market is doing here, is higher highs until you slow into a stall, and fading momentum studies, fading stochastics on your thing here, fading MACD. I look at RSI, it's the same thing, fading. So you get this sense that either you're going to correct in terms of time, or you're going to correct in terms of price. And I would say at this point, you just don't know.
Dylan, what goes wrong for us? What goes wrong for us bulls here the next few weeks? Is it just the tariffs are real and they're not just
Yeah, I mean, for sure the tariffs are like the sort of outlier would be way bigger tariffs than anybody's expecting at this point, which obviously I'm not expecting. But
okay,
I don't think you're wrong.
I'm just saying, but that's one thing that's a thing. Okay, that could be a thing. And then also I would say that some of sort of Ilya's sort of ever-present marginally pessimistic view of economic activity, which I think is a very credible, I mean, it's certainly as credible as any optimistic case I could paint. I mean, the Fed's going to cut rates for a reason, right?
Right.
And so, we're not in a rate hike cycle. And so,
not yet.
And so to the degree to which the Fed rate cut cycle is done for reasons that are lousy and lousier, and I would say you got the outlier tariffs, outlier marginal weakness, combined with the fact that you have a version of price extreme that I like in the dollar the other way with these things, because you get so many indexes that are at or near or approaching or dancing with all-time highs. So you have room to go the other way, and there's, I would say, two catalysts. One being unexpectedly higher tariffs that actually get implemented, which I just can't imagine, and then two being some sort of marginal economic weakness. I mean, the one thing that's kind of out there is, because I think this AI thing is no joke. And we're all GPT'd up over here. Everybody's got their GPT cooking. And I just wonder if it does actually have an effect on the labor market at some point.
Well, this is the interesting thing, right? So we have kind of a week in two parts. The first part is now through after CPI and kind of immediate consequences, because you go, okay, so what's the Fed going to do? Because the markets and the Fed are at odds. Somebody's wrong. And the markets have been moving closer to the Fed's view quietly. So the markets are back to about 100 basis points in easing through the end of next year. That's consistent with where the Fed was through March, but not in June. In June, the Fed went down to 75. But last week, the market was at 125. So the markets moved a little bit in the Fed's direction here. You get a hot CPI number, maybe that they move closer to the Fed's direction. Then the second half of the week is, okay, so what does that mean? Because the second part of the week is the growth story part of the week. Because what you have is retail sales and then consumer confidence, and that's, of course, nearly 70% of the economy. 68% in the last GDP report. That same GDP report, let's take out the tariff nonsense out of it, whatever on imports and inventories going wild, that's tariff front running. We know it. We love it. It's great. Okay. The consumption component, which is the one that matters, was the weakest since the second quarter of 2023. The consumer confidence numbers are particularly interesting in this sense because we've seen consumer confidence rebound, but not retail sales. So the kind of front running that you would expect with the tariff deadline looming in August, with consumer confidence improving since sort of the shock of April, people aren't coming out to buy stuff. And if they're not coming out to buy stuff, then the view on economic growth isn't good. It doesn't matter what else is going on. AI this, AI that. That's a story for market speculation. It's not a story for consumers. If consumers aren't buying, nothing else is going on. And so in the first half of the week, you go, will the Fed help? Yes, no. And then in the second half is, does the Fed need to help? Yes, no. And based on how you land on that, if you get the Fed's not going to help, but we need help, sentiment's not going to like it.
There was this chart I saw last week from Bank of America. Ilya, the left chart is what interests me here for your comment about consumption right now. They said Bank of America uses internal data to look at spending used on their own cards. And it's not obviously a perfect representation, but they're a major credit card issuer and banks. So their data set's probably useful. And the insight that they provide there, big drop-offs in economic activity in April and May. Month-over-month data, you see it's declining.
Which is pretty funny when you consider it's like the time to be front-running tariffs. And the retail sales numbers in March gave you the pop, which you don't see here, interestingly. But since then, both have kind of gone the wrong way.
Yeah, and we've seen people took off. You can even see retail spending ex restaurants dropped below 100 compared to where it was last June, but it's since bounced back basically to 100, so no growth year over year.
Essentially.
Year over year, but we've now seen like there is this resiliency. Kind of people are just pushing through. They're continuing to take on debt, even though delinquencies are going up. We've seen house prices come in. 1 in 3 homes in the United States, or 1 in 3 housing markets in the U.S. now are seeing negative year-over-year house growth.
Which, by the way, considering how little appetite there has been to buy or sell homes because of how high mortgage rates went up, that's not a good thing, a decline in house prices, because that's less a story about affordability. It's more a story about a wealth effect.
And then we're not going to get any new homes built. But it's all, I mean, if you look at it, it's the Sun Belt where the big declines are occurring. It's not the Northeast. It's not San Francisco. It's not around Chicago. It's in like mid-tier cities and regions. I digress, though. We have 10 minutes left here on the show. We have not yet solicited a Mr. Radigan's opinion on what's going on with Tesla. Ever since Elon Musk debuted, we don't need to talk. Have we talked about Mecha Hitler, Dylan? I don't know if we talked about Grok and
Mecha Hitler.
I don't think we have. Well, ever since Elon Musk,
words I didn't think I'd ever say.
Briefly, because I thought there was some genius in that, where it's like you just create an AI that's like a proxy for your worst and most horrible opinions, and then you're just like listen, I don't know, let's just ask Radigan AI, and then Radigan AI is like just a horror show of insults.
Yeah, let's ask crazy Uncle Roger what he thinks.
And then you're like, it wasn't me. I can't. I would never. I can't. I mean, it's just remarkable to me that the sort of idiocy of the setup is just beyond comprehension. I feel like it's got to be catastrophic, actually, because it's just so obviously flawed. I mean,
this is the AI engine you want to help you with your self-driving car.
Yeah,
Godspeed.
It's like you remember comic The Insult Dog? Yeah. Did you know?
Yeah.
It'd be like if you made him into your AI and you're like, oh, Ilya's really nice for me to poop on. And then like, it wasn't me. I didn't say it. You're like, well, that's all you. You built the AI, Radigan. Like, what do you do? I'm like, no, it wasn't me. Can't say. It's preposterous.
And then you let the hand that's moving the puppet drive your car.
Yeah.
No eyes on the road.
Is all news good news? That happened, 5 days ago? That was Wednesday last week. Tesla's up 8% since then.
You buy Tesla on the dip. If there was ever a buy the dip stock.
Well, I mean, we talked about this, right? Like it was sitting right at support. It made perfect sense. Even I was sniffing around buying it, and ultimately didn't, not because the setup was bad, but just because the position was big.
Is it fair to
exactly what we were saying? But its gap is now closed.
The gap is closed, but is it fair to think that because Elon's been talking about Trump and some guy named Jeffrey Epstein, I don't know if you've heard of him.
That's apparently I'm not sure what to make of all the news headlines on this, because on one hand, it sort of starts to smell like a certain portion of the news really wants this story to work. But the headlines were, oh my God, the MAGA world is amid a schism, because one side wants to give the president the benefit of the doubt, and the other side, the kind of conspiracy theorist Reynolds rap crowd that was so for the president, is very, very dispirited, let us say, by all of this.
Well, I guess the point I'm getting at is that there's probably going to be a counterpunch at some point talking about kooky Elon or something. And we've seen this play out recently where when Trump tweets about Musk, when Musk goes after him, and Musk has been going after him again the past few days, you've seen these gaps lower, which have been worth fading.
There's a ketamine joke.
If you're a trader, right? So another swing down towards 285, 300 probably gives you another opportunity to take a bite at the apple if you missed it. 290 is basically the midpoint of the April low, June high trading range. We're continuing to funnel into a triangle. So negative news stories aside, Linda Yaccarino stepping down from X, it doesn't really, the price action is the price action here at the end of the day. But it's a 69 VR. It's a trading vehicle. It's very liquid. 77.5 million contracts traded today. People are going to trade it, so we've got to look at it. But it's right now, again, Ilya, I think your source is ultimately the main contention here. If you're taking a position, what's the sizing? What's the margin? What's the right? Otherwise, though, it's consolidation.
You're in the middle of the range with an IV of 16, right?
Yeah.
What are we doing here? Right? The risk reward to be directional is plainly not good. The IV to extract something in a directional neutral kind of thing, not good. So you can have a long-term view of Tesla and just buy the stock and sit on it forever, and that's fine. I mean, I don't think there's anything wrong with doing that. It's at a discount in those terms. But as a trading vehicle,
Well, I can't help but notice even XLY here today is cycling up to a new high, a new closing high, consumer discretionary, of which Tesla is a major component. But we do see that discretionary is up here as well. It's a nice little puzzle piece, XRT here, moving up on the session. Some of these growth-sensitive and tariff-sensitive names, they haven't been whacked yet. So Dylan, work with me here. I'm trading this where I am bullish in the short term and bearish in the long term. I'm currently long NASDAQ calls that are expiring next Monday. Okay. Seasonal peak for the market tends to be this Friday, July 18th, which seems perfect. I won't be here. Birthday. Let's print some calls for the birthday, and then the market can go down. But then looking into August, and what if the tariff man isn't joking this time? What if he's real and he's going to prove to everyone and the various media members who have instigated the taco tantrums that he is indeed a big boy, not a chicken? Then I'm also sitting long the 60-25 short 59.75 put spread. 46 days to expiration. In an ideal world, the market's going to rally here the next few sessions. We get through expiration, we pop off, run to the upside a little bit. We go 3% higher. And then this thing comes burning down in August and September, as it typically does. And then we can, having made money on both sides of it over the summer, we can happily and confidently buy again in October, go all ape shit, Mr. Radigan, and everyone goes home happy for Christmas. Sounds like a good plan.
From your mouth to Michael Jordan's ears.
Here's a thought for you. The term premium component in the 10-year U.S. Treasury yield, term premium as in uncertainty about the future, that part of it, being compensated for duration risk, it's at the highest since May 2021, which would be right around the time that the Fed decided, oh man, we really are going to have to start hiking rates. Meanwhile, the break-even component, stuck, hasn't really moved since September 2022. So we're looking at a situation where the market isn't afraid of inflation, but it wants to be paid for uncertainty risk.
Yields seem like we're in the right spot for today. We're a little bit higher on the 30s, a little bit lower on the 10s. All things considered, still midpoint of a multi-month trading range. Of course, we do have that inflation report tomorrow. Tomorrow is a busy day. The inflation data, not just for the U.S., but for Canada as well. Both are due out at 8:30 Eastern, 7:30 Central Time. Of course, this is not a big week for bonds, or at least bond auctions. There's no major Treasury auctions here in the coming session, so focus is on inflation. We do have those Fed officials coming out to talk tomorrow. Never mind the earnings reports that are going to be due out with JP Morgan, Wells Fargo's BlackRock, Citigroup, Bank of America, Bank of New York Mellon, and State Street. Those are all out before the market opens. So by the time you see the cash equity open, we're going to have inflation. We're going to have the bank earnings. Tomorrow is a morning for potential activity. Beyond there, though, of course, we're watching the latest tariff headlines and to see how the market underreacts continuously. Nothing could take us down, Dylan. It's the summer of love. We're going higher.
Unless the tariffs become, unless there's 100% tariff on everything.
Can I show you why the 1998 analogy is fun? This is fun. We just pull this up here at the end of the show just to show everyone why it's fun. This yellow line is the 1998 analogy starting August of last year, okay? And thus far the market, which are the bar charts here, are following it pretty darn closely. So the 1998 analogy would give you a SPY that finishes this year up closer to 750 compared to its 624 close right now. We can dream, Dylan. We're allowed to dream about good things still. The Mets are going to win. The Knicks are finally going to win. The S&P is going to go up another 20%. We're allowed to have big dreams here on Overtime. But Overtime's out of time for today. We'll be back tomorrow, same time, same place. As always, right after last call here on Tasty Live, 4 p.m. Eastern, 3 Central. So for Radigan in Milan, Spivak in San Francisco, I've been Vecchio in New York. See you soon. Up next, more Ilya, Macro Money here on Tasty Live.
See you there, everybody.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level?
Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half. I've done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It is continuing to drift sideways here in U.S. equity markets. Not a whole lot of action once again, but perhaps we will finally get a little bit more momentum this week as we get macro event risk back on the calendar. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live, and we're going to look at the event risk that's shaping up here in the coming days and what it might do and how markets are positioned for it, and from that try to extrapolate what that might do when the numbers cross the wires. We'll start with a look at what these markets did last week and then see if we can't land on some actionable implications on what this week may bring as these catalysts inspire a little bit more action, fingers crossed. So let's consider first and foremost, we're looking at a idle week last week for equities. S&P down 0.4%, NASDAQ down 0.5%. Barely anything going on there. On the yields front, the front end steady, so Fed policy expectations doing relatively little. At the long end, a little bit higher on the yield structure, but ultimately, looking at long-term bonds, we've not really gone very far. So on the ZB contract, on the ZN contract over the past week. We've seen higher yields, but over the past, let's call it 4 or 5 sessions, we've basically been oscillating in a choppy range. So a little bit higher yields within that range last week, but ultimately not anything that deviates significantly from where we've been basically since the beginning of last week, coming out of that U.S. jobs report. And that's actually the interesting story here. We got that U.S. jobs report on July the 3rd. It was not exactly as hopeful as the market seemed to take it. It was a very thin day in markets. The headline number was a touch better than expected. The 2-month revision was dramatically lower. Interestingly, the prior month's revision was actually a little bit higher, but the 2-month overall was sharply lower to the tune of 90,000+. So once you took out all of the various influences, the surprise risk, the revisions, you ended up with, give or take, 50,000 jobs less over a 3-month period than you were anticipating. So the markets looked at that and said, okay, this is good. Stocks had a massive rally. They've since gone nowhere, but on that day, they certainly liked it. And bond yields have been shifting higher since then, though again, over the past 4 or 5 sessions, they've kind of idled. So it's an interesting set of circumstances here, but ultimately, neither stocks nor bonds have sent a strong signal since that data came out. Crude oil continued to edge up for a second week, up 2.2%. That still looks generally in the realm of digestion following those geopolitically inspired ructions when we had Israel begin to attack Iran and its nuclear sites directly, and then the U.S. joined in. We're a little bit back off the high points of last week and have erased maybe about 50% of that rally just today, as it looks like some of the signaling from the White House is that a direct strike on Russia is probably not in the cards, though the president seemed to float that idea last week. But really over the past 2-3 weeks, what we've seen is a digestion after the eye-watering 12% sell-off at the end of June there, as it became clear that the Israel-Iran conflict was not on the verge of spiraling into some sort of World War III scenario. Gold prices a little bit higher last week. The dollar a little bit higher last week as well, 0.4 or 0.6% rather in gold, untroubled by an equivalent rise in the dollar against the euro and a 1.7% rise in the dollar against the yen. Bitcoin also untroubled, up 7.4% last week, finally seemingly catching up to what was going on in stocks. If we take a look at what Bitcoin has done in recent weeks, it's sort of an interesting thing. It's been following stocks with very close approximation since the beginning of the year, but more recently, it's decoupled a little bit. And that's been an interesting kind of situation here, because we had sort of the same bounce from April lows following the same sell-off from mid-February highs. But whereas stocks continued to push higher from late May and into the start of this month, Bitcoin kind of idled in a range from about, let's call it 22nd, 23rd of May until it broke out last week. So to some extent, this looks like catch-up to what overall sentiment has already shown. But nevertheless, as an anti-dollar asset, crypto was not terribly put off as the dollar continued to recover for a second consecutive week. It's been inching higher since the beginning of this month, and it continued to do so. Looking ahead, all of this hodgepodge of influences may finally get a little bit of directional and thematic clarity as we get U.S. inflation data coming out. This is the headline Consumer Price Index report. It's due out tomorrow. It is expected to give us 4-month highs on both headline and core inflation, up to 2.7 on the headline, up to 3% on core, as a kind of start, perhaps, to what the Fed has been talking about. The Fed has been pointing out that the influence of the tariffs on inflation is still pending. They don't know what it's going to be still. It's still working its way through the economy to the extent that it can, because, of course, the tariffs have also faced these 90-day pauses where the Liberation Day announcement that we saw in early April kind of gave us a schedule of rates, and then that schedule of rates, after market consternation, was promptly put on hiatus for 90 days for all countries excluding China, and then about a month later, China was added to the list. So now we had cliffhangers on this early this month. In fact, the 90 days initially expired last week, but the White House kicked that can down the road. So now August 1st, and then again August 12th, August 1st for the world excluding China, and August 12th for China, we have these cliffhangers for reciprocal tariffs. So never mind how long it takes for them to filter into the economy, we don't even know what they're going to look like and what is going to be doing the filtering. So the Fed's perspective is this stuff is going to start to work its way into the inflation structure, but over an elongated period of time. And if we get this uptick, then we end up with essentially confirmation of what the Fed has suggested it is seeing, which is, of course, argument for it not to cut rates in the relatively near term. In fact, if we look at the makeup of the recent inflation data, this is May's report, we can see it's, on one hand, refreshingly normal for what's been going on recently. Energy is a little bit of a wiggle lower, food is a little bit of a wiggle higher, but ultimately these things are not critical for the Fed, in so much as they don't have much agency over global food and energy prices. Most inflation is still locked up in services, and the goods sector is helpfully still very soft in its contribution, and thereby suggesting that we are not going to have at least at this point, a significant influence from tariff disruption, which is where that would show up. Now, of course, we are also going to have the purchasing price index this week. That's going to follow CPI, and we'll see if the reason we're not seeing this influence into consumer prices is because wholesalers are eating the extra cost. That's certainly something we saw in March, if not in April. So it'll be interesting to see how all of this breaks down. But for now, from the Fed's perspective, oh, good, we don't have goods inflation from the tariffs. From consumers' perspective, surely also. But from the perspective of financial markets, in so much as this becomes a reason for the Fed to continue to sit on its hands, this may become a hurdle. Because if we look at what financial markets actually have in mind here, it is meaningfully more dovish than the Fed anticipates. Now, for this year, we're pretty well aligned with the Fed's intent. But for next year, we're looking more dovish by a significant margin, adding up to 104 basis points in rate cuts between now and the end of 2026. Compare that with the Fed's summary of economic projections that they published in June, and you end up with a pretty meaningful departure. Now, we are looking for a cut from a median 4.4 rate down to 3.9 this year. That's 50 basis points. But then next year, the move is only one cut, 125 basis point cut from 3.9 to 3.6. And of course, these numbers are being rounded. So what you see here is 50 basis points this year, only 25 next year. Compared to the markets, that puts the Fed on the hawkish side to the tune of one cut. So for their part, the markets think that the thing to prioritize here is growth, not inflation, and that the Fed needs to get a move on. So the interesting thing about this CPI report will, of course, be, first and foremost, does the Fed get validation in a CPI uptick for this worldview? And the second half of the week becomes about whether that validation is misplaced, because the markets are right to be worried about growth, perhaps. And there, we start to look at the situation in what is the most important part of the U.S. economy, consumption. Because after CPI, we're due for the U.S. retail sales report from the U.S. Census Bureau. It's due to show us a rise of 0.1%. That's after a decline of 0.9% in the prior month. The most interesting thing here would be that despite these tariff cliffhangers, there is seemingly not a front running to pull purchases forward before tariffs are going to kick in the latest batch of retail sales data. We sort of saw that appear earlier in the year. There was this big jump of 1.7% if we look back into the data here that gives you that front running. Most of that rise was really centered on cars and auto parts, and of course that was the first kind of batch of tariffs that was coming down, and so you have this very distinctive jump in March. But since then, in April, you have a rise of 0.1%. In March, you have a decline of 0.9%. And now you're expected another near flat result for June. So the kind of front running you would expect just isn't here. And that's a troubling sign, because it suggests that the part of GDP that is the most dominant, household consumption, which makes up 68 going on 69% of U.S. economic growth, isn't taking what is an obvious cue to consume ahead of higher costs, ostensibly for two reasons. Either consumers do not believe that the higher costs are coming, or two, they are so downbeat that they are not going to spend any more money, and their appetite for consumption in the current economic environment is diminished, which of course would be terrible news for overall growth. As a matter of fact, later in the week, we end up with the University of Michigan Consumer Confidence Survey. It is expecting to show us a slightly further improvement in overall sentiment. Of course, in the most recent survey that we have here, we saw a marked improvement in consumers' disposition. Needless to say, the rise here in sentiment in June's report, very easy to discern, and also very nicely matching with a drop in one-year inflation expectations from 6.6 to 5%. So ostensibly, the worry, or at least the peak of worry about tariff influence on prices has started to fade. That's after these extremes in April and May, where the markets were still motivated by that foam board that the president produced with all the various tariff rates that both consumers and the markets thought was so very off-putting. And so now there is this strange set of circumstances where, on the one hand, you're not seeing a meaningful pickup in retail activity, but sentiment has improved. And so it would seem that at the same time that consumers are starting to discount just how much tariff risk there is, they are nevertheless unwilling to put their money where their mouth is. And that is perhaps doubly concerning. Because if all of this speaks to inherent weakness for consumers and an unwillingness to spend, and there isn't a modestly positive headline from the tariffs ultimately ending with a whimper that's going to help, then the pathway for growth really might be quite worrying. And this is where last week's review that we did here of performance in the first half of this year really starts to stand out. Just by way of a brief rehash, consider the main takeaway in the first half of the year seems to have been a dramatic weakening of the US dollar, which speaks rather directly to these tariffs in the sense that if the US runs a trade deficit, what this implies is a surplus of goods coming this way, that is toward the US, more goods coming to the US than from the US outward, but also then a flow of dollars out of the US in the hands of US trading partners. And then the question becomes, well, what do they do with those dollars? And historically, it's made very little sense to convert those dollars back into local currency terms because, of course, that would make the dollar weaken and diminish the purchasing power of one's own customers. And so the recycling mechanism has been that those dollars have turned around and come back into U.S. financial markets. Well, what are we seeing here? You put roadblocks for trade, and what ends up happening is this recycling of dollars hits the skids. Not only are there fewer dollars to recycle if you break the trading system, but there is less impetus to want to safeguard the purchasing power of Americans if these barriers are going to disincentivize them from buying your stuff anyway. And so what you see is this exodus from the dollar. You have massive rallies in gold, in the euro, in the yen, which frankly flatter the stock market's performance to a huge extent. We have this 5.4% rise in the S&P, but against the backdrop of a 14% rally in the euro, you're forced with the realization that the S&P is priced in dollars. So the weakening of the dollar is a major, lavish flattering of stock performance. If you owned stocks and you had to take your profits in dollars but then convert them back to euros, that's been a losing proposition since the beginning of the year. Been a losing proposition in the yen. It's been a losing proposition in almost any currency that's not the US dollar. And that sort of tells you just how much strength there really is in these stock markets. What you also find is that bond yields declined in the first 6 months of the year. So this idea that what the U.S. is doing is ultimately breaking the dollar's dominance of the global financial system and undermining the role of treasury bonds as the ultimate risk-free asset, that's not accurate, because clearly there's no shortage of appetite for U.S. securities, or yields would be up, not down. And for all the fire and fury in the Middle East, crude oil prices are down 9.2%, suggesting that whatever worries about supply disruption there are, markets are much more worried about demand destruction. And so when you put all of that together, it starts to make sense why the markets are pricing in a more dovish view of policy than the Fed, and why inflation data that might inspire them to think the Fed is going to keep sitting on its hands would be problematic. Because you then get this consumption data that highlights perhaps what the markets have been worried about since the beginning of the year. If the dollar is selling off, but it's not selling off for sovereign risk reasons, as the Treasury market clearly seems to suggest, well, then it's selling off because there is an expectation that rate cuts are coming and the dollar's yield advantage will be eroded. You see that in the 2-year. Why are those rate cuts coming? Well, if crude oil is, as a cyclical energy commodity, can't rally with all of the supply disruptions because demand concerns are so heavy, well, then we know what those rate cuts are meant to do in the market's mind: offset an economic downturn. So with that, we get a helpful little bit in terms of the construction of U.S. yields at the long end, just to get a sense for what exactly all of this is. And we can see that it is inflation expectations going down that is the main story here. This is the share of break-even inflation expectations in overall yields versus the share of term premium, which is uncertainty risk compensation. And you can see that the share of uncertainty risk compensation is rising. The share of inflation expectations in the yield is falling, which tells you that the markets are worried about something going wrong economically rather than worried about some sort of an inflationary spike. So when we put all of this together, we might end up then with a week that says we need rate cuts, but they're not coming. And that could land with negative effect in that context for stock markets. It might send the US dollar higher still as it continues to recover. And it may also give us a flattening of the yield curve, where yields at the front end head higher as the rate cuts fall out of the forecast, but at the long end, they stay anchored because those rate cuts will need to happen just later. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go from there. I am likewise on with Chris for Futures Power Hour Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on former Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, Shelly Van and Dan Cecilia, of course. How are you both?
Doing well, thank you.
Good.
Bitcoin all-time highs.
Yes. Ripping higher here. Nice moves in alts as well. We've got a little bit of upside volatility. We've been asleep for some time, banging our heads on the ceiling, I suppose, when you look at Bitcoin at 110. Above it for a moment. We'll see if we can get back there or not. But yeah, new all-time high intraday. Love to see it.
We do love to see that.
Mm-hmm. So we're feeling good. A little bit of excitement. It's in the air here at Tasty Live. But we're not going to talk about Bitcoin, at least not right away. We're going to jump right into this, and we have a special show planned, I suppose. There's a theme today, stablecoins. Mm-hmm. So if we can jump into our slides here, throw up our stablecoins, and let's talk a little bit about what they are, given we've hinted at this on the show, but very soon we're going to offer stablecoin support via Zero Hash at the Tasty Trade brokerage. So that's very exciting. A lot more detail coming soon. So look for that over the next couple of weeks. But ahead of it, wanted to dedicate a show to really just talking about stablecoins. I think given our experiences on chain, I think it's fair to say that we're all users of stablecoins, but maybe not everybody is, and this will be a good primer to kind of get some familiarity with this technology, really.
I want to hear from the chat. Has anybody in chat used stablecoins?
Oh, it's a good question. Yeah. If you're not in the chat, what are you doing? Get over to YouTube, Tasty Live, streaming live. Mm-hmm. Type some crazy shit in the chat, or maybe answer Shelly's question.
Stable coins. So Ryan, what are stable coins?
Yeah, let's jump into it. I think you've got to look at this really simply. Without getting into all the technical details, what we're talking about here is just simply a dollar represented on a blockchain network. So this is a token that maintains a fixed value of $1 by being backed 1-to-1 with reserves like US dollars or short-term treasuries, right? Very short-dated maturities there, treasury bills, fungible in that sense. And so you have these stablecoin issuers. We've talked about Circle, just went public. We've talked about Tether. PayPal has a stablecoin. Paxos provides stablecoin infrastructure. There's many others, I believe, Trump, US dollar one, World Liberty Financial has a stablecoin. There's a consortium of financial services companies. There's the US Dollar Global Network, I think it is. There's a lot of stablecoins out there, actually. And so you have these stablecoin issuers. When someone deposits money with them, maybe it's a platform that provides access to stablecoins. An equal amount of stablecoins is going to be created by that issuer or minted on chain. And then whenever these are redeemed for fiat currency back into a traditional bank account in that sense, the stablecoin tokens are burned. Maybe that's all you need to know for now about the technical side of this. What's your favorite stablecoin?
I
Chat,
used
Cave,
in chat.
Studio.
I use USDC.
Yeah.
USDC or Athena, which is yield bearing.
Ooh.
We even get into that today.
I don't think we can get into that today, but I do believe there is a video on Athena on the Tasty Crypto YouTube. So if you get over there, also subscribe to that channel, you can see that video.
Some good foreshadowing, though, Dan.
It's good foreshadowing.
Yeah, that was nice. But we'll have to talk about that at some point. There are a lot of different stablecoins, algorithmic stablecoins as well. You have these kind of yield-bearing stablecoins. And when you look at the legislation, not to get into the details too quickly, but the stablecoin legislation that's pending, making its way through Congress here, does not permit those stablecoin issuers to pass on that yield to the end user. But I think there could be a world in which that happens at some point. So there's a lot on the horizon, I would imagine. But today, there really aren't any yields to be generated by just holding the stablecoin on chain yourself. There are certain platforms that might give you rewards, such as Coinbase for holding something like USDC. But the yield from those treasury investments is not passed on to the end user in most cases. So to recap, very simple. It's just $1 on a blockchain network, and these are on many different networks. We'll show you the biggest in just a second. But I want to talk a little bit more first about why does this even matter? We have digital dollars. It's really easy to send money to each other, and in some cases almost instantaneously if we use Venmo or we use PayPal. Why does this matter? Do you guys have an opinion as to like what the most important aspect of this is?
I think it's international, globally connected, international, 24/7 instant dollar rails. That was word jumbo, but like it matters internationally.
Yeah, I think it matters internally as well, but I think in the U.S. we take for granted that, you know, we're sitting here with USD is like the top currency in the world, and in other countries, their currencies aren't stable. And so you could wake up and it's like, oh my gosh, my native currency is worth so much less. Having something that's stable and having access to it. Or I know stable coins are huge in Africa. Like if you live in Nigeria but you need to send currency to Kenya, there's not always a rail to do so, and it can be really cumbersome. So having something that's just instant, cheap, and stable, it's a huge game changer.
Yeah, I think we're going to see the continued growth of stablecoin market caps because there is that demand for dollars that exists globally, as you mentioned, Shelley. And to your point, Dan, I mean, it's really just that it's instant 24/7 settlement. This is technology at work in the financial system and an evolution of how things kind of move around here today. Again, it's not to say that the existing system doesn't work. It just can become more efficient through this technology. And so businesses can send cross-border payments instantly 24/7, as we talked about. Doesn't necessarily need to rely on legacy banking rails. It doesn't replace SWIFT or anything like that entirely, but doesn't need it at the same time. You think about, you know, settlement. In some cases, you might have a company that's going to float you a balance. You have instant BP at tastytrade. Sure. But to a certain point, there's a limit on that. The fund transfer, the settlement process, that's not instant. It can take days at times. And so again, that's the key here, that this allows for instantaneous settlement, near instant settlement. Maybe it's a second or two, right? Depending on the blockchain that you're using. It's low cost and it's 24/7. The internet's turned on, this works. You look at companies that need to move money around, need to pay their employees, need to pay their suppliers. This cash flow, you know, quite often, sometimes you don't get paid as a supplier for 30, 90 days. This eliminates intermediary banks. It's going to lower costs. It speeds up that cash flow. Operationally, it's more efficient for companies compared to the SWIFT system or traditional bank wires. And so I think that's the key here, is just how much more efficient everything can possibly become initially, right? When we think about the next 6 months, you get this legislation that passes, you get more adoption, participation in this system. I think it becomes commonplace. But initially, the huge benefit is really around instantaneous 24/7 settlement. We're going to talk about how this evolves into a broader kind of benefit to the financial system. But when you think about cross-border payments and, you know, companies and how they currently move money around here today, that's probably the key takeaway. You talked about this in some ways, and we'll talk about global dollar access in a second, but this makes remittance payments for people a lot cheaper, a lot faster. It's as simple as that. You use Western Union or MoneyGram or another service, you're going to pay a fee. It's pretty hefty, 5, 10%. Might take a few days. Not as relevant to us unless you guys are sending money to people around the world. I don't know. I'm not, but for a lot of people that are, this is a much better solution, assuming you have access to those stable coins.
Yeah, I mean, for me personally, when I'm in crypto and, you know, I want to do something with someone online and, you know, I might not know where they are, they have a wallet address, they accept USDT or USDC, maybe they're a talented designer or a talented developer. Mm-hmm. They want to get paid in USDT or USDC. And it's easy to come to that agreement. Like, I don't need to do a MoneyGram or a Western Union. Like, it's just instantaneously there. They trust it. It's liquid. There's a demand for dollars in these countries. And sometimes they're really talented. Most of them are really talented, and they need a chance. So I think in an online, instantly connected world, you know, people want US dollars. You want them to do something for you. this is how you compensate them. And most people accept it if you're a crypto native. So I've experienced that personally, you know, whether it's internationally or domestically. If you're doing something in crypto, work, development, code, design, they want US dollars, and I send them stable coins. So there is an economy. It happens in chats. I think maybe you've experienced this too, Shelly.
Oh, yeah.
So I've seen it firsthand, for sure.
I've been on the receiving end of it as well. I was doing business with a company in Switzerland and getting the intermediaries of, you know, the wire transfers, the currency exchange. By the time I would receive the funds, I had paid hundreds of dollars in fees to get my payment. And then we were like, forget this, pay me in USDC.
Yeah, right. It just
Instant.
makes sense.
And it would take weeks sometimes if things got hung up. And I was like, why is this difficult? Like, where did the money end up? And then you're on the phone like, oh, okay, there was a hiccup in whatever process here. But no more chasing money or paying extreme fees.
Yeah, initially, part of the allure of blockchain, of Bitcoin, ETH, you could send payments or send value across these networks using those cryptocurrencies. But now that you have tokenized dollars, you talk about real world assets. This is the biggest real world asset on chain today is the US dollar. It just makes everything much more efficient, much easier, just kind of makes sense, in my opinion. So you get legislation in the US and elsewhere. This is only going to continue. We'll talk about the market cap and the potential growth of it in a second. We've hit on remittance payments, cross-border transactions, improves kind of operational efficiencies around cash flow. A couple other things I want to hit on really quickly, and one is very relevant to us as traders at tastytrade. But first, it's increased banking access. We talk about the unbanked, the democratization of finance and banking services. This improves that. This leads to more access for more people. All you need is a smartphone, internet connection. You can access the digital dollar economy. It doesn't require a traditional bank account. Now, that doesn't mean, I think when people hear that, they think, oh, it's money laundering or, it's black market, it's bad actors. Not at all. It's just that you don't have to go through that existing process today, which is not accessible by everybody and certainly not accessible depending on where you live globally.
I think a great example is women in Afghanistan. A lot of them don't have access to banks. So if they're doing something where they can work online and receive payment in USDC, that's theirs.
Yeah, I think there'll still be some element of KYC. There's still oversight, surveillance. You still want to protect against money laundering, and you want to make sure that those providers of these services, are adhering to some regulatory framework. But it opens up access significantly to everybody that wants to participate in this digital dollar economy. And I think the key word there is digital, that's globally connected and almost ever expanding. So it's huge for the unbanked, and is also obviously going to play a much bigger role as you see a larger and larger part of the global population even go online. I think people miss that too. You have 8+ billion people globally. Well, not all of them have access to the internet. There aren't those services, but that's growing as well. So increased banking access is key. And I think as it relates to us, you think about the adoption by financial institutions. This is going to provide banks, brokerages, payment platforms with programmable real-time settlement infrastructure. That's a mouthful as well. That ultimately just lets people fund their accounts faster, cheaper versus legacy systems. If you think about markets that are moving towards 24/5, 24/7 maybe, but 24 hours a day, the majority of the time, you need payment rails that are also running 24/7. Even today, let's say you get a big move in a commodity like oil, or the S&P is down a lot overnight on Sunday, or we know that it's going to open when the futures market's open on the weekend. It's going to open down a lot. You want to take advantage of that. You want to trade. Well, you don't really have a way to deposit funds into your account so that you're ready to go and you can trade. Maybe you had a balance that was available from the previous week or on Friday that you took into the weekend, but there's no easy way at all here today, for the most part, to instantly make those funds available. There's instant BP, but maybe you need a little bit more, or maybe you just want to use this system. So I think it's a huge benefit to anybody that is trying to trade 24/7 markets like crypto, or 24/5 like futures. Very excited to see that at tastytrade. That said, just want to talk through it if maybe you guys want to speak to some of the bigger stable coins that are out there. We've talked about USDC as something that we've all used here. It's not the biggest. USDT, which is US dollar tether from the company Tether, makes up 60% of the market. But you can see just how dominant here USDC and USDT are as those kind of first movers in the stablecoin space.
It's kind of interesting of all the other competitors that are making up that whatever 5% or 10% of the rest of it. I see DAI in there. I see USDE, PYUSD, which is PayPal. Biddle, is that BlackRock?
It's like build, but buildle, like hodl.
Yeah, I mean, I think Tether. So what's interesting about Tether, I think, too, is Tron, the chain Tron, accounts for most of the Tether flows. The entire chain is just a Tether chain. And I think, yeah, I mean, Tether is probably the most trusted globally. I think USDC is getting up there, but most people use Tether. So,
yeah, and I would expect that to continue, but I think that you will see USDC market share increase and percentage of the market might grow as well. They might grab some more market share, but I should say the market cap increase of all of these tokens. Let's just take a look at market cap here so everyone can see just how quickly things are now starting to move. You go back to early Ethereum days, kind of really get DeFi summer in 2020. Stablecoins start to play a role there. You get up to, we have a dip with the FTX collapse, but you see a lot of growth in terms of the overall adoption and total market cap here. And then you get to where we are today, which is a market of 255 billion. We talked about Tether's dominance around 2/3 of that market. I would suspect or expect that this is going to only continue to grow. For further context, I guess let me just jump ahead here. Here's the market cap of stablecoins. So we'll look at it, $250 billion. Total crypto market cap. And this is what I always love to see because people are familiar with crypto. We talk about it every day here on Tasty Live. It's in the financial media now, right? It's reached in some ways mass adoption, but it's tiny. And that's what people miss. Yes, Bitcoin has been around for a while, ETH as well. People are maybe familiar with Solana, XRP, a handful of other tokens, and maybe have gone on chain and done something in DeFi. Maybe are using stablecoins. Maybe. 3.5 trillion. The global equity market. This is not that big either when we really start to look at everything. If you include derivatives, currencies, global wealth, I couldn't put it on the chart because when you have another bar that's 800 trillion representing global wealth, the stablecoin isn't even going to register here. It barely does when we look at it this way. But global equities, about 124 trillion. It's going to fluctuate, obviously, as prices move around. But if you look at the last year or so, around 120, call it trillion. Crypto's only 3 trillion. So can crypto get to 10 trillion? I think so. Can it get to 100 trillion? Maybe. But again, you go and look at global wealth, financial institution assets globally, et cetera, derivatives, currencies. It's much, much bigger than just the global stock market. And crypto is still very, very, very small. So I think stablecoins could easily get to 1 trillion sooner than later. I used to say, okay, at the end of this decade. I think it's probably within the next couple of years.
Yeah. Mm-hmm. I mean, I think that Circle going public and the integration with Coinbase or whatever that deal is, I think that accelerates some of it, at least in the States. But Tether, just some of the stuff, if you pay attention to Tether that they're releasing, it's not even just US dollar Tether. It's other currencies, it's gold, it's tokenized commodities. I mean, they're investing in everything. They're doing baskets of agricultural commodities. They're investing a lot in South America. So
yeah, I think that's a good segue into this. I mean, what you're alluding to is the tokenization of all financial assets. We can call it tokenizing everything. Everyone wants to point to assets like real estate on chain or fine art or whatever. But I think let's just start with dollars, equities, and U.S. Treasuries. Those markets are relatively large. This is what happens next. That's my statement. This isn't like maybe this is what's going to happen. This is what happens next. You're going to see tokenized equities become commonplace. We had the Robinhood announcement. There's other platforms that are doing this. It's early. You need the entire system to adopt this technology. It will. It's superior. Things will settle on blockchain networks. There will be private chains. There will be KYC. There will be other elements, certainly, that exist within the current system, but it will leverage this technology. You'll have 24/7 trading and instant settlement. It's going to be globally accessible. We talk about global demand and accessibility for dollars. Well, these are just dollar-based assets, right? Token is a wrapper in some ways. So it's going to be globally accessible. Presumably, again, there will be rules. You will have to know who your customer is, but through this technology, it just opens up these markets in ways that there's a lot of friction today. It doesn't mean that you can't trade U.S. equities if you live in Singapore. Clearly you can. This just makes it a lot easier, a lot faster, a lot cheaper. These tokens then become programmable or are programmable, right? Dividends are automated, voting rights, KYC. There's a lot you could do. That's not even getting into how this can be used as collateral in DeFi, or you could have USDC on one side of your liquidity pool and an Apple stock token on the other, making markets, facilitating the trading, providing liquidity, and as the end user generating fees or yield as a result. So stocks are already here. U.S. Treasuries are already here. Imagine real-time yields. Instead of once a month, you get that coupon payment every day in some cases, depending on what the investment is. Fractional ownership, you could attach, the yield to much, much smaller capital investment. It's globally accessible. There's always the story about, right, the Chinese are dumping U.S. Treasuries and all of these other countries hold all of our debt. What if they all sell it at one time? The reality is there's increasing demand for dollar-based assets in this system, and there are a lot of buyers that this, opens that treasury market up to as well. And I think the other thing to consider, I heard this the other day, is just kind of coming at it from the perspective of like democratizing the risk-free rate. We're all about access and kind of removing barriers and borders in some ways. But when you think about just the ability to access the U.S. Treasury risk-free rate as an investor and how many people are unbanked, they're not even able to participate in that fairly privileged system, that we're able to easily access. And so the U.S. is going to be able to issue a lot of debt, and there's going to find that there's a lot of demand for it when you have these rails and this technology that's underpinning in the system. So just wanted to speak to that really quickly here at the end and hit on this is what happens next. Stablecoins are first. Legislation is coming. We do have Crypto Week.
Yes, Shelly, can you talk about this real quick?
Let's hit on this real quick and we'll wrap up.
Yes, really quickly. So if you're not following Tasty Crypto on X, get over there and do it. We're dropping everything you need to know leading up to Crypto Week this Friday morning in a nice, comprehensive Twitter thread that is very easy to understand. Crypto Week is next week. 3 bills, 5 days, big impact. Let's go.
I love it. It's being billed as if it's like a music festival.
I know.
Or something.
Clarity Act, the Genius Act, and then
anti-CBDC. We don't want the government in our stable coins. So anti-CBDC, that's central bank digital currency surveillance state act.
It's a mouthful.
Yes.
I do wish we should have done something like some type of like Crypto Week reward, or like if you tune into our show during Crypto Week.
It's not too late. Catch us on Beans Friday morning.
Hint.
There you go.
Yeah.
All right. Well, stay tuned for Beans on Friday. Stay tuned for Crypto Week next week. That's going to do it for our show here on Stablecoins, special edition. Stablecoin support funding coming soon to Tasty Trade as well. So stay tuned for that. But that's going to do it for the Tasty Crypto Show for this week. We'll be back on Monday. Until then, I'm Ryan.
I'm Shelly.
I'm Dan.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
With rate cuts back on the table, are there any trades that you're watching in particular? With rate cuts back on the table, are there any trades that you're watching in particular?
This market gives me trust issues, dude. Like, with rate cuts back on the table, and I'm not really convinced that they're really back on the table, I'm mostly going to be directionally kind of skewing all of my trades. Like, I remember trading, like, during the rate cuts in the past couple years, and me being, like, neutral or a little bit bearish in the market just completely ruining my day. So I think I'm just going to trade a little less contrarian oriented, a little less of a contrarian these days, yeah.
I mean, the bond market becomes interesting again. That's been a tough one to step in front of, but that's definitely one I'm keeping my eye on.
So we got long TLT yesterday, but I don't know, bonds have never been my thing to trade. I find using capital elsewhere in stocks, options, futures, that's just a way better use of capital. So I tend to just avoid, I like it for the news event rather than the actual trading vehicle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you missed the live show, here's our cherry on top weekly recap.
You'd look good in either, you know what would good, like a nice Panama hat in the summer.
A Panama hat and a skirt? Oh my God. You look so sexy. I mean, you look like you just got out of bed, like you just
Don't say it. No.
Through your hair.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
What
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover an iron condor. One of the higher volatility names on the board, especially in the Mag 7, is Tesla. It's got an IV rank about 45. Monthly implied volatility in the 80 handle. The stock is down about 6% today, about $20 on the stock, so a big move lower. It's been bouncing around the 300 to 220 range. I think we kind of play into that for a little bit more sideways action over the next 51 days of June monthly expiration. I'm going to be looking at an iron condor here. So I'm going to go to somewhere around the 1 standard deviation. On the downside, we're going to look at like the 220 strike. So 220, 210, which is really the lows that we put in this year. On the upside, we're going to do the same thing, and you'll see there's a ton of skew here. So I'm going to go to the 350, 360. Puts us right at about a $3 credit, exactly what we want with 51 days to go till expiration. If you go to around a 20-ish delta or 18 delta on either side, you should be collecting about 1/3 the width of the strikes. But you'll see the delta on these short options is about the same. The downside room is about $53 to the downside. On the upside, we have about $75, and that is call skew. And what that looks like when you look at the curve, and you'll see this on the risk profile here, the distribution that we have on the analysis mode, is that your right side tail is much wider than your downside tail, and that is call skew. When you look at the equidistant options, or in this case, the equal delta options, where the 220 and the 350 have about the same delta, you can even see it in my net delta here is basically zero. The option that is further out of the money relative to where the stock is trading is the side that has the skew. So here we do have a pretty significant call skew here, which is a representation of where the market perceives the velocity of risk, meaning the velocity of a big move. It doesn't necessarily mean that the stock will have that move, but it is a representation of where the market projects that move to be. So we're going to be selling some premium here. A directionally neutral position. We have a little bit more price range to the upside in terms of where the price can move, but they are directionally neutral because of where the deltas are here. We're going to do this at 1/3 the width of the strikes. We're going to try and get filled a little bit over that $3 and work our way down from there. $700 in buying power depending on where we get filled here on this trade. 302, no fill. Let's try 3. All right. 298. There we go. Filled 298 on an iron condor in Tesla. Tesla down this morning, $17 and change. It got as low as $19 or so to the downside, a little over 5%. We have this iron condor on. We placed quite a while ago, over 30 days. It's been a battle of a trade. The stock has gotten up as high as about 360 and change just over the last week here. So we're sitting at 314 after a couple days of down move here, going from 350 to 314 here. Now, I get a lot of questions on, what do you do when you're tested on one of the strikes on the call side, the put side? It doesn't really matter. When you're defined risk, the risk profile of the position doesn't change. And the assignment risk is not something we worry about, because that, as long as you have time until expiration, even if I were to get assigned on this short call back when we got to 360, the risk profile doesn't change because it's still capped risk to the upside. I have this 360 call, short stock, long call is a defined risk position via that spread. It's the same exact risk profile as a spread trade. So assignment doesn't matter. With assignment, the reason for assignment is because there is no extrinsic value. So when you have a position, it's intrinsic and extrinsic value. Those are the two things you have on any option position. With this position, an out of the money position, it is now all extrinsic.
We're live.
Yep. Oh, yeah, it's Thursday, July 10th, a little bit after 5 p.m. A little bit after 5 p.m. Central Time, the best time. You know, that means